Hello everyone, good morning, good afternoon, good evening to all of you. Welcome once again to this last trading session of this week and this year as well. स्टार्ट करते हैं आज का सेशन। कल की बात करें तो क्रूड ऑयल नेचुरल गैस, क्रूड ऑयल का थोड़ा बहुत साइडवेज था, रेंज बाउंड प्राइस एक्शन था। थोड़ी बहुत बाइंग आई, फिर एक सेलिंग आई, वो उसी में साइडवेज चला गया था। नेचुरल गैस में एक सेलिंग का ट्रेड लगाया था, उसमें एक एसएल हिट हुआ, फिर प्राइस नीचे आया, दोबारा री एंट्री हुई एंड देन कंटिन्यू। अच्छा फॉल है। कल मुझे लग रहा था फॉल तो आना ही था यहाँ पर, बट एक ओपन इक्वल टू लो बना के ब्रेकआउट जरूर किया था, फेक ब्रेकआउट कह सकते हैं। एंड देन फॉल अगेन। ब्यूटीफुल ट्रेड। इंडियन मार्केट देखोगे तो आज काफ़ी अच्छा रहा है। इंडियन मार्केट भी निफ्टी ऑलमोस्ट 300 पॉइंट पॉजिटिव। फ्यूचर में देखोगे, फ्यूचर में, हाँ, स्पॉट की बात नहीं कर रहा हूँ, स्पॉट में तो आपको फ्लैट ओपन दिखेगा, बट फ्यूचर कॉन्ट्रैक्ट का चेंज हो गया है। तो जो नेक्स्ट मंथ का फ्यूचर आप ट्रैक कर रहे होगे अभी, दैट इज़ वंडरफुल ऑन मोमेंटम। इफ़ यू लुक एट दिस राइट नाउ, तो एक अच्छा मोमेंटम आप कह सकते हो क्लोजिंग डे पर इन निफ्टी 50 एज वेल। बैंक निफ्टी भी ऑलमोस्ट 600 पॉइंट ऊपर गया है। सेंसेक्स उतना नहीं गया, अभी ऑलमोस्ट 300 पॉइंट के आसपास ही चल रहा है, बट ऑलमोस्ट एवरी सेगमेंट इज पॉजिटिव। इवन दो अगर आप देखोगे जो हैवी वेट्स हैं, टीसीएस को अगर आप चेक करोगे 1% डाउन है, ठीक है। बट बाकी जो और मेजर कंपोनेंट है, दो दोज आर द पॉजिटिव राइट नाउ। सो जिस वजह से एक अच्छा मूव कह सकते हो आज निफ्टी में। अभी फिलहाल के लिए निफ्टी में जो फ्यूचर कॉन्ट्रैक्ट है, दैट इज ऑल्सो फ्रॉम जनवरी एंड फेबररी। तो कल लग रहा था एक गैप अप होगा, जिस तरह से नेक्स्ट फ्यूचर ट्रेड कर रहा था एडवांस में, एंड उसी वजह से एक गैप अप देखने के लिए मिला एंड देन इट मूव्ड अपसाइड एज वेल। लेट्स सी कितना और मोमेंटम यहाँ से ये करता है फ्यूचर कॉन्ट्रैक्ट। 26,235 के आसपास चल रहा है, लास्ट स्विंग के अराउंड पहुंचने ही वाला है। देखते हैं नेचुरल गैस में, यहाँ पर एक सपोर्ट है प्राइस के पास, क्या यहाँ से रिबाउंड करेगा प्राइस आज या फिर नहीं। मुझे लग नहीं रहा, अब शायद थोड़ा ज़्यादा और मूव करेगा इंडियन मार्केट, थोड़ा बहुत रुकना चाहिए इस पर्टिकुलर जोन पे। ठीक है, एक बार लेवल फिर से अपडेट कर देते हैं, रिफ्रेश कर देता हूँ। कोई अगर सेलिंग में था कल से नेचुरल गैस में, वापस री एंट्री में, तो प्रॉफिट बुक करना ही ऑलमोस्ट टारगेट जोन पर है। यहाँ पर एक सपोर्ट एरिया आने वाला है, मोस्ट प्रॉब्ली प्राइस विल होल्ड। एंड क्रूड ऑयल के भी लेवल अपडेट कर देते हैं। ठीक है, लाइक भी करते रहो गाइस। कोई क्वेश्चन है वो तो कमेंट बॉक्स में पूछ लेना। अननेसेसरी रिस्क मत लेना, हो सकता है वॉल्यूम थोड़ा थिन ही रहे। थिन वॉल्यूम में नॉर्मली मार्केट मोमेंटम देता तो है, बट कभी कभी बिल्कुल साइडवेज हो जाता है और कभी कभी वॉलेटाइल हो जाता है। इस वीक से एक्सपेक्ट करेंगे कि थोड़ा मोमेंटम और इसी तरह से कंटिन्यू रहे वॉलेटिलिटी के अकॉर्डिंग।
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts, economists, everybody that affects what's going on in the market. Whether you own stocks, bonds, real estate, commodities, crypto, you really need to hear these conversations. Sometimes it's behaviorists like Dick Thaler or Bob Schiller. Sometimes it's fund managers like Peter Lynch, Bill Miller, Ray Dalio. Sometimes it's authors, Michael Lewis, author of The Big Short and Moneyball. Regardless of the conversation, these are the folks that move markets each week. That's the Masters in Business podcast with me, Barry Ritholtz. Listen on Apple, Spotify, or wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Charlie Pellet. Warner Brothers Discovery plans to reject a takeover bid from Paramount Skydance after the company amended the terms of its offer. Sources tell Bloomberg the Warner Brothers board is concerned that Paramount has yet to increase its offer, which was earlier rejected as inferior to one from Netflix. With more, here's Bloomberg's Lucas Shaw.
Money's the biggest thing. The Paramount offer and the Netflix offer are fairly comparable. A lot of it depends on how much value you assign to the cable networks that Warner Brothers owns. That's, CNN, TNT, among many others. Warner Brothers thinks they're worth more than Paramount, hence the disagreement. I think there's some concerns about Paramount as a buyer because, look, Paramount's a very small company, right? If they didn't have the Ellisons behind them, this would not be a deal that it could contemplate.
Bloomberg's Lucas Shaw. Warner Brothers Discovery up today by 0.6%. Paramount Skydance advanced 0.1%. Netflix was down by 0.4%. The United Nations has approved a 7% reduction in its budget from last year to fund administrative and operational activities. The reduction includes cutting 2,900 positions, and it comes as the UN tries to cut costs due to a financial crisis driven by the U.S. refusal to pay what it owes. President Trump revealed a covert U.S. strike against what he said was a drug trafficking facility in Venezuela, marking a new escalation in his pressure campaign against the regime of Nicolas Maduro. The attack is likely to energize discussions in Congress about U.S. strategy toward Venezuela. Heather Connolly is a non-resident senior fellow at the American Enterprise Institute.
Yeah, this is where absolutely Congress needs to have an authorization of use of military force. And I think on a bipartisan basis, members of Congress, both Republicans and Democrats, have been really searching for understanding what the administration's justifications.
Heather Connolly of the American Enterprise Institute. The oil supertanker Skipper that was seized by U.S. authorities is now sitting off the Texas coast of Galveston in the offshore lightering area. That's according to Greater Houston port officials. They say because of draft restrictions, the ship is unable to enter the Houston Ship Channel, which is a corridor of refineries and petrochemical plants. New York City Mayor-elect Zoran Mamdani has announced new appointments to his administration.
I will demand excellence from my team, from myself, and also I will ensure that we create the conditions where that excellence is possible to deliver on.
The mayor-elect will be sworn in at midnight New Year's Day in the old City Hall subway station under City Hall in a small private ceremony. Well, the countdown is on for 2026, and in New York City, officials are preparing to welcome hundreds of thousands of people to Times Square to watch the ball drop. Mayor Eric Adams says there are no credible threats to the city, but authorities will remain vigilant.
It's the crossroads of the entire globe. People come here to bring in the new year, and it is our job to make sure they're able to do that in a level of safety.
Air China is buying 60 Airbus aircraft in a long-anticipated transaction worth about $9.53 billion. And with more, here's Bloomberg's Tom Busby.
The state-run carrier says it will take delivery of the A320neo family planes from 2028 through 2032. Sources have told Bloomberg China has been lining up a group purchase of about 500 aircraft from Airbus. The orders deliver a much-needed boost for Airbus, which has suffered setbacks in recent weeks, with software glitches temporarily causing a global recall of its most profitable jets and quality issues emerging on some newly made aircraft. Tom Busby, Bloomberg Radio.
Stocks move lower in the next to last session of 2025. The Dow, the S&P, NASDAQ all finished in the red. S&P down 9, dropping for a third day, down 0.1%. The Dow was down 0.2%. NASDAQ also down by 0.2%. And that's news when you want it with Bloomberg News Now. I'm Charlie Pelletin. This is Bloomberg.
I'm Carol Masser.
Another geoengineering mission underway to reverse climate change is by Edwina Tanner and her team at WhaleX. Today, they're getting ready for a day of collecting data in the Coral Sea. Their aim is to suck up carbon from the atmosphere with the help of these guys.
Whales are the original climate engineers. They come up to the surface waters and they evacuate large fecal plumes of really rich nutrients.
These plumes of poop are quite important.
These nutrients are really important to feeding the bottom of the food chain and the marine environment.
The nutrients found in the plumes feed phytoplankton, kickstarting an increase known as phytoplankton flume. The phytoplankton naturally capture CO2 via photosynthesis and convert the CO2 into organic compounds. After the phytoplankton die, they sink to the deep ocean, carrying carbon with it. The whole process is considered a biological carbon pump and transfers about 10 gigatons of carbon from the atmosphere to the deep ocean each year. To simulate their own carbon pump, WhaleX invented a substance called aquafood, which is artificial whale poo. The aquafood would be tailored to local climates and released in multiple locations, thus exponentially increasing the amount of carbon removed from the atmosphere. This is a type of marine geoengineering or ocean fertilization. Once the aquafood has been perfected, the WhaleX team hopes to spread it across existing shipping routes.
We're also looking at just adapting ships that are already crisscrossing the ocean and giving them modular plants for ocean nourishment, which could all happen in the right ocean location. And this way we could do light touches of ocean nourishment, but all around the world off different ships. I think shipping itself needs to decarbonize, so this could be part of the solution for the whole shipping industry.
There are desert areas of the ocean. By adding nutrients to these desert areas, we can make phytoplankton grow in large quantities.
It has a bunch of eggs in it.
Oh, yeah. Oh, gosh, it's amazing. Phytoplankton are tiny, you can't even see them, but they are the climate giants and they are the things that are actually going to save us. They provide 50% of the oxygen that we breathe on the Earth. And from our experiments, by putting in 200 litres of nutrients, which is about a 1 whale poo, we can actually sequester about a tonne of carbon.
But phytoplankton, some of which are algae, can grow too much, producing toxic algae blooms. You typically see this in stagnant or slow-moving rivers or lakes or on the coastlines.
But this does not happen in the open ocean. With a whale fecal plume, the nutrients are able to be used by phytoplankton productively instead of destructively.
This, proving their work is productive and not destructive, is the challenge. Studies on ocean fertilization aren't yet conclusive. And safely testing the science without harming sensitive ecosystems takes money, time, and expertise. For billionaires or anxious VCs looking for quick results, it's not ideal.
Billionaire philanthropists are really focused on impact, and they're looking for data and ways that they can measure that their dollars are making an impact on whatever issue they're interested in, from public health or education, everything.
To actually do the science we're doing literally costs the amount of a blockbuster movie.
Today is a big day for the WhaleX team as they prepare to embark on a 4-day research trip. It's taken them a year to build their own biopod, which allows them to test the effects of their aquafood on a controlled area of the ocean. The biopod pumps air and nutrients into the water, growing phytoplankton.
The nutrient is essentially feeding the phytoplankton, which are in the seawater.
Why is it sinking at this end and slide at that end?
But the biopod's first trip into the wild doesn't go as expected. It keeps sinking.
Some of the aeration chambers didn't fire because of too much pressure, so we'll need a bigger pump to make that work. So yes, not exactly to plan, as a lot of experiments are, but we are going to get some pretty good data that will inform our next trial.
The experiment is scrapped and will need to be repeated, and that takes, you guessed it, money.
I was told point blank by a very prominent head of a venture capital fund that if I talk to a company who has a brilliant idea but a meh business plan, and then I talk to a company that has maybe not such a good idea but a very good business plan that's going to make money, I'm going to fund company B every time. And I really find this is a bit of a juxtaposition, because what we need to fund is these really good ideas that are great for the planet, but perhaps are not so great for your wallet.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere, it's almost zero cost, it is unlimited and renewable.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Despite being an early mover, WhaleX's growth has been stunted by a lack of funding. Right now, WhaleX says its main support comes from Professor Wien and other private donations. In 2025, they hope to complete a crowdfunding campaign and strike deals with industry partners.
It's almost like what you need to do to write a successful science paper is sort of the opposite of what you need to do to sell a business model. You have all of these forces that encourage you to attract attention and be flashy and speak with utter confidence. In science, there's no such thing as 0% or 100% confidence.
In the meantime, the only other way to raise funds is to offer carbon credits.
Once you can prove and verify your carbon sequestration, then you can actually sell off your credits to a company. We're not quite there yet, but this is the aim that in the future this will happen.
So, step one for all these startups is figuring out how much carbon you've removed from the atmosphere, which, when you're dealing with a sample size the size of the ocean, is challenging enough. Then you need to apply a dollar amount to that carbon. And since the carbon offsets market is what you might call loosely regulated,
It's been very confusing, very wild, wild west.
that dollar amount is flexible. And while there is an existing framework to rely on for the calculation of carbon removal credits, there's no such thing for solar radiation management. Make Sunsets, for example, sell something it's called cooling credits.
We sell cooling credits, where 1 gram of SO2 in the stratosphere offsets the warming effect of 1 ton of CO2 for a year. That would literally cost $16 per year for you to offset your carbon footprint for 1 year.
Mate Sunset's cooling credits are really quite murky in how they're calculated.
It'll be verified via existing satellite infrastructure that can already detect volcanic eruptions, and it's just infrared cameras. And so at scale, you don't have to trust us anymore. There's satellites that currently detect volcanic eruptions that can also detect our deployments at scale.
From an investor point of view, something like ocean fertilization, although it's very novel, the science is not quite there yet, there is a path to market through the EU carbon dioxide removal framework. There is a lot of rigorous work going into making sure that these credits do what they say they do. That is not the case for solar radiation management.
For now, the marriage between experimental geoengineering and the private sector is an imperfect union. But as the need for climate solutions grows, so too will the interest in unconventional methods.
We have to be able to crawl before we can walk, and then before we can run. The best analogy I can give is, Jeff Bezos, Google, they started in a garage. This is the garage you're looking at right now.
There is very little doubt that the pressures that are causing people to investigate geoengineering as a mature, rational option, that's just going to keep on keeping on. Every year, every decade that the world warms, we're going to need solutions that may seem increasingly less desperate.
And with all of these geoengineering concepts, there is an elephant with a colossal carbon footprint stomping around the room: human emissions.
It's not a solution to the problem. Climate change is caused by industrial greenhouse gas emissions going up into the atmosphere and warming the planet. And geoengineering isn't gonna reverse that basic fact. At a certain point, you do have to figure out how much risk you're willing to bear and what the penalties are for you if you choose wrongly.
Peru is maybe first country inspired to me to how can I use the different ingredients. First time I went to Peru, trying to culture food, I never had this ingredients never used in Japan. Kind of like a wow, and cilantro, chili, garlic, and olive oils. It's a lot of good seafoods, complete a different way. Example, they have the fresh fish. But Japan, the fresh fish uses sashimi. But Peru use fresh fish, make the called ceviche, cooked with lemon juice. You never use soy sauce. First time I eat this, kind of wow. So then after this one, my open eye more, my cooking style that change. Combine to Japanese style and another country food, then make novel style.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
In case you missed it, on the Pulse.
We distinguish between companies that are here because they're running international operations, the companies that are indigenous and working with the citizens of the UK, and make sure you get the regulation strategies right. With the rule of law and the great city that London and the great country that UK is, there's a plenty of upside.
What do you tell the Prime Minister?
I tell them to make sure the regulation's fair, be the best place for a non-UK based company to operate, and you'll get companies coming here.
Don't miss the Pulse, live every weekday.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. I'm Joanna Bersetchi in Dubai. Here's what we're following this morning. The latest Federal Reserve minutes showed most officials favor additional rate cuts if inflation eases as expected, though they remain divided over when and how far to cut. The minutes pointed to the difficulty members faced in December, reinforcing expectations that the Fed will keep rates unchanged in January. Officials also noted that a lack of economic data during the shutdown limited their analysis, but said new figures in the coming weeks could help guide future decisions. President Xi Jinping says that China met its main economic goals in 2025, signaling it may hit its roughly 5% growth target. His remarks providing an upbeat backdrop to data showing a recovery in the nation's manufacturing sector. Now, China's factory activity surprised with an expansion in December, snapping an 8-month contraction streak, the longest slump on record. Bloomberg has learned that Warner Brothers Discovery plans to once again reject a takeover bid from Paramount. Sources say its board will meet next week to make a final decision. Paramount is offering $30 a share for all of its Warner Brothers, including its cable networks CNN and TNT. Warner Brothers has already accepted an offer from Netflix for $27.50 a share. Now, oil is headed for its steepest annual loss since the start of the pandemic. Prices have been undermined by concerns of a surplus. Brent steadied above $61 a barrel, with prices down 18% so far this year. WTI near $58. Meanwhile, Bloomberg has learned OPEC Plus is expected to stick with a planned output pause when it meets on January the 4th. Key members led by Saudi Arabia and Russia will meet virtually and review the decision. The United Arab Emirates is withdrawing troops from Yemen after a flare-up in tensions with Saudi Arabia. That's after a Saudi-led coalition struck a Yemeni port, targeting what it said was a weapons shipment from a UAE port. The two countries support rival factions in Yemen. Abu Dhabi had earlier denied allegations by Riyadh that it directed a separatist group in a way that threatens the Saudi border. And a look at markets on the final trading day of 2025. The handover from Asia Pacific ex-Japan, which is closed for a holiday today, marginally positive, though, for the year. Global MSCI indices up more than 20%. S&P markets also slightly in the red this morning, down 0.2%, but up more than 17% for 2025. Silver taking a bit of a tumble today, down 6%. So the volatility continues throughout the course of this week, though, of course, it is still up more than 150% this year. And then Brent stabilizing around $61.30. That is where we're at, down more than 17% throughout the course of 2025. That's your recap. This is Bloomberg.
This is a flying car, or at least the modern approximation of one. And so is this, and this, and this.
The dream of the flying car is really something that unites the biggest, most influential inventions of the 21st century. The big movies have featured these flying cars. Blade Runner with Harrison Ford in the 1980s, and even Back to the Future with Michael J. Fox.
We don't need roads.
The idea of flying cars has been around since, well, cars were invented, basically. Early versions, like the Curtiss autoplane, looked like a Ford Model T with wings attached to it. Unsurprisingly, these early attempts never really got off the ground. But public fascination hasn't waned. Today, a global gaggle of engineers and investors haven't given up on the flying car dream. But as they'll insist, just don't call it a flying car.
It's pretty terrible. It's eVTOL is the way that you say it. Yeah, not the most user-friendly acronym.
eVTOL, it sounds a bit enigmatic. It means electrical vertical takeoff and landing. The name is not maybe very sexy.
Sexy name or not, eVTOLs are a billion-dollar industry with some pretty big-name backers who are trying to cash in on this new mode of transportation. The question is, can this new generation of aircraft make it in the world? And do we even want them?
We've seen different types of partnerships emerge. So on the one hand, we have traditional aerospace, but then we also have seen the automotive industry engage.
The eVTOL industry is certainly an emerging industry. It has momentum. It has huge global ambitions. But at the same time, it's an entirely unproven market.
I've been always passionate about flight from a very young age, always looking up to the sky.
Tamaj Patan is the founder and CTO of Jetson, a company that's building a flying car. Sorry, eVTOL.
This is where we keep some of the fleet that is no longer in operation. This one has been testing parachutes for us, up until the point that one of the tests went sideways, and the whole passenger space is almost intact. So it's a good result of the test, and we have lots of data from it as we had redundant sensors on the vehicle that day. So for 11 years, I've been doing drones with camera gimbals. These drones were getting bigger and bigger. And at some point, I asked myself a question, what if we scale it so I could sit in there and pilot myself? You switch in. Probably everyone who first saw Jetson 1 noticed it's not like the rest of the eVTOL. It needs to be exciting. It has to be like a sports car.
Like a luxury sports car or ATV, Jetson's eVTOL is designed for personal use and can't be flown commercially. It's also not cheap. The Jetson 1 could set you back $128,000, and it's sold out through 2026. But not all eVTOLs are designed for personal thrill-seeking. One of the biggest commercial applications for the eVTOL is the air taxi, carrying passengers for short hops across crowded cities. But they have other uses too.
There's a host of other applications beyond that, which could turn into commercial opportunities. Talking like perhaps logistics, huge opportunities in cargo. Beyond that, you could go into the military areas, surveillance, reconnaissance, troop deployment on a small scale as well.
And investors are pouring a lot of money into them.
One of the reasons that this industry has drawn so much money, drawn so much investment, is the potential prize on offer. For instance, if you look at estimates from Morgan Stanley, the addressable market could be $1 trillion by 2040.
But what exactly makes an eVTOL? Well, an eVTOL. Let's break it down, shall we? eVTOLs are a new class of aircraft that are able to take off and land vertically and cruise like a plane. And they're electric. That means they're powered by electric propulsion. Here's how it works. Anything that flies relies on 4 forces to move up and through the air. These forces are lift, thrust, drag, and weight. A helicopter takes off and lands vertically, but relies on a single rotor to provide both the lift and thrust needed to fly. eVTOLs run on electric motors instead of jet fuel. The motors are distributed around the aircraft to power rotors and propellers, which provide thrust. And that's where the designs can get a little interesting. eVTOLs all look and fly completely differently. And eVTOLs have a couple of key advantages. They're typically quieter than helicopters. They emit less carbon, in theory anyways. And they're equipped with advanced flight control systems, which means they could be capable of autonomous flight. But we'll get to that later.
It's a fun fact, but our battery alone weighs more than the rest of the vehicle.
Remember, weight. One of the 4 forces that govern flight, it's crucial when it comes to getting anything airborne. And here's the thing, batteries are heavy, which is not great when you're already fighting gravity. It's because batteries have a lower energy density than fuel, which basically means that for their weight, batteries can't store as much energy. For example, you'd need roughly 50 kilograms of lithium-ion batteries to hold as much energy as just 1 kilogram of jet fuel.
Batteries are really critical to this whole equation. To a certain degree, they govern the capability and the performance of these aircraft. The batteries dictate the range, they dictate the power, they dictate the payload, how many people or how much cargo these things can carry. They dictate how fast they can recharge.
In recent years, there have been advancements in alternative sources of energy, like hybrid power and hydrogen. But for now, batteries are our best bet when it comes to electric flight.
In the years since it was first developed in the 1970s, chemists have improved just how much energy each kilogram of a lithium-ion battery can hold. That improvement has been quite linear for the past 3 decades, enabling us to start to put lithium-ion batteries first in electronics like laptops and iPods, and then eventually in electric cars. Some say that there are real upper limits for how much batteries can store in energy for each kilogram of that battery. And that limit shows up in, say, long-haul aviation. If you wanted to build an electric plane that would fly from London to New York, you're unlikely to be able to get a battery that would make that flight economically viable.
It's this limitation that makes eVTOLs suited for shorter trips with lighter loads. And the better that battery tech can get, the more potential they might have.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
To your life, we're covering it.
I'm Katie Greifeld.
And I'm Romain Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
We are testing battery cells under airspace-specific loads. As you can see here, as the aircraft takes off, it goes through a cruise, and then it lands. And what we're really doing is that we're understanding how these guys perform in flight.
One person who is looking into the limits of battery power in electric aviation is Matthew Clark.
We are seeing a lot of eVTOLs in the past, I would say, 2 decades because of the advancements of electric energy storage. Batteries that usually have lower energy densities are reaching the energy densities that can make short routes possible. Unfortunately, right now, many of these cells that are used today limit the range and operation of these aircraft. And as a result, they can only fly maybe 150 nautical miles.
But are batteries where they need to be?
Batteries are getting better every year. not at the speed that we want them to in the aerospace community, but they're getting better every year. There's going to be a natural progression of checking what I call the illities, the manufacturability, the integrity, all these illities that have to be considered when you're taking any research product to make it a commercial one.
In other words, what's possible now and what's scalable are two different things. And while we wait for scientists to improve battery technology, there's no shortage of companies looking to cash in right now.
Let's load flight plan 1063-1, please.
Flight plan 1063-1 in 3, 2.
Archer's aircraft development company that's building a new type of airplane where we're leveraging technology around batteries, electric motors to develop a brand new type of aircraft.
Everybody ready for flight?
Tower, Archer 1, request clearance to flight plan 1063.
So in the lab here, the process starts with this station where we're taking cells and starting to test them and put them in the battery packs.
Archer is one of the many eVTOL companies globally that's racing to commercialize their aircraft in cities around the world. As of 2025, they had a market valuation of around $4 billion, and investors including Stellantis, United Airlines, BlackRock, just to name a few. They also have contracts with the US military.
We're here at our certification flight simulator in our integrated test lab. The hardware you see here is the real flight hardware from the aircraft, running the real flight software so that we can test with pilots in the loop and exercise the entire system functionality.
Our team is just under 1,000 people right now. We have a handful of other facilities where we do manufacturing of the motors and batteries, do system integration testing, and really prove that all the components and systems work together. And then another facility around here where we build our initial aircraft. We've also got a factory that we've just built out in the state of Georgia.
Archer is scaling up. And they're not the only ones. They're not even the only ones in Silicon Valley.
I have a 2-hour commute from where my home is, and so I fly instead of drive because the flight is only 20 minutes instead of a 2-hour drive. So I am a personal use case of how I could use and fly in a Joby aircraft.
Bonnie Simi is the president of operations at Joby Aviation. She's also a former Olympian luge competitor, but that's another story.
Our use case, of course, is in large cities that are very, very congested. Imagine that you're in a congested city in downtown and you need to get to the airport. Let's say it's in New York City. You would think, okay, if I get into a taxi, it's going to take me maybe 45 minutes, maybe 2 hours, you just don't know. Imagine instead you could pull up an app and select a ride to the airport.
Joby, like other eVTOL companies, is banking on the idea of the air taxi. Founded in 2009, they've raised over $2.5 billion in funding so far.
Initially, we were funded through venture funds. Toyota alone has invested almost $1 billion, about $890 million.
One person with an interest in the eVTOL industry is Robin Rydell, a certified commercial pilot who co-leads the McKinsey Center for Future Mobility. Full disclosure, he says he's offered consulting services to several eVTOL companies, but couldn't say which ones because of confidentiality agreements.
The VTOL industry has developed quite a bit over the last, call it, decade or so. And so what we've seen is that industry grow from, small startups that were funded by, a few individuals in some cases, maybe some of the larger companies doing a bit of experimentation in aerospace, into standalone companies.
It's difficult to keep track of just how many eVTOL companies exist in the world today. But there are a few leading the charge. In China,
recovering some losses after its biggest one-day drop in more than 5 years. Supply shortages keeping the metal on track.
AI is impacting every industry.
Benjamin Netanyahu present a united front, and Constance Hunter of Economist Intelligence on why the United States economy faces a bumpy road ahead. We begin this hour with stocks a little change as traders await Fed minutes and the latest read on the labor market. Kayla Sater of State Street writing, although turbulence may remain elevated and concentration risk will remain high in 2026, we are still in a pro-equity and buy dips environment. Kayla joins us now for more. Kayla, thank you so much for being with us. Before we get into the equity outlook for 2026, I'm wondering what signal you're taking from a metals market that has been beset by volatility heading into year end.
Yeah, hi, Lisa. Thanks so much for having me today. I do think this is kind of a case where it's not so much fundamentally driven, it's more so technically driven. We do kind of see these things at the end of the year as well. And I think if we take a step back and look at the broader picture, a lot of those fundamentals remain intact. A couple of minutes ago, you already highlighted just how great of a year a lot of these metals have had and how great of a year silver has had. And I don't think that what the past few days has shown us really signals a change in the underlying fundamentals there.
So let's take a step back. And to Guy's point, it's a really good one. How much does this signal something deeper in terms of the big returns for gold, for silver, for copper? Speaking to inflation, speaking to possible debasement of fiat currencies, is there a signal for 2026 that is market moving, that is potentially important for markets to listen to?
Yeah, I think there's two factors I'm paying attention to here. One is that inflation risk. We are not out of the woods when it comes to inflation. This is also something I'm looking to learn a bit more about in the Fed minutes today. It's just how concerned is the Fed about inflation? Because we did see, notes of dissent and things like that in the meeting in December. So, this could reflect concerns about inflation. The second point is that this has been an incredibly challenging year to diversify, and metals have been one source of diversification in portfolios. And given the overall environment, I would expect that to continue into 2026.
Kelly, good morning. It's Guy. Talk to me about where you see the dollar going in 2026, because this looks like one of the big pivot points for the market. If I'm a US investor, I've made, 17% in the S&P this year. If I'm a Eurozone investor, I've made just 3%. The dollar has been the biggest factor in my portfolio. Where does it go next?
Yeah, everyone cares where the dollar is going next. I think while there are fewer headwinds, there aren't a lot of tailwinds. So for example, what I mean by that is when we look at our institutional investor behavior, our flow data signals that flows continue to sit around neutral. Now, 2 months ago, they continued to show really strong selling. So really what we've seen is either selling or getting back to neutral. No real demand for buying. And I think we're not going to see appetite for dollar buying until we get through the first half of the year, because as we look towards cuts, as the Fed is expected to cut, that should continue to weigh on the dollar moving forward. So I still think there's challenges for dollar strength from here.
So you're implying that you think the Fed will be done by mid-year, that we'll be done with the cuts, and the next move, kind of from 6 months into this year, will be a hike. How do I think about, once I've got through the first 6 months, how significantly does the landscape change once we get to that point?
Yeah, that's a great question. I think moving forward, it's going to depend on a few things. One is, and the most important thing I really think, is inflation. We are not out of the woods when it comes to inflation. Inflation impacts everyone, but does not impact everyone equally. And when we think about upcoming stimulus in the economy, so things like One Big Beautiful Bill Act stimulus, all of that can feed the economy and let inflation continue to fester. And so I think that will be the most important factor in determining what's next for the Fed and really what's next for the dollar as well.
Kayla, does that mean that you don't really buy the rotation trade? That if you do think that inflation is resurgent, you think that the Fed isn't going to be in play as much as people think, and frankly, it's not going to fuel the outperformance of small caps and the rest of the 493?
I think you're spot on. I think it's going to be really challenging to see a sustained small cap rally if we start to see inflation, or if we continue to see inflation be relatively stubborn. There's a reason why we even see concentration within large cap stocks, is that concentration continues to sit with high quality companies, high quality parts of the market that are not debt dependent, that are not impacted as much by higher rates or elevated rates. And so I think that's going to continue moving forward. It's going to be really challenging for small caps from here.
It really raises this question about big cap tech and whether people have maybe had too much skepticism around that. And I wonder about your view, especially given some of the acquisitions that we've seen to end the year. We saw NVIDIA take a stake in Grok. It was a non-controlling stake in a certain way, or non-exclusive, I should say. So it is maybe going to fly under the regulatory radar this morning. Meta Platforms is agreeing to buy Manus, which is a Singapore-based AI-related company with its roots very much in China. How much does this just solidify the dominance of the Magnificent Seven?
I really think it all comes down to balance sheets. These are huge companies with diversified revenue streams, with huge cash flows. And so this gives them a lot of strength and power in the marketplace. One thing that's interesting is when we look at our data, so over 40 trillion assets under custody, looking specifically at institutional investors, what we find is that there's really just one overweight, and it's tech. You see a relatively mild overweight in communications. Everything else is neutral or underweight. And so I think that begs two questions. One, where do we go from here? Is there any room within tech where we can still add exposure? The answer to that is yes. Actually, when we look at positioning, one industry group where positioning is just neutral is software. So there still is room to add to software. The other point is that, are there any underweight sectors where we should start to see appetite increase just because they're too underweight? And one place that stands out in that regard is healthcare. So healthcare flows have started to increase. And I think that's more a reflection of exposure is just so underweight. And there are less headwinds now than there were before. I'm not saying we're extremely bullish on healthcare, but we are starting to see some signs of M&A and some signs of improvement that maybe look like there is just too much bad news there. But I think, moving forward into 2026, that big story is really going to continue to be AI and tech.
Kayla, how divorced from the consumer is the AI trade? Can the consumer still slow down and the AI trade carry on? Is this a twin-track economy? And you could almost, people talk about the K-shaped recovery, but is it a K-shaped market? And is it going to continue to be a K-shaped market?
Absolutely. I think you kind of see shades of this K-shaped economy, K-shaped market, in a lot of parts of the market and the economy. So on one hand, you have small cap versus large cap companies. That's likely to continue. We see a K-shaped economy in terms of the consumer. That's likely to continue. And one really important factor there is that there are structural changes that have occurred over the last 5 years that really exacerbate the K. So for example, housing. Housing has become so unaffordable for so many parts of the market or so many participants in the economy. So for example, thinking about how during COVID, so many people refinanced their mortgages. And if you didn't have a home then, you really missed out on that opportunity. And now if you're still renting, you're still stuck in that environment where you're impacted by still relatively high interest rates. And so that's another example of a K. I think we see it, is, as you said, two tracks, I think. I think we'll continue to see that in terms of equities and in the real economy. And that really highlights why inflation is so structurally important. And I think that's why, bringing it back to the Fed, you're starting to see more members of the Fed be more vocal about those inflation concerns.
Kayla Seder of Straits2, thank you so much for being with us. Kayla Seder, have a wonderful new year and see you in 2026. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Lizzie Burden. Lizzie.
Hey, Lisa. President Donald Trump says that the U.S. struck a facility inside Venezuela in what would be a significant escalation in its campaign against alleged drug trafficking operations there. Trump's reference to an attack within Venezuela would mark the first time that the U.S. has announced a land strike in the country. And Russian President Vladimir Putin says that he'll revise his country's negotiating position after claiming that Ukrainian drones targeted his residence. Putin told President Trump in a call on Monday that Moscow intends to work closely with the US on peace efforts, but would reconsider a number of previously reached agreements. Ukrainian President Volodymyr Zelensky dismissed the Russian claims as a new lie. And President Donald Trump reiterating that he'd love to fire Fed Chair Jay Powell. Trump saying that he might still fire him for, quote, gross incompetence. Trump came close to seeking the Fed Chair's ouster in July, but backed away after a negative reaction in financial markets. He said he'll probably announce his pick for Fed Chair in January, and his preferred candidate hasn't changed. That's your Bloomberg Brief. Lisa.
Thank you so much, Lizzie. The easiest job in Washington, D.C. Up next, standing behind Israel.
We talked about Hamas, and they're going to be given a very short period of time to disarm. Speaking of Iran, I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup.
Wendy Schiller of Brown University joins us next as we expand our view from the domestic to the international. This is Bloomberg Surveillance. Good morning. It's a sputtering out of the Santa Claus rally, at least for now. We had seen 2 straight days of losses, potentially building on that for a third straight day, with S&P futures lower by about 0.1%. You are seeing a bit of a sell-off in the bond space, but really it has been incredibly quiet, not very volatile in the fixed income cohort, 4.11% in the crude market. This has been a market. Crude futures have lost 17% so far this year, on pace for their worst year going back to the height of the pandemic back in 2020. We are seeing a bit of a firming up this morning, potentially because of geopolitics, potentially because OPEC Plus is likely to confirm an oil production pause, this being reported this morning. In the meantime, a real question around geopolitics under surveillance this morning, standing behind Israel.
I'm not concerned about anything that Israel's doing. Israel's lived up to the plan 100%. Speaking of Iran, I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup. We talked about Hamas and we talked about disarmament, and they're going to be given a very short period of time to disarm. If they don't disarm, as they agreed to do, they agreed to it, and then they'll be held to pay for them.
Here's the latest. President Donald Trump meeting with Israeli Prime Minister Benjamin Netanyahu in Florida. The president issuing a new warning for Hamas in the push to move towards phase 2 of the peace plan for Gaza. Joining us now is someone who's been covering the story very closely, Bloomberg's Israel bureau chief, Ethan Bronner from Tel Aviv. Ethan, can you just give us a sense of what stood out from you the most from the meeting that we saw yesterday between the two leaders?
Well, I think the clips you played stood out most for me in the sense that they were such a full embrace of Israel by the president. It's not entirely clear that that's exactly what's happening behind the scenes, but as a public gesture, certainly that was the most important thing for Netanyahu. And, you know, it remains to be seen whether anything has been decided about how to move forward in Gaza, as well as in a whole range of other issues around Israel. They were very, very sparse with details publicly.
Ethan, there was also this extra question around Iran and whether this really did raise the specter of additional strikes by Israel or, frankly, by the U.S. on Iranian nuclear facilities. How much credence should we put into that?
That's another very difficult question. I would say that Israel believes that by talking aloud about the possible strike, it will spook Iran into reducing its activity, and therefore there won't be a need for it. But it doesn't mean that they won't ultimately do it. There's an enormous amount of talk in Israel about the need to take on Iran one more time because of its ballistic missile program and its rebuilding, apparently, of its nuclear program. So I do think it's a serious concern.
Ethan, in terms of the view of what is going on in Iran right now within Israel, there's a lot of domestic turbulence. There's a lot of concern within, I would have thought, the upper echelons of the Iranian authorities about what is happening on the streets. To what extent is Israel going to sit back and watch that? Or does it feel that that just encourages the need for further action? Is the regime seen as weak and getting weaker?
The regime is seen as weak and getting weaker, but it's been more than a decade that we've been hearing Israeli analysts and officials say this government in Iran can't last. The people want to rise up against it and so on. So I think that, like everyone, like in Venezuela, like in a sort of whole bunch of other places, it's very difficult to predict what kind of tipping point you reach, how to make sure it's going to actually happen. So I think that the Israelis are eager to see this happen. That's their ideal, rather than be any kind of military activity. And so it's a kind of, they move on both fronts at the same time.
Ethan Bronner, thank you so much for being with us and have a wonderful new year. Joining us now, Wendy Schiller of Brown University. Wendy, thank you so much for being with us. I want to start with the focus that we're seeing in Washington, D.C., with President Trump squarely looking at Israel, squarely looking at Ukraine and Russia, squarely looking at Venezuela. What do you make of the geopolitical focus to end the year in Washington, D.C.?
Well, Lisa, I think this is a continuation of President Trump's pivot to exercising U.S. power in selected ways. I mean, we see this with all presidents when things domestically look a little bit more complicated and maybe not going as well as they would like in terms of getting the economy to where I think the Trump administration would prefer it to be for consumers. Looking at how the United States can be relevant, how Trump can be relevant, and it's a flurry of activity, and he seems, for the moment, genuinely committed not only to exercising U.S. power, but to achieving some breakthroughs, to getting some accomplishments, particularly with the Russia-Ukraine situation.
Given that, what do you make overnight of this accusation by Vladimir Putin that Ukraine targeted his home and saying that he was going to pause negotiations? How much do you think that really will derail that? And how much support do you see President Trump having in his own party to side with Vladimir Putin?
Well, Lisa, this is a really important question going into 2026, as the Republicans, particularly in the House, have to really see, what their position is, literally with their own voters and their own constituents, and they're getting sort of hammered on a lot of fronts and spending lots of time worrying about overseas matters. Doesn't seem like a winning combination or platform for the Republicans, given affordability issues and, whatever the fallout is on not extending the Obamacare subsidies. So for Ukraine, I think the issue is that Putin doesn't seem to want to stop. He just seems not inclined, despite the losses, despite economic penalties that he's incurring. He doesn't want to stop. And I think that's becoming more apparent, and there'll have to be some ceding of territory. And this is a problem for Trump because, if Putin keeps moving the goal line, it's just almost impossible to get a solid deal.
Wendy, just picking up on that point, good morning, it's Guy. How much longer has the president got to get all this done before he needs to focus on the midterms, before he, as you say, that he needs to turn back to domestic matters?
Well, Guy, this is the interesting thing about a second-term president, particularly President Trump right now. The exercise of executive power, Trump has used it in ways we haven't seen before. But foreign policy has always been sort of a freer range for executives, and you can accomplish more without Congress in foreign policy. He's got tariffs that we'll see what the Supreme Court says he can continue to do. But the point is, for Trump, the midterms don't actually matter all that much. He is in the model of a unitary executive. He's going to do what he wants to do until somebody stops him. And Congress so far has not exercised its power to stop him. So we may say, oh, he's a lame duck a year from now if they lose the House and maybe even the Senate. But in terms of the exercise of foreign policy, and even you can argue tariffs and possibly economic policy, he's going to keep going to use his executive power to the fullest.
But just in terms of his bandwidth, at the moment there seems to be a lot of bandwidth being used on foreign policy. He's got what's happening in the Middle East up in the air right now. He's got what's happening in Venezuela up in the air right now. He's got Ukraine up in the air right now. It's taking a lot of time. Does he have the time to do all of this, or does he actually now need to start focusing on those midterms? Just from a sort of political point of view, there's only 24 hours in the day. Can he spend as much time as he's doing at the moment on foreign policy and still see the Republicans having a decent showing come November?
Well, Guy, this is the really key question. For the Republicans, they're worried about his intervention in their primaries. So, when he decides to turn his attention to what they're doing, it matters to them because he can certainly, as we've seen in the fall, even in Tennessee, swing a primary at the last minute. So he doesn't think he has to pay attention 24 hours or really pivot that much. He has to intervene where it's going to be expedient for him. I think he would like to see these Obamacare subsidies extended. He may have different rhetoric, but he doesn't want that calamity on his hands. It's a distraction. But second, Trump likes a win. He likes a win he can take credit for. And increasingly, he's recognizing that's going to be much more difficult domestically than it is foreign policy. So I don't expect him to change his pivot anytime because he's got this political lever in the primaries on the Republicans, at least for the next 6 months, that he can swoop in, pressure point them, and get them to do what he thinks will be in his best interest, where he can claim a victory. So I'm not sure bandwidth is the right concept for Donald Trump. It's political victory. Where he sees it, he wants to take it.
Wendy Schiller of Brown University, thank you so much for being with us, and have a wonderful New Year celebration. Coming up, our conversation with Fed Governor Stephen Miron on his push for lower rates in the new year. Plus, Yahaira Anand with your morning movers. Newmont shares recovering this morning after major metal volatility. Those shares up 1.7% from New York. Futures looking for maybe a bounce back after 2 days of losses. This is Bloomberg Good Morning.
Silence isn't empty. It's full of proof. When a silent gesture orchestrates masterpieces, we're not just one step ahead. We're in a league of our own. From 50 years ago to today to tomorrow, CIB has always been here. Growth, innovation, and setting the standard for half a century. Progress driven by quiet mastery.
There's going to be a meaningful correction at some point over the course of 2026.
We want to make sure we're managing risk well next year.
What the market is saying is that earnings matter more than ever right now.
It is encouraging that we are seeing broader participation in the rally.
Investors need to be ready for surprises and the unexpected.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance on the penultimate trading day of 2025. Silver rebounding after its biggest drop in more than 5 years yesterday as thin trading and leveraged traders drive heightened volatility. President Trump threatening to bring a lawsuit against Fed Chair Powell for, quote, incompetence, and tech companies racing to lock in deals ahead of the new year, with Meta agreeing to a rare purchase of an Asian tech company is coming in just 10 days, according to people familiar with the matter. Guy Johnson is beaming in to join me from London this morning. I'm beaming in from New York. John and Anne-Marie are both off. Guy, thank you so much for being with us. We are seeing a bit of a sputtering out of the Santa Claus rally at the same time that there's a lot of volatility in the metal space. How much are we seeing just the typical end of the year mush versus something that does give a signal into 2026?
Beaming in, does that imply I have to smile throughout this entire show?
100%, absolutely.
I'd like to do that anyway. Okay, I can do that. Look, I think there's two things to say here. One of which is that, yeah, year-end mush is probably a factor here. Thin markets are probably a factor here. That's why you're getting the choppiness. But the bigger picture, Lisa, is that the metals market is signaling something loud and clear. And that is that inflation is going to be a factor. Look at what is happening with copper. That is telling you that there's going to be an inflationary story into 2026. Look at what silver and gold are telling you right now. They're telling you that the dollar is going to be choppy as well. That's going to be a theme into 2026. Put those two things together. What does that mean for the Fed? Well, I think we're going to get some clues today when it comes to what is happening with these minutes. I think that's going to be really interesting.
Yeah, we are going to get the meeting minutes later today around 2 p.m. Eastern time. We do get, of course, the ADP labor market data coming out at 8:15. We will parse through that. Tomorrow we get jobless claims. Otherwise, it's a pretty thin week. To that point about what we are seeing in the metals market, we are seeing a bit of a rebound after yesterday seeing silver come off. See its biggest sell-off going back 5 years. You have seen the best year since 1979 for both gold and silver. You have seen the best year for copper going back to 2009 with a 40% gain. Today we build on some of those metals gains. We are seeing silver popping back 3.5%, gold 1.3%. 4.3%. In the broader equity space, futures, if you take a look at S&P futures, completely range-bound. NASDAQ as well after 2 straight days of losses on both indexes. Russell 2000 trying to get a little bit of a pop with the rotation trade really gaining steam, up about 0.1%. Meanwhile, in the bond space, it is notable how little volatility there has been in this space throughout the second half of this year, especially due to all the concerns that Guy was just laying out with respect to inflation, with respect to Fed independence. You are seeing a little bit of a sell-off in bond price, yields slightly higher still. We are seeing yields significantly lower than where we started, at least in the 2s and 10 space. The yield curve steepening remains prevalent. 30-year yields at 4.8%. Almost exactly where they were to start the year. Coming up this hour, Kayla Sater of State Street Global Markets with stocks looking for direction to end the year. Wendy Schiller of Brown University, as President Donald Trump and Israel Prime Minister Benjamin Netanyahu present a united front. And Constance Hunter of Economist Intelligence on why the United States economy faces a bumpy road ahead. We begin this hour with stocks a little change as traders await Fed minutes and the latest read on the labor market. Kayla Sater of State Street writing, although turbulence may remain elevated and concentration risk will remain high in 2026, we are still in a pro-equity and buy dips environment. Kayla joins us now for more. Kayla, thank you so much for being with us. Before we get into the equity outlook for 2026, I'm wondering what signal you're taking from a metals market that has been beset by volatility heading into year end.
Yeah. Hi, Lisa. Thanks so much for having me today. I do think this is kind of a case where it's not so much fundamentally driven. It's more so technically driven. We do kind of see these things at the end of the year as well. And I think if we take a step back and look at the broader picture, a lot of those fundamentals remain intact. A couple of minutes ago, you already highlighted just how great of a year a lot of these metals have had and how great of a year silver has had. And I don't think that what the past few days has shown us really signals a change in the underlying fundamentals there.
So let's take a step back. And to Guy's point, it's a really good one. How much does this signal something deeper in terms of the big returns for gold, for silver, for copper? Speaking to inflation, speaking to possible debasement of fiat currencies, is there a signal for 2026 that is market moving, that is potentially important for markets to listen to?
Yeah, I think there's 2 factors I'm paying attention to here. One is that inflation risk. We are not out of the woods when it comes to inflation. This is also something I'm looking to learn a bit more about in the Fed minutes today. It's just how concerned is the Fed about inflation? Because we did see, notes of dissent and things like that in the meeting in December. So, this could reflect concerns about inflation. The second point is that this has been an incredibly challenging year to diversify, and metals have been one source of diversification in portfolios. And given the overall environment, I would expect that to continue into 2026.
Kelly, good morning. It's Guy. Talk to me about where you see the dollar going in 2026, because this looks like one of the big pivot points for the market. If I'm a US investor, I've made, 17% in the S&P this year. If I'm a Eurozone investor, I've made just 3%. The dollar has been the biggest factor in my portfolio. Where does it go next?
Yeah, everyone cares where the dollar is going next. I think while there are fewer headwinds, there aren't a lot of tailwinds. So, for example, what I mean by that is when we look at our institutional investor behavior, our flow data signals that flows continue to sit around neutral. Now, 2 months ago, they continued to show really strong selling. So really what we've seen is either selling or getting back to neutral. No real demand for buying. And I think we're not going to see appetite for dollar buying until we get through the first half of the year, because as we look towards cuts, as the Fed is expected to cut, that should continue to weigh on the dollar moving forward. So I still think there's challenges for dollar strength from here.
So you're implying that you think the Fed will be done by mid-year, that we'll be done with the cuts, and the next move, kind of from 6 months into this year, will be a hike. Kind of, how do I think about, once I've got through the first 6 months, how significantly does the landscape change once we get to that point?
Yeah, that's a great question. I think moving forward, it's going to depend on a few things. One is, and the most important thing I really think, is inflation. We are not out of the woods when it comes to inflation. Inflation impacts everyone, but does not impact everyone equally. And when we think about upcoming stimulus in the economy, so things like One Big Beautiful Bill Act stimulus, all of that can feed the economy and let inflation continue to fester. And so I think that will be the most important factor in determining what's next for the Fed and really what's next for the dollar as well.
Kayla, does that mean that you don't really buy the rotation trade? That if you do think that inflation is resurgent, you think that the Fed isn't going to be in play as much as people think, and frankly, it's not going to fuel the outperformance of small caps and the rest of the 493?
I think you're spot on. I think it's going to be really challenging to see a sustained small cap rally if we start to see inflation, or if we continue to see inflation be relatively stubborn. There's a reason why we even see concentration within large cap stocks, is that concentration continues to sit with high quality companies, high quality parts of the market that are not debt dependent, that are not impacted as much by higher rates or elevated rates. And so I think that's going to continue moving forward. It's going to be really challenging for small caps from here.
It really raises this question about big cap tech and whether people have maybe had too much skepticism around that. And I wonder about your view, especially given some of the acquisitions that we've seen to end the year. We saw NVIDIA take a stake in Grok. It was a non-controlling stake in a certain way, or non-exclusive, I should say. So it is maybe going to fly under the regulatory radar this morning. Meta Platforms is agreeing to buy Manus, which is a Singapore-based AI-related company with its roots very much in China. How much does this just solidify the dominance of the Magnificent Seven?
I really think it all comes down to balance sheets. These are huge companies with diversified revenue streams, with huge cash flows. And so this gives them a lot of strength and power in the marketplace. One thing that's interesting is when we look at our data, so over 40 trillion assets under custody, looking specifically at institutional investors, what we find is that there's really just one overweight, and it's tech. You see a relatively mild overweight in communications. Everything else is neutral or underweight. And so I think that begs two questions. One, where do we go from here? Is there any room within tech where we can still add exposure? The answer to that is yes. Actually, when we look at positioning, one industry group where positioning is just neutral is software. So there still is room to add to software. The other point is that, are there any underweight sectors where we should start to see appetite increase just because they're too underweight? And one place that stands out in that regard is healthcare. So healthcare flows have started to increase. And I think that's more a reflection of exposure is just so underweight. And there are less headwinds now than there were before. I'm not saying we're extremely bullish on healthcare, but we are starting to see some signs of M&A and some signs of improvement that maybe look like there is just too much bad news there. But I think, moving forward into 2026, that big story is really going to continue to be AI and tech.
Kayla, how divorced from the consumer is the AI trade? Can the consumer still slow down and the AI trade carry on? Is this a twin-track economy? And you could almost, people talk about the K-shaped recovery, but is it a K-shaped market? And is it going to continue to be a K-shaped market?
Absolutely. I think you kind of see shades of this K-shaped economy, K-shaped market, in a lot of parts of the market and the economy. So on one hand, you have small cap versus large cap companies. That's likely to continue. We see a K-shaped economy in terms of the consumer. That's likely to continue. And one really important factor there is that there are structural changes that have occurred over the last 5 years that really exacerbate the K. So, for example, housing. Housing has become so unaffordable for so many parts of the market or so many participants in the economy. So, for example, thinking about how during COVID, so many people refinanced their mortgages. And if you didn't have a home then, you really missed out on that opportunity. And now if you're still renting, you're still stuck in that environment where you're impacted by still relatively high interest rates. And so that's another example of a K. I think we see it, as you said, two tracks, I think we'll continue to see that in terms of equities and in the real economy. And that really highlights why inflation is so structurally important. And I think that's why, bringing it back to the Fed, you're starting to see more members of the Fed be more vocal about those inflation concerns.
Kayla Sater of Straits Street, thank you so much for being with us. Kayla Sater, have a wonderful new year and see you in 2026. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Lizzie Burden. Lizzie.
Hey, Lisa. President Donald Trump says that the U.S. struck a facility inside Venezuela in what would be a significant escalation in its campaign against alleged drug trafficking operations there. Trump's reference to an attack within Venezuela would mark the first time that the U.S. has announced a land strike in the country. And Russian President Vladimir Putin says that he'll revise his country's negotiating position after claiming that Ukrainian drones targeted his residence. Putin told President Trump in a call on Monday that Moscow intends to work closely with the US on peace efforts, but would reconsider a number of previously reached agreements. Ukrainian President Volodymyr Zelensky dismissed the Russian claims as a new lie. And President Donald Trump reiterating that he'd love to fire Fed Chair Jay Powell. Trump saying that he might still fire him for, quote, gross incompetence. Trump came close to seeking the Fed chair's ouster in July, but backed away after a negative reaction in financial markets. He said he'll probably announce his pick for Fed chair in January, and his preferred candidate hasn't changed. That's your Bloomberg Brief. Lisa.
Thank you so much, Lizzie. The easiest job in Washington, D.C. Up next, standing behind Israel.
We talked about Hamas, and they're going to be given a very short period of time to disarm. Speaking of Iran, I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup.
Wendy Schiller of Brown University joins us next as we expand our view from the domestic to the international. This is Bloomberg Surveillance. Good morning. Sputtering out of the Santa Claus rally, at least for now. We had seen 2 straight days of losses, potentially building on that for a third straight day, with S&P futures lower by about 0.1%. You were seeing a bit of a sell-off in the bond space, but really it has been incredibly quiet, not very volatile. In the fixed income cohort, 4.11% in the crude market. This has been a market. Crude futures have lost 17% so far this year, on pace for their worst year going back to the height of the pandemic back in 2020. We are seeing a bit of a firming up this morning, potentially because of geopolitics, potentially because OPEC Plus is likely to confirm an oil production pause. This is being reported this morning. In the meantime, a real question around geopolitics under surveillance this morning, standing behind Israel.
I'm not concerned about anything that Israel's doing. Israel's lived up to the plan 100%. Speaking of Iran, I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup. We talked about Hamas and we talked about disarmament, and they're going to be given a very short period of time to disarm. If they don't disarm, as they agreed to do, they agreed to it, and then they'll be held to pay for them.
Here's the latest. President Donald Trump meeting with Israeli Prime Minister Benjamin Netanyahu in Florida. The president issuing a new warning for Hamas in the push to move towards phase 2 of the peace plan for Gaza. Joining us now is someone who's been covering the story very closely, Bloomberg's Israel bureau chief, Ethan Bronner from Tel Aviv. Ethan, can you just give us a sense of what stood out from you the most from the meeting that we saw yesterday between the two leaders?
Well, I think the clips you played stood out most for me in the sense that they were such a full embrace of Israel by the president. It's not entirely clear that that's exactly what's happening behind the scenes, but as a public gesture, certainly that was the most important thing for Netanyahu. And, you know, it remains to be seen whether anything has been decided about how to move forward in Gaza, as well as in a whole range of other issues around Israel. They were very, very sparse with details publicly.
Ethan, there was also this extra question around Iran and whether this really did raise the specter of additional strikes by Israel or, frankly, by the U.S. on Iranian nuclear facilities. How much credence should we put into that?
It's another very difficult question. I would say that Israel believes that by talking aloud about the possible strike, it will spook Iran into reducing its activity, and therefore there won't be a need for it. But it doesn't mean that they won't ultimately do it. There's an enormous amount of talk in Israel about the need to take on Iran one more time because of its ballistic missile program and its rebuilding, apparently, of its nuclear program. So I do think it's a serious concern.
Ethan, in terms of the view of what is going on in Iran right now within Israel, there's a lot of domestic turbulence. There's a lot of concern within, I would have thought, the upper echelons of the Iranian authorities about what is happening on the streets. To what extent is Israel going to sit back and watch that? Or does it feel that just encourages the need for further action? Is the regime seen as weak and getting weaker?
The regime is seen as weak and getting weaker, but it's been more than a decade that we've been hearing Israeli analysts and officials say this government in Iran can't last. The people want to rise up against it and so on. So I think that, like everyone, like in Venezuela, like in a sort of whole bunch of other places, it's very difficult to predict what kind of tipping point you reach, how to make sure it's going to actually happen. So I think that the Israelis are eager to see this happen. That's their ideal, rather than be any kind of military activity. And so it's a kind of, they move on both fronts at the same time.
Ethan Bronner, thank you so much for being with us and have a wonderful new year. Joining us now, Wendy Schiller of Brown University. Wendy, thank you so much for being with us. I want to start with the focus that we're seeing in Washington, D.C., with President Trump squarely looking at Israel, squarely looking at Ukraine and Russia, squarely looking at Venezuela. What do you make of the geopolitical focus to end the year in Washington, D.C.?
Well, Lisa, I think this is a continuation of President Trump's pivot to exercising U.S. power in selected ways. I mean, we see this with all presidents when things domestically look a little bit more complicated and maybe not going as well as they would like in terms of getting the economy to where I think the Trump administration would prefer it to be for consumers. Looking at how the United States can be relevant, how Trump can be relevant, and it's a flurry of activity, and he seems, for the moment, genuinely committed not only to exercising U.S. power, but to achieving some breakthroughs, to getting some accomplishments, particularly with the Russia-Ukraine situation.
Given that, what do you make overnight of this accusation by Vladimir Putin that Ukraine targeted his home and saying that he was going to pause negotiations? How much do you think that really will derail that? And how much support do you see President Trump having in his own party to side with Vladimir Putin?
Well, Lisa, this is a really important question going into 2026, as the Republicans, particularly in the House, have to really see, what their position is, literally with their own voters and their own constituents, and they're getting sort of hammered on a lot of fronts and spending lots of time worrying about overseas matters. Doesn't seem like a winning combination or platform for the Republicans, given affordability issues and, whatever the fallout is on not extending the Obamacare subsidies. So for Ukraine, I think the issue is that Putin doesn't seem to want to stop. He just seems not inclined, despite the losses, despite economic penalties that he's incurring. He doesn't want to stop. And I think that's becoming more apparent, and there'll have to be some ceding of territory. And this is a problem for Trump because, if Putin keeps moving the goal line, it's just almost impossible to get a solid deal.
Wendy, just picking up on that point, good morning, it's Guy. How much longer has the president got to get all this done before he needs to focus on the midterms, before he, as you say, that he needs to turn back to domestic matters?
Well, Guy, this is the interesting thing about a second-term president, particularly President Trump right now. The exercise of executive power, Trump has used it in ways we haven't seen before. But foreign policy has always been sort of a freer range for executives, and you can accomplish more without Congress. In foreign policy. He's got tariffs that we'll see what the Supreme Court says he can continue to do. But the point is, for Trump, the midterms don't actually matter all that much. He is in the model of a unitary executive. He's going to do what he wants to do until somebody stops him. And Congress so far has not exercised its power to stop him. So we may say, he's a lame duck a year from now if they lose the House and maybe even the Senate. But in terms of the exercise of foreign policy, and even you can argue tariffs and possibly economic policy, he's going to keep going to use his executive power to the fullest.
But just in terms of his bandwidth, At the moment, there seems to be a lot of bandwidth being used on foreign policy. He's got what's happening in the Middle East up in the air right now. He's got what's happening in Venezuela up in the air right now. He's got Ukraine up in the air right now. It's taking a lot of time. Does he have the time to do all of this, or does he actually now need to start focusing on those midterms? Just from a sort of political point of view, there's only 24 hours in the day. Can he spend as much time as he's doing at the moment on foreign policy and still see the Republicans having a decent showing come November?
Well, Guy, this is the really key question. For the Republicans, they're worried about his intervention in their primaries. So, when he decides to turn his attention to what they're doing, it matters to them because he can certainly, as we've seen in the fall, even in Tennessee, swing a primary at the last minute. So he doesn't think he has to pay attention 24 hours or really pivot that much. He has to intervene where it's going to be expedient for him. I think he would like to see these Obamacare subsidies extended. He may have different rhetoric, but he doesn't want that calamity on his hands. It's a distraction. But second, Trump likes a win. He likes a win he can take credit for. And increasingly, he's recognizing that's going to be much more difficult domestically than it is foreign policy. So I don't expect him to change his pivot anytime because he's got this political lever in the primaries on the Republicans, at least for the next 6 months, that he can swoop in, pressure point them, and get them to do what he thinks will be in his best interest, where he can claim a victory. So I'm not sure bandwidth is the right concept for Donald Trump. It's political victory. Where he sees it, he wants to take it.
Wendy Schiller of Brown University, thank you so much for being with us, and have a wonderful New Year celebration. Coming up, our conversation with Fed Governor Stephen Myron on his push for lower rates in the new year. Plus, Yahaira Anand with your morning movers. Newmont shares recovering this morning after major metal volatility. Those shares up 1.7% from New York. Futures looking for maybe a bounce back after 2 days of losses. This is Bloomberg Good Morning.
There's going to be a meaningful correction at some point over the course of 2026.
We want to make sure we're managing risk well next year.
What the market is saying is that earnings matter more than ever right now.
It is encouraging that we are seeing broader participation in the rally.
Investors need to be ready for surprises and the unexpected.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance on the penultimate trading day of 2025. Silver rebounding after its biggest drop in more than 5 years yesterday as thin trading and leveraged traders drive heightened volatility. President Trump threatening to bring a lawsuit against Fed Chair Powell for, quote, incompetence, and tech companies racing to lock in deals ahead of the new year, with Meta agreeing to a rare purchase of an Asian tech company is coming in just 10 days, according to people familiar with the matter. Guy Johnson is beaming in to join me from London this morning. I'm beaming in from New York. John and Anne-Marie are both off. Guy, thank you so much for being with us. We are seeing a bit of a sputtering out of the Santa Claus rally at the same time that there's a lot of volatility in the metal space. How much are we seeing just the typical end of the year mush versus something that does give a signal into 2026?
Beaming in, does that imply I have to smile throughout this entire show?
100%, absolutely.
I'd like to do that anyway. Okay, I can do that. Look, I think there's two things to say here. One of which is that, year-end mush is probably a factor here. Thin markets are probably a factor here. That's why you're getting the choppiness. But the bigger picture, Lisa, is that the metals market is signaling something loud and clear. And that is that inflation is going to be a factor. Look at what is happening with copper. That is telling you that there's going to be an inflationary story into 2026. Look at what silver and gold are telling you right now. They're telling you that the dollar is going to be choppy as well. That's going to be a theme into 2026. Put those two things together. What does that mean for the Fed? Well, I think we're going to get some clues today when it comes to what is happening with these minutes. I think that's going to be really interesting.
Yeah, we are going to get the meeting minutes later today around 2 p.m. Eastern time. We do get, of course, the ADP labor market data coming out at 8:15. We will parse through that. Tomorrow we get jobless claims. Otherwise, it's a pretty thin week. To that point about what we are seeing in the metals market, we are seeing a bit of a rebound after yesterday seeing silver come off. See its biggest sell-off going back 5 years. You have seen the best year since 1979 for both gold and silver. You have seen the best year for copper going back to 2009 with a 40% gain. Today we build on some of those metals gains. We are seeing silver popping back 3.5%, gold 1.3%. 3%. In the broader equity space, futures, if you take a look at S&P futures, completely range-bound. NASDAQ as well after 2 straight days of losses on both indexes. Russell 2000 trying to get a little bit of a pop with the rotation trade really gaining steam, up about 0.1%. Meanwhile, in the bond space, it is notable how little volatility there has been in this space throughout the second half of this year, especially due to all the concerns that Guy was just laying out with respect to inflation, with respect to Fed independence. You are seeing a little bit of a sell-off in bond price, yields slightly higher still. We are seeing yields significantly lower than where we started, at least in the 2s and 10 space. The yield curve steepening remains prevalent. 30-year yields at 4.8%. Almost exactly where they were to start the year. Coming up this hour, Kayla Sater of State Street Global Markets, with stocks looking for direction to end the year. Wendy Schiller of Brown University, as President Donald Trump and Israel Prime Minister Benjamin Netanyahu present a united front. And Constance Hunter of Economist Intelligence on why the United States economy faces a bumpy road ahead. We begin this hour with stocks a little change as traders await Fed minutes and the latest read on the labor market. Kayla Sater of State Street writing, although turbulence may remain elevated and concentration risk will remain high in 2026, we are still in a pro-equity and buy dips environment. Kayla joins us now for more. Kayla, thank you so much for being with us. Before we get into the equity outlook for 2026, I'm wondering what signal you're taking from a metals market that has been beset by volatility heading into year end.
Yeah. Hi, Lisa. Thanks so much for having me today. I do think this is kind of a case where it's not so much fundamentally driven. It's more so technically driven. We do kind of see these things at the end of the year as well. And I think if we take a step back and look at the broader picture, a lot of those fundamentals remain intact. A couple of minutes ago, you already highlighted just how great of a year a lot of these metals have had and how great of a year silver has had. And I don't think that what the past few days has shown us really signals a change in the underlying fundamentals there.
So let's take a step back. And to Guy's point, it's a really good one. How much does this signal something deeper in terms of the big returns for gold, for silver, for copper? Speaking to inflation, speaking to possible debasement of fiat currencies, is there a signal for 2026 that is market moving, that is potentially important for markets to listen to?
Yeah, I think there's 2 factors I'm paying attention to here. One is that inflation risk. We are not out of the woods when it comes to inflation. This is also something I'm looking to learn a bit more about in the Fed minutes today. It's just how concerned is the Fed about inflation? Because we did see, notes of dissent and things like that in the meeting in December. So, this could reflect concerns about inflation. The second point is that this has been an incredibly challenging year to diversify, and metals have been one source of diversification in portfolios. And given the overall environment, I would expect that to continue into 2026.
Kelly, good morning. It's Guy. Talk to me about where you see the dollar going in 2026, because this looks like one of the big pivot points for the market. If I'm a US investor, I've made, 17% in the S&P this year. If I'm a Eurozone investor, I've made just 3%. The dollar has been the biggest factor in my portfolio. Where does it go next?
Yeah, everyone cares where the dollar is going next. I think while there are fewer headwinds, there aren't a lot of tailwinds. So, for example, what I mean by that is when we look at our institutional investor behavior, our flow data signals that flows continue to sit around neutral. Now, 3 months ago, 2 months ago, they continued to show really strong selling. So really what we've seen is either selling or getting back to neutral. No real demand for buying. And I think we're not going to see appetite for dollar buying until we get through the first half of the year, because as we look towards cuts, as the Fed is expected to cut, that should continue to weigh on the dollar moving forward. So I still think there's challenges for dollar strength from here.
So you're implying that you think the Fed will be done by mid-year, that we'll be done with the cuts, and the next move, kind of from 6 months into this year, will be a hike. How do I think once I've got through the first 6 months, how significantly does the landscape change once we get to that point?
Yeah, that's a great question. I think moving forward, it's going to depend on a few things. One is, and the most important thing I really think, is inflation. We are not out of the woods when it comes to inflation. Inflation impacts everyone, but does not impact everyone equally. And when we think about upcoming stimulus in the economy, so things like One Big Beautiful Bill Act stimulus, all of that can feed the economy and let inflation continue to fester. And so I think that will be the most important factor in determining what's next for the Fed and really what's next for the dollar as well.
Kayla, does that mean that you don't really buy the rotation trade? That if you do think that inflation is resurgent, you think that the Fed isn't going to be in play as much as people think? And frankly, it's not going to fuel the outperformance of small caps and the rest of the 493.
I think you're spot on. I think it's going to be really challenging to see a sustained small cap rally if we start to see inflation, or if we continue to see inflation be relatively stubborn. There's a reason why we even see concentration within large cap stocks, is that concentration continues to sit with high quality companies, high quality parts of the market that are not debt dependent, that are not impacted as much by higher rates or elevated rates. And so I think that's going to continue moving forward. It's going to be really challenging for small caps from here.
It really raises this question about big cap tech and whether people have maybe had too much skepticism around that. And I wonder about your view, especially given some of the acquisitions that we've seen to end the year. We saw NVIDIA take a stake in Grok. It was a non-controlling stake in a certain way, or non-exclusive, I should say. So it is maybe going to fly under the regulatory radar this morning. Meta Platforms is agreeing to buy Manus, which is a Singapore-based AI-related company with its roots very much in China. How much does this just solidify the dominance of the Magnificent Seven?
I really think it all comes down to balance sheets. These are huge companies with diversified revenue streams, with huge cash flows. And so this gives them a lot of strength and power in the marketplace. One thing that's interesting is when we look at our data, so over 40 trillion assets under custody, looking specifically at institutional investors, what we find is that there's really just one overweight, and it's tech. You see a relatively mild overweight in communications. Everything else is neutral or underweight. And so I think that begs two questions. One, where do we go from here? Is there any room within tech where we can still add exposure? The answer to that is yes. Actually, when we look at positioning, one industry group where positioning is just neutral is software. So there still is room to add to software. The other point is that, are there any underweight sectors where we should start to see appetite increase just because they're too underweight? And one place that stands out in that regard is healthcare. So healthcare flows have started to increase. And I think that's more a reflection of exposure is just so underweight. And there are less headwinds now than there were before. I'm not saying we're extremely bullish on healthcare, but we are starting to see some signs of M&A and some signs of improvement that maybe look like there is just too much bad news there. But I think, moving forward into 2026, that big story is really going to continue to be AI and tech.
Kayla, how divorced from the consumer is the AI trade? Can the consumer still slow down and the AI trade carry on? Is this a twin-track economy? And you could almost, people talk about the K-shaped recovery, but is it a K-shaped market? And is it going to continue to be a K-shaped market?
Absolutely. I think you kind of see shades of this K-shaped economy, K-shaped market, in a lot of parts of the market and the economy. So on one hand, you have small cap versus large cap companies. That's likely to continue. We see a K-shaped economy in terms of the consumer. That's likely to continue. And one really important factor there is that there are structural changes that have occurred over the last 5 years that really exacerbate the K. So for example, housing. Housing has become so unaffordable for so many parts of the market or so many participants in the economy. So for example, thinking about how during COVID, so many people refinanced their mortgages. And if you didn't have a home, then you really missed out on that opportunity. And now if you're still renting, you're still stuck in that environment where you're impacted by still relatively high interest rates. And so that's another example of a K. I think we see it, is, as you said, two tracks. I think we'll continue to see that in terms of equities and in the real economy. And that really highlights why inflation is so structurally important. And I think that's why, bringing it back to the Fed, you're starting to see more members of the Fed be more vocal about those inflation concerns.
Kayla Seder of Straight Street, thank you so much for being with us. Kayla Seder, have a wonderful new year and see you in 2026. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Lizzie Burden. Lizzie.
Hey, Lisa. President Donald Trump says that the U.S. struck a facility inside Venezuela in what would be a significant escalation in its campaign against alleged drug trafficking operations there. Trump's reference to an attack within Venezuela would mark the first time that the U.S. has announced a land strike in the country. And Russian President Vladimir Putin says that he'll revise his country's negotiating position after claiming that Ukrainian drones targeted his residence. Putin told President Trump in a call on Monday that Moscow intends to work closely with the U.S. on peace efforts, but would reconsider a number of previously reached agreements. Ukrainian President Volodymyr Zelensky dismissed the Russian claims as a new lie. And President Donald Trump reiterating that he'd love to fire Fed Chair Jay Powell. Trump saying that he might still fire him for, quote, gross incompetence. Trump came close to seeking the Fed chair's ouster in July, but backed away after a negative reaction in financial markets. He said he'll probably announce his pick for Fed chair in January, and his preferred candidate hasn't changed. That's your Bloomberg Brief. Lisa.
Thank you so much, Lizzie. The easiest job in Washington, D.C. Up next, standing behind Israel.
We talked about Hamas, and they're going to be given a very short period of time to disarm. Speaking of Iran, I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup.
Wendy Schiller of Brown University joins us next as we expand our view from the domestic to the international. This is Bloomberg Surveillance. Good morning. Sputtering out of the Santa Claus rally, at least for now. We had seen 2 straight days of losses, potentially building on that for a third straight day, with S&P futures lower by about 0.1%. You were seeing a bit of a sell-off in the bond space, but really it has been incredibly quiet, not very volatile in the fixed income cohort, 4.11% in the crude market. This has been a market. Crude futures have lost 17% so far this year, on pace for their worst year going back to the height of the pandemic back in 2020. We are seeing a bit of a firming up this morning, potentially because of geopolitics, potentially because OPEC Plus is likely to confirm an oil production pause. This being reported this morning. In the meantime, a real question around geopolitics under surveillance this morning, standing behind Israel.
I'm not concerned about anything that Israel's doing. Israel's lived up to the plan 100%. Speaking of Iran, I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup. We talked about Hamas and we talked about disarmament, and they're going to be given a very short period of time to disarm. If they don't disarm, as they agreed to do, they agreed to it, and then they'll be held to pay for them.
Here's the latest. President Donald Trump meeting with Israeli Prime Minister Benjamin Netanyahu in Florida. The president issuing a new warning for Hamas in the push to move towards phase 2 of the peace plan for Gaza. Joining us now is someone who's been covering the story very closely, Bloomberg's Israel bureau chief, Ethan Bronner from Tel Aviv. Ethan, can you just give us a sense of what stood out from you the most from the meeting that we saw yesterday between the two leaders?
Well, I think the clips you played stood out most for me in the sense that they were such a full embrace of Israel by the president. It's not entirely clear that that's exactly what's happening behind the scenes, but as a public gesture, certainly that was the most important thing for Netanyahu. And, you know, it remains to be seen whether anything has been decided about how to move forward in Gaza, as well as in a whole range of other issues around Israel. They were very, very sparse with details publicly.
Ethan, there was also this extra question around Iran and whether this really did raise the specter of additional strikes by Israel or, frankly, by the U.S. on Iranian nuclear facilities. How much credence should we put into that?
It's another very difficult question. I would say that Israel believes that by talking aloud about the possible strike, it will spook Iran into reducing its activity, and therefore there won't be a need for it. But it doesn't mean that they won't ultimately do it. There's an enormous amount of talk in Israel about the need to take on Iran one more time because of its ballistic missile program and its rebuilding, apparently, of its nuclear program. So I do think it's a serious concern.
Ethan, in terms of the view of what is going on in Iran right now within Israel, there's a lot of domestic turbulence. There's a lot of concern within, I would have thought, the upper echelons of the Iranian authorities about what is happening on the streets. To what extent is Israel going to sit back and watch that? Or does it feel that that just encourages the need for further action? Is the regime seen as weak and getting weaker?
The regime is seen as weak and getting weaker, but it's been more than a decade that we've been hearing Israeli analysts and officials say this government in Iran can't last. The people want to rise up against it and so on. So I think that, like everyone, like in Venezuela, like in a sort of whole bunch of other places, it's very difficult to predict what kind of tipping point you reach, how to make sure it's going to actually happen. So I think that the Israelis are eager to see this happen. That's their ideal, rather than be any kind of military activity. And so it's a kind of, they move on both fronts at the same time.
Ethan Bronner, thank you so much for being with us and have a wonderful new year. Joining us now, Wendy Schiller of Brown University. Wendy, thank you so much for being with us. I want to start with the focus that we're seeing in Washington, D.C., with President Trump squarely looking at Israel, squarely looking at Ukraine and Russia, squarely looking at Venezuela. What do you make of the geopolitical focus to end the year in Washington, D.C.?
Well, Lisa, I think this is a continuation of President Trump's pivot to exercising U.S. power in selected ways. I mean, we see this with all presidents when things domestically look a little bit more complicated and maybe not going as well as they would like in terms of getting the economy to where I think the Trump administration would prefer it to be for consumers. Looking at how the United States can be relevant, how Trump can be relevant, and it's a flurry of activity, and he seems, for the moment, genuinely committed not only to exercising U.S. power, but to achieving some breakthroughs, to getting some accomplishments, particularly with the Russia-Ukraine situation.
Given that, what do you make overnight of this accusation by Vladimir Putin that Ukraine targeted his home and saying that he was going to pause negotiations? How much do you think that really will derail that? And how much support do you see President Trump having in his own party to side with Vladimir Putin?
Well, Lisa, this is a really important question going into 2026, as the Republicans, particularly in the House, have to really see, what their position is, literally with their own voters and their own constituents, and they're getting sort of hammered on a lot of fronts and spending lots of time worrying about overseas matters. Doesn't seem like a winning combination or platform for the Republicans, given affordability issues and, whatever the fallout is on not extending the Obamacare subsidies. So for Ukraine, I think the issue is that Putin doesn't seem to want to stop. He just seems not inclined, despite the losses, despite economic penalties that he's incurring. He doesn't want to stop. And I think that's becoming more apparent, and there'll have to be some ceding of territory. And this is a problem for Trump because, if Putin keeps moving the goal line, it's just almost impossible to get a solid deal.
Wendy, just picking up on that point, good morning, it's Guy. How much longer has the president got to get all this done before he needs to focus on the midterms, before he, as you say, that he needs to turn back to domestic matters?
Well, Guy, this is the interesting thing about a second-term president, particularly President Trump right now. The exercise of executive power, Trump has used it in ways we haven't seen before. But foreign policy has always been sort of a freer range for executives. And you can accomplish more without Congress in foreign policy. He's got tariffs that we'll see what the Supreme Court says he can continue to do. But the point is, for Trump, the midterms don't actually matter all that much. He is in the model of a unitary executive. He's going to do what he wants to do until somebody stops him. And Congress so far has not exercised its power to stop him. So we may say, he's a lame duck a year from now if they lose the House and maybe even the Senate. But in terms of the exercise of foreign policy, and even you can argue tariffs and possibly economic policy, he's going to keep going to use his executive power to the fullest.
But just in terms of his bandwidth, At the moment, there seems to be a lot of bandwidth being used on foreign policy. He's got what's happening in the Middle East up in the air right now. He's got what's happening in Venezuela up in the air right now. He's got Ukraine up in the air right now. It's taking a lot of time. Does he have the time to do all of this, or does he actually now need to start focusing on those midterms? Just from a sort of political point of view, there's only 24 hours in the day. Can he spend as much time as he's doing at the moment on foreign policy and still see the Republicans having a decent showing come November?
Well, Guy, this is the really key question. For the Republicans, they're worried about his intervention in their primaries. So, when he decides to turn his attention to what they're doing, it matters to them because he can certainly, as we've seen in the fall, even in Tennessee, swing a primary at the last minute. So he doesn't think he has to pay attention 24 hours or really pivot that much. He has to intervene where it's going to be expedient for him. I think he would like to see these Obamacare subsidies extended. He may have different rhetoric, but he doesn't want that calamity on his hands. It's a distraction. But second, Trump likes a win. He likes a win he can take credit for. And increasingly, he's recognizing that's going to be much more difficult domestically than it is foreign policy. So I don't expect him to change his pivot anytime because he's got this political lever in the primaries on the Republicans, at least for the next 6 months, that he can swoop in, pressure point them, and get them to do what he thinks will be in his best interest, where he can claim a victory. So I'm not sure bandwidth is the right concept for Donald Trump. It's political victory. Where he sees it, he wants to take it.
Wendy Schiller of Brown University, thank you so much for being with us, and have a wonderful New Year's celebration. Coming up, our conversation with Fed Governor Stephen Miron on his push for lower rates in the new year. Plus, Yahira Anand with your morning movers. Newmont shares recovering this morning after major metal volatility. Those shares up 1.7% from New York. Futures looking for maybe a bounce back after 2 days of losses. This is Bloomberg Good Morning.
There's going to be a meaningful correction at some point over the course of 2026.
We want to make sure we're managing risk well next year.
What the market is saying is that earnings matter more than ever right now.
It is encouraging that we are seeing broader participation in the rally.
Investors need to be ready for surprises and the unexpected.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome to Bloomberg Surveillance on the penultimate trading day of 2025. Silver rebounding after its biggest drop in more than 5 years yesterday as thin trading and leveraged traders drive heightened volatility. President Trump threatening to bring a lawsuit against Fed Chair Powell for, quote, incompetence, and tech companies racing to lock in deals ahead of the new year, with Meta agreeing to a rare purchase of an Asian tech company is coming in just 10 days, according to people familiar with the matter. Guy Johnson is beaming in to join me from London this morning. I'm beaming in from New York. John and Anne-Marie are both off. Guy, thank you so much for being with us. We are seeing a bit of a sputtering out of the Santa Claus rally at the same time that there's a lot of volatility in the metal space. How much are we seeing just the typical end of the year mush versus something that does give a signal into 2026?
Beaming in, does that imply I have to smile throughout this entire show?
100%, absolutely.
I'd like to do that anyway. Okay, I can do that. Look, I think there's two things to say here. One of which is that, yeah, year-end mush is probably a factor here. Thin markets are probably a factor here. That's why you're getting the choppiness. But the bigger picture, Lisa, is that the metals market is signaling something loud and clear. And that is that inflation is going to be a factor. Look at what is happening with copper. That is telling you that there's going to be an inflationary story into 2020.
Say I'm a little bit more optimistic now than I was, back in April during Liberation Day, given just that we have at least more certainty, a little bit more clarity on the tariff front in terms of what the levels are. We're not talking about 50% anymore or anything like that. Whether or not they're legal is another story, but that sets up for at least a firmer, I think, a start to the year. We know what to expect.
News when you want it with Bloomberg News Now. I'm Valerie Teitel.
And I'm Stephen Carroll.
Global equity markets are a touch weaker on the final day of trading of 2025 after a year that saw markets ride out a series of shocks to deliver repeated record highs. The MSCI All-Country World Index has risen by more than 20% this year, supported by rate cuts and huge bets on artificial intelligence. Precious metals also had a bumper year, with gold and silver both set for their best annual gain since 1979, although silver is dropping sharply again today, down around 5.25%. But according to Anna Rathburn, the CEO and founder of Grenadilla Advisory, there are 3 areas of concern heading into the new trading year.
Tariffs, we're not done yet. It's certainly with China, our largest trading partner, or used to be. Secondly, I think we have to pay attention to the growth factor of the U.S. economy. The uptick in the unemployment rate that we saw last, I know a lot of people took it with a huge grain of salt, but wouldn't be surprised if that continues on an upward trend. And lastly, I think geopolitics, it's hard to price in. It's difficult to understand exactly how it's going to impact investing, but that is something that could scare the markets, especially when valuations are already high.
Despite those notes of caution from Rathburn, none of the 21 Wall Street forecasters surveyed by Bloomberg are predicting a decline in the S&P 500 next year. Their average year-end projection for 2026 is a 9% rise in the U.S. benchmark. If correct, stocks are headed for their longest stretch of annual gains since the lead-up to the global financial crisis.
President Xi Jinping says China is set to meet its economic targets for 2025, with growth expected to reach about 5%. Addressing the country's top political advisory body on New Year's Eve, Xi said the economy has demonstrated resilience despite challenges. Those comments come as China's factory activity staged an unexpected recovery in December, bringing an end to the sector's longest slump on record. The official Manufacturing Purchasing Managers Index rose to 50.1 in the final month of the year, up from 49.2 in November. A reading above 50 indicates expansion.
And rail services between London and continental Europe have resumed after a power issue in the Channel Tunnel led to mass cancellations yesterday. Some Eurostar passenger trains were blocked before entering the tunnel, forcing hundreds of passengers to spend the night stranded on board. Francis Collings spent the night stuck on a train outside Folkestone.
The power was turned off. So we have lighting, but it's low lighting. But this seems to have affected the toilets, which don't seem to want to flush. We're getting information, but it does seem to be a little bit all over the place. The staff, who are very attentive, don't really know entirely what's going on.
Francis Collings speaking there as the Eurostar warned of further delays and last-minute cancellations today due to knock-on effects from the power issue. 2 early morning services from London were cancelled, and the shuttle car services through the tunnel are running with delays of up to 6 hours.
Thieves have stolen valuables worth tens of millions of euros from safety deposit boxes inside a German bank vault. Images released by police show a large hole drilled through a wall and the vault left ransacked. According to Sparkasse Bank, around 2,700 customers were affected by the theft in the city of Gelsenkirchen. Authorities estimate the stolen items could be worth between 10 and 90 million euros.
And European leaders, including Poland's Donald Tusk and EU Commission President Ursula von der Leyen, have spoken to discuss Russia's announcement that it would toughen its negotiating stance over Ukraine. The news follows claims that the Kremlin, that Ukrainian drones had targeted the residence of President Vladimir Putin. Ukraine's foreign minister has maintained Moscow has no plausible evidence for the alleged attack. Former U.S. ambassador to Ukraine, Stephen Pfeiffer, says the Russian president is attempting to stall peace plans.
Putin is clearly trying to derail the progress that appears to be being made in conversations between Americans, Ukrainians, and Europeans. It's unfortunate that President Trump took Putin's word at face value.
Former U.S. Ambassador Stephen Pfeiffer speaking there. After the leaders' call, Dutch Prime Minister Dick Schoof said the work of Europe's coalition of the willing continues unabated to assure security guarantees for Ukraine. In his first New Year's address, Germany's Chancellor Friedrich Merz urged trust in the country's ability to overcome challenges, including mounting Russian aggression.
Warner Brothers Discovery is planning to reject a takeover bid from Paramount after the company amended the terms of its offer. Bloomberg understands the Warner Brothers board will meet next week to make a final decision, but members are concerned that Paramount hasn't yet increased its offer from the previous one, which it had rejected. Paramount went public with its $30 a share cash bid earlier this month, 3 days after Warner had accepted a deal with Netflix. Bloomberg's Lucas Shaw says the deal will come down to the price.
Money's the biggest thing. The Paramount offer and the Netflix offer are fairly comparable. A lot of it depends on how much value you assign to the cable networks that Warner Brothers owns. That's, CNN, TNT, among many others. Warner Brothers thinks they're worth more than Paramount, hence the disagreement.
That's Bloomberg's Lucas Shaw. Since its initial bid, Paramount has altered its offer twice, most recently by including an assurance from billionaire Larry Ellison that he would personally guarantee over $40 billion in equity financing and other commitments.
Well, those are your top stories on the markets. We are having trade here in Europe today, but it's very low volumes as the DAX is already closed for the year. The CAC is trading lower, down 0.4%. The FTSE 100 is up just less than 0.1%. Over on Wall Street, S&P 500 futures are in the red, down 0.2%. NASDAQ futures down 0.3% on the last trading day of the year. An eye on FX. We have the Bloomberg Dollar Spot Index trading roughly stable today. The euro dollar is down 0.1% at 117.38. And on commodities, silver continues its volatility. It's down 5.25% this morning, trading at $72 an ounce. And this comes after the CME hiked margin requirements for the second time this week on precious metals.
That's news when you want it with Bloomberg News Now. I'm Stephen Carroll.
I'm Valerie Teitel, and this is Bloomberg.
in 2026, and just a lot of them coming in January in particular.
It's interesting. I'd love your take, Jennifer, on what data to look at. Look, in between Christmas and New Year, it's pretty thin, but we have had a little dose of it. US December Dallas Fed Manufacturing Index fell to negative 10.9 today. The expectation had been for negative 6, and that's more about the manufacturing focus over there in Texas. But we're also seeing some of the pending home sales coming in much stronger than had been anticipated on a month-on-month basis. We're up 3.3% if you looked at that number that broke at 10 a.m. What is the tell for you going into 2026? What are the key data points that you want to look at?
So I'll be looking at, I think everybody else will be looking at anything that's related to jobs, anything that's related to inflation. Funny you mentioning the data, because we finally got the Q3 GDP numbers out of the U.S. Was last week, right? Yeah, 4.3%, which was like, whoa, blew me away. And it wasn't just, exports, it wasn't just inventories or anything like that. It was pretty broad-based. Very interesting take, for example, from the consumer side. A lot more spending on that side, not just on, it was just pretty broad-based as well, but a lot on non-durables and also on services. So, we can't discount the consumer just yet, but at the same time, all that's a big look in the rearview mirror. That was all Q3, and now we're looking at Q4, and of course, as we're starting Q1 in just a few days. But we have to get through this period of still not clean data. It still has to be scrubbed, I think. We're going to be looking for a lot more revisions. It'll be interesting, the first take, of course, and all the regional data and all that will make for a very interesting story. But I'm going to be more interested in the government data and what is going to happen after they revise them in the months ahead to see what the real story is going to be. But so far, as of the first 3 quarters of the year, a very strong, a very resilient U.S. economy still. And it's going to get messy because of the shutdown that we had in Q4. We're going to have that bounce back in Q1. But at the same time, we can't break out the bubbly just yet, because we could be talking about shutdown again in the next couple of weeks. Sorry to say that.
Exactly.
Sorry to put a damper on all this, but yeah, that's the reality.
That's out there. So talk to us about the consumer out there, Jennifer. How do you see the consumer? I know we've got that K-shaped economy out there, so maybe we've got to, hem and haw a little bit, but it seems like the consumer's doing okay. Is that what you're seeing?
So far, again, we got the latest data that we got was from the retail sales report. The core measure was very strong, sets up for still a strong quarter for this consumer, but still, we have to be careful because of the shutdown and all that. At the same time, I'm very wary of the confidence surveys that we've been seeing. And they can swing back and forth, but just particularly what we saw from the conference board survey that had that dropped, considerably, but, it wasn't about inflation, because the inflation expectations component, I believe, was quite steady, but it was all about jobs, and fewer people were saying that they found jobs plentiful. More people were saying that they are finding jobs hard to get. So that's something that we have to be very wary about, because obviously at the end of the day, it's having a job, having a steady income that's going to be what is the main driver for the consumer.
And the main driver for the Fed. We're going to talk a lot more about the consumer after the next break. But talk to us, Jennifer, a little bit about one of the key issues you think we should be tiptoeing around is who is going to lead the Fed next and how they react to the data that they're given to. So it's going to be early January that we're going to be anticipating which Kevin it'll be.
Right, yeah, exactly. we do know for sure that is going to be, his first name will be Kevin. The last name is to be decided. But, it's going to be, he will have a very difficult job finding his way through the data. Obviously the analysis will be very important, but also getting some sort of a majority within all the Fed voters, because as we saw from the last Fed vote, there are quite a few that are not so confident that they are ready to cut rates again or just yet. We are not looking for a January rate cut by any measure. I don't think anyone is right now, but I think a couple more at the minimum rate cuts to come at a slower pace. We're looking at March, June, and September for the next rate cuts. 3 more to come. Everything obviously will be taken on a meeting by meeting basis and will be very data dependent. But having that majority will be very critical.
Jennifer, just when it seems like the market may have put tariffs in the rearview mirror, USMCA talks officially launch mid-January. I mean, what's going to happen there? I mean, you've got a unique perspective up there in Canada. What's the expectation?
I think expectations, I'm going to say, from my perspective, I think they're kind of low right now. Not sure exactly what's going to happen, whether or not we're going to actually have an actual USMCA per se, or is it going to be a USC, CM, a USM, you know what I mean? Some sort of type of combination of that. But obviously there is going to be a lot of give and take from all parties. It's just going to be how much, how much each party will be giving or taking will be critical. But it will definitely be a lot different, I think, than what we have right now.
Let's talk more global perspective now, because you've got some great takes on global central banks, not just what's happening at the Fed. The Bank of Canada, 2024 was a big year for rate cuts. In fact, 100 bits were done in 2025. Are we now done until those trade talks are a washout?
So it sounds like the bank from Governor Macklem basically sounds like that they are done, that they're quite comfortable. The words were like that they think that rates are about right where they are right now to get inflation back down to target. So, at the bare minimum, it sounds like nothing is going to happen. But I think if there is a risk, the risk will be more cuts. Again, given how the USMCA fares. I mean, the U.S. is our biggest by far trading partner out there, with about 3/4 of our exports going to the U.S., over 50% of all imports coming from the U.S. So many businesses are very dependent on what happens. Sorry. So at that point, because of that, we do believe that how the talks fare will determine what happens with the Bank of Canada, and of course with inflation and the economy.
How about what's your dollar call here for 2026? The dollar has not bounced back like stocks have bounced back and other parts of the market have bounced back.
That has been one of the toughest calls, I'll tell you, to make on the calls on the U.S. dollar. It's been like the U.S. economy quite resilient, but you would imagine, in theory, in a world where almost all the central banks are basically finished easing policy, maybe one more to go, maybe a couple more to go, and some of them are getting ready to start to tighten or continue tightening. In the case of the Bank of Japan, in that kind of environment, and then of course with the Fed still on an easing bias, you would imagine that the U.S. dollar would start to weaken. But it's sort of like how it's going to be all relative to everybody else in terms of the economy. If the U.S. economy continues to remain resilient, which we still expect, and we've got about 2% growth penciled in for 2026, that will actually help support the U.S. dollar. So even though we do look for the U.S. dollar to weaken, it's going to be a slow, softish weakening trend, not a big drop.
Let's talk about what it is, just more broadly, what the airline sector tells us about the consumer. Jennifer Lee is back with us, senior economist at BMO Capital Markets. And we talked a little bit about consumer sentiment at the moment and what the data is that you've been drawing from. But what does the desire to travel tell you about the consumer and its resilience right now, Jennifer?
Well, it's interesting that, we're talking about the consumer resilience because, again, we can never, like I said, we could never, ever underestimate the U.S. consumer. And by the way, with those third quarter Q3 GDP numbers we were talking about earlier, a lot of the spending was on services as well. So that will also add into the airline spending as well for the travel. But at the end of the day, it's all about the dollars, and how much the tickets are, for example. But of course, what's incoming, and consumers are going to be obviously, again, it's all about jobs. It's all about wages. Wages have been, pretty steady, about 0.5%-ish per month increases, roughly 0.4, 0.5, which is decent enough. And having that steady income is huge. And of course, what you're paying out in terms of prices at the pumps, at the grocery store, having inflation coming down since, those peaks a couple of years ago, it has been very helpful, but they've sort of been sticky at this point. And this is what the Fed's challenge is going to be over the next year, is dealing with that balancing between the weaker jobs market or less resilient jobs market and still sticky-ish CPI, depending on who you're talking to, of course, about whether or not CPI is still sticky. But things like beef and bananas, I believe, are still surging. So, it's not every single item in the grocery store that's coming down.
All right, Jennifer, let's stay with that theme of travel here. We're getting to the depths of winter right now. It's cold out there, and I'm guessing it's pretty cold up in Canada. Are you telling me...
Yes, you see the snow.
Our good friends in Canada are not going to the warm beaches of Florida or the warm desert of Arizona? Are you guys still upset that you're not traveling?
There's still travel, but it's more domestic. Although, full disclosure, yours truly was in Miami a couple of weeks ago, which was amazing. The great weather. But there's been a lot more, over the past year, it's been a lot more, domestic travel, domestic purchases, which has helped the Canadian economy stay, keep its nose out of the recession business, which has, again, been very helpful. But it's all been about different experiences, again, across this country as well, even though it's maybe not as warm as what we're seeing in Miami. But at the same time, different experiences, and that's always a good thing, too.
President Donald Trump says the US has carried out a strike on an alleged drug boat loading facility in Venezuela. As our Pentagon reporter Idris Ali explains, it marks a new phase of Trump's pressure campaign on Venezuela's president, Nicolas Maduro.
So President Trump didn't say who carried out this operation, but we do know that he has authorized the CIA to carry out covert operations inside Venezuela. The Pentagon, the CIA, and the White House have all declined to comment. In the past, when the U.S. military has carried out operations, including against drug vessels in the Caribbean, they have actually posted videos. And so the silence, I think, says a lot about what may or may not have happened. If this took place when President Trump initially said it took place, which is sort of around Christmas Day, the Venezuelans have had quite a bit of time to actually respond. But as of recording, we had not heard anything from the Venezuelan president nor the Venezuelan government in any shape or form. President Trump has been point blank saying strikes on land are coming. And I think we may have seen the first known one actually been carried out. And it's a real escalation, because it's one thing to carry out strikes in international waters, no matter how legally dubious they might be. It is another thing to go into a country and carry out a sort of military operation or a covert operation, either one.
Russia has accused Ukraine of trying to attack President Vladimir Putin's residence in northern Russia, but provided no evidence for the claim. Ukraine is dismissing the allegation as baseless and designed to undermine peace negotiations, with President Volodymyr Zelensky saying Russia does not want to see any progress in talks. Russia says some 90 long-range drones were used in the attack, all of which were destroyed by its air defenses, causing no injuries and leaving no damage. US President Donald Trump says Putin told him about the alleged attack in a phone call on Monday.
It's one thing to be offensive, because they were offensive. It's another thing to attack his house. It's not the right time to do any of that.
President Trump was speaking there at a joint press conference with Israeli Prime Minister Benjamin Netanyahu after the two leaders met at Mar-a-Lago. There, Trump also said the US would back further strikes against Iran if Tehran resumes building ballistic missiles or restarts its nuclear weapons program.
Iran, I hope they're not trying to build up again, because if they are, we're going to have no choice but very quickly to eradicate that buildup.
But on the biggest issue, the next steps in Gaza, there appeared little progress, except a warning from Trump that there will be hell to pay if Hamas does not disarm. Israel has repeatedly warned that if Hamas does not lay down its weapons, it will resume military action. Trump also told reporters that Israel's president has told him a pardon for Netanyahu, who is facing bribery, fraud, and breach of trust charges, is on its way. President Herzog's office immediately denied that conversation took place. Now to markets, and Dara Rangsinger is here from our sister podcast, Morning Bid, to talk us through the day. Hey, Dara.
Hey, Kim. So let's talk geopolitics. That's what's in focus for markets. Lots of headlines over the last 24 hours, whether that's a setback in progress on ending the war in Ukraine, US President Donald Trump making some headlines over Iran, urging Hamas to disarm. And over in Asia, we have China continuing its war games around Taiwan. So that keeps geopolitics in focus for markets. At the moment, there isn't an immediate market reaction or angst, if you like, but it just highlights just how clearly geopolitics is framing the conversation already for next year.
Dara, thanks so much. That's video released by Taiwan's military, with a man on the bridge of a ship saying, "We have repeatedly warned you, you have already entered our waters." Taiwan says the video shows Chinese planes and ships taking part in its latest round of war games around Taiwan, the democratically governed island which Beijing claims as its own. Reuters China bureau chief Kevin Krolicki has more on why the maneuvers are so critical.
Part of the significance here is the scale of these drills and the scope of the undertaking. China's testing naval systems, air combat systems, amphibious landing systems, and it's doing that in a larger area than it has before. It's also trying to show its ability to isolate Taiwan, to blockade Taiwan. And then there's also a messaging aspect of this. We've had, the Chinese military releasing images of, fiery arrows raining down on Taiwan, or, Taiwan in handcuffs, AI-generated video of humanoid soldiers and robot dogs. I mean, technology that doesn't exist. And that's part of, a campaign to convey the message that resistance is futile.
Kevin says a lot of analysts consider the drills to be both about intimidation and stage setting for an actual attack, and that they're not cheap.
We previously reported that in 2023, based on a Taiwanese estimate, drills over the course of that year alone had cost China $15 billion, about 7% of its defense budget. The Pentagon just last week repeated its assessment that, it believes China has set a goal of being ready by 2027 to take Taiwan if it believed that were necessary.
In the US, meteorologists are warning that Winter Storm Ezra is set to strengthen into a bomb cyclone, bringing blizzard conditions, ice and flooding rain from the Midwest to the Northeast. Holiday travel has already been badly impacted, sending airlines scrambling with thousands of delays and cancellations since Friday. Road travel remains dangerous, with authorities urging drivers to stay off icy routes. British boxing champion Anthony Joshua has been injured in a car crash in Nigeria that killed 2 of his teammates. The 36-year-old former world heavyweight was travelling in an SUV when it collided with another car on an expressway. Joshua sustained only minor injuries. The crash comes just 10 days after Joshua knocked out Jake Paul in Miami. Khaleda Zia, Bangladesh's first female prime minister, has died. Zia came to power in 1991 and spent decades locked in a bitter rivalry with Sheikh Hasina, with the 2 women trading Bangladesh's top office for years. Zia had been jailed on corruption charges under Hasina's government, but was freed last August when a student uprising toppled Hasina from power. Her son is now seen as a strong candidate to become the next prime minister. And Syria's government has ordered soldiers to guard a mass grave created to conceal atrocities under Bashar al-Assad and opened a criminal investigation. The move follows a Reuters report that revealed a years-long conspiracy by the fallen dictator to hide thousands of bodies on the remote desert site. Exhumations at Assad-era graves, including this one, are scheduled for 2027. And you can follow the link in the description to hear more from our episode of On Assignment podcast, where our reporters talk about how they revealed the mass grave site. And for today's recommended read, how India's domination of the global rice trade is stoking a looming water crisis. India overtook China to become the world's largest rice producer this year, but it comes at a cost. Find out more by following the link in the pod description. For more on any of the stories from today, check out Reuters.com or the Reuters app. Don't forget to follow us on your favorite podcast player. If you're listening on a smart speaker, just ask for the latest news from Reuters 7 days a week. We'll be back tomorrow with our daily headline show.
the CPI number that came out surprisingly softer than a lot of people expected. Some people say unrealistically softer with 0% shelter cost increase. So that was interesting. We're going to have a new Fed chairman. There's still a question mark over the impact of tariffs, whether we're waiting to see those show up, and what's going to happen with unemployment as well. That's been ticking up.
And then it's been this really incredible year, obviously, in the stock market. The U.S. stock market just continues year after year after year, with a few exceptions here and there, but not many, of putting up massive numbers. And so the question is, like, how long is this realistic, especially given, all the concerns about concentration and a handful of names, some of which haven't really been doing so well lately. And so many questions on both the real economy and the stock market.
Yeah, there's definitely been some dispersion creeping into some of the big AI names or the tech names. All right. Well, I'm happy to say we do, in fact, have the perfect guests, plural. We've got two. So we're going to be speaking with Jan Hatzius. He's the chief economist and head of research at Goldman Sachs. He's been on the show a number of times before, and we like talking to him at least once a year. And Ben Snyder, he is the chief U.S. equity strategist replacing David Costin. So thank you both for coming on All Thoughts.
Thanks so much for having us.
Great to be here.
Is research outlook time, is that actually a quiet time for you guys?
It's not a quiet time. Normally, we actually do it about 6 weeks earlier. Because actually November tends to be a little bit better than December. But because of the shutdown and the dearth of data, we decided to push it back. It's completely under our control when we do it, and why do it at a time when you actually have much less information than normal. So we pushed out a number of reports yesterday, including the global economic and markets outlook.
Can you talk, the two of you, maybe again? So obviously different roles, but on the same team. And obviously the stock market, U.S. equity market, is different from the economy. And you can have years where the economy is fine, the stocks are bad, and vice versa, all different permutations and combinations. But how do you think about being in alignment cross-team, and so that roughly you're sort of working under a similar set of assumptions?
Yeah, I can talk about that, and not just with respect to the U.S. or global economic outlook versus stock market outlook, but of course, there's currencies, there's EM economies, there's commodities. Certainly on the macro side, I would say we're on the coordinated side of the spectrum. Nobody is at one extreme or the other extreme. You can't have people that just work alongside one another without ever talking to one another, but you also shouldn't have just a machine where everything is exactly aligned and there's zero room for individual initiative. So, but we're towards the coordinated side for sure.
Well, you mentioned yesterday, a good time to note to listeners, we are recording this December 19th, 2025. Ben, how do you think about sort of working with aligning your views of where markets are going, or what the meaning of the rally has with the macro thinking?
There are a number of frameworks to think about the equity market, but a pretty common one, and one we rely on a lot, is to think of the market like a stock as a discounted stream of future cash flows. And from that perspective, the most important driver of stocks is that stream of cash flows, is earnings. And if you break those apart, the most important driver of those cash flows is usually the U.S. economy. So we rely very heavily on Jan's forecasts.
So in terms of Jan's forecast, I noticed you're forecasting strong growth, as in GDP, but also rising unemployment. How do you square those two things?
We have flat unemployment at 4.5%, but it's not going down as you might think when you're printing, let's say, 2.6% for real GDP in 2026. And a small part of the answer is that 2.6 probably overstates the underlying trend a bit, because we had the shutdown that depressed Q4. It's going to add to Q1. But the more important part of the answer is accelerating productivity growth. And we've seen that over the last 5 years. The 5 years since the pandemic have shown about 2% underlying trend productivity growth. The prior cycle was at about 1.5%. And I think there's reason to believe that that acceleration is still ongoing, because it probably doesn't have a lot of AI in it. We expect more of a boost from AI going forward in the next 5 years than in the last 5 years. And I think that's got important implications for the relationship between GDP and unemployment.
So obviously, like, the distribution of growth matters. It seems to particularly matter when we're talking about the stock market, because you can have sectors that are like very quiet, but then you have these gigantic companies that make a ton of money and capture a lot of the growth, that their stocks do incredibly well. Maybe it would be helpful even before we get to the 2026 outlook for the economy, Ben. Like, what happened in 2025? What were the underlying conditions that allowed for such like another monster year, especially for the NASDAQ and a lot of the big tech names?
So to bring it back to earnings, one thing that happened was really strong earnings growth. And I think among all the discussions of bubbles, what's underappreciated is just how strong corporate earnings growth has been.
Yeah.
Just wrapped up the third quarter season a few weeks ago, and S&P 500 companies in aggregate reported earnings growth of 12%. Even if we strip out the mega caps, the median S&P stock reported earnings growth of about 10%. That's very solid.
This just seems to be like an underappreciated point, which is that, look, the AI-driven market, the tech-heavy market, it is not just that, is it?
I'll take an extension from this. We spend a lot of time, understandably, talking about the largest stocks in the market. The top 10 stocks are over 40% of market cap. We should spend a lot of time talking about them. But if you look at the S&P 490 or 493, that market or that group of stocks has returned about 15% this year. They returned about 15% last year. They returned about 15% the year prior. And so I understand why we're talking about the large stocks, but really the broad U.S. equity market has performed quite well.
Well, how do you account for, I guess, the weakness that we've seen in some of the mega tech stocks in recent weeks? What's going on there?
For 3 years, we've been obsessed with AI as a market. And for 3 years, really the story has been increased CapEx, extraordinary growth in AI investment spending. And although we're discussing a lot the eventual productivity benefits, as Jan mentioned, really the trade in the equity market has been the companies with earnings that are benefiting from those CapEx dollars. And what's happened this year, especially in the last several months, is it's become increasingly clear that A, probably that growth will decelerate next year, and B, to continue that growth, it's going to require more debt. And both of those factors have made investors understandably uncomfortable.
Jan, one of the sort of the viral charts of the year, or various estimates of like how much the AI build out specifically is a driver of U.S. economic growth in 2025 and beyond. Like how much, like, when you look at the GDP in 2025, how much of the growth can you attribute to what Ben just talked about?
Actually, pretty close to zero.
Really?
Frankly.
This is
that's very different to other people.
I love this.
For two reasons. Number one, the goods that are being invested in the AI sector are largely imported. So you can look at the contribution of investment spending to GDP growth, but if you don't net that out against the imports, then you're going to get the wrong answer. That's one reason. Second reason is that semiconductors are generally treated as intermediate inputs, not as investment. So they don't actually show up in the investment numbers. And so when we look at the impact of AI investment on measured GDP growth, on the numbers that are actually being printed, we're getting only about 20 basis points of contribution over the last 3 or 4 years, and pretty close to zero over the last year.
So this strikes me as such an important point because, you have other people estimating, 50% of growth this year is related to the AI build-out. Are you just always like banging your head against the wall? Because you must see these headlines every day like the rest of us.
I do a bit because oftentimes it's just based on looking at some portion of investment spending. Sometimes there are also other things included in those calculations that aren't necessarily AI related. But the big point is that you really need to look at the imports as well.
Ben, I should just ask before we go any further, what actually is your 2026 target for the S&P 500? Because we haven't seen the official outlook yet.
We've published 7,600.
7,600. Okay. So one thing I did want to ask, this was in Jan's economic outlook, but you talk about potentially credit underperforming, which seems a little bit strange if interest rates are going lower and, equities are doing pretty good. What's going on there?
I mean, it's mainly really that the valuations are very high. The credit fundamentals we think are still pretty good, but the market is priced to, not perfection perhaps, but to a very positive scenario. And so In that kind of situation, my instinct would always be to build in a little bit of mean reversion, and that would give you a modest amount of underperformance. But I wouldn't say that that's a major part of our overall views for the next year.
I have a question, and it's one of these things, maybe it doesn't fit right into this moment in the conversation, but I'm so worried that I'm going to forget it, that I'm going to ask it now. So we are recording this December 19th. We got that CPI report yesterday, came in 2.6 on core. This is year over year because we didn't have October data. And then there were people like, wait, they imputed a 0% zero rent growth. There's zero shelter inflation for October when they didn't collect the data, et cetera. But then I'm like, okay, that doesn't sound particularly accurate, or that doesn't sound like, that sounds a little risky. But on the other hand, we're talking about a year over year number, so I'm not even sure why October really affects that. Can you just, before we go any further, explain how I should understand yesterday's CPI report?
Yeah, I mean, they use a 6-month growth rate for rents, and they did assume a zero sequentially for October, and that does take away from the year-on-year growth rate as of the November number as well. So we do think that shelter inflation in yesterday's numbers was understated, and the numbers are not quite as good as the 8 basis points for core CPI on average for October and November would suggest.
So capturing rent is not like measuring bananas, where I could say, here's the price of a banana in November 2025. Here's the price of a banana in November 2024. Therefore, you could just do a year over year thing. You can't do that.
Because they don't do it that way. They don't look at just 1 month. And
it's also owner's equivalent rent.
Well,
right?
that's a separate point because this distortion affects both actual rent and owner's equivalent rent.
Yeah.
So it wasn't as good. And there probably also were some other distortions stemming from the fact that prices were collected in the second half of November, pretty close to Thanksgiving, pretty close to the Black Friday deals. That may have understated prices in the goods sector. But I think if you step back and look at the inflation news more big picture, it's pretty encouraging. We've seen 2025 a meaningful amount of pass-through from tariffs. We think about 50 basis points of contribution to core PCE inflation. Core PCE inflation in that environment has been going sideways. So if you take out the 50 basis points, if you think that that's really a price level effect, that's more like a value-added tax increase and is going to come out of the numbers in 2026, then we've seen ongoing disinflation to an underlying rate that's no longer that far away from
a future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
Maybe you already know about naked short selling. Maybe you've personally shorted stocks yourself, but do you know about the time short sellers ruined a Super Bowl, basically?
For me, Ravi CS6YY, थैंक यू सो मच फॉर ज्वाइनिंग चैनल मेंबरशिप। सिल्वर और गोल्ड में ट्रेड नहीं कर रहा फिलहाल के लिए, तो उसमें कोई व्यू नहीं है मेरा फिलहाल। ऐसे देखोगे तो कल मॉर्निंग पे इवनिंग क्लोज होते होते फॉरेक्स रिकवर जरूर किया था, बट आज फिर से एक गैप डाउन हुआ है एमसीएक्स में भी, फॉरेक्स में भी, एंड एमसीएक्स साइडवे चला गया, तो मुझे लग नहीं रहा आज कुछ मूव करेगा रेंज के बाहर। शाम को डेटा है, हो सकता है उसके बाद कुछ मूव कर दे, अदरवाइज एक्सपेक्ट नहीं है। अनएम्प्लॉयमेंट क्लेम्स का डेटा आएगा, हो सकता है थोड़ा बहुत तब मूव करे। अभी के लिए तो साइडवेज है कंप्लीटली, सिल्वर एमसीएक्स एज वेल सिल्वर फॉरेक्स दोनों ही साइडवेज है। वैसे फॉरेक्स का चार्ट लगाओगे तो ज़्यादा बेटर है, वहाँ पर ठीक ठाक लेवल दिखेगा। मैं ट्रेड नहीं कर रहा हूँ तो वहाँ पर मेरा कोई व्यू नहीं है अभी सिल्वर और गोल्ड में, ओनली क्रूड ऑयल एंड नेचुरल गैस एंड ऑब्वियसली निफ्टी। एंड बैंक निफ्टी इंडियन मार्केट। वैसे अगर फॉरेक्स में देखूंगा एमसीएक्स में, तो वहां पर बिल्कुल साइडवेज लग रहा है प्राइस। फॉरेक्स चार्ट में एमसीएक्स ओनेडा का चार्ट अगर लगा के देखोगे, फॉरेक्स का चार्ट लगा के देखोगे, वहीं पर एक सपोर्ट है अराउंड 69 डॉलर के अराउंड। ठीक है, तो दैट इज अ सपोर्ट एरिया ऑलरेडी। वैसे वहां पर एक बार बाइंग आ गई है, अभी भी स्ट्रांग ही है वो, मुझे लग नहीं रहा प्राइस जाएगा बिलो 68.80 डॉलर के नीचे। बहुत रेयर चांसेस हैं कि उसके नीचे प्राइस ब्रेक करे। सो इट इज़ ऑन सपोर्ट कह सकते हो लोअर एंड पे, 68.80 से 69.80। वैसे एक राउंड नंबर लोगे तो, बट उतना बड़ा लेवल नहीं है टोटल। 68.80 से 69.50 के अराउंड मेजर सपोर्ट है। 15 मिनट इंट्राडे। बाकी देखो, एक क्रूड ऑयल में यहाँ पर ट्रेड लगा रखा है, यहाँ पर कोई रेजिस्टेंस तो नहीं है, प्राइस वैसी रेंज के अंदर घूमे जा रहा है। तो एक यहाँ पर छोटा सा अगर ट्रेड प्लान करोगे, कम क्वांटिटी के साथ ही प्लान करना। ओपन इक्वल टू लो पर डायरेक्टली मत सेल कर देना अभी। एक कैंडल देखोगे ओपन इक्वल टू लो है 5220, लो 5220। थोड़ा सा नीचे आता तो बाई करते, ये आया ही नहीं है एग्जैक्ट लेवल पे, देख पा रहे होगे काफ़ी ऊपर से निकल गया। तो एक छोटा सा लेवल है सेलिंग का, बट मिडिल ऑफ द लेवल है तो ज़्यादा रिस्क मत लियो मेरे अकॉर्डिंग तो यहाँ पे। ठीक है, थोड़ा नीचे इन लेवल के आसपास आता है या फिर यहाँ हाई लेवल पे आए तो ज़्यादा सेफ है ट्रेड करने के लिए, रेदर देन मिडिल ऑफ द लेवल ट्रेड करें। तो इसलिए एक लगा रखा है छोटा सा 20 पॉइंट का एसएल है, इससे बड़ा लेवल भी मत लेना, एसएल जाएगा तो निकल भी जाना। थोड़ा सा मिडिल ऑफ द लेवल आप कह सकते हो कंसोलिडेशन को ट्रेड करने के लिए, छोटा सा एसएल छोटा सा टारगेट, बट डोंट एंटर इन दिस कैंडल। कैंडल इज ओपन इक्वल टू लो, वेट फॉर द कैंडल टू बी नॉर्मल। अपना लो ब्रेक कर दे या फिर नेक्स्ट कैंडल पे, हाँ लेवल के ऊपर ना जाए, ध्यान रखियो। रेजिस्टेंस ऊपर मिल जाएगा 77.40 टू 80 के बीच में, 15 मिनट टाइम फ्रेम पे। इन सिल्वर फॉरेक्स, एमसीएक्स में लेवल उतना क्लियर नहीं है तो फॉरेक्स में ही चेक करना। अगर ये 68.80 के नीचे ब्रेकडाउन में सक्सेसफुल रहा तो फिर सीधा $66 ही आएगा उस केस में सिल्वर। तो सिल्वर का थोड़ा सा ध्यान रखियो। अभी तो ये फिलहाल के लिए एक सपोर्ट के अराउंड ही घूम रहा है। MCX में देखोगे वहाँ बिल्कुल ही साइडवेज लग रहा है दो कैंडल के बीच में, बट इज सपोर्ट एरिया अराउंड दिस वन। मेजर रेजिस्टेंस है 77, वहाँ आए तो फिर से सेल करना। स्ट्रॉन्ग रेजिस्टेंस है, उसके ऊपर जाना भी मुश्किल लग रहा है। बाकी ये मल्टीपल टाइम टेस्ट हो गया है बट अभी भी है लेवल, तो अगर ये ब्रेक हुआ तभी 66 आएगा। अभी के लिए मुझे लग रहा है 69 होल्ड करना चाहिए लेवल फॉरेक्स चार्ट में। गोल्ड के चार्ट को देखोगे, ये जो लेवल लगा है लास्ट कैंडल ओपन इक्वल टू लो लेवल के ऊपर ही क्लोज हो गई है। लास्ट कैंडल देखोगे लेवल के ऊपर ही क्लोज हो गई है 5223। नहीं ठीक है, वेट करेंगे, अभी डायरेक्टली एंट्री मत करना है इसमें, ठीक है। हमें कैंडल नीचे चाहिए वापस क्लोजिंग बेसिस पे। लास्ट कैंडल ओपन इक्वल टू लो नहीं बनती तो इसमें डायरेक्टली भी कर सकते थे वैसे, बट ओपन इक्वल टू लो पे डायरेक्टली नहीं लेते। तो या तो ये कैंडल वापस आ जाए क्लोजिंग बेसिस पे नीचे 5228 के आसपास या उसके नीचे कहीं, तो एंट्री बन जाएगी नेक्स्ट कैंडल पे। अगर ये इसके लास्ट कैंडल के ऊपर ही क्लोज होती है तो फिर इसमें कोई एंट्री नहीं बनेगी इस छोटे से ट्रेड एरिया में। बाकी यहाँ पर एक बाइंग का ट्रेड जरूर था बट एज ए सेट नहीं आया लेवल पे, तो कंसीडर मत करना उसको। ऊपर ही चला गया तो फिर ऊपर रेजिस्टेंस ही है, मेन रेजिस्टेंस, वहां से वापस सेल कर देंगे। दैट विल बी मेन रेजिस्टेंस एरिया। ठीक है, इस कैंडल का देखते हैं, वेट करते हैं क्लोजिंग बेसिस पे। 5235 के ऊपर क्लोजिंग आई तो कोई एंट्री नहीं, 5228 के नीचे कहीं क्लोजिंग आती है तो नेक्स्ट कैंडल पे एंट्री ले लेंगे, और अगर ऊपर ही जाता रहा तो फिर मेन रेजिस्टेंस से ही एंट्री होगी। नेचुरल गैस भी सपोर्ट पर ही है बट वॉल्यूम ही नहीं आ रहा है इसमें। क्रूड ऑयल लग नहीं रहा नीचे आएगा, ऊपर ही चला जाता है तो बेटर है, बीच का लेवल ही रिमूव हो जाएगा। वैसे ऊपर देखोगे तो ऊपर के जोन पे कोई वैसे मेजर रेजिस्टेंस नहीं है, वो एक रीटेस्ट जोन है। काफ़ी स्ट्रॉन्ग सपोर्ट था, काफ़ी पहले ब्रेकडाउन हुआ था, उसका रीटेस्ट भी मल्टीपल टाइम कर दिया। 1 2 3 4 परसों याद होगा जिस दिन कंसोलिडेशन हो रहा था, एक ब्रेकआउट के लिए ऐसा भी गया था बट वापस नीचे आ गया था, तो मल्टीपल टाइम का रेजिस्टेंस। काउंट करें तो इसको एक आखिरी बार सेलिंग यहाँ से
$99 back then, but
6 मिनट लेफ्ट, क्लोजिंग मुझे नहीं लग रहा आने वाली है। क्रूड ऑयल में नीचे नहीं आती है तो अगेन यहाँ से सेल नहीं करेंगे। हो सकता है प्राइस वापस नीचे आ जाए, ऐसे घूमता रहे यहाँ पर, डिफरेंट थिंग, बट कंडीशन फुलफिल नहीं होगी, ध्यान रखना। रेजिस्टेंस थोड़ा सा ऊपर वाला है, फिर यहीं से सेल कर दिया। पास पास में ही है वैसे तो, बट वो ऐसे थोड़ा सा ऊपर का बड़ा है। 5 मिनट और वेट करते हैं। क्लोजिंग इंडियन मार्केट ऑल्सो गोइंग टू क्लोज। बाकी ऊपर वाले से सेल करेंगे, टारगेट थोड़ा बड़ा ही रखेंगे, फिर नीचे जहाँ तक कि ओरिजिनल टारगेट है 5180, बिकॉज दैट इज द ओनली सपोर्ट आई कैन सी। एक नीचे लेवल और है 5120 100, वो भी टेस्ट होना पेंडिंग है अभी। कोई न्यूज़ नहीं आती है तो जाना तो चाहिए वहाँ तक।
Your podcast feed within minutes, so you're always getting the latest stories and developments.
Get the report.
Under 0.5%. So we still think even next year it'll be quite small. But the important thing is it is growing over time.
But that's the users of AI rather than the investment.
Correct. When you're spending hundreds of billions of dollars in CapEx, the AI boost in terms of those dollars has clearly been large for the last couple of years.
So you're talking about the concentration of equities within the S&P 500, very top heavy. How does that compare with the concentration of earnings within the S&P 500?
That is a key point that is, I think, often underappreciated, which is 5 years ago, the top 10 stocks in the market accounted for a third of market cap. This was a record at the time, although we look back and think it wasn't so bad. And fast forward, now they are a third of earnings. So one way to conceptualize this is the market was correctly looking forward back then and saying earnings are going to grow. And so today, if the top 10 companies are 40% of market cap and a third of earnings, the question is, will they continue to outperform on an earnings basis over the next few years? Well, given the current run rate of earnings growth, it looks very likely that the answer will be yes, they'll outperform, although on our forecasts, that gap will shrink a little bit.
And then markets might look forward further than that. And that, I mean, that's been part of the issue for some of them more recently.
And that's how you create valuation problems.
Tracy, when I hear that big tech companies only have about a third of the earnings of the S&P 500, my thought is, well, that's 70% of all corporate earnings that they have yet to swallow, right? Think of all of these earnings that are accruing to non-tech companies. All of that is going to be Amazon and Alphabet's income in the future one day.
There's still upside.
Yeah, there's still
capture.
70%. There's still the majority of money is not being made by tech companies.
Okay, wait. I got to ask, though. Yes, tech companies have seemed, very dominant in recent years. But what would it take to make you a little bit nervous about the outlook for next year? The broad market outlook. Like, what would you need to see to think like, oh, wait a second, we're kind of getting ahead of ourselves, or I think maybe my target is a little more optimistic than I had expected?
First, I think an investor should always be a little nervous. That's a reflection of equity risk premium, which is how the market generates return over time, or at least part of how the market generates return over time. Well, first, Jan mentioned his desert island indicator being the unemployment rate. For me, every Thursday morning, I wake up excited to see jobless claims.
I've said it many times, I'm a claims guy when it comes to my desert island.
We're on the same page
Claims
here.
bros.
So, if a few Thursdays in a row we start to see claims rise, I'll become a lot more nervous. If Jan walks down the hall one day
bank chant, "Let us." Customers of a German bank chant, "Let us in," after thieves robbed the branch and made off with more than $10 million worth of money and valuables, police said on Tuesday. The perpetrators used the quiet Christmas period to drill their way into the vault of a Sparkasse bank in the city of Gelsenkirchen and then broke into several thousand safe deposit boxes, police said. Most shops and banks in Germany closed starting on December 24th for the Christmas period. Police only discovered the hole after a fire alarm went off on Monday. Outside the branch, angry customers said they weren't getting any information and that they wanted to know which safe deposit boxes were affected. This customer said his box contained retirement savings. This one said his held lots of money and jewelry. A Sparkasse Bank spokesperson did not immediately respond to a request for comment. Police said witnesses have reported that they saw several men on Saturday night carrying large bags in the stairwell of an adjacent parking garage.
Forty seconds left in crude oil. Okay, candle close crude oil not close below the level. नहीं हुआ है close, देखो level के नीचे close होना चाहिए था, नहीं हुआ है. इस trade को अब avoid ही करना है, यहाँ पर कोई trade नहीं है. ठीक है, still these are the level, अभी भी इसी range में घूम रहा है, इसका मतलब ऊपर का वही रेजिस्टेंस है, सेम नीचे सपोर्ट है. हो सकता है यहीं से नीचे आ जाए, बट नॉट इंटरेस्टेड. उस लेवल पे मत इंटरेस्ट होना, उस पॉइंट ऑफ इंटरेस्ट पे. ऊपर ही आता है तो फिर ये सेम लेवल है, ओरिजिनल लेवल, ओरिजिनल रेजिस्टेंस.
The supply of rare earths, they control about 70% of the mining, 90% of the refining. That's a pretty good way to deter trade action and tariffs. And I think we saw that in the negotiations with the US, but that could be relevant for other economies that try to impose tariffs on China. So I think the goods producing sector is still going to be strong. Now, the flip side is that the domestic economy is very weak. And that's a country where the housing story is much more central. Housing starts and sales are still going down, even though they're already down 60 to 80%, but they're still going down steeply. Prices are still falling steeply. Our China team estimates that if you take the direct and indirect effects of property on GDP growth, it subtracted about 2 percentage points in 2025. And while the worst is probably behind us, they still have a 1.5 percentage point drag next year. So in that sort of environment, we think China will hold up okay, slower growth over time, but probably still closer to 5% than to 4%.
Ben, going back to U.S. stocks, I sort of joked that, there's 70% of earnings out there that have yet to be captured by big tech companies. But I actually kind of don't really think that's a joke in the sense that that does seem to be the trend. There are a handful of companies that are accruing a lot of value. When you think about the earnings growth that the big tech companies have, the realized earnings growth, and you gave the example about how the market sort of was correct 5 years ago that they would come to represent 30% of earnings. Is there any historical precedent for the largest companies in the world to be growing like this year after year? Because I used to think mature companies don't grow like small companies do. Is this sort of like a novel phenomenon when you think about the history of markets?
Part of what's fun about markets is they're always changing. This seems to be one of those examples. We did a study last year. We looked at 100 years of market concentration in the US.
Oh.
And at least over the last century, we didn't find anything that quite matches up to today.
Wow.
What do you think would actually put an end to that market dominance? I guess stronger antitrust laws or what?
Yeah, I keep coming back to earnings.
Yeah.
And one way that earnings dominance could end, of course, is regulatory policy. I think the top of mind question for investors is whether this revolutionary shift resulting from AI technology is going to change where the earnings end up accruing. But I think almost certainly when one day we look back, if one day we look back and they were no longer as dominant from a market cap perspective, it's going to be because their earnings aren't as dominant either.
We started this conversation talking about the CPI number.
And at least over the last century, we didn't find anything that quite matches up to today.
Wow.
What do you think would actually put an end to that market dominance? I guess stronger antitrust laws or what?
Yeah, I keep coming back to earnings.
Yeah.
And one way that earnings dominance could end, of course, is regulatory policy. I think the top of mind question for investors is whether this revolutionary shift resulting from AI technology is going to change where the earnings end up accruing. But I think almost certainly when one day we look back, if one day we look back and they were no longer as dominant from a market cap perspective, it's going to be because their earnings aren't as dominant either.
We started this conversation talking about the CPI number that came out. And I would be curious to hear just how unusual this year has been in terms of tracking some of the data and dealing with, things that you probably haven't had to deal with as an economist before, like tariffs on, some tiny Pacific island or something like that.
I would echo what Ben just said. This is what makes markets and economic forecasting fun, that there's always something new. And of course, the extent of the tariff increases that we saw on and around Liberation Day is, if not unprecedented, then at least we haven't seen it in many, many decades. So that's a new set of challenges in terms of figuring out what the impacts are going to be. It's not as extreme as what we've seen at times in the prior 20 years or so, certainly compared with COVID. I mean, that's where you could effectively throw out a lot of the government data and had to look for other indicators like cell phone locations to figure out what was going on that, if not that day, then at least that week. And, not a month earlier. So that's been a challenge. The government shutdown, I would say, has been more challenging than past shutdowns. We'll actually have holes in the economic data that will probably be there forever. And, you look at some of the labor market numbers. We've had a consistent series for the U.S. unemployment rate on a monthly basis since 1948, except for October 2025. And that's going to look pretty weird.
That's kind of crazy. What is your outlook for 2026 in terms of Fed policy? Where do you see this rate cut cycle going and how deep?
We still have a forecast that we've had for the last 6 months, which is after the 75 basis points of insurance cuts in 2025, 2 more in 2026 that bring you down to what we think is roughly their neutral estimate, 3 to 3.25%. We're penciling that in for March and June at the moment. Haven't changed that. I would say there's a pretty sizable amount of uncertainty around that. It's certainly possible that if GDP growth does as well as we think, and that actually gives a bit more of a lift to the labor market, that they would wait longer and push that perhaps into the second half. But I'm also pretty focused on January 9th, when we get the next employment report, because if that shows another increase in the unemployment rate, then I think it might be hard not to cut at the January meeting. We don't have that in the forecast at the moment, but I think it's a very real possibility.
Something to look forward to after we come back from the holidays.
Currently, I think, according to Work, it's just a less than 20% chance of a cut in January. But it sounds, and I know you don't expect one, but I guess it sounds like there's a condition in which that could jump.
Yes, I think so.
Yeah, and Ben, thank you so much for coming on Odd Lots. And I guess we'll have you back on next year. And,
make it an annual tradition.
Check your forecasts against reality. So thanks.
Thank you so much.
That was fantastic. Thank you so much.
Well, Joe, that's always fun.
I love that.
I do think the point about whether or not we're in a bubble, the one thing that does give me some caution is this idea that actually everyone's kind of worried about it at the moment, and people are talking about the potential downsides. Yeah. But that said, I also think back to the internet bubble, the .com bubble, and I mean, people were so worried about it, they were writing books about a .com bubble, right?
At the time,
before it actually burst. So I don't, we've had bubbles before where people have been worried, and they're still bubbles.
Totally. Merely observing them does not obviate the existence of one.
That's right.
A couple things. So I love that Jan pushed back on this very almost consensus meme that AI expenditure has been a huge driver of GDP expansion this year. And when you talk about, I think, they have all of this cruff or whatever, and some of it's tech, and some of it's related to hiring. Everyone, I feel like, comes in to the public sector, and they're like, well, why can't this look more like the private sector, et cetera? But I have an observation that I thought about after the last time we talked to Jennifer, which, again, they're excellent conversations. Maybe we'll move the ball forward. So there are all kinds of obvious problems with the public sector, and we'll get into them. That being said, and I think you had the same experience. You hear these descriptions of say what's broken with the hiring process, and it's like, you know what? That sounds kind of familiar. I've experienced that in the private sector too.
Yeah.
A lot of these pathologies seem to exist in large organizations.
I was going to say, I think it's endemic to bureaucracy, right? And I remember Jennifer specifically saying that one of the main choke points is just the operational process of getting stuff approved or getting a new candidate through a hiring process that has been dictated by human resources, and you have to fit into certain slots or certain categories. So it's a big deal.
But that's the whole dealing with HR thing and their role as gatekeepers of the hiring process. And
Careful what you say, Joe.
I love our HR people here at Bloomberg. I'm just saying some of it sounded a little bit familiar. That's all I'm gonna leave it at that. Some of it sounded a little bit familiar.
Fair.
So of course we know that the new administration, of course, lots of people from the tech world have come to it. I think probably most famously Elon Musk and the whole Doge endeavor, which we'll get into perhaps where we stand on the verdict for that, but widely viewed as not particularly transformational, et cetera. Nonetheless, a lot of buy-in, a lot of people from the tech world thinking about what aspects of our most dynamic industry in America can be brought into the public sector to perhaps make it a more dynamic place, maybe more efficient, maybe more effective, and maybe a more desirable place to work for talented people.
Right. And the government, the Office of Personnel Management, is launching a new cross-government program, right, to recruit top technologists to modernize the federal government. And I would just add, it kind of has some new urgency because the Trump administration has identified the AI race with China as this existential threat to the U.S. So you can see stuff kind of coalescing.
Totally. Well, we literally do have the perfect guest because we are going to be speaking with the director of the Office of Personnel Management in D.C. We're going to be speaking with Scott Cooper. He's a former venture capitalist who's at Andreessen Horowitz. So he knows all about the public world, the private world, et cetera. Literally the perfect guest. Scott, thank you so much for coming on the Odd Lots podcast.
Well, thank you for having me. I'm glad to be here.
Absolutely. What is, let's start from real basics. What is the job of the office, the director of the Office of Personnel Management?
Yeah, It's a great question, and I didn't know the answer to this one before I started talking to the administration about the job either. So I think the simple way to think about it is, look, we're the talent management organization for the federal government. So there's about 2.1 million federal employees roughly in the government today, and we are responsible for all policies related to people. So how do you hire? How do you fire? Performance management systems, so HRIT systems. And then we're also a cross-functional organization that everything we do obviously touches all the different agencies. So we're trying to make sure that we've got consistency of policies across the government. And the simple goal in my mind is just, how do we make sure we have the right people in the right jobs in the federal government? That's basically the, four-word articulation of what we do.
Why did you decide to go from Andreessen Horowitz to what seems like, something of a challenging job and possibly lower paid? You don't have to tell us your salary, but
it's probably public somewhere. But I assume it's definitely lower than a partner at Andreessen Horowitz.
Right.
My salary is public. Actually, in fact, when you've hit a high point in your life when your oldest daughter, who is, I won't give her age, but she is, let's say, under 30, is making more money than I am at this stage.
Congrats to her.
So, exactly. I'm very proud of her. Yeah, it's a great question. Look, the honest answer is it was a couple of things. One is just it was the right time. I'd been at Andreessen, as you know, from the founding for 16 years. Super proud of what we did there. And Ben and Mark were incredibly gracious in giving me this opportunity. And I really felt like there is an opportunity in this administration to do something differently. So you mentioned a bunch of technology people coming to the administration. There's also just a bunch of, business people more generally. And look, we're not going to make the mistake of applying every private sector, method and model to the federal government. But I think what the president has asked us to do is to think differently about things and given us kind of the permission and the flexibility to do that. And so to me, look, I've been around the venture capital business, ultimately companies succeed or fail. My lesson from the venture capital business is they succeed or fail almost entirely because of the people in the organization and the organizational structure and the culture and the incentives. It's pretty simple. And so my view is, look, why can't we learn some of those lessons and apply them as appropriate to the federal government and think about creating a culture where we've got great people who can do great stuff on behalf of the American people?
So I want you to tell me about your new initiative to bring in tech talent, and also in the answer, maybe like situate it within maybe what makes it different from other endeavors. There was the Code for America endeavor, which probably had some similar themes. Obviously, there was the Doge experience, which I want to get into further. But talk to us about this new project. What is it? And then why is it different from past efforts to infuse technology or infuse tech thinking into the government?
Yeah, so let me take you through the program. So the program is called US Tech Force. So anybody who's interested can go to our X at US Tech Force and find more information about it. Basically, here's the program. The goal is to bring 1,000 engineers into the government. So software developers, AI experts, data scientists, product managers, so anybody who can help us basically with the job of modernizing government infrastructure. It's a 2-year program, and we partnered with about 25 of the largest private technology companies, private sector technology companies, I should say, and we're really trying to accomplish a couple things here. Number one is the government has a dearth of what I would call modern software expertise and modern AI technology expertise, and that's not a knock at all on the organizations, but a lot of what these big CIO organizations in the government have to do is they're maintaining these massive legacy infrastructures. And so the ability to do bespoke development is quite difficult in those organizations. So this will be a vehicle to help them accelerate bespoke development across the entire government. The second problem we're trying to solve is we have a massive early career pipeline problem in the federal government. So 7% of the federal workforce is early career, let's call that less than 5 or 7 years worth of work experience. And that compares to about 22, 23% in the non-federal sector. So by a factor of 3 to 1, the federal government is completely failing at getting early career people into government. And if you look at the other end of the spectrum, by the way, so we've got about 44% of our population that's over the age of 50, and that compares with about a third in the non-federal workforce. So we've got this looming problem, which is we're going to have a ton of people over the next 5 to 10 years who, rightly so, are at retirement age and want to go do other things. And we've done very, very little to actually replenish the pipeline. So this program is really intended to do that. And one of the ways we're doing that is by making it a 2-year program. So I don't think it's reasonable for us to go to a 22, 25, 27-year-old person and say, decide today, do you want to commit 40 years of your life to be a career public civil servant? What I'd rather do is expose them to the problems in government, let them actually have a great experience. And you know what? We should convince them over time how great this is. But you know what? If at the end of the 2-year period, they want to go back to the private sector, that's great. And that's why we've lined up all these private sector partners who are going to actually help
Alley is selling you a future where you're obsolete, or worse, identical. At Palantir, they're witnessing something different and revolutionary. From reindustrializing the nation's defense base to shipyard workers building faster and frontline workers boosting productivity, AI is transforming work across the nation. AI is not replacing American workers or flattening them into conformity. It's unleashing what makes each one irreplaceable: their judgment, their craft, their creativity. When American workers become more powerfully themselves, they own the future. Palantir, making Americans irreplaceable.
Hi, I'm Zing Sing.
And I'm Simon Jack.
And together we host Good Bad Billionaire,
the podcast exploring how some of the world's richest people made their fortunes.
And we are back with a brand new season of Billionaires.
Yes, movie megastar Arnold Schwarzenegger,
America's richest self-made businesswoman Diane Hendricks,
and co-founder of Snapchat, Evan Spiegel, to name just a few.
And we're asking you to decide if they're good, bad, or just another billionaire.
Good Bad Billionaire from the BBC World Service.
Listen on bbc.com or wherever you get your podcasts.
Can you talk a little bit more about why historically government roles have not been that desirable for tech workers? I assume you diagnosed the problem before you came up with a solution, but in your view, what is the main choke point or market failure that is leading to difficulty for the government to recruit the kind of people that it wants to?
Yeah, so I think there's a couple problems. So one is I think the fundamental issue, quite frankly, in my mind, is a messaging problem, which is, I'll give you an anecdote, right? So when I first came into office, I've been in the office about 6 months now. I met with one of my managers in the organization who said, hey, you guys are ruining things. And I said, what do you mean? And by you guys, she meant Doge. And, I'm not part of Doge, but obviously, look, I come from, I know lots of those people. And I said, well, how are we ruining things? She said, well, our whole value prop to employees has been come to the federal government and have lifetime employment. And I said, oh my gosh, you're not going to like my answer because, number one, I'm going to tell you, that's a myth and a lie that people have been telling you. There is no such thing as lifetime employment. And two, I said, look, that's the worst, least compelling kind of narrative that I've ever heard, that I'm going to go tell some 25-year-old, that's the value proposition, I'm coming to work for the government. So number one is we have to change the narrative. The narrative in my mind is come work on the toughest, biggest, most complex problems, do some public service, but then give yourself career options. And you know what? If you want to go to the private sector after that, God bless you. That's a perfect thing to do. So that's part of the problem. The other problem is the nature of what happens in government. And Jen Palka, as you guys mentioned in your intro, who's brilliant on this stuff, diagnosed it perfectly, which is so much of what government does is it's a compliance-based culture, right? It's not just literally, that we follow laws, but if I do something wrong, I'm worried about getting an inspector general report, or I'm worried about a GAO report, or I'm worried about some congressperson hauling me in front of their committee to testify about stuff. And so the short answer as a result is we have a zero risk-based culture inside of government. There's no concept of, you guys mentioned I came to the venture capital world. In that world, look, we take crazy risk because all we're doing is trying to maximize upside opportunity. Now, I'm not proposing we do that in government, and I've been using the term measured risk as a better way to try to describe it in government. But we have to kind of change the culture and enable people to think about the upside opportunity that comes from taking modest amounts of risk. And unfortunately, particularly on the technology side of things, that has not been the case. And so again, if you're a young, early career person, I think you want to do cutting edge stuff. You want to learn things. You want to kind of go out a little bit on the risk curve. And right now, at least historically, government has not been an amenable place for that.
So you mentioned that the pitch to work in the federal government should not be this is lifetime employment. That right. is that's not healthy for a lot of reasons, and I think a lot of people can intuitively agree with it. On the other hand, you mentioned the sort of in the VC world, you're always shooting for the right tail. But when you're talking about no layoffs or lifetime employment means you're cutting off the left tail. Just from a money standpoint, the employee of the federal government never has the chance to experience a right tail outcome. The highest paid worker in the federal government, it's a very decent salary, but, compared to very even moderately successful people, the most senior successful person in the federal government will make less very often than just sort of someone who's hung around Google for a long time. So how much 100%. Of the problem actually just comes down to that simple monetary fact?
So look, there's no question that compensation is relevant, but I actually think we've been overstating the nature of that problem. So let me give you a couple thoughts on it. So first of all, part of the reason why we're focused on early career here is at least the pay gap between private and public is a little bit more manageable. And it just kind of, it asymptotes like massively as you go farther through your career. So yes, it's totally unrealistic, unless you're rich and you just decide you want to do something different, it's totally unrealistic for us to think we're going to compete against like a VP at Google for a senior level executive person in the government. So that's not even, in my mind, like that's not even worth worrying about basically, because like the pay gap is just crazy and nobody's going to do that. But my experience at least, and you guys have been around a lot of organizations, is look, there are some people who are purely kind of profit maximizing, and that's great. It's not have no normative objections to that, obviously. But my sense is that's actually a relatively small minority of the population of employees. I think most employees come to work every day because they're being challenged, they're learning, they have career development opportunities, they work for someone who cares about their career, and they feel like, they can be rewarded when they actually do good stuff. They feel like they're held accountable. Like that to me is a culture that we can create inside of the federal government. And, even if it means, yes, in a short period of time, you are going to have like a, remuneration challenge relative to the private sector. But this is also why, again, just to go back to it, this is why I think this whole narrative of work for the federal government for 40 years to me is just crazy. Like, we should have an open idea that you can go back and forth between the public and private sector. And you know what? If you have points in your life where you think like profit maximization is the most important thing, then yes, like you should go to the private sector because the government's never going to deal with that. But I think we just have to break this, like to me, this dichotomy that there's one way to go or the other makes no sense. So look, in the perfect world, I'd wave a magic wand and say we pay everybody like what they can get paid at Google, but that's not realistic. And quite frankly, as you know, there's zero support in Congress for that.
Yeah.
The final thing we can do, though, just Joe, to give you one last perspective, is we can do things inside of OPM to mitigate some of the challenges on the compensation side of things. So let me give you a very specific example. So as you probably know, there's a GS schedule, which is like everybody gets paid, GS 1 through 15. These are different levels. Today, all those GS schedules are driven off of tenure and they're driven off of degree requirements. So if I don't have a college degree and I haven't worked for 10 years, no matter how good I am, I can't get to a GS 15 level in government. In my mind, that's just silly, quite frankly, right? That's the opposite of a merit-based culture.
Yeah.
You all will remember, since we've talked Doge, right? You'll remember, I won't mention his name, but there's a Doge engineer with a very colorful name that I'm sure your listeners have heard of.
Yeah.
When all the kind of exciting Doge stuff was happening, there was a quote from an administration official who said, "This guy's terrible. We never would have hired him because he didn't graduate from college and he didn't have 5 years of work experience coming here." And in my mind, like I literally wanted to pull my hair out when I heard that, because I was like, that's the craziest thing in the world. Like if this guy is capable of performing at a GS 15 level, why should we care about what his tenure is or whether he has a college degree? And so one of the things we're doing inside of OPM is we're going to eliminate all degree requirements and all tenure requirements in the pay schedule. And so as a result, if someone is doing awesome, like we can hire them at the appropriate level. So some of the pay gap problem is not just a numerical problem, it's a leveling problem. And I think we can solve that even in the absence of congressional legislation.
Yeah, I remember Jennifer, again, said something very similar about like the best coder in America, or a young guy who had won this huge coding competition and then couldn't get hired by the government because he didn't tick all of the official boxes. Kind of crazy.
For that specific role,
yeah. Since you mentioned doing awesome, how do you actually go about evaluating the performance of a tech worker in government? And how do you figure out which people you actually want to hire in terms of talent?
Yeah, so the short answer is we have to do it differently from how we do it today, but let me give you the very specifics. So on the front end, historically, we have relied on self-attestation of skills in order to hire people into the federal government. So I apply for a software engineering job, and I get this application where I check boxes and I say, you know what, I'm an expert in Perl programmer. I'm an expert in, AI technology. And I literally check the boxes, and that is the basis on which like my application gets through or doesn't get through to the next round of screening.
I assume this is tested at some point, though, right? There's some sort of competency test?
So in many roles, there's not. And the reason is, let me give you a perspective. There's a historical reason for this. So way back when, we used to have literally a civil service exam. It was called PACE was the name. I forget what the acronym stands for, but it was PACE. That existed until 1980. And there was a lawsuit at the very tail end of the Carter administration, very beginning of the Reagan administration, first Reagan administration, where there was it was a disparate impact claim, basically. So the kind of test results on this exam were disproportionately negative for minority applicants versus majority applicants. And so in 1981, the government entered into a consent decree where basically they banned essentially the use of these examinations. And from 1981 until literally 4 months ago, we were living under that consent decree. Nobody ever revisited it. And as a result, every agency was terrified to use any kind of actual merit-based assessment for hiring because they were afraid they would run afoul of this consent decree. Luckily for us, we revisited it along with the Department of Justice, and we got out of the consent decree. We actually found the original plaintiff actually was still alive. Lovano was his name. And we actually, finally said, okay, 43 years later, we think it's time to get rid of this consent decree, and they agreed to that. So for the first time ever now, we have kind of we've eliminated the risk that the agencies were worried about, which is if I use a technical assessment to judge somebody in their employment process, I might get sued, under some type of disparate impact theory. So we are now doing that. So number one, there's a long way to answer your question, but so the way we're going to evaluate people is they actually have to demonstrate merit. So there's lots of private sector tests, as you probably know, Code Signal, all these other things that every single private sector company uses where they're like, hey, basically, let me give you a coding test if you're applying for a software development job. And then we can level you and figure out, are you a, GS5 or a GS15 based on that? And then we can do secondary stuff like obviously an in-person interview or other things to make sure that, you're actually a good fit for the organization. So that's kind of thing number one we have to do on the front end. Does that make sense at least? And kind of, a little bit of a perspective
it
about how we
totally
got here?
does. It is kind of wild to think that, last year or a few years ago, or just 4 months ago, Joe and I could literally say that we're coding experts.
I'm a 10x engineer.
Yeah, that's right. And apply.
I know.
I'm a COBOL expert. COBOL, I can never
Hey,
remember.
COBOL expert would be very much in demand. It's COBOL, no T.
COBOL,
but,
thank you.
Cobalt is the mineral. There's a cobalt mineral and there's a cobalt coating.
Cobble, yeah.
Yeah, I never know if it's cobble.
Exactly,
I want to say cobble because it's cobbled together across IT systems. But COBOL.
That's actually really good. Okay, I didn't think about that. Okay.
Actually, but on the second part of Tracy's question, okay, so once they're in the office, and again, because it's not a for-profit entity, how does the government currently go about evaluating how someone did this year, and what would be the optimal way for the government to evaluate how productive someone is in their state? And this is a problem in private sector too. I'm pretty sure that if you went into Facebook or Google, et cetera, they would also not have a clean answer of which software engineer is more productive or contributed more value than the other one.
Yeah, no, you're absolutely right. Look, this is not a problem that's unique to the government. But what I think is unique to the government is historically, basically, everybody gets an A in government. To give you a perspective, most agencies rank people 1 through 5 at the end of the year on their performances, 1 being the worst and 5 being the best. And if you look historically over long periods of time in government, about 80+% of people get ranked a 4 or a 5. Okay, so meaning basically, everybody is in, kind of like woebegone and well above average. And then about 0.2% of federal workers get ranked a 1 or a 2, meaning that you're performing below expectations. So number one, we've had no system that actually recognizes outstanding performance, and quite frankly, unfortunately, no system that actually holds accountability on the other end of the spectrum. We're changing that. We've already put out regulations for the most senior executives, what are called the SES, which are the most senior executives, where we effectively, for the SES, have put out a regulation that requires a forced distribution, so a cap of 30% of 4s and 5 rankings, which we think is appropriate to actually distinguish people, in terms of their performance. So number one is we got to reform the system, period, and we're working on that, and you'll see more regulation from us on that. Number two, you're actually right, which is, look, sometimes the metrics are hard, right? So, you don't really want to measure lines of code that somebody produces because obviously all code is not created equal. But, what I think does work in the private sector is, look, managers are responsible for their frontline workers. They meet with them one-on-one. They have, weekly, they have a sense of what they're doing. They provide feedback along the way. I think the performance management ongoing process works better in the private sector. In the public sector, what I found is instead of managers, we use the term supervisor, which I think actually, unfortunately, does a disservice to what the job is. I don't think the job is necessarily supervision. The job is to manage, meaning, are they working on the right stuff? Are they doing the right things? Do they need training for this kind of stuff? And historically, we haven't done a great job on that. So one of the things that we just did, for example, is we just rolled out a brand new training program that's mandatory for all supervisors, specific to this issue on performance management. So to teach them, what does a one-on-one look like? Those of us who grew up in the technology industry, the first book that we were all assigned to read was Andy Grove's Only the Paranoid Survive, which I still think is a fantastic book. I don't know if y'all have read it. It's actually a really awesome book.
I have read it years ago. I have read it. Keep going.
Yeah, I mean, basically, he literally talks about, what is a one-on-one meeting with your, team member? What should it look like? And it's it's very much like management 101 stuff, but I think the honest answer is most people don't get that training. And so as a result, we have had a performance management culture where we have inflated grades and we have basically once or maybe maximum twice a year, people actually get feedback. So it's totally unfair to the employee, and it's also just unfair to top performers who are not actually getting differentiated reviews and differentiated compensation.
I was just about to ask, just to be 100% clear, compensation is going to be tied to performance.
Correct.
Okay.
Correct. Yes.
All right.
Yes. And again, it's not that it hasn't been before, but the problem is if everybody's a 4 and a 5 and you have a finite bonus pool, then you're peanut buttering out the bonuses, basically. So, like, again, just, Tracy, just to give you a sense, like when we gave guidance on this SES, these very senior executives, when we said there's a 30% cap, we also said we think 60% of the bonus-based compensation should go to that 30% of the individuals. And, that's we can argue whether it's 60% or 80%, but the point is, like, let's actually really pay for performance and let's differentiate compensation as opposed to giving everybody a $300 or $500 bonus, which in the scheme of things has little retentive or incentive value for employees.
So you mentioned project management just then, and I was looking at some of the press releases and documentation that you put out as part of this program, and there really is an emphasis on getting project managers. And I am very curious why that particular role seems to be in short supply, because I know someone who moved from a completely different industry into project management for a graphic design company. They had never done it before, and it didn't seem that hard.
Okay, so I'm going to distinguish between project management and product management, which is, I hope we wrote product management in the in our stuff.
Oh, did I misread it? Oops.
Well, I don't know that you did or not. We may have put it in there, but what we need is what I would call a product manager job, which is, a product manager in my mind is basically somebody who sometimes they come from an engineering background. They might actually have been developers themselves, but they're kind of people who sit between the engineering organization and the end user customer. And they listen to the customer and say, great, okay, tell me your problems. What are you trying to solve? And their job is kind of to translate that into ultimately, in tech speak, what we would call a PRD, a project requirements document for the engineers to develop against. So like that's the role we need. So in a well-functioning engineering organization, you have developers, you have designers, and then you have product managers. And the product managers probably aren't putting their hands on the keyboard actually, typing, ones and zeros. But they are literally that go-between between like the end user customer and then the requirements that ultimately drive the development process.
It's interesting. I feel like that's something I've really come to appreciate in working for a large organization, how valuable translation skills are, because you have this one part of the room that knows one very specific thing, and then there's these generalists on the other end that have some vague thing, and that person who could sit in the middle and talk to both sides is clearly a very is a valuable person. So you mentioned, like, the one thing that comes up a lot in a common theme on our podcast is like the importance of this sort of like tacit organizational knowledge, things that are like cannot simply be written down. They do not exist necessarily in one person's head. They're just things that are sort of collectively known, process knowledge and so forth. How do you think about that in light of the fact that these are 2-year roles? And, again, maybe in some cases someone will do 2 years, then continue their career in the federal government. But especially given the pay gap that emerges specifically for technologists, like that's probably you're taking on the one area where the pay gap probably gets the widest over time. How do you think about fostering and maintaining that kind of knowledge, especially given what you laid out at the very beginning, which is this sort of, I don't know if crisis is the right word, but these looming retirements of all these people that do have years of accumulated knowledge about how things really work?
Yeah, so you're absolutely right, which is, look, we have to balance kind of the 2-year time period against the need for actually the organization being able to maintain these systems once people leave. So let me I'll give you a real world example, Joe, just so you have it, because it might be helpful. So in my organization, OPM, we own the retirement process and retirement for, several million annuitants, basically, who have, kind of completed their professional careers.
Yeah.
And we are it's a very, I won't go into the details, I won't bore you, but there's literally, it's a ridiculously manual paper-based process where for years we have had people literally filling out paper applications as recently as the beginning of this year, and sending paper by postal mail and all kinds of stuff. And we literally have a mine in Boyers, Pennsylvania, which is very fun if you ever want to come see it, where we have hundreds of millions of file cabinets of people's retirement records that we consult.
We'd love to. I would love to. I've always wanted to go like those like huge like under mountain like big, like
Yes,
Iron
it is.
Mountain.
That's
They
what it
literally
is.
bury a lot.
It
paper
is Iron
documents
Mountain.
I'd love to
The
check out
Indiana Jones
Yes.
Okay.
warehouse for government bureaucracy.
I've always wanted to check out one of these places. We'll arrange that after the episode.
All right, we're gonna work on that one together. Anyways, I bring that up to say, okay, so look, we've luckily we've had a small team of developers. Joe Gebbia, who you guys may recognize the name, he's a co-founder for Airbnb. He joined the administration even actually before I got there, but he's been kind of housed in OPM, and he has like a team of like 3 developers and a design person. And they've been completely redesigning this retirement application. So we now have what we call ORA, the online retirement application, where instead of paper, people actually can go, in the year 2025 onto a, computer and type in their information, upload their documents. It gets routed to the HR, and it's vastly better than what we've had. So I bring this up to say, look, I think this to me is a good example, which is all those people are going to disappear at some point in time, and then the responsibility for that application is going to shift to the existing CIO organization within OPM to maintain it, to integrate it with other systems. And so a requirement of being able to do that development process for Joe and his team is, look, they have to do documentation, they have to do training of the team. Look, I think it's not an insurmountable problem. I just think it means as part of your process, you just have to anticipate that there is going to be a time where people are going to disappear. And quite frankly, it's a smart thing to do anyways, because we just know, and look, this happens in private companies all the time. Look, people's average tenure in private companies, I can tell you in Silicon Valley, it's way less than 4 years is what the average tenure of an engineer is. So these are not new things. They are new things to the government, which is this idea of kind of knowledge capture and knowledge management, kind of in light of the fact that people might not be there for their entire career. But I think it just means as we've designed this program that we have to have the appropriate level of documentation, of integration, of source code notes, and all those things that are, you would do in a normal circumstance to recognize that. Now, look, Joe, in the perfect world, I hope people love it and they're like, wow, this is exactly where I want to spend the rest of my life. And that's awesome. If they want to do that, like we want to keep them in government. But, I think we'll also have to deal with the practical realities that the current generation of, people are not thinking about, 3, 5, 10 year,
New Year's resolution: own how you show up online. It's easy with a domain and matching email from GoDaddy. Now just 99 cents per month for new customers their first year. Ring in 2026 with a domain and matching email at godaddy.com/newyear. That's godaddy.com/newyear to own how you show up online.
Maybe you already know about naked short selling. Maybe you've personally shorted stocks yourself, but do you know about the time short sellers ruined a Super Bowl, basically?
For me, I was a little late, but red flags went up like, what is going on? This is really scary.
At Planet Money, we get the story behind the money to explain how money works. Listen on the NPR app or wherever you get your podcasts.
What are you doing to streamline the operational side of the process? Because I imagine you mentioned culture before. If the pitch is come work for government, it's important, but you're going to be lower paid and you're going to have to constantly deal with paperwork and put together, RFPs that have 7,000 requirements and things like that. That's a tough sell to someone who's used to the whole move fast and break things culture.
Yeah. So anyways, let me just be totally clear, which is we are not going to move fast and break things because we can't quite do that in government. We can move faster than we currently do, and we can afford to take some risks, but we generally don't want to break things because, people do need to get their Social Security checks, and, the IRS needs to actually make sure you get your tax refund. So, but it's a great question. So look, there's a couple things that we're doing both inside and outside this program. So outside the program more generally, one of the big things that OPM is driving along with OMB, kind of the Office of Management Budget is we're working with all the agencies to basically what I would call do headcount planning and reshape the priorities for the organization. So there's a huge amount of government is very good about adding things to the plate, and they're very bad about actually ever taking anything off. So every time something new comes down from Congress, we add, thousands of more people, we add stuff to the plate, and then we have this list now of 20 things, probably 5 of which we've been doing for 20 years. And quite frankly, nobody even remembers why we're doing them anymore. They've just now become embedded into our culture. So part of the exercise in order to kind of make the throughput faster and to make sure that an engineer isn't sitting on their hands dealing with, crazy bureaucracy is we have to go back and look at prioritization and actually remove services that are no longer statutory and they're no longer valuable to the American people. So that's the exercise we've started. That's the exercise that we're kind of is ongoing right now. But the purpose of that will be not only to make sure that we're hopefully spending our money in the right places, but will also be to remove layers that ultimately slow down the actual work product of government. The second thing we can do is, as I mentioned, we're really trying to kind of change the performance management culture in government and eliminate barriers to people being able to move through the organization and change the idea that you can't take any risk. I mean, obviously, that's a big cultural challenge that we have in government. So everything from down to like, what's your performance plan look like? Your performance plan should have, efficiency. It should have, some measured amount of risk taking in there. So things that, again, will speed the pace of deployment and make sense. The third thing we're doing is, and this is, again, you guys asked me, how is this program different from other programs? As we hire these 1,000 engineers, ultimately they will live in various agencies, right? So Dr. Oz at CMS says, it's like, look, I need 75 engineers to do, kind of important projects there, or obviously Department of War, have lots of stuff. So they're going to live in those agencies. But what we're not going to do, which is historically where I think these programs have failed, is if you drop these teams just into the blob that is the federal government, they're going to have a terrible experience, and they're going to get lost, and their 2 years will literally go by without them actually having accomplished anything. So our whole goal with this is keep these teams together. So when what I'm hoping from Dr. Oz is there's going to be a team of 75 engineers who are going to be a team, and they're going to work on the projects that he thinks are the most important projects. And of course, they have to integrate with the existing CIO organization because so much of what we do has integration backends and all that kind of stuff. But we got to make sure that happens because otherwise, you hire a random, intern and you plop them into an organization and they get swallowed by the beast. Basically, it's understandable why that happens. So we've got to think about the organizational implications of bringing people in and make sure they're set up for success. And my expectations are, and certainly the conversations that I've had with all the agency heads are that they understand that, and they understand that for them to achieve what they want to do, they have to create the organizational structure that enables these guys to actually do what they're there for.
Yeah, I think that this is another thing that we could probably say from firsthand experience is you come to a big organization, you spend a long time, maybe the first year, of just getting to know the lay of the land. Who are the people that you should talk to, et cetera. It's a real challenge. It's a real challenge being effective of actually accomplishing anything, the amount of time. I've been at Bloomberg and
we've all experienced
yeah,
it.
They're still, I've been here 10 years and there's like, who do I call about? It's just like the nature of large organizations. I want to talk about, people who you say, okay, like we need to do something about the fact that all these people are going to retire and there is this pipeline, et cetera. Setting aside optimal levels of how big the federal workforce should be, et cetera. One thing that I could see as a bit of a problem about maintaining careers if federal workers do not feel that they are respected in their jobs. And there is rhetoric that is that you hear. It's like federal governments, they, again, some people it's like, oh, they're leeches. They're part of the deep state. They're all woke and they spend money on this and that's waste. But even that spending looks like what I observe as spending in the private sector, et cetera. And then, there's, at least from this administration, there's been these sort of seemingly from the outside and probably from the inside, capricious layoffs or arbitrary layoffs. And so if you respect this workforce, then how could you possibly have just like cut so arbitrarily? I mean, this is what it seems like. When you think about building a talent pipeline, do you think about this dimension and do you agree with the sort of premise of the question that it's a challenge that no one is going to work at a place if their bosses to some extent sort of think they're, do not respect them?
Yeah. So the short answer is yes, like absolutely this is a critical part of making sure that the federal government is an attractive place for the people who are there and also the people who, we're trying to recruit in. So I got a million thoughts. Let me try to see if I can keep them in the time we have remaining. So I'll tell you one thing. So just to back up, as you know, I worked at Andreessen Horowitz, and Ben Horowitz, in my mind, is one of the best CEOs, best managers that I've ever learned from. And I had worked for him for literally 10 years prior. So for 26 years of my life, I've had the benefit of learning from Ben. The most important thing I learned from him is exactly what you described, which is when you have restructurings in companies, basically you have broken trust with your employees. Okay, so particularly in the startup context, right? Like, when we were in startups, we personally recruited every single person into that company, and we told them how we were going to conquer the world and how awesome we were going to be, and we believed it. We weren't like lying to them, but it turns out we were wrong. Like the market changed, we didn't have enough money, and we had to live through this in our loud cloud opsware days. We had to lay a bunch of people off. And so you've immediately broken trust with those employees. So you are, from that day forward, basically in a situation where you have to rebuild that trust, right? So you have to demonstrate to them that, it wasn't capricious and arbitrary, and that you're not like lying to them and a jerk, but that you actually do care about them. And it turns out, through no fault of their own, their next door neighbor who sat in the cube next to them, unfortunately lost their job because we couldn't afford to pay them anymore. So I say that only to say, look, I recognize that very clearly. I understand that. And if you literally go back to the testimony I gave when I went through my hearing, I said that very explicit. I think that's important. All that being said, I think, look, the way to think about, let me just give you the context of the headcount reductions that happened in the government, because I think there is, in my mind, at least some misinformation out there that I think is worth talking about. So let me give you some numbers. You've got a very sophisticated audience. As of the end of this year, roughly about 317,000 people will have exited the federal government. Okay, we started the year at about 2.4 million-ish, roughly, in terms of civilian. These are civilian employees, by the way, so forget about the armed services because my organization doesn't touch that. About 2.4 million civilian employees will be roughly 2.1 million civilian employees as of December 31st of this year. At the same time, we hired about 66,000 employees, so on a net basis, call it 260, 270,000 roughly kind of net departures from the government. If you go back to that 317,000 number, 92.5% of those people took some form of voluntary retirement. So we had this thing called DRP, Deferred Resignation Program. That was literally half of it. 154,000 people took that, which was an 8-month severance that we gave to people to voluntarily leave government. And then the rest of it was, there are some other programs. The acronyms aren't relevant for your listeners. They're called VERA and VSIP if people want to look them up. But those are other voluntary kind of, retirement programs. And then only 7.5% of people were removed through either RIFs or what we call probationary employees, which is in the government. If you've been there for 1 or 2 years, depending upon the job, you're kind of the closest thing to an at-will employee that we have in the federal government. And so there were about 7,000 of those probationary employers who were removed, and about 17,000 people who were ultimately RIFed, reductions enforced as a result of restructurings. So I say that, number one, I want to be totally clear with your listeners, not to make light of any of this. Obviously, those are real people with real jobs and real families and stuff. But the numbers, again, I think bear out what we tried to do in the government, which is tell people that things were changing, tell people that, we do have a different view as to what, we think the federal government should be doing, and give people an opportunity to voluntarily say, okay, this is not what I signed up for, which is a very noble thing to do, and say, it's time for me to go do something different. So 92.5% of the people who left the government did so because they decided, this wasn't an environment they wanted to be in. So that being said, now look, I totally agree with you, which is we have to demonstrate to the people that are there and to the people who are coming in that we obviously care about them and that we think they do valuable work. And I think that's the case for the vast, vast majority of people there do great work. Like any organization, yes, there are some people who are not doing great work, and we have a system that makes it very hard to hold them accountable. We're going to try to fix that. But look, that's true of any organization. So I don't think it doesn't make sense to kind of demean the broad federal government based upon the work of a few. But we have to do that. And we also have to be honest and transparent with our people, which I believe very strongly in, is look, we can't be all things to all people. Like we're running $2 trillion deficits. That's not sustainable. And so, look, we got to be smarter. We have to use technology to find ways to improve efficiency. We have to think about if we're doing 20 things, are all 20 of them still required? Do they still add value? Because ultimately, we're stewards of the taxpayer dollars. Like, this is not our money we're spending. And so I think it's incumbent upon everybody, and this is the message that I'm trying to get across to my team and to the rest of the government, is efficiency doesn't mean just cutting costs. Efficiency means, are you thinking about delivering a better service, but doing so, at or below like what you do today because you're thinking about organizational changes, you're thinking about technology. Like, to me, that is just, like, quite frankly, required of anybody in any organization to do. And so that to me is like what I'm trying to convey to people. And yes, that means that there may be some jobs that are impacted because of technology, but those things are going to happen whether, we want them to happen or not. The question is, do we actually set up the workforce and do training and do all the kinds of things we need to do to make sure that people have opportunities in light of what is a very, very rapidly changing, technological market?
So I get that part of the problem that you're trying to solve is an operational one, this idea of like a COBOL programmer who's been there for decades and he retires and walks out the door and no one knows how to do what he was doing, or no one understands the system that he's basically had control over for ages. But at the same time, we're talking about a decent amount of turnover, a lot of new employees, if this goes the right way. How are you, I guess, guiding for safety, are there any sort of like institutional guardrails that you're putting in so that the government doesn't actually end up breaking things?
Yeah, I mean, look, there are, you will hopefully appreciate this, but look, there are a ton of institutional guardrails. In my mind, like, the problem is we have too many institutional guardrails. And again, rational people may disagree with me, but, I can just tell you, like, the entire culture of everything we do, everybody I've talked to in government, and luckily we've had lots of kind of impact on making change early on, everybody is like, we can't do that because of X, right? And the answer is either because like it's statutory, and the honest answer is when you dig and dig and dig, the reality is it's not statutory. Like we've built up this like urban myth over time that something is statutory. Or as I mentioned, because like I'm terrified that I'm going to get a GAO report, an inspector general report, or a congressional inquiry. And like we have built such a compliance culture that we are just literally like unable to do anything that actually is kind of modern and, forward thinking in terms of government. And so this is what I'm trying to do. And as I told you guys from the beginning, like, yes, this is not the private sector. We're not going to take crazy risks. We're not going to like go like put everything on black, in the casino. But we can have a rational conversation, which is, okay, like what are the risks we're taking and what's the upside? So if you'll give me a minute, let me give you a very, very tangible example for your listeners. So I mentioned to you that we handle retirement services, and it's a very manual process. And so like it takes us a really long time to get people formally retired. So you quit from, you retire from the government on September 30th. In the current process, it takes 60, 90, 120 days sometimes for you to actually get a check, because we have this ridiculous manually paper process that takes forever for us to calculate what are you actually entitled to and to make sure you're getting the right money and all that stuff. So that's a huge burden on retirees, right? You've been getting a paycheck every 2 weeks for the last 40 years. And now I'm going to tell you, like, sorry, like, go manage your cash flow some other way while I'm doing this. Like, that's terrible in my mind. And it's a complete disservice and completely disrespectful to people who are retiring from the government. So we have a process in the retirement services thing called interim pay, right? Which is, as the name sounds, right? The idea is, okay, can we get you some money on an interim basis that may not be 100% accurate, but at least helps bridge this gap between when you retire and when you get your actual annuity check, okay? So going into, and then couple this with, we've got this massive, we've had a lot of exits in government. So the 317,000 I mentioned, not all of those are retirees, but like on average, we have about 100 to 150,000 exits a year. So we're more than double the number. So, and as a result, there's more than double the number of retirees that are happening. So you've got this terrible paper process, like massive volumes, and we're just going to make life miserable for all these people who can't get money. So I asked the team, I said, okay, how many people go through interim pay today? This is kind of pre our change. And it's about like 30% of people. And I was like, well, what's the problem? They're like, well, that's how we've always done it. So, again, part of the answer was statutory, which it's not statutory. And they're like, well, there's huge risk to the system, because if we pay somebody more and then they die between the time we paid them their interim payment and we get their actual annuity, there may not be any assets left into the estate, and so we might compromise the fidelity of the trust fund, okay? Now, keep in mind, this is a $1.2 trillion trust fund that is actually cash flow positive. So among trust funds for retirement, it's actually very rare. But we earn 2.5% on government treasuries a year, which is horrendously bad because we're only allowed to invest in government treasuries. But notwithstanding that, it's actually still cash flow positive and fully funded, like almost in any circumstance. So we finally went through the math, and I said, let's go through the math, and let's assume, we get it wrong X amount of time and all this other stuff. And we did a bunch of math, and I said, look, if we're wrong 100% of the time, it could cost us a couple $1 million of overpayments out of a $1.2 trillion trust fund. But we can shrink from 90 to 120 days, the time somebody gets a payment, to either 0 to 7 days if we put more people through this interim pay process. So in my mind, like, this is just the most obvious thing to do. And we are doing it, by the way. We decided to do it. But like, it's a great example, at least in my mind, of where we have so ingrained in the culture that risk, any kind of risk, is bad, without actually people being willing to have the conversation to say, okay, like, what is the cost of that risk relative to the upside opportunity that taking that risk entails? And I'm perfectly happy. I told them, I said, look, you don't need to protect me if it turns out some congressperson wants to yell at me because like I took a modicum of risk in order to like make, hundreds of thousands of retirees' lives better and not have to like take loans out after they've given their career service to the federal government. Like, I'm totally fine defending that. I think that's a perfectly rational answer. So that to me is the issue.
I have one last question, and maybe I'll sort of ask you a little bit to put your VC hat on, because maybe you will go back to VC when this rolls over. But who knows? Someone who knows a lot about technology. So we had an episode recently with Tyler Cowen where we talk about one of the weird things.
Yeah, he's great.
Yeah, is that the AI. We haven't even really talked about AI, so this is my AI question. AI, the tech, makes your jaws drop when you see it. On the other hand, the impact so far on the economy or the real world is sort of muted. It's like you might have, given the capabilities, you might have expected more revolutionary change. And his thesis that he put forth was like, we're really not going to see that sort of meaningful, impactful diffusion of the tech until we have organizations that to some extent are built ground up from AI. That, yes, you can maybe get some productivity gains here and there by putting AI into some existing workflow, but that the real breakthroughs will come from whether it's companies or so forth that are truly AI native from day one. I'm curious, when you think about, again, going back to the VC world, does this feel intuitive to you that the real deployers will be AI native? And then does that have any implications for, like, we're not going to have a revolution, I guess, hopefully, at the federal level. We're not going to have a complete destruction and starting over. Does that have any implications then for thinking about how AI will be diffused within federal processes?
Yeah, so obviously, Tyler is a brilliant guy, so far from me to disagree with him. But let me give you just a couple thoughts on what he said. So look, I guess I generally agree with most of what he says, which is, and this is true, by the way, I think, of adoption of most new technologies, which is we go to the common use cases and we think about incrementality as the first thing to do it. So if you go way back when, Mark Andreessen told me this, so if it's made up, I'll blame him. When we first had movies, actual moving pictures, they were just plays basically that people filmed, right? So like they weren't like producing them, they wasn't new content. It was literally just we said, wow, we have this cool thing called a camera. Let's film a play and then go show it in a thing. Now, it's obviously that's not that relevant to this conversation, but my point is just like we tend to go to these very common incremental use cases for things. And so, look, I believe that if you look at any major Fortune 500 company, I guarantee you that every single board conversation is, what the heck are you doing about AI? And how do I get 3 to 5 to 7% greater EPS growth relative to last year because you can fix my customer support problem or stuff like that. So I think that's what's happening right now. I do agree that, yes, what often happens is then there will be a new generation of companies, and we see this in the venture capital world too already, which is the most obvious use cases that people did is there's a ton of companies who have customer support applications for AI, and there's a ton of companies who have, how do we help lawyers read documents better using AI? And that's great, and those companies are fantastic. But the real breakthrough is going to be, yes, like when someone says, okay, we're not just going to make Salesforce.com more efficient, but like we're just going to rethink customer relationship management with an AI first mentality. And like the AI should know who my customers are. It should anticipate what I want to do. And it should send me emails and texts and say, like, you haven't talked to this person in 5 weeks. And I just saw that they, spoke at this conference and they talked about this and, you're not following up on it. So that's where we will get. And I have no doubt we will get there, quite frankly. And look, I'm an optimist by nature. You have to be in the venture capital business. But yes, I would agree with him generally. I think that's right. What does it mean for the federal government? Very simple, which is that if the private sector is incremental, the federal government's going to be like, 100x incremental relative to 100x less incremental, I guess is the right way to describe it. But that's, in my mind, that's okay. Like, so again, I've told everybody in my team, I'm not asking you, I don't want you to go build like the 2040 AI plan because we have no idea what the heck that's going to look like. That's a total waste of our time. What I want you to do is look at a process you do today and figure out, can you use an AI tool to help you get 3, 5, 10% greater performance out of your organization, right? So we do a ton of, I'll give you a very simple example. We do a ton of regulation writing, obviously, because, that's what we're ultimately in the business of government is producing regulations. And we're about to put out a regulation. We got 40,000 public comments on this regulation. We literally assigned each one of those 40,000 comments to a person to read and to draft a response to. Now, to me, that's just insane, right? And I'm not saying that like the AI, we should just like the AI should do it, but like clearly AI is very good at, summarization, at, helping people think about stuff that's all. If we did that, like we would unleash so much creativity and opportunity in government. If we just said, take the very basic stuff we're doing today and use your, companion ChatGPT or XAI, whatever your favorite tool is, and just, eke out a little bit of productivity. So anyways, that's how I think about it. So yes, look, we're not going to transform government overnight, but what we're trying to do and what the U.S. Tech Force is trying to do is, can we get the right people in here who understand those things so that we start to drive ourselves forward so we don't wake up 5 years from now and find that we're the last dinosaur, basically, and the world has passed us by.
So you sort of mentioned it just then, but can you talk at all about what kind of platforms you're using currently or what kind of models? Because, I'm sure some people would find it very ironic if the federal government was using DeepSeek or something like that. And I'm curious whether you lean towards like an open source thing or a closed source thing because of privacy concerns.
Right now, the honest answer is we're at the very, very early stages, which is most of what people are doing. It literally, this may make your head spin because it made mine. Until about a month ago, we did not even have ChatGPT on our government desktops. So I literally would sit there on my phone and ask ChatGPT questions, my personal phone, just to be totally clear, on my personal phone, and then I would go back to my work laptop and do stuff. So as of about a month or two ago, we actually have ChatGPT. We have XAI now. We might even have a third one. I don't even know. Oh, and of course, we're the government's a big Microsoft client, so we have Microsoft Copilot. For an individual user in government, that's basically the state. That is like the state of kind of advanced automation. Basically, is we literally have it on our laptops now. For the development work that's happening, you're absolutely right, which is, look, there are major security issues that we all have to think about. Look, I'm a big believer, as you can imagine, in open source, and certainly our firm, Andreessen Horowitz, you've seen Mark make lots of public comments about this. So I think the government will use open source and can appropriately do so. Clearly, we're not going to use like the DeepSeek commercial version.
Yeah.
But, so much of that stuff is open source. And if you bring it in, to your environment and you make sure that you get the right security standards, there's tremendous value to develop on open source. But I would just to give you a sense of where we are, I would say we're very, very early in that journey in government.
I have one last very quick question, which is how much of a constraint is drug testing on new hires nowadays?
I wish I had a really smart answer to your question. I don't know the answer to that. I have not seen it. It hasn't shown up as some like big red flag where we're losing people in the recruiting pipeline because of that. But the very honest answer is I don't know. But I will find out.
I think that's a good question. I'm actually very curious about drugs in the workforce in general. We should do more on that. Scott Cooper, thank you. No, for real. You hear about it. My barber was talking about how hard it was to hire because he's like, everyone is sort of.
If somebody, I would just say, Joe, if somebody clips that and puts it on, the quote's going to be, Joe is very. I'm very curious about drugs in the workforce. That's going to be a great clip. Yeah.
We'll get our producer. We'll clip it. We'll get ahead. We'll get ahead of that one. Scott Cooper, thank you so much for coming on Outlaws. That was really appreciate your take your time. Very helpful, and we'd love to stay in touch and hear more about how these projects evolve during your tenure.
Great. Thank you both for your time. I appreciate it.
I thought that was great. I love these conversations. I mean, because I think they're just, I guess, the sociology of them, right? Like that's what these conversations are really about. And especially, we talk about some of these pathologies that replicate from the public to private sector, et cetera, that are both like, they're really interesting sociological questions.
The Department of War needs to get a bunch of ping pong tables and free snacks to recruit the most cutting edge tech workers, right?
With a matcha bar.
That's right.
Yeah, I wonder if they're experiment. We should have asked that, whether they have a matcha on tap at the office and whether that could move the dial.
But it's also interesting, again, there's that cultural, sociological aspect, but it does apply to large bureaucracies and private organizations. And I think everyone at some point in their lives will experience this type of unnecessary paperwork, whether it's in their jobs or when they're applying for a driver's license or whatever.
Yeah. You know what? Like, this is like where I have like the sympathy for like sort of like modern life, large, complicated things. How can the individual with our, how could you navigate insurance? How could you navigate all this stuff? It like drives you crazy at any scale. I do think, and this came up also in our conversations with Jennifer, and I believe it, that there is more to a career than pay, right? Mm-hmm. But I also think that's like a very real issue, especially when you're talking about the tech workforce specifically, where we know that you can just like make an absolute fortune.
Yeah.
And in many cases, you can make a fortune as a very young person. You be in the right company at the right time, and many overnight multi-millionaires in Silicon Valley. So it's not just the late stage, although that's where it becomes the most obvious. The pay is a very tricky situation.
Well, I do think the emphasis on time constraints for the tech force, that's really interesting. And that's kind of a shift, again, a cultural shift from the way people have perceived government jobs for a long time. And I can imagine, like if you're a young tech worker, maybe you're having trouble getting into the private sector, just last year. No, 2 years ago.
Yeah.
Remember, there was the wave of like layoffs, right?
Yeah, absolutely.
And now everyone is recruiting because of AI. But
Well, you're to your point. Like there are many talented tech people. If they're not right there in the sweet spot, we even know that's not what it used to be.
So I can imagine like you go to the government for 2 years, and it's an educational process.
Yeah.
And you can take some of that knowledge away from you when you then go into the private sector. Although that also opens up the question of rotating doors between the government and private companies. But maybe that's a topic for a different day.
I do think there is, and it's not just this administration, but I think it's been very notable, at least with some parts of the administration or some parts of the rhetoric. There's this sort of like vilification of bureaucrats, which is, again, sort of a long time thing. Like bureaucrats has sort of been a kind of a pejorative. I mean, a bureaucrat's a real thing.
The B word.
Anyway, I do think that's an issue. And I also think, maybe we should just bring back civil service exams everywhere. And if you could, no, seriously, and if you could pass this test, you can get a job. Like it's Lindy, it's like famously, go back thousands of years in China. It's like the big test,
I was about to say, do you know about the Chinese civil service exams? Those are so interesting and crazy. Shall we leave it there?
Let's leave it there.
All right. This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our guest, Scott Cooper. He's at S. Cooper. Follow our producers, Carmen Rodriguez at Carmen Armin, Dashiell Bennett at Dashbot, and Cale Brooks at Cale Brooks. For more Odd Lots content, go to Bloomberg.com/oddlots for the daily newsletter and all of our episodes. And you can chat about all of these topics 24/7 in our Discord, discord.gg/oddlots.
And if you enjoy Odd Lots, if you want us to go to Pennsylvania to look at a bunch of file cabinets, then please leave us a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is find the Bloomberg channel on Apple Podcasts and follow the instructions there. Thanks for listening.
That business idea you've been sitting on? This new year, stop waiting for the perfect time. GoDaddy Aero uses AI to build your website, logo, and marketing in minutes, not months. No tech skills, no excuses. Just your idea made real. Get started at GoDaddy.com with GoDaddy Aero.
You can get the news whenever you want it with Bloomberg News Now. I'm Amy Morris.
And I'm Karen Moscow, here to tell you about our new on-demand news report delivered right to your podcast feed. Bloomberg News Now is a short 5-minute audio report on the day's top stories. Episodes are published throughout the day with the latest information and data to keep you informed.
Yes, there are other products like this from a variety of news organizations, but they usually rerun their radio newscasts throughout the day. That's not what we do. We create customized episodes that can only be heard on Bloomberg News Now.
And we don't wait an hour to publish breaking news. When news breaks, we'll have an episode up in your podcast feed within minutes, so you're always getting the latest stories and developments.
Get the reporting and the context from Bloomberg's 3,000 journalists and analysts. We're all over the world. Listen to the latest from Bloomberg News Now on Apple, Spotify, or anywhere you listen.
Carol Massar.
And I'm Tim Stenivek, inviting you to join us for the Bloomberg Business Week Daily Podcast.
Now, every day we are bringing you reporting from the magazine that helps global leaders stay ahead.
We've got insight on the people, the companies, and trends that are shaping today's complex economy.
That's right, Tim. We're all over global business, finance, tech news, all as it is happening in real time. And we've got complete coverage of the U.S. market close. Gotta say, basically, if it impacts financial markets, if it impacts companies, if it's impacting trends and narratives that are out there, we are on it.
We also have a lot of fun doing it. Bloomberg Business Week also brings you the analysis behind the headlines through conversations with our expert guests.
And we are doing this all live each weekday. And then we bring you the best analysis in our daily podcast.
Search for Bloomberg Business Week on YouTube, Apple, Spotify, or anywhere else you listen.
Check it out on your way home from work to catch up on the conversations that you missed during the business day.
And on the weekend, check it out for a complete wrap-up of your business week.
That's the Bloomberg Business Week Daily Podcast. I'm Carol Massar.
And I'm Tim Stenivek. Subscribe today wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm John Tucker.
And I'm Karen Moscow.
And Karen, we're going to have more on the markets as we close out 2025 in just a minute. But first, the COVID-era subsidies that help Americans pay for Obamacare health plans expire today. It's going to result in more than 20 million Americans paying higher premiums next month. Now, Democrats have tried to extend the additional support beyond the December deadline, but Republicans have balked, citing the cost of some $350 billion over the next decade. Let's get more from Bloomberg opinion columnist Gouda Mukunda.
If premiums skyrocket the way that it looks they are doing, and it looks like they're going to, that is a political disaster for the Republican Party, which owns the issue in that way. They're asking Democrats, but to fix it, almost all the votes will be Democrats. The policy incentives, which are to fix the problem, and the political incentives, which are for Democrats to say, hey guys, congratulations, like, you own this. Those run in completely opposite directions, and the closer we get to the midterms, the more the political incentives are going to swamp the policy ones.
And Bloomberg Opinion's Gouda Mukunda. Meantime, a handful of House Republicans, they have joined Democrats in a maneuver that will put a 3-year extension of these subsidies to a vote next month.
Let's head overseas now, John, where Russia and Ukraine struck each other's Black Sea ports overnight, damaging infrastructure, including an oil refinery. The latest salvo comes after Russian President Vladimir Putin said he would revise his country's negotiating position to end the war, claiming Ukrainian drones targeted his residence. Former U.S. Ambassador to Ukraine Stephen Pfeiffer says the Russian president is attempting to stall peace plans.
Putin is clearly trying to derail the progress that appears to be being made in conversations between Americans, Ukrainians, and Europeans. It's unfortunate that President Trump took Putin's word at face value.
Former U.S. Ambassador Stephen Pfeiffer, Russia invaded Ukraine in 2022.
And let's turn to the latest developments in the Mideast. Israeli Prime Minister Netanyahu says Iran should heed President Trump's warning about not restarting its nuclear program. Netanyahu spoke yesterday with Fox News.
As far as the nuclear program, I think they're trying to do it. I'm not sure they've decided to cross the line because I think they heed President Trump's warnings, and also because they've just experienced something, less than a year ago. They saw what it entails, and they have to choose. Look, we don't seek escalation. I hope they don't.
Israeli Prime Minister Benjamin Netanyahu also says he is aligned with President Trump on wanting to give the new Syrian government a chance.
In Asia, John, President Xi Jinping said China is set to meet its economic targets for 2025, with growth expected to reach about 5%. Addressing the country's top political advisory body on New Year's Eve, Xi said the economy has demonstrated resilience despite challenges.
Yeah, let's turn to the markets, where 2025 has been another profitable one for the bulls. Stocks ending a third year at double-digit gains. In fact, global stocks poised for their biggest annual gain in 6 years. Alonzo Munoz is the Chief Investment Officer at Hamilton Capital Partners.
I think we have to be sanguine about the fact that there may be some volatility next year. We have some big catalysts that we're looking forward to, like Fed policy, Fed rate cuts maybe. We're looking at the Supreme Court and what they do with tariffs. I think that's a big deal. And so I think we're going to be, really open to next year. We're keeping a little bit of cash on hand, but we're going to stay on the AI trade. I think that's what we're going to do going into next year.
Hamilton Partners, Alonzo Munoz. So far this year, the MSCI All Country World Index, that's one of the broadest measures of the equity market, that's gained 21%.
Well, it's also been a good run in 2025 for precious metals, John, although they are ending the year on a whimper. Silver is down about 5.5% today, and we get more on the reasons behind the move with Bloomberg Markets reporter Valerie Teitel.
Interesting, we had another margin requirement hike from the CME, which I think is taking, again, those leveraged speculators out of the market. And that's why we're seeing silver plummet again today. They do this on the back of very volatile trading days to make sure that everyone trading does have enough margin, enough to post against their wins and their losses. So not unusual to see this from the CME, that they do this twice in a row on the back of all of this volatility in the silver market, but it is definitely taking some speculators out of the space.
And Bloomberg Markets reporter Valerie Teitel says despite today's losses, silver is up more than 145% this year. Gold, which is also lower today, is up more than 50% in 2025.
And oil is heading for its steepest annual loss since the start of the pandemic in 2020. Crude has slumped this year as supplies swelled from OPEC Plus and its rivals, but demand growth slowed. Oil, which is down 18% this year. Right now, let's do WTI, American crude, $57.99 a barrel. That's up just 3 cents a barrel this morning.
Time now for a Bloomberg Sports Update. Here's Dan Schwartzman.
Patriots star receiver Stephon Diggs is facing a felony charge of strangulation as well as a misdemeanor charge of assault for an incident that allegedly occurred back on December 2nd. Diggs will be arraigned on January 23rd, which is the Friday before the AFC Championship game. Meanwhile, Diggs' brother, Cowboys two-time Pro Bowl cornerback Trayvon Diggs, was released by Dallas for what's being called a culmination of issues. The quarterfinals of the college football playoffs getting underway as the 2-seed Ohio State battles the 10-seed Miami in the Goodyear Cotton Bowl Classic in Arlington, Texas. Light schedule in the NBA. The Celtics knocking off the Jazz 129-119. The 76ers getting past the Grizzlies in overtime 139-136. Pistons dominating the Lakers in LA 128-106, while the Clippers beat up on the Kings 131-90. That's your Bloomberg Sports Update.
That's news when you want it with Bloomberg News Now. I'm Karen Moscow.
I'm John Tucker, and this is Bloomberg.
I'm Barry Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversations with the people who shape markets, investing, and business. CEOs, fund managers, billionaires, Nobel laureates, traders, analysts, economists, everybody that affects what's going on in the market. Stocks, bonds, real estate, commodities.
I'm looking at some of the, my GLCO screen on the Bloomberg terminal, the global commodities, just ripping on the metals, gold, silver, platinum, palladium. What do we do in 26 on that kind of front there? Because that's tough comps to say the least.
Yeah, so I think on the gold, it makes me smile. My very first internship with Sir John Templeton, I was 15 years old. It was 1995, and he asked me one question: what was the intrinsic value of an ounce of gold? And at that time, it took me all summer to figure it out. I don't remember the number I gave him, but I do remember the conclusion was the central banks were all dumping gold and they were buying US dollars. Today, the opposite is true, right? You have central banks buying gold and dumping US dollars. So I think gold will continue to hold these highs. There's a lot more interest in gold as a portfolio asset rather than just a hedge. You have people like Tether buying gold. The India pension regulator just approved for the purchase of gold and silver ETFs. And so you also have gold and silver being supported by a weakening US dollar. So although they're at all-time highs, I don't see them collapsing anytime soon. I think this movement will be sustained. And then, not all metals have done well. Like nickel, for example, hasn't. And where I think there's value to be had still in the metals space is in the PGMs. Trump has really squashed the hopes for the EV car, but what is clear is the hybrid is here to stay, and the hybrid still has a catalytic converter. But the PGMs were sort of left for dead. So this year they've started catching a bid, and that's the palladium, the rhodium, and I think that continues. So I think there's still value to be had in PGMs, and there are a lot of South African stocks that you can express that in. We own a small one in Australia called Southern Palladium, which has been on a tear recently. So there's still opportunity within the metals complex. I just think you have to be selective here.
Yeah, we see, I'm looking at the BCOM index, the Bloomberg Commodities Index, has had an incredible year, up 13.6% thus far. That's the best year that we've seen since, well, basically in 22, we matched that. In 21, that was off the charts because of the pandemic. But Barbara Ann, do you look at the AI craze? I note, by the way, the palladium comment, and I love that because I care about the cars. But I was listening to Paul and Alexis this morning talking about silver and copper, and I can't remember who the guest was, but he or she was saying, look, this is the stuff you need to build data centers, right? And I don't know why I hadn't thought about Dr. Copper in that sense. I always, because of when I came into this business, think about China. But do you look at the stuff you need to build these data centers and you think there's still room to run in those commodities?
Yeah, absolutely. So copper's had a great year because of the anticipated U.S. tariffs. So people have just been loading their orders, et cetera. But also a lot of the mines have had disruptions due to fatalities, which has brought supply offline. But the major thing is, globally, 450 is sort of the break, 450 per pound is the break even for copper miners. And at 550, you start getting a really nice return on equity. So that incentivizes people to go out and invest in copper mines. But what it doesn't solve is that it takes 20 years to bring a copper mine to market. So where I think there's still opportunity on the copper side is in M&A, and I anticipate that will pick up. And so if you're a major and you want to accelerate your growth at this point, you're going to go out and buy smaller companies that are close to FID, so you don't have all the permitting risk, right? And so we have found one in Ecuador, the tier 1 mine with a 20 to 30 year span here, and it has all the capital it needs to get to FID. It has no major off-takers and no major on the share register. It's wide open. Its name's Solaris. We think it's a beautiful candidate, and even though the price takeover candidate, and even though the price has moved from 330 to 11, it's even more attractive today than it was a year ago because the price of copper is higher and because the majors are highly incented to go out and buy this growth. So I think 2026 is the year that you see a lot of M&A pick up in the copper space in particular.
AI is impacting every industry.
This AI Expo is a great manual for you to meet.
The minutes showing most officials see additional interest rate cuts as likely appropriate if inflation declines over time as expected. Yet we did get further signaling from some participants on the committee who suggested that under their economic outlooks, it would likely be appropriate to keep the target range unchanged for, quote, some time. According to the minutes, quote, several participants pointed to the risk of higher inflation becoming entrenched and suggested that lowering the policy rate further in the context of elevated inflation readings could be misinterpreted as implying diminished policymaker commitment to that 2% inflation goal. Participants judged that a careful balancing of risks was required and agreed on the importance of well-anchored longer-term inflation expectations in achieving the committee's dual mandate. Of course, the minutes really are putting a finer point on the fact that this was a divided FOMC as participants weighed the risks between employment and inflation. And of course, this was when we got that summary of economic projections and we looked at the dot plot, which had that range of projections for next year and where policymakers ultimately think neutral is. I'll give you one other quote that was important to pay attention to here, which is that, quote, a few of those who supported lowering the policy rate at this meeting indicated that the decision was finely balanced or that they could have supported keeping that target rate unchanged. It is clear that these minutes are showing that there's a lot of divisions ahead, and it's not really clear exactly where that policy path is headed.
Yeah, exactly, Tyler. And we were looking to these minutes to perhaps give us a little more detail on just how fractious the committee is right now. Did we get any more detail on just the turbulence within the Fed and the variety of opinions?
Well, of course, there were the main dissents, Vani, when it came to the opposite ends of the policy spectrum. Of course, one of them was clearly defined in that of the newer Fed Governor Stephen Myron. But we were also paying really close attention when it came to the discussion around the so-called quiet dissents, as 6 policymakers chose not to revise down their forecast for this year. So as we go through these, we're still sort of trying to piece together exactly where that policy debate is headed up, because at this point, it's not totally clear exactly the destination that they are heading to, or how quickly perhaps they are going to get to that destination.
Yeah, and in terms of decisions too, as we look ahead to what the Fed may be doing in 2026, the other thing we're thinking about, Tyler, is the decision by President Trump as to who will lead the next head of the Fed, or be the next head of the Federal Reserve. That press event yesterday, he talked about that he has a preferred candidate. He said he could still fire Jay Powell. I'm just curious if you're getting any more intel from the White House about who it might be, when we might get a decision.
Right, exactly. Well, we heard President Trump yesterday say that he still has his favorite pick, and that has not changed, and that he will announce him when the time is right, in President Trump's words, though he did go on to indicate that we can't expect a decision within the next month. But it comes as the White House is continuing the interviews. Bloomberg News has confirmed that BlackRock's Rick Rieder will meet privately with President Trump at Mar-a-Lago as we really zero in on the top 4 contenders. Our reporting indicates, of course, that includes Rieder alongside current Fed Governor Christopher Waller, also interviewed with President Trump earlier this month, and then, of course, former Fed Governor Kevin Warsh and the NEC Director Kevin Hassett. But really, President Trump has often made perhaps contradictory statements when it comes to his process and how he's going to choose the next Fed chair. But the one through line, the one consistency has been his criticism of the current Fed chair, Jerome Powell, as you mentioned yesterday, renewing his attacks on Powell, including potentially re-threatening, because we heard this earlier in the year, that there could be a lawsuit over the Fed's renovations to their headquarters, where I am here in Washington. So something to watch closely. But of course, President Trump has previously indicated that Powell's job would be safe in a bid to tamp down on the markets.
AI is impacting every industry. Macau is providing this center point.
Here we are, just one more day in 2025. How's the consumer doing after the holiday shopping?
Holiday shopping was busy. We've seen all the numbers, 3.9 to 4% essentially in terms of the growth rate. That was pretty much as expected. Even the level of promotions wasn't too egregious and was pretty much in line with expectations. You mentioned the K-shaped economy. It's there. You're seeing the higher income consumers continuing to spend, while the lower income consumers, you can call it more choiceful, more discerning. They're more cautious in their spend. For the most part, looking into 2026, I think activation and assortment are going to drive appreciation. And what I mean by that is you need newness. And we've been seeing newness in apparel. It got cold out, people started buying again. You look at whether it's denim jeans, brown suede boots, you're giving people a reason to buy. But you also need activations. And 2026, whether it's the World Cup, whether it's Winter Olympics, whether America 250, and let's not forget, consumers are going to get higher tax refunds, giving them a greater ability to spend.
I have to be full disclosure, jeans and boots were something I was looking at just recently. Having said that, when we heard from Catherine Black, who talked about over at Carney, and she said, mixed signals when you look at some of the credit card data. Is it a case that we're just spending more for things, so the higher number is just a result of spending more, or spending actual more money, if you will? Are we actually able to buy more things?
I think overall prices have gone up. We've
Yeah.
been doing a price tracker since the middle of April with tariffs of 80 different items. Generic in some instances, whether it's a Barbie doll or Levi's jeans. Footwear prices have gone up, basically given where they source. And I think you're going to continue to see prices go up into 2026.
Because we are paying more for things.
We are. And until you lap those tariffs that come in the middle of April, you're still going to see price increases.
So that's interesting. So what does this mean for companies in terms of their margins? And I hate that, we can't always drop all the retail into one bucket. But does it mean good for them that they've been able to raise their prices in terms of protecting margins?
You need sales growth in order to get leverage on these higher costs. So better than expected top line will lead to better than expected earnings. And I think there's a basket of names out there where you are seeing newness drive sales.
सिल्वर का मैंने अभी बताया था, सेम ही है, कुछ चेंज नहीं हुआ है सिल्वर में। 4 आवर में तो मैंने लेवल में कुछ खास डिफरेंस आया नहीं है। 15 मिनट में वहाँ पर लेवल है। मैंने थोड़ी देर पहले शेयर किए थे, उनको देख लो स्ट्रीम को थोड़ा सा पीछे करके, नहीं तो एक बार मैं रिपीट करके दिखा देता हूँ फिर से। फॉरेक्स चार्ट में देखोगे एमसीएक्स में तो मार्केट साइडवेज ही है, बाकी 4 आवर में जितना मैंने देखा था कुछ खास ऐसा रेजिस्टेंस बना नहीं था। 15 मिनट वाला ही रेजिस्टेंस है, अभी भी इंटेक्ट ही है, सेम ही है। ठीक है, ऊपर आपका 4 आवर टाइम फ्रेम पे देखोगे सेम 75 से लेकर 76 से लेकर 77, दैट विल बी अ रेजिस्टेंस एरिया। ठीक है, वो रेजिस्टेंस क्रिएट हो चुका है ऑलरेडी, तो एक्सपेक्टेड है 76 से 77 78 के अराउंड वापस अगर जाता है तो वहां से वापस सेलिंग एक्सपेक्ट कर सकते हो। बाकी सपोर्ट की अगर बात करें 4 आवर में, 15 मिनट में तो नीचे है सपोर्ट 68.50 से लेकर ऊपर तक। 4 आवर टाइम फ्रेम पे सपोर्ट अप्रॉक्सीमेटली फोर आवर में तो सो ही नहीं कर रहा है इसमें। कोई 54 वाला तो नहीं। 4 आवर टाइम फ्रेम में नीचे सपोर्ट वही 51 $50 के आसपास ही दिख रहा है, बीच में तो है नहीं, या शायद मैं मिस कर रहा हूँ, बट 51 से लेकर 51.70, दैट विल बी सपोर्ट एरिया, बीच में मुझे कहीं पर दिख नहीं रहा है। 15 मिनट में तो है, 4 आवर टाइम फ्रेम पे कांट सी एनी रेजिस्टेंस। बाकी 15 मिनट के लेवल है वो थोड़ा ज़्यादा बेटर रहेंगे। एक बार फिर भी देख लेता हूँ, बीच में कोई सपोर्ट होगा डेफिनेटली, ऐसा तो नहीं होना चाहिए। नहीं सो कर रहा है इसमें, 15 मिनट में स्मॉलर टाइम फ्रेम पे होंगे, हायर टाइम फ्रेम पे तो नहीं है। ठीक है, तो इसमें नीचे दिखा रहा है 4 आवर में एटलीस्ट 51 एंड ये स्विंग आपका रेजिस्टेंस 76 से 77 के बीच में। 15 मिनट में है सपोर्ट बहुत सारे, 4 आवर में दो ज़्यादा लेवल्स। बाकी मैंने 15 मिनट बताए थे, वो ज़्यादा बेटर है, वहाँ पर थोड़ा सा ज़्यादा क्लियरिटी है, उस पर जा सकते हो। 4 आवर टाइम फ्रेम में ज़्यादा बेटर है, बिकॉज सिल्वर गोल्ड का कुछ भरोसा नहीं है ना, जिस तरह से मूव हो रहे, प्राइस एक्शन उतना कुछ खास फॉलो नहीं करता। हायर टाइम फ्रेम पे रेजिस्टेंस बन रहे हैं इजीली, न्यूज आ रही है मार्केट या फिर एक्सटर्नल फैक्टर की वजह से प्राइस इन कर जा रहा है। परसों न्यूज आई थी जेपी मॉर्गन ने शॉर्ट पोजीशन बना रखी है सिल्वर में, कब की बात है ये? जिस दिन ब्रेकआउट हुआ था डेली टाइम फ्रेम पे, आई थिंक 26 दिसंबर को, तो उन्होंने अपनी शॉर्ट पोजीशन निकाल दी है वहां से। ये न्यूज़ थी एक्चुअली, यू नो, ओवरऑल जेपी मॉर्गन की शॉर्ट पोजीशन थी, और ओवरऑल दे बिकम अ लॉन्ग इन सिल्वर। सारी शॉर्ट पोजीशन में लॉस बुक करके बुलिश हो गए थे, और नेक्स्ट डे देखो वापस मार्केट सेलिंग में आ गया। आयरनी कह सकते हैं इसे। 15 मिनट में रेजिस्टेंस जरूर है, अच्छा खासा रेजिस्टेंस है प्राइस का। स्विंग के अराउंड अगर ऊपर जाता है 77 से लेकर 77.75, दैट विल आल्सो एक्ट लाइक अ रेजिस्टेंस। बाकी नीचे सपोर्ट भी है, एग्जैक्टली आया नहीं है वैसे, मल्टीपल टाइम टेस्ट हो गया मेरे अकॉर्डिंग। अगर ये ब्रेक हुआ तो फिर अच्छा खासा जाना चाहिए नीचे 66 के आसपास। कहाँ पर था? नीचे अगर $69 के नीचे प्रॉपर ब्रेकडाउन हुआ 15 मिनट में, तो फिर हम थोड़ा सा अच्छा खासा फॉल करता हुआ देख सकते हैं इसे, सिल्वर को। अभी के लिए तो सपोर्ट है इसके पास, ये स्ट्रॉन्ग ही लग रहा है, काफ़ी टाइम टेस्ट हो गया बिकॉज। $69 के नीचे अगर प्रॉपर ब्रेकडाउन हुआ देन वी कैन सी फॉल, अदरवाइज इट इज ऑन सपोर्ट 69 से लेकर 69.20 अप्रॉक्स, दैट इज अ सपोर्ट एरिया। एक और सपोर्ट था क्या इसमें? नीचे फिर अगर ब्रेक करता है, जैसे मैंने बताया 69 के नीचे ब्रेकडाउन रीटेस्ट अगर होता है 15 मिनट में, देन वी कैन सी 65 टू 66 लेवल। तब थोड़ा सा बड़ा फॉल होना चाहिए, बड़ा क्या, एटलीस्ट आप कह सकते हो 4 से 5% और गिर जाएगा। अभी के लिए सपोर्ट है, बाकी ऊपर जाता है तो मैं एक्सपेक्ट नहीं कर रहा हूँ कि इस लेवल को इस बार ब्रेक कर पाएगा। ये 77 वाला जो लेवल है, 77 से 78। बाकी आज न्यूज़ भी है, उसका भी ध्यान रख लेना। अगर जेपी मॉर्गन पैसे लॉस कर रहा है तो सोचने की बात है। वही मैं भी सोच रहा हूँ। ठीक है, ऐसा जेपी मॉर्गन ने नहीं बोला वैसे, बाय द वे, दैट इज अ न्यूज़। कहाँ से आई, कौन से सोर्सेज से आई, डोंट नो। क्योंकि सिल्वर ने जब अपना ऑल टाइम हाई के आसपास टच किया था, और जो लास्ट ऑल टाइम हाई था, जब मार्केट ने वहाँ हिट किया था, उसके बाद जब ब्रेकआउट हुआ था ना, काफ़ी बड़े प्लेयर्स शॉर्ट करके बैठ गए थे उसमें, सिल्वर में। सिर्फ जेपी मॉर्गन नहीं, और भी बहुत सारे बैंकिंग सिस्टम थे, वो सिल्वर को शॉर्ट करके बैठ गए थे। दे डोंट एक्सपेक्ट कि सिल्वर ऊपर जाएगा, अबव सस्टेन करेगा $50 के ऊपर. सो दे आर सॉर्टिंग अराउंड $50 आसपास. काफी लोगों ने सॉर्ट किया था, बट $50 के ऊपर सॉर्ट, क्योंकि वो मोमेंटम आया था ना पिछले 4-5 महीनों से, कंटिन्यूसली आया था विदाउट पुल बैक. तो एक्सपेक्ट था कि पुल बैक गिरेगा तो अच्छा खासा प्रीमियम डीके होगा वहां पर. बट चाइना ने वहां पर कह सकते हो गेम कर दिया. दे उन्होंने फिजिकल गोल्ड किया, क्योंकि जो हम ट्रेड करते हैं वो तो पेपर गोल्ड है ना, सॉरी पेपर सिल्वर है. बट पेपर सिल्वर भी कोई फिएट करेंसी की तरह ही ट्रेड कर रहा है. दैट इज नॉट एक्चुअल सिल्वर. एक्चुअल सिल्वर तो फिजिकल सिल्वर ही है. तो अगर आप फिजिकल सिल्वर की जो डिमांड है अगर वो उतनी ही रहे या बढ़ जाए, जो कि हम देख रहे हैं, और सिल्वर की अगर सप्लाई रोक दे, स्पेशली चाइना, क्योंकि वहां पर सिल्वर सबसे ज़्यादा नंबर 2 पे, नंबर 1 पे मैक्सिको है, नंबर 2 पे सबसे ज़्यादा सिल्वर एक्सपोर्ट चाइना ही करता है. अगर वो रोक दे या फिर वहाँ के लोग, वहाँ की गवर्नमेंट सिल्वर, फिजिकल सिल्वर बाई करने लगे, तो डिमांड फिजिकल सिल्वर की बढ़ गई. उस वजह से पेपर सिल्वर भी ऊपर चला गया. अब ये नहीं पता कि एक्चुअली में इन लोगों ने पोजीशन अपनी राउंड ऑफ करी भी है या फिर नहीं करी, या फिर खाली न्यूज़ निकाल दी रिटेलर्स को ट्रैप करने के लिए कि चलो अब तो जेपी मॉर्गन वाले भी निकल गए, हम भी लॉन्ग करते हैं यहाँ से ओवरऑल. और अगले दिन मार्केट 10% का अपर सर्किट. पहले चाइनीज मार्केट में सैटरडे के दिन वहाँ फिजिकल गोल्ड 10% की और प्रीमियम पे चला गया था सैटरडे को, क्योंकि हमारा मार्केट तो बंद रहता है, ग्लोबल मार्केट. एंड देन जब मार्केट मंडे को ओपन हुआ, सीधा गैप डाउन, देन कंटिन्यू सेल ऑफ. कल वैसे रिकवर कर गया था थोड़ा बहुत, बट अगेन ऊपर से वापस सेलिंग आ गई थी. बेरिस तो नहीं हुआ, मुझे नहीं लग रहा कि सिल्वर बेरिस हो गया. 15% करेक्शन है, दैट इज नॉर्मल. 10% करेक्शन तो नॉर्मल करेक्शन ही होता है. हाँ, 20% से ज़्यादा गिर जाए तो थोड़ी बात अलग हो जाएगी. 20% से ज़्यादा नहीं गिरना चाहिए. दैट विल बी ट्रिगर सेल ऑफ मोर. और 30% के आसपास से ज़्यादा गिर गया तो फिर और ज़्यादा हो जाएगा, क्योंकि 20%, 10% इज नॉर्मल प्रॉफिट बुकिंग. 20% इज काइंड ऑफ अ पुल बैक. तो 15% के आसपास चल रहा है. 10% तो परसों ही आ गया था सेलिंग में. अगर सिर्फ पुल बैक होता तो फिर 75.76 $75 से रिकवर कर जाना चाहिए था, जो कि नहीं किया. इट मीन सिर्फ प्रॉफिट बुकिंग नहीं थी, एक प्रॉपर पुल बैक आने वाला है. दैट इज एक्सपेक्टेड अराउंड 20%. तो दैट इज नॉर्मल. तो वही मैं आपको बता रहा था, $69 के नीचे अगर कहीं जाता है तब थोड़ी सी प्रॉब्लम होनी चाहिए मुझे लग रहा है, क्योंकि वहां पर इंट्राडे में भी देखोगे सपोर्ट ही है $69 के अराउंड. तो वो बनता है लगभग 17-18%. बोलने से जेपी मॉर्गन की जज है, यहाँ वो भी है. तभी मैं कह रहा हूँ ना कि वी डोंट नो रियल है या फिर फेक है. क्या पता सिर्फ रिटेलर्स को ट्रैप करने के लिए बोला हो. बाकी ऐसा नहीं है कि डिमांड नहीं है, डिमांड काफ़ी हाई है सिल्वर की वैसे भी. ठीक है, तो उस वजह से सिल्वर के प्राइस को अल्टीमेटली जाना तो है ही. लॉन्ग टर्म में तो बुलिश ही लगता है सिल्वर. इवन आप कह सकते हो सिल्वर इज अ न्यू गोल्ड. बट इसका मतलब ये नहीं कि तुम बिल्कुल ही प्राइस एक्शन को फॉलो ना करो. थोड़ा टेक्निकल भी फॉलो होना जरूरी है. जो वो $50, 48 to $50 का ब्रेकआउट हुआ था, उसका रिटेस्ट भी नहीं हुआ है अभी तक. ब्रेकआउट हो चुका है बट इतना कंफर्म है. मार्केट गिव्स द ब्रेकआउट ऑफ $48 to $50. कंफर्म्ड ब्रेकआउट है बिल्कुल, बट नॉट रीटेस्टेड. तो अगर नीचे आती है अपॉर्चुनिटी तो बहुत अच्छी है. $48 to $50, $48 आप राउंड नंबर कह लो. ब्रेकआउट भी ऐसा हुआ है बिल्कुल एक सिंगल कैंडल पे अक्टूबर मंथ में ही. तो अगर नीचे आ भी जाता है $48, 50% पुल बैक. रीटेस्ट करके जाए तो फिर मजा आएगा। लो सबको बेच के बोलेगा कॉपर इज न्यू गोल्ड। देखो जो जियोपॉलिटिकल डायनेमिक्स चेंज हो रही है, उस पर आप कह सकते हो जो फिएट करेंसी है उनकी वैल्यू तो आने वाले टाइम में मुझे लगता नहीं उतनी रहेंगी। कोई भी करेंसी हो, सिर्फ यूएस डॉलर की बात नहीं है, वो इंडियन रुपीस हो, चाइनीज युआन हो, या फिर कोई भी फिएट करेंसी है, पेपर करेंसी से हम कहते हैं, आने वाले टाइम में उनकी मुझे मुझे ऐसा लगता है उनकी वैल्यू शायद कम ही होगी। और आज नहीं तो कल यूएस गवर्नमेंट पे जितना डेट है, आई थिंक कितना 38 था, कितना था 35 to 38 ट्रिलियन डॉलर का तो डेट ही है उनके ऊपर। और मुझे नहीं लग रहा वो दे पाएगी कभी भी। तो उसके लिए वो मोस्टली, क्योंकि 1971 में उनके जो प्रेसिडेंट थे उस समय जो डॉलर था वो बैक था गोल्ड से, जो उनके पास रिजर्व में रहता था। उस 1971 में उनके जो प्रेसिडेंट है उन्होंने गोल्ड से उसको जो लिंक गोल्ड डॉलर लिंक था गोल्ड से, उसको हटा दिया था कि अब गोल्ड से हम लिंक नहीं कर रहे हैं, डॉलर इंडिपेंडेंट है। तो उस समय वो पैसे छापे गए उसके बाद 1971 से। 71 था 76, आई डोंट नो द डेट। तब से अभी तक इन्होंने इतने डॉलर छाप दिए हैं कि एक टाइम पे आके उसकी वैल्यू भी खत्म हो जाएगी, तो फिर जो एक्चुअल मनी है वही मनी कहलाएगी। एंड एक्चुअल मनी इज जिसकी वैल्यू किसी के साथ बैक ना हो, and which is not controlled by any one country, that is gold, silver, mostly those two. बाकी सिल्वर तो मुझे नहीं लग रहा एज अ करेंसी बढ़ रहा है, बट बिकॉज ऑफ द डिमांड एंड सप्लाई बहुत ही इम्बैलेंस है उस वजह से। प्रॉब्लम ये होती है ना कि जो फिएट करेंसी होती है, कोई स्टॉक है, कोई इंडाइसिस है, इंडेक्स को फिर भी हम छोड़ सकते हैं। कोई स्टॉक है, फिएट करेंसीज है, वो जितना इंक्रीज हो सकती है उतना डिक्रीज भी हो सकती है, दोनों सिनेरियो रहते हैं। बट गोल्ड और सिल्वर में ऐसा बहुत रेयर होता है कि एक बार मान लो गोल्ड एक फॉर एग्जांपल $1 से $100 चला गया, तो $100 से वापस $1 तो नहीं होगा वो। हो सकता है वो $70 आ जाए, $50 आ जाए, $40 भी आ जाए, $1 नहीं होगा फिर कभी। और जब वो वापस $100 को ब्रेक करके मान लो $200 चला गया, देन अगेन जो लास्ट स्विंग पॉइंट था वहां तक प्राइस फिर हिस्ट्री में आज तक तो नहीं आया है। तो जो मेटल्स होते हैं या प्रीसियस मेटल्स होते हैं वो अपनी वैल्यू नहीं खोते हैं ओवर द टाइम। तो सिल्वर आने वाले टाइम में बिल्कुल फिर से $18-20 हो जाएगा, चांसेस तो कम ही होते हैं। ओवर द टाइम, ओवर द डिकेड, ओवर द सेंचुरी प्राइस इंक्रीज ही होगा, स्पेशली अगर दुनिया में कुछ अनसर्टेनिटी और बढ़ जाती है। पर कल के दिन अगर चाइना अटैक कर देता है ताइवान को, फिर देखो गोल्ड के प्राइस ऊपर जाएंगे, सिल्वर के प्राइस ऊपर जाएंगे, कंफर्म है। गोल्ड सिल्वर ऊपर जाना है, क्रूड ऑयल ऊपर जाना है, ये तीन कमोडिटी तो ऊपर जाएंगी जाएंगी। कॉपर भी हो सकता है ऊपर ही जाए, स्टॉक डाउन आ जाएंगे। ऐसा लग रहा है बुलिश ही होने वाला है कंप्लीटली अब। क्या ही नहीं है अभी तक वहाँ पे। अभी ना प्राइस क्रूड ऑयल का ऊपर गया नहीं है एग्जैक्टली, थोड़ा सा पुल बैक दे तो इसमें अगर फिर से लेना चाह रहे हैं स्कैल्पिंग टाइप में तो एक रिपोर्ट भी ठीक नहीं है ना, फिर से रेंज बना दी है। अब ये लोअर रेंज में चल रहा था प्राइस, नीचे आया नहीं, अभी ऊपर रेंज में फंस गया लग रहा है यहाँ पर। नेचुरल गैस ऑलमोस्ट ब्रेकडाउन पर ही खड़ा है, लास्ट कैंडल क्लोज नहीं हुई है, देखते हैं कैंडल क्लोजिंग देती है नहीं देती है। ये तो 30 मिनट का है क्या? बाकी ये प्राइस यहाँ पर ऑलमोस्ट फोर्थ टाइम है, पहली बार में एक हाई बनाया है, दूसरे बार में लोअर हाई, थर्ड टाइम 29 दिसंबर को एक लोअर हाई, दिस इज द फोर्थ टाइम। ज़्यादा ऊपर भी एक्सपेक्टेड ही नहीं जाना चाहिए बिकॉज ऊपर भी रेजिस्टेंस ही है, मेजर रेजिस्टेंस है नाउ 355, 350 टू 355 और जाएगा पहले एक एक्सटेंडेड रेजिस्टेंस जोन से सेलिंग करेगा, लग रहा है ब्रेकडाउन ही पहले हो जाएगा। ओके ये नेचुरल गैस लुक्स लाइक मुझे लग नहीं रहा शायद ये भी होल्ड करेगा इस लेवल पे। एसएल जाएगा तो होल्ड मत करना, नेक्स्ट सपोर्ट फिर सीधा नीचे 330 332 के अराउंड है, मोस्टली वहीं पर रुकेगा अगर ये ब्रेक डाउन होता है। ये फोर्थ टाइम आया था आज इस लेवल पे, 3 बार, एक बार यहाँ पर एक हाई बना था, दूसरे बार लोअर हाई, तीसरे बार एक और लोअर हाई, दिस फोर्थ टाइम यहाँ पर एक और लोअर हाई बन गया। लुक्स लाइक ऐसा लग रहा था कि पहले ऊपर रिटेस्ट करके गिरता है, बट ये पहले सपोर्ट ही ब्रेक कर रहे हैं शायद, तो लेस चांसेस कि अभी होल्ड करेगा वहाँ पर। निकल जाना, एसएल जाएगा, होल्ड नहीं करना है। नेक्स्ट सपोर्ट बिकॉज बहुत दूर है, वहाँ तक होल्ड करेंगे। एसएल ऑलमोस्ट 11 पॉइंट और इंक्रीज हो जाएगा, 3 पॉइंट का एसएल है छोटा सा। ये भी साइड में चला गया क्रूड। क्रूड भी देखो ना साइड में चला गया, बिल्कुल ही कुछ मोमेंटम ही नहीं हो रहा है इसमें भी। इस कैंडल का वेट करते हैं, अभी भी ऊपर नहीं आया है लेवल पे। अगर ये नहीं आया यहीं पर कंसोलिडेशन किया तो फिर थोड़ा सा और ऊपर जाने की पॉसिबिलिटी बन रही है क्रूड की। इवन तो ऊपर अभी भी वो रेजिस्टेंस है, इंटैक्ट ही है, बट फिर हो सकता है थोड़ा सा जैसे परसों हाई लेवल तक गया था फिर मूव किया था डाउन साइड, उस तरह से कुछ मूव करे। ये नेचुरल गैस में कॉस्ट टू कॉस्ट भी निकल जाओ यार, ये देखो हो सकता है ऐसे चला जाए पुल बैक, बट थोड़ा सा मुझे ना बहुत रिस्की लग रहा है। बेटर है कि अभी नीचे वाले लेवल पर ही आ जाए 331 के अराउंड, वहाँ बाई करेंगे। तो इस पर निकल जाना कॉस्ट टू कॉस्ट पे, आ ही गया ऑलमोस्ट, इतना रिस्क भी मत ही लो, इसमें एग्जिट कर लो बेस्ट है। अभी थोड़ा सा लोअर एंड पे आएगा अगर 329 के आसपास, 330 के आसपास, तब फिर से वापस बाई कर लेंगे इस एरिया पे। इसमें निकल जाना नेचुरल गैस में कॉस्ट टू कॉस्ट के अराउंड मिल रहा है अगर, नहीं दैट इज़ फाइन। कल भी क्रूड ऑयल रेजिस्टेंस पे एग्जैक्टली हिट नहीं किया था, मॉर्निंग पे इसने सपोर्ट भी एग्जैक्टली हिट नहीं किया, मतलब ये घूम रहा है सपोर्ट और रेजिस्टेंस के बीच में स्टिल। 112 पॉइंट की रेंज है। क्रूड ऑयल में इस कैंडल का वेट करते हैं, अगर ये नहीं जाता इस रेंज के बाहर, इस पर्टिकुलर कैंडल पे 5260 के ऊपर क्लोजिंग बेसिस पे, तो फिर थोड़ा सा अवॉइड करेंगे अब इस पर्टिकुलर लेवल पे 630 की कैंडल का वेट, या फिर प्राइस को थोड़ा सा और ऊपर जाने देना 5290 5300 के अराउंड। नहीं कर रहा हिट, वॉल्यूम नहीं है। तो क्रूड ऑयल में हो गई, कैंडल क्लोज नहीं गया, अभी भी वो रेंज के अंदर फंस गया लग रहा है मुझे। देखो कि क्रूड ऑयल को नहीं आया लेवल, फिर से ऊपर है लेवल, अभी भी नहीं पहुंचा है वहां तक। थोड़ा सा हमें ऊपर रखना पड़ेगा पोजीशन बना के, अगर आएगा तो लेंगे, नहीं आएगा तो फिर लेट इट गो। मॉर्निंग पे सपोर्ट भी नहीं आया ना, अभी रेजिस्टेंस पे आ रहा है। क्रूड ऑयल नहीं आया अभी भी लेवल पे, जिस तरह से कंसोलिडेशन कर रहा है ना, अगर ऐसा लग रहा है कि अगर ऊपर गया कंसोलिडेशन के बाद तो फिर रेजिस्टेंस से ज़्यादा नीचे शायद ना आए, या फिर सपोर्ट बना दे। अभी तक तो बनाया नहीं है, बट कंसोलिडेशन क्या नेक लगेगा सपोर्ट। तो थोड़ा सा ध्यान रखना क्रूड ऑयल में कि क्रूड ऑयल का भी जो ऊपर रेजिस्टेंस है, पहली बार का रेजिस्टेंस नहीं है। 3 से 4 बार टेस्ट हो गया वैसे तो, और भी लेवल है बट वो काफ़ी लेवल से नीचे है, तो उनको मैं काउंट नहीं कर रहा हूँ। लेवल से देखोगे तो 1 2 3, 3 से 4 बार टेस्ट ऑलरेडी हो गया है, तो ये चौथी या पांचवी, फोर्थ या फिफ्थ टाइम है लेवल को इस बार हिट करेगा अगर आता है क्रूड ऊपर। नेचुरल गैस में निकल जाना, कॉस्ट टू कॉस्ट पे पहुंच रहा है तो यहाँ पर मत लेना है। अगर ये ऊपर जाता भी है तो इंटरेस्टेड नहीं है इस लेवल पे, नेचुरल गैस का ध्यान रखियो। बिल्कुल हिंज पर है ब्रेक डाउन करने के, हो सकता है आ जाए वापस ऊपर, बट कॉस्ट टू कॉस्ट पे आए मेरे अकॉर्डिंग निकल जाओ इसमें। गैस में मेरे अकॉर्डिंग तो निकल जाना, फिर रिपीट कर रहा हूँ, कॉस्ट टू कॉस्ट पे मिल रहा है तो निकलने के लिए। नीचे आएगा थोड़ा सा और नीचे सेल करेंगे, बाई करेंगे। यहाँ पर अभी और कोई नया ट्रेड नहीं है मेरे अकॉर्डिंग, इसमें से निकल जाओ, कॉस्ट टू कॉस्ट पे मिल रहा है अगर। नहीं तो फिर 3 पॉइंट का एसएल से बड़ा एसएल मत रखना। मेरे अकॉर्डिंग तो ये जाना चाहिए लॉजिकली अब नीचे ही 330 329 के अराउंड, तो निकाल दो इसको कॉस्ट टू कॉस्ट में मिल रहा है तो, या फिर 1-2 पॉइंट के लॉस में मिल रहा है, नहीं तो 3 पॉइंट से बड़ा एसएल मत लेना। अगेन हो सकता है ऊपर चला जाए बट नॉट इंटरेस्टेड ऑन दिस लेवल, सेलिंग भी नहीं बन रही है वहां पर अब। करेगा तो देखेंगे रीटेस्ट पे एक सेलिंग यहीं से प्लान करेंगे अगर करता है। 30 मिनट में तो नहीं है ना। ये कैंडल अगर क्लोज करती है नीचे 340 के नीचे, या फिर मान लो नेक्स्ट कैंडल क्लोज करती है 340 के नीचे, तो फिर यहाँ पर एक यहीं से एक सेलिंग का प्लान कर लेंगे, नहीं तो यहाँ भी नहीं। पुट ले सकते हैं, लेवल पे ही नहीं आया सर वो भी क्रूड में। यहाँ पर एक बाइंग भी थी ऊपर मॉर्निंग पे, ना सपोर्ट पे आया एग्जैक्टली, ना भी रेजिस्टेंस में आ रहा है, तो थोड़ा सा दूर है लेवल से अभी मेरे अकॉर्डिंग। अभी वेट कर लो, अगर आता है तभी लेना, अदरवाइज खाली में एसएल बड़ा हो जाएगा अगर जाता है ना फिर। बाकी नेचुरल गैस में एक ट्रेड लगा था, काफ़ी देर तक होल्ड जरूर किया है इसने सपोर्ट एरिया पे, बट अभी ऐसा लग रहा है कि ब्रेकडाउन शायद कर दे। तो इसमें हो अगर तो मेरे अकॉर्डिंग तो निकल जाओ कॉस्ट टू कॉस्ट, अगर नहीं निकलना चाह रहे हो तो हो सकता है, मैं अगेन रिपीट कर रहा हूँ, यहाँ से ही चला जाए वापस पुल बैक में, बट अभी बहुत रिस्की ट्रेड हो गया है होल्ड करने के लिए। तो कॉस्ट टू कॉस्ट पे है तो निकाल दो, होल्ड कर रहे हो 3 पॉइंट से बड़ा ऐसा मत लेना, बट इट इज़ नाउ टू रिस्की टू होल्ड दिस ट्रेड। में एसएल एक्सटेंड करना पड़ेगा, दैट इज़ नॉट वर्थ इट, कि एसएल यहाँ से और एक्सटेंड करें, इतना बड़ा एसएल यहीं पर ले लें, उतना वो टारगेट भी नहीं है। तो इसमें निकलना चाह रहे हो तो निकल जाओ कॉस्ट टू कॉस्ट, मैं फिर रिपीट कर रहा हूँ, डोंट होल्ड दिस क्रूड ऑयल नेचुरल गैस बाइंग ट्रेड। बाकी अगेन आई एम सेइंग दैट हो सकता है चला जाए, एक बार डीप लेवल पे आया है, बट नॉट इंटरेस्टेड नाउ। ऊपर एक लेवल जरूर पेंडिंग है, यहाँ पर ये सेलिंग के लिए जाना चाहिए था वहां तक। तो इसमें कैंडल भी नेचुरल गैस में नहीं आई, इसमें रिटेस्ट नहीं हुआ है, अभी सेल मत कर देना मेरे अकॉर्डिंग नेचुरल गैस को, इसमें रिटेस्ट नहीं हुआ है। अगर ये कैंडल क्लोज करती नीचे 340 के नीचे तो कहीं रिटेस्ट करते नहीं हुई है क्लोज, ध्यान रखना, तो कोई सेल मत कर देना नेचुरल गैस को, सेलिंग नहीं आई है उसमें अभी, इवन तो अभी भी सपोर्ट ब्रेक नहीं हुआ है, बट बाइंग तो रिस्की हो चुकी है, बट सेल मत कर देना, सेलिंग में नहीं गया है अभी, अभी भी कोई रिटेस्ट नहीं हुआ है इसमें कि सेल कर दें, ब्रेकडाउन हो गया सेल कर दें, प्राइजेस होल्डिंग द सपोर्ट लेवल, फोर्थ टाइम है इस लेवल पे, इसलिए रिस्की है नाउ। चाहो तो कॉस्ट टू कॉस्ट पे निकल जाओ, होल्ड कर रहे हो तो 3 पॉइंट से बड़ा एसएल मेरे अकॉर्डिंग तो नहीं लेना। बाकी वॉल्यूम थोड़ा सा आने लग गया, लेट्स सी 6:30 भी हो गया, न्यूयॉर्क सेशन इज ओपन नाउ। कल बाय द वे इंडियन मार्केट ओपन है, बट यूएस मार्केट क्लोज रहेगा, बैंक हॉलिडे है वहाँ पे, सो सारे यूएस मार्केट क्लोज रहे। फॉरेक्स मार्केट भी शायद कल क्लोज ही रहता है, यस क्लोज ही रहता है, बैंक्स हॉलिडे है तो यूएस मार्केट के अलावा फॉरेक्स मार्केट भी क्लोज ही रहेगा। क्रूड का ये लेवल भी मल्टीपल टाइम टेस्ट हो गया, अब ये लेवल एक या दो बार ही टेस्ट हुआ है, एंड दैट इज ओनली वन टाइम टिल नाउ। 6:30 की कैंडल है, थोड़ी वॉलेटाइल हो सकती है, ध्यान रखियो। न्यूयॉर्क सेशन ओपन हो गया यूएस में। एक डेटा भी है आज 7 PM पे। उसके अलावा क्रूड ऑयल की इन्वेंट्री और फिर नेचुरल गैस इन्वेंट्री इस वीक की, लास्ट वीक की तो आ गई है, इस वीक की भी इन्वेंट्री आने वाली है आज ही। So guys, don't forget to like the stream.
This new year, swap someday with today. You've already to get the lowest priced website builder, guaranteed.
News when you want it with Bloomberg News Now. I'm Karen Moscow. Well, it's already 2026 in some parts of the world. New Zealand's Auckland was the first major city to ring in 2026 with fireworks from Sky Tower. In New York City, officials are getting ready to welcome people to Times Square to watch the ball drop to ring in the new year. Officials want to make sure the event is safe and celebratory. Here's Police Commissioner Jessica Tisch.
We will have mobile screening teams walking around the pens, and if we see anything that looks suspicious, we will have teams in place to do appropriate screening.
And over 1 million people are expected to watch the ball drop to welcome 2026. Affordable Care Act credits that help Americans afford Obamacare plans are set to expire today. Democrats want to extend the aid for 3 more years, arguing it will prevent premiums from doubling for millions. Some moderate Republicans have joined them, forcing a floor vote next month. Begin more with Bloomberg opinion columnist Gautam Mukunda.
The policy incentives, which are to fix the problem, and the political incentives, which are for Democrats to say, hey guys, congratulations, like, you own this. Those run in completely opposite directions, and the closer we get to the midterms, the more the political incentives are going to swamp the policy ones.
And that's Bloomberg opinion columnist Gautam Mukunda. GOP leaders oppose the move, calling the $350 billion cost unsustainable. Without an extension, nearly 4 million people could lose coverage over the next decade. In Asia, President Xi Jinping said China is set to meet its economic targets for 2025, with growth expected to reach about 5%. Addressing the country's top political advisory body on New Year's Eve, Xi said the economy has demonstrated resilience despite challenges. Russia and Ukraine have struck each other's Black Sea ports overnight, damaging infrastructure, including an oil refinery. Moscow and Kyiv have repeatedly targeted each other's Black Sea ports in recent months, compounding challenges for shippers of various commodities from grains to oil. Trains running again in both directions through the Channel Tunnel between continental Europe and the United Kingdom, but problems remain after a day of travel chaos caused by power malfunctions. Eurostar, which runs passenger trains through the tunnel, warned of continued possible delays and cancellations because of knock-on impacts from the severe disruptions yesterday. Let's turn to the markets now in futures. They're lower to close out the year. Despite that, stocks are on track for a third straight year of double-digit gains. Amanda Agati is Chief Investment Officer at PNC.
I think 2026 could actually be another positive year, maybe not quite as positive as what we've seen in terms of the results for 2025, but between here and the end of next year, I think it's going to feel very similar. I think there's going to be a lot of purple haze of policy uncertainty. It was the number one driver. It feels insane to say that now, looking back on it, but at the beginning of 25, we felt strongly that policy was going to be the most important driver. I think it's going to be the same story for 26.
And that's PNC's Amanda Agati. The S&P 500 is up more than 17%, while the Nasdaq is higher by more than 21% this year. Silver, which has soared this year to the tune of more than 145%, is lower this morning. Right now, silver is down more than 6%. Bloomberg Markets reporter Valerie Teitel says despite the pullback, 2026 may be another good one for silver.
Looking ahead into next year, I expect metals to stay at these higher levels at the moment. Silver, palladium, copper, platinum, all these metals are used in these AI data centers. And with the market expecting that AI adoption could stay strong into next year, data center demand is going to stay strong with it, and as is demand for these metals.
And that's Bloomberg's Valerie Teitel, who says gold, which is also down this morning, is up more than 50% on the year. In company news, we have more headlines of the potential purchase of Warner Brothers. Bloomberg News has learned Warner Brothers Discovery is planning to reject a takeover bid from Paramount after the company amended the terms of its offer. Paramount went public with its $30 a share cash bid earlier this month, 3 days after Warner had accepted a deal with Netflix. Lucas Shaw following the story for Bloomberg.
What does Paramount look like at the end of it. It is still a company sitting on a bunch of kind of troubled cable networks and a studio and some streaming services that are kind of in the third tier. Netflix, you know what you're getting. You're getting the most valuable company in the entertainment business, one that's been run very well, and so I think they feel good about that deal.
Bloomberg's Lucas Shaw says Warner Brothers is waiting for Paramount to increase the financial terms of its offer. The world's 500 richest people added a record $2.2 trillion to their collective fortunes this year as booming markets in everything from equities to cryptocurrencies to precious metals sent the value of their holdings soaring. This is according to the Bloomberg Billionaires Index. The gains brought their combined net worth to $11.9 trillion. Environmental journalist Tatiana Schlossberg, one of the 3 grandchildren of the late President John F. Kennedy, has died. This is after she was diagnosed with leukemia last year. She was 35 years old. And taking a look at the markets now, stocks are ending a third year of double-digit gains in subdued fashion as an expected seasonal rally fails to gain traction. S&P futures down 0.1%, Dow futures down 0.1%, NASDAQ futures down 0.2%, and the 10-year Treasury yield at 4.10%. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
New Year's resolution. Own how you show up online. It's easy with a domain and matching email from GoDaddy. Now just 99 cents per month for new customers their first year. Ring in 2026 with a domain and matching email at godaddy.com/New Year. That's godaddy.com/.
And yet, the 10-year yield itself is actually up about 50 basis points. So if you bring it out, obviously you can cherry pick depending on whatever dates you pick. But if you bring it out to the beginning of the Fed cutting cycle, it hasn't helped much in terms of yield.
Which really raises a question next year about what's going to matter most, the Fed or the 10-year. Meanwhile, a big question around the debasement trade, and you have seen that silver and gold issue kind of percolate after going parabolic. You suddenly saw this real removal from that froth, down about 5% on intraday trading of silver. There is a question about the debasement, and yet the dollar has pretty much traded sideways since Liberation Day. Coming up this week, what we have is not a stock plate. What we are looking at is jobless claims on Wednesday. Before that, we get Fed meeting minutes, get some housing data, but otherwise pretty light on that. Also focus very much in Washington, D.C., and we will be getting more on Ukraine and Russia and a possible peace there. Coming up this hour, Cameron Dawson of New Edge Wealth with stocks near record highs. Bloomberg's Skylar Montgomery Koenig with the dollar on course for its weakest year since 2017. Plus, our conversation with JetBlue CEO Joanna Garrity on the airline's outlook for 2026 and beyond. We begin this hour with stocks stalling out after approaching new record highs. Cameron Dawson of New Edge Wealth writing, the biggest question for 2026 is whether or not everything else can strike back and deliver the earnings growth that is necessary to unseat the narrow Mag 7 leadership next year. Cameron, I am so pleased to say, joins us now. Cameron, thank you so much for being with us and happy holidays. Great to see you. This broadening out trade and the real question behind it, when will we get the data and the information to understand whether it really is valid?
It really is a show me story in 2026 as to whether or not the equal weight S&P 500 can deliver on what are some pretty high expectations for earnings growth next year. If you look over the last 3 years, you've been in an environment where the largest parts of the market have driven the vast majority of the earnings growth, which is why you've had the vast majority of returns come from these Mag 7 names. But that's expected to narrow, not quite flip, but narrow in 2026. So you can see it in something like the equal weight S&P 500 having expectations for revenue growth to accelerate from 1.5% in 25 up to 5% in 2026. So a lot is riding on this idea of EPS delivering. And of course, that will be a show me story as we move through the year to see if there is upside to those numbers or if yet again we'll be in an environment where Mag 7 gets revised higher and equal weight gets revised lower.
So you add to this story something that happened last week. There actually was a big piece of news last week. NVIDIA had this agreement with Grok, which is a chip designer, some $20 billion valuation of this company, doubling it over the past couple of months, and raising questions about the dominance of NVIDIA, but also whether there is a shift in narrative around the AI story to one that is more efficient, more useful, and cheaper for some of the end users.
I think no better way encapsulates this idea of potentially a narrative shift is looking at some of the non-profitable AI-related names. They, of course, were leaders coming out of the April lows and saw an absolute frenzy as we moved into the fall with September and October rallies that were truly eye-watering. But what's been fascinating is that they have not participated in this latest move higher. If you look at something like the Goldman Sachs Non-Profitable Tech Index or look at something like ARC, those indices have not made new highs, which just suggests that maybe, just maybe, there's some rationality entering into this market, which we would welcome and see as a good thing, because that kind of rally in unsustainable, unprofitable names is not something that we would see as healthy for the market.
What do you expect from M&A in, I mean, not just the Mag 7, but in AI? I was pretty stunned after seeing that Grok deal when I looked on the FA function on the Bloomberg terminal to see free cash flow at NVIDIA is just gone parabolic, right? Last year it was 27 billion. This year it's 60 billion. Next year it's expected to be 95 billion. I mean, they are just raking in cash and are able to deploy 20, 30, 40 billion dollars without even thinking about it.
Yeah, I think it's a really good question, and it raises the question of where we sit in the semiconductor cycle, because we do know that at the end of the day, semiconductors are a cyclical business. And if you go back to prior cycles, you typically do see earnings grow by 100, 120% plus in up cycles. Then, of course, you do hit an inevitable down cycle. And we're now in an environment, if you look at the overall SOX index, that earnings are up about 150% off of the late 2022 lows, which just suggests that possibly we are closer to the end of this semi-cycle than we are to the beginning. But I think it's also very arguable that this semi-cycle will go further and last longer than prior ones, simply because of the secular tailwinds of something like AI. But it's important to remember that it's always this time is different with cyclical areas. If you remember last time, it was the Internet of Things and we were putting chips in everything. And that's why we weren't going to have semi-cycles anymore. I think the real question will be is how much further can this go? And is that free cash flow that NVIDIA is generating today something that we can extrapolate into perpetuity? Possibly not.
What happened, Cameron, to the terror of Liberation Day? I mean, the economic uncertainty that we were all wringing our hands about, right? These tariffs that admittedly have been muted a bit by the drop in the dollar, almost 10% year to date. Is any of that a concern next year, or have we realized that it's actually no big deal?
I think that if we were to see the tariffs as a concern, it's really captured in this conflicting kind of headline. We got a headline over the weekend saying that bankruptcies are at their highest levels since 2010. And then you pull up corporate profits in overall in the U.S. and they're at new highs. And so this suggests that tariffs are hitting things like smaller businesses harder. They're also hitting smaller consumers harder who have a higher propensity to spend of their overall incomes. So when you put that together, it really encapsulates this idea that tariffs exacerbate the K-shaped economy. They hurt lower income consumers. They hurt smaller businesses much more than they hurt larger businesses and higher income consumers.
I just wonder, Cameron, how long you can see this rally continue unless you get participation that does broaden out. This idea that you can see an economy that's growing at the fastest pace in 2 years on headline GDP. Yes, it's noisy, but a lot of it's data centers. It's not actually the mom and pop stores that are declaring bankruptcy.
The one thing that does give us a little bit of solace in thinking about this broadening out is contrasting where we are today in breadth measures versus where we were last year. Last year at this time, you only had about 20% of names trading above their 50-day moving average. It was an incredibly narrow market, which we thought made it more fragile. If you look today, that stat is at 64%. So it doesn't necessarily mean that we are immune to everything, but it is encouraging that we are seeing broader participation in the rally, that it's not resting on just a small handful of names. So using the banks as example, if the economy was really falling off a cliff, we don't think that we would be seeing bank earnings revised higher nearly as much as they are and banks hitting new all-time highs. Some of that rally might be a little bit extended. But I think it's important to note that there are still some signs that cyclicality is being well bid in the equity market, which just give us a little bit more comfort that things aren't as extended or maybe broadening out in a better way. Cameron
Dawson, with sun pouring in from a lovely place wherever you are, we will be sticking with you. You will be sticking with us of New Edge Wealth. Matt, you talked about the Grok deal with NVIDIA, and I found this just fascinating. What we saw last week on Wednesday night. It was almost like trying to be buried, right? That NVIDIA would enter into a non-exclusive licensing deal and hire most of Grok's employees. Grok is a language processing type of outfit, and this idea that they are trying to get more competitive with the likes of Google and their chips in a way that could avoid some sort of antitrust claw. It just highlights how dominant they are with the cash that you were talking about.
Yeah, I think it was a really fascinating deal. The timing was an interesting part of it because it's largely gone unnoticed, right? And yet it was a huge $20 billion deal. The thing is, they just have so much free cash flow. In fiscal 27, they're looking at estimates are for $150 billion. So you see a lot of these big AI companies, including OpenAI, doing deals quickly, reportedly without many lawyers or bankers, and spending a ton of money because they want to take advantage of the valuations and the cash they're getting right now.
And they can get the dominance of the field, given the fact that they have that endless cash, and they're doing it to try to solidify some of the potential competitive threats. We'll kind of parse through this throughout the show, because I do think just because they bury it doesn't mean that we have to bury it. Right now, let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Good morning, Lisa. President Donald Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal, but said it might take a few weeks to get it done. Ukraine's President Volodymyr Zelensky says the peace framework is 90% agreed and that U.S.-Ukraine security guarantees are 100% agreed, but major sticking points remain, including the future of Ukraine's Donbass region. Meanwhile, Israeli Prime Minister Benjamin Netanyahu meeting with U.S. President Donald Trump at Mar-a-Lago today to discuss issues in the Middle East, including Gaza and Iran. The meeting comes as tensions between the two leaders have increased, with Trump having previously warned Israel against taking actions that could undermine his peace efforts, and Netanyahu facing political pressure at home to take a tough stance on Gaza and Hamas. And China kicking off maneuvers around Taiwan, including live fire drills near the Taiwan Strait. The move comes after the U.S. announced a major weapons package for the self-run democracy. Taiwan's presidential office called the drills a serious threat to peace and stability. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahira. Up next, closer than ever for Ukraine.
I really believe we're probably, Mr. President, by far closer than ever before with both parties.
20-point peace plan, 90% agreed, and U.S.-Ukraine security guarantees 100% agreed. Prosperity plan being finalized.
We've got more on that just coming up next. Bloomberg's Tyler Kendall joins with some of the details from New York. This is Bloomberg Surveillance. Welcome back. What we are seeing this morning is stocks trying to get back to that fervor. That Santa Claus rally that Matt was just explaining does consist of now. This is the race into year end. It is not continuing with some of the fervor that usually happens at this time of year, down about 0.25% for S&P futures. But interestingly, Russell 2000 futures unchanged. And this, to me, Matt, is really the question. Can you get that broadening out that so many people are counting on to really lead the market higher in 2026? And if you can't, is it still sustainable?
Yeah, actually, the small caps, though, have done really well over the last couple of months in hopes that the Fed would continue to cut, right? They're helped the most. I think 40% of the Russell 2000 is unprofitable or some giant figure like that. So they really need those rate cuts. And that's where the Fed really matters going into 26.
So let's take a look. 2s, 10s, and 30s. What you have seen is a rally. You've seen the best year for Treasuries wholesale going back to 2017, although Matt could point out that at the beginning of the cutting cycle, maybe it sort of fudges exactly where we've been. Nonetheless, you are seeing that 2-year yield pegged at 3.5% or just below 3.47%. The 30-year yield has hovered, though, around that 4.5% 4.8%. To your point, Matt, there is a feeling that just cutting on the front end is not going to help the long end, especially with ongoing questions around who the buyer base is going to be next year for treasuries.
Yeah, you know, it's interesting. Cameron Dawson mentioned that story that I think more than 700 companies have filed for bankruptcy this year. And they listed the reasons. Inflation was number one, but rates were number two before tariffs. I thought that was really interesting. So if rates continue to come down, that'll be really helpful, obviously, to the smaller businesses that have gone bankrupt in this environment.
Yeah. Meanwhile, in the metal space, and this has been sort of the ongoing debasement trade and a question around whether it truly is that. You had seen prices go parabolic in silver, truly just shocking gains, particularly over the past week and a half. Suddenly you're seeing a little bit of froth coming off of that, down about 5%, 4.8% now in pre-market trading. But a question here about whether this is real or whether this is speculation. And it comes in the heels of a real question that's been bleeding out in the gold market throughout the bulk of this year.
Yeah, whether or not this is the debasement trade was the subject of conversation in last week's shows that I was hosting, because you haven't seen the dollar really fall that much. I mean, it's like 8% year to date, right? From the peak, it's not even 12%. But the thing is, maybe currencies around the world are also coming down to some extent. So the question is, what's driving gold and precious metals higher? Silver obviously has industrial uses, so it's a different story. But the rally in gold has been eye-popping as well, right? 70, 80% year to date.
Yeah, and some people speculating it could continue based on central bank buying. This really has to do with the geopolitics of the moment, which seem to be in focus, certainly in Washington, D.C., under surveillance this morning, closer than ever for Ukraine.
I really believe we're probably, Mr. President, by far closer than ever before with both parties. If it went really well, maybe a few weeks, and if it went poorly longer, and if it went really poorly, it's not going to happen.
20-point peace plan, 90% agreed, and U.S. Ukraine security guarantees 100% agreed. U.S. Europe Ukraine security guarantees almost agreed. Military dimension 100% agreed. Prosperity plan being finalized.
Here's the latest. President Trump and Ukraine's President Zelensky hailing major progress made over the weekend toward a potential peace deal with Russia. However, talks failing to produce a major breakthrough. Bloomberg's Tyler Kendall joins us now. Tyler, thank you so much for being with us. So do we have any sense of what the progress really was that was made over the weekend?
Hey, Lisa, good morning. Well, at this point, we saw both sides really tout that there is optimism here, right? We know what the big sticking points still remain to be. President Trump yesterday saying that the thorniest issue on the table is, of course, the future of any potential land concessions, as he's previously suggested that Ukraine is going to have to give up territory in the eastern Donbas region as part of any future deal. It is our understanding that there has been an agreement reached in the draft proposal that would include a referendum vote on what happens to that eastern region. But Ukraine needs to see some critical conditions met first, including that Russia would withdraw its troops. The other big part, of course, security guarantees. What are those going to look like? Both sides, again, hailing progress, as it is our understanding, and we reported earlier this month that the U.S. has put on the table something that could mirror NATO's Article 5 mutual defense clause. We are now learning this morning that Zelensky did ask President Trump directly yesterday at Mar-a-Lago for those guarantees to extend to 30 or 50 years. Now, this White House has repeatedly said that responsibility is really going to fall on our European allies, which is why it's important and notable that the pair of leaders did have a call with European leaders yesterday after they met face to face. But to your question, Lisa, one of the biggest questions here is, what is Russia really going to agree to? That is, of course, what we've seen when it comes to engagement on the Ukrainian side. But in his call yesterday with Vladimir Putin, President Trump said that Russia is still not interested in a ceasefire before any potential peace deal. And we've heard openly from Russian officials that there are some parts of this now 20-point plan that are non-starters, including the proposed size of Ukraine's post-war military. I will say, in one potential sign of progress, we did hear from the Kremlin that they have agreed to create 2 working groups. That was a proposal put forward by the U.S., and those are the people that are going to run point to continue negotiations between the 3 countries.
Tyler Kendall, thank you so much for that. Cameron Dawson of New Edge Wealth still with us. And Cameron, how much do you count on some of the rhetoric that we've heard over the weekend as something concrete that is, just since this is what we do, tradable in the sense that this could be the emergence from a war state in Europe?
Well, we continue to just watch one thing, which is oil prices and gasoline prices, as far as how much a war in Europe matters for U.S. markets and U.S. earnings. And we continue to be in an environment where gasoline prices are falling. It's pretty incredible. Over the last month or so, we've seen 30 cents off the daily national average gasoline price come out. We're now at $2.80. And that's such a far cry from the high of $5 that we reached in the aftermath of the initial invasion of Ukraine by Russia. So as long as you are in an environment where those energy prices remain contained, it's likely something that the overall market, at least in the U.S., continues to look the other way and not see it as a major driver of impacting returns.
And there's been no impact, even though we talk about Venezuela a lot. Obviously, it's important for foreign policy and potentially human rights. There's been zero impact really on oil, right? We see Brent just creeping above $60, but not much more.
And maybe just diesel prices. That would be the one thing to watch with Venezuela, because they have heavy sour crude, which is very important for diesel production. And so that's been a market that has been a little bit tighter than what we see in just normal gasoline prices. And so as we think about the impact of energy prices, that is a major wild card for 2026. Over the last 3 years, we cannot underappreciate how important falling energy prices has been, not just for headline CPI, but also for the U.S. consumer. It's effectively been a tax cut for U.S. consumers. So each and every month, we've been in an environment where year-over-year gasoline prices have been falling. This is a boon for U.S. consumers. And if it were to turn in the other direction, that could certainly be a headwind for consumption as well as headline CPI for 2026. It's a wild card. It's not our base case because of some of these dynamics of oversupply, but it's certainly not something that we should ignore.
How much is that outweighed, Cameron, by the run-up in electricity prices that the consumer faces, sometimes 200% of what it was a year ago, the run-up in natural gas prices that the consumer faces because that's the dominant power source used for data centers? I mean, AI is pushing up energy across the spectrum other than oil.
And certainly, we're seeing it in elections as well as coming into top of mind for consumers. And so just as they're potentially getting this tax cut on the pump side of things with cars, you're seeing that pressure in overall electricity prices. And there's a great argument that this is what creates the perception of higher inflation than what we might get in overall statistics because of the dynamic of frequency bias, meaning that you go and fill up your car more frequently, you pay your energy bill at your house more frequently. So you feel those prices going up a lot more than you feel the prices going down of certain goods that you buy less frequently, which is one of the reasons why we continue to see this high levels of readings in things like University of Michigan surveys on outlooks for inflation, even though when you contrast that to what the bond market is saying, the bond market continues to be very optimistic that inflation will fall back down towards the Fed's target, with five-year forward inflation break-evens and swaps looking at just about 2.4%. So there is a contrast there into the inflation we feel as consumers and then the inflation that is perceived or expected by bond markets.
Spoken like someone who truly has traveled this season. Cameron Dawson of New Edge Wealth, thank you so much for being with us, and happy holidays and happy new year. Coming up, my conversation with JetBlue CEO Joanna Garrity on how the airline is gearing up for a key year ahead. Plus, Guy Johnson with your morning movers. Silver pulling back after that record rally. Meanwhile, copper surging to new record highs. From New York, this is Bloomberg Surveillance. Good morning.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
It's supposed to be that Santa Claus rally time, and we're not feeling it, at least right now. But still, when you take a look at S&P futures, you can see pushing toward all-time highs, even though you are down about 0.25%. Matt, how far are we away from that 7,000 mark? You've been doing calculations over there.
I'm not a
on your
math
slide
whiz,
rule.
but it looks to me like 1% away from 7,000 in the cash trade because we're at 69.30.
Yeah, this has been another double-digit year. It's been more than 20% the previous 2 years. Right now, we're up some 18, 19%. On the NASDAQ, you're up 22% year to date, with people expecting more to come next year, which is sort of the interesting aspect of this. The euro just losing a little bit of luster versus the dollar, still around that 117.63 mark, where it's been hovering for the past couple of trading sessions. A bit into treasuries, down 2 basis points ahead of the Fed meeting minutes that we get later this week, 4.11%. And copper up almost 2%. It was up 5% earlier in the session, surging ever higher. Why, I guess, is the question. Is it physical demand? Is it speculation? Is it a little bit of everything? A lot of people looking to Dr. Copper for some signals.
Yeah, to me, copper is almost more fascinating than silver, right? Precious metals make sense as a safe haven if you're worried about any number of things. But like silver, copper has industrial uses even more, arguably, and normally you see copper surge when giant economies like China are building ghost cities. They're not doing that right now. I guess we're building data centers, but I wonder what people are using it for.
The reindustrialization of the world, are we seeing it in the price of copper, or is it speculation about the industrialization of the world? 3 hours away from the cash open, here are your morning movers with Guy Johnson. Guy.
One of the reasons why copper might be higher is because people are building a lot of data centers. And that's evidenced in the stories that we're watching this morning. Lisa, let's start with the first one. Digital Bridge Group. So this is a private equity company. Now, remember a few weeks ago, SoftBank sold out of its Nvidia position. Apparently there were tears. Now we're starting to see evidence maybe of how that money is going to be deployed. This is a private equity company. It's based out of Boca. It's based out of New York. It's based out of LA. It invests in data centers. And this is why SoftBank is interested in it. The stock is up by 34% pre-market. Advanced talks for SoftBank to buy this company. Now, it has bought private equity companies in the past, hasn't done so for a while. This is going to be interesting to see how this one turns out. So keep an eye on that. Tech generally is a little softer today, though. One of the reasons why some of the futures picture you were talking about, Lisa, just a moment ago, is indicating that we are going to maybe move down. Tesla's one of them, Nvidia's one of them. Nvidia's down by 1.26%. I can't find a decent reason for this other than the fact that yeah, we saw a decent pre-Christmas tech rally, and maybe some of the chips are being taken off the table after Christmas, but I can't find any decent reason for it. So let's get on to the metals trade. I'm not going to do copper, but I am going to do silver. Let's talk about some of the silver stocks. First, Majestic Silver. Great ticker, AG, obviously. That is for the periodic table fans. Down by 2.76% this morning. The reason for it? Looks like silver's going to get choppy now. It's had this incredible run up. As you can see, we'll move it on a board and show you what's happened with silver. It's a gold story as well. You've seen it here in Europe this morning with Fresnillo. But you're starting to see silver maybe just moving off a little bit. You can see it over there, just a tick lower. But it's producing a decent response in some of these stocks. But silver's had an incredible run. Year to date, up 161%. So silver's certainly moving some of the stocks this morning. You're also seeing some of the miners moving here in Europe on the back of that copper trade as well. Lisa,
thank you.
Back over to you.
Thank you so much, Guy. Wonderfully said, and everybody's trying to bet on the physical economy heading into 2026. On our radar this morning, President Donald Trump saying Ukraine and Russia are, quote, closer than ever before to a peace deal. Ukraine's President Zelensky calling the framework 90% agreed with U.S.-Ukraine security guarantees 100% set, but warns that clashing over the Donbass region remains a hurdle, and it comes, Matt, right after we saw Russia lobbing a slew of missiles over at Kyiv over the weekend, raising questions about how serious Russia is about some sort of truce.
Yeah, I think it's, obviously it's a horrendous war that has continued for far too long. To me, one of the most fascinating threads was Sergei Lavrov, who I thought had been on the outs, the Russian foreign minister, made a comment over the weekend that Europe is now the problem. He said, since Donald Trump has come into power, the U.S. is no longer the problem. We've fallen into line, right? But Europe still continues to confront Russia in ways that he doesn't like. And I just thought that was pretty telling.
It was telling, and yet you saw rhetoric from President Trump saying that Europe is great, Ukraine is great, Russia is great, everyone's great. And it raises this issue of where is their daylight, right? We haven't really understood what the sticking points are going to be, the 90% done. And also, if it's 100% guaranteed that they're going to have some sort of security guarantees, why not just count on NATO? A lot of questions here.
Yeah, I think the Donbass region is probably the biggest sticking point. How much land Ukraine is going to have to secede, and one of the big problems there is that it may not be legal, even if it's agreed by Zelensky and Trump and Putin. The country may still have to vote on it, and it's very unpopular in Ukraine to cede land.
Yeah, meanwhile, we're really focused domestically on what's going on in the AI space. NVIDIA striking a licensing deal with chip startup Grok. The deal announced just before Christmas looks to give NVIDIA an edge in the AI race, particularly with language processing units. Under the agreement, Grok CEO Jonathan Ross and other executives will join NVIDIA. However, financial details were not released, except that Grok is valued some 3 times what it was a couple of months ago at $20 billion. And it's a non-exclusive licensing deal to try maybe to avoid some of the regulatory or the antitrust concerns, while also hiring 90% of the employees from Grok. I mean, it just highlights what the playbook is for tech giants that have more cash than they know what to do with.
Exactly. That's the most important point. They have so much cash, right? And this is an acqui-hire. I hate that portmanteau, but that's what it's being called, because they're paying essentially $20 billion to get the employees of a company that was valued at less than $7 billion just a few months ago.
Yeah, I mean, this to me is going to be an interesting playbook going forward. And how much can they get away from some sort of regulatory scrutiny and Washington, D.C. scrutiny by structuring it this way? Meanwhile, Bank of America CEO Brian Moynihan saying he expects the Trump administration to de-escalate trade tensions next year.
To go from a 10% across the board to 15% for the broad base of countries is not a huge impact. And that's where our team says it's starting to de-escalate, and that you're starting to see the resolution of the discussions into 15% here, 17, different numbers.
Moynihan adding that China deals are a special case due to the national security interests, rare earth minerals, and artificial intelligence. It does seem, as Matt was mentioning earlier, that we have left some of that behind in terms of trade tensions. What happened after Liberation Day? Well, we kind of just surged from there.
Yeah, exactly. And I mean, Moynihan thinks that or says that Trump is going to de-escalate from 10% to 15%. Well, he didn't mention the fact that we started out at 2%, right? So that's really not a huge de-escalation if you look at it in whole.
Well, and this really goes to the question of how much the consumers are able to absorb, which is the reason why we are watching the travel sector so closely. JetBlue CEO saying the company expects to see the benefits in sales and cost efforts next year. I sat down with Joanna Garrity to discuss the airline's 2026 outlook. Take a listen. I want to start with just how this fits into the strategy of JetBlue right now to make the airline truly profitable for a sustainable period of time.
Yeah, thanks for the question. Great to be here and have you in Blue House, JetBlue's first foray into lounges. This is very much part of our Jet Forward strategy. We've been working very hard for the last several quarters on really turning towards premium and trying to make sure that we're offering more opportunities for customers who want to pay a little more. And the lounge is part of that. Our transition to a first-class product next year, a domestic first-class product, would be part of that. Our Premier card, our Even More as a cabin, and really excited to start seeing all of that come to life in 2026.
All of the big airlines have talked about loyalty and how important loyalty and premium offerings is to their profitability going forward. How is it different for JetBlue? Because there isn't the sort of obvious business customer that typically fuels the loyalty offering.
I mean, we're a leisure carrier. We tend to get, a nice share of business customers because they love the product. We're back at the top for Net Promoter Score, so really proud of that. But at the end of the day, this is really designed around trying to make sure that customers who travel for vacation have a reason to come back again and again, and providing a little oasis of peace. And really through our loyalty program, we want to reward people who choose JetBlue because they love the product, the service, and what we offer.
You have already offered Mint and other premium rollouts. How has it been going?
It's been great. Mint's been a very strong source of revenue for JetBlue for well over the last decade. And so we're not new to this. We have a brand that, definitely associates with more of a higher end leisure customer, providing more to customers at a very reasonable fare. And we want to make sure that we offer something for everybody across the full spectrum, whether you want sort of a dialed down experience, still free Wi-Fi and great legroom and great snacks and drinks, TVs. But then if you want to pay a little more, you have the opportunity for a lounge, our Mint class for transatlantic, and then when we launch domestic first later this year, that's going to be a great product offering for customers who want a little more.
So I was shuttled into here through very long security lines and lots of people with screaming children trying to get to different destinations for their warm holidays. This is the busy season. How is it looking in terms of demand, given the fact that there were some hiccups in the past couple of months, but at this point, people are getting back to what they originally had?
Yeah, 2025 has been a very tough year, whether it was the macro setback or the government shutdown or the list goes on and on. We're really looking forward to the holiday season. Bookings are coming in strong. As we go into 2026, we're optimistic that the consumer is healthy and that we're going to start really ramping up the initiatives that we have been working really hard for the last year to execute to and seeing the benefit as we move through 2026.
How long do you think it'll take before you start to actually turn profitable and sustain that?
Our goal next year is to break even from an operating margin perspective, and that's the first step back to profitability. We have a great team here. Everybody's pulling for us. We're doing all the right things, whether it's our focus on operational reliability, net promoter score, all of the premium products that we're launching, our laser focus on costs, and really trying to make sure that we're delivering a great product offering for customers, because JetBlue has this wonderful brand and this sense of people want to love us and they want to see us succeed. And 2026 is going to be our year with everything we've put into place.
Because 2025 was not the year for a lot of airlines.
Tough year for airlines.
There were a lot of issues. And you talk about the government shutdown. This has been a big discussion among a lot of the airline CEOs, where they've said we just can't make up that kind of revenue. So there will be some sort of hit. Have you disclosed any kind of revenue loss as a result of some of the shutdown?
We haven't disclosed any kind of revenue loss. We've said that we remain on track for Q4, and I think we're pleased with what we're seeing in terms of bookings coming in for the balance of the month. We definitely saw some softness, obviously, during the government shutdown, but we're recovering coming out of that. I think most have shared that. But it was definitely an impact, and unfortunate that the airlines were put, right in the middle of that shutdown. All the great air traffic controllers and the TSA workers, they need to be, cast as essential workers. We really need to make sure that, if anything, this industry is so essential to our economy. Think about all the people who were traveling for weddings and funerals or doctor's appointments that were displaced because we couldn't get on the same page in Washington, D.C. So we're really hopeful that, we've turned a page there and that we can move forward, looking at that end of January date with, a little bit of nervousness. But I'm confident that D.C. will pull it together and get us in the back end of that.
Yeah, you somehow, being an airline CEO probably wasn't in your bingo card that you'd be well focused on healthcare legislation with your fingers crossed heading into January. I'm wondering how much you're hoping to attract a new class of customers versus capitalize on the ones that you have that might be willing and able to pay a little bit more with some of the new offerings.
Yeah, it's a little bit of both. We know we have customers today that want our first class product. And so it's really, offering that to them so that they can buy up when that opportunity presents it. But it's also making sure that we're competitive with the industry. Everybody's moved towards premium. We're going to continue to move towards premium because it is a resilient customer segment. But we're not going to forget the folks that fly in our coach product. They're just as important. And we want to make sure that JetBlue offers something to everyone.
It really does feel a little bit like the Sharks and the Jets when you speak to some of the airline industry CEOs, where they talk about, it's become a game of consolidation and it's become a game of the big fish really dominating the fields in a lot of different ways. They say it's going to be very hard to be a more budget-focused airline. How do you fight back? How do you sort of create a viable business model at a time when you do see this consolidation of profitability and travel in the biggest airlines?
It's definitely hard. We talk about the need for a more level playing field. When 4 carriers have 80% of the domestic seats, that's a real problem. We fight very hard in D.C. to try to make sure that we're heard, that the challenges we face, whether it's cost pressures, the lack of scale, the lack of, consolidated purchasing, the, inability to get access to gates. We just bid on a gate, a Heathrow slot, and we were denied United. And so, while I maybe understand why it went to a legacy larger carrier, those are little things that add up over time. And the smaller carriers really need to be given a fair shot to win in this environment. And that's not happening right now. So we're focused on what we can control. We're focused on a whole series of initiatives under our Jet Forward program. It's getting us moving in the right direction. I'm excited about what it's going to bring. But we do need the government to kind of make that a more level playing field so smaller carriers can more effectively compete.
In the meantime, you do have this cooperation with United. You've been expanding in a host of different places. Is that the template going forward? Maybe not consolidation due to the recent issues, but in terms of the previous merger that was denied, but going forward, having some sort of partnership with major airlines to expand the routes.
Yeah, we've got 50 airline partners across the globe, and now we have the Blue Sky partnership with United. That is most certainly a part of trying to provide more utility to our loyalty program and providing a broader global network for our customers when eventually in Q1 they can book a JetBlue flight on United.com and vice versa through our interline agreement. And so we're excited about what it's going to bring. Does it solve the problem fully? No, it doesn't. But it's definitely a meaningful revenue initiative that gets us back moving in the right direction.
Do you anticipate consolidation at any point in your future, or is that sort of on the back burner still?
That's on the back burner. We're really focused on Jet Forward. I'm really excited with the progress we're making. We're seeing it. We're seeing improved operational reliability, improved customer scores. We have not let the grass grow under our feet in 2025. We've executed a whole series of revenue initiatives. We've kept our costs under control despite pulling a 1.5 capacity this year. So 2026 really is the year that we should reap the benefits of all these initiatives that we put into place in 2025.
That was JetBlue CEO Joanna Garrity speaking with me just in the past couple of weeks after opening their first lounge in JFK. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahira Anand. Yahira.
Hi, Lisa. China is vowing to expand government spending. Beijing plans to boost expenditures and strengthen the spending power of local authorities in an attempt to balance growth and contain debt risks. It plans to spend more on, quote, new productive forces like advanced manufacturing and tech innovation. Meanwhile, President Trump saying his administration knocked out a big drug facility in Venezuela last week. The strike would be the first known land attack on the country since the administration began its campaign against Venezuela. This comes as the president ramps up pressure against the country's president, Nicolas Maduro. And North Korea says it conducted a long-range strategic cruise missile launch drill over the West Sea Sunday as it continues to showcase its weapons capabilities amid regional tensions. The country's news agency says it was carried out to test counterattack readiness and combat capabilities of its long-range missile units. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, the year of dollar softness.
2025 has been a year of dollar softness. The dollar has been softer, but we shouldn't overread that. The bid for U.S. assets, including the dollar, on balance continues.
Bloomberg's Skylar Montgomery Koenig joins us next as we look ahead to the possible debasement trade, or is it? This is Bloomberg Surveillance. To get that holiday feeling, that holiday spirit into the equity market right now, not really feeling it. Seeing right now declines on futures, lower by about 0.2% on the S&P. Still, as Matt pointed out earlier, about 1% away from that 7,000 mark as we do end the year near record highs. Meanwhile, a bit of dollar strength here, although just 117.67 on the euro dollar cross, and the 10-year yield getting a bid down almost 2 basis points to 4.11%. Copper, check it out. We have faded an almost 6% rally earlier in the session, now up just 0.6%. To Matt's question earlier, who's buying it? Well, I guess some people are asking that question and fading some of the earlier gains that we had seen. Under surveillance this morning, shifting gears to the year of dollar softness.
2025 has been a year of dollar softness, but most of that dollar softness was built into the first few months of the year. It's really been steady as she goes since the summer. That's noteworthy. It's suggestive of something else we've been saying all along, which is, the dollar has been softer, but we shouldn't overread that. the bid for U.S. assets, including the dollar, on balance continues.
Here's the latest. The U.S. dollar posting its worst week since June, with Bloomberg's dollar index showing the greenback on course for its steepest yearly drop since 2017. Lots of questions around debasement. Bloomberg Skylar Montgomery Koenig joins us now. And Skylar, thank you so much for being with us. Before we get to the dollar and the path ahead, I'm curious your view on how much you consider gold and silver when discussing whether we are seeing truly a debasement trade take hold.
Yeah, I mean, I think the one place that you can see investors really pivot away from the dollar is in COFR data. So central bank reserves have pivoted away from the US dollar, but it's not landed in one currency specifically because there is no clear alternative, which is the issue. Now, I bring this up because there's also been a pivot into gold, and I think that's increased enthusiasm for assets generally that are more out of the norm. And for the dollar, it's not a big impact because it's a small flow, but for gold, it is very much a big flow relative because it's a smaller market. So I think it's definitely symptomatic of that trade, but it doesn't necessarily mean that you're going to have big dollar downside because COFR reserves, the share for the dollar has been declining for something like 2 decades now. And you've had big cyclical dollar bull markets in that period. So it's a small flow for the US dollar, especially as it still dominates trade flows, it still dominates financial flows, but it's a big flow for gold.
How much is a weakening dollar a consensus trade heading into 2026?
I think it's more mixed than maybe the headline numbers tell you. What you tend to see actually is at the beginning of the year, if there's not a strong bias, you tend to have consensus go towards dollar weakness. And that's because you've had dollar overvaluation on a number of metrics for a very long time now. Now, I think the issue is those metrics is they don't take into account productivity gains. And so on that measure, you'd say valuations should have a structural break higher because the U.S. has been more productive than a lot of its developed market peers. So I think, when there isn't a clear bias, as we had at the beginning of last year, which was actually for dollar strength, you tend to see dollar weakness come out as the favored trade at the beginning of the year in year ahead outlooks.
I have a pretty smooth brain, so I can't think of too many factors at once. I just look at rates, right? And in terms of the terminal rate that futures are pricing in right now, it's 3%. If we don't go that low, do you maybe get a dollar with more strength than the street's expecting?
Yeah, I think certainly. So there are two factors that I'm really thinking about next year for the dollar. The first is that we had this risk premium priced in on Liberation Day. Now, that premium has compressed as some of your more world-listing policies from the U.S. administration has come off. So we no longer have the big threats to the Fed's independence that we had previously. And you've also had more positive growth drivers like fiscal stimulus. Now, I think that compression still has a room to run. And you can see in the gap that's opened up between, say, euro dollar and rate differentials that there could be some move still in that. But I think also, as you say, the Fed is kind of priced at what I would consider as a dovish extreme, which points to rate differentials also moving in the dollar's favor in 2026. The market's still looking for a terminal rate around 3%. That's in line with the Fed's estimate of neutral. So it's arguably a floor for pricing, because going lower would imply a recessionary dynamic that would boost the dollar as a safe haven in any case. But a 3% terminal isn't a ceiling for the Fed, I don't think. We've already repriced terminal higher twice this year from the Fed's perspective in terms of you've had that neutral dot kind of edging upwards as the economy is held up very strongly. So I think certainly you could go higher from here, and that skews the risk to being dovish Fed expectations being disappointed, and that's supporting the dollar.
Bloomberg Skylar Montgomery Koenig, thank you so much for being with us this morning. And Matt, I should start more of my questions with, I have a very smooth brain. That's fantastic. I love it.
She mentioned productivity and all these other factors, and I'm, as a male, sometimes incapable of thinking of too many things at once, right?
Don't categorize all men like that. All I can say, I'm going to stand up for the male contingent here. Now, look, there is this question of what is the main driver at any given point. And right now, it has gotten incredibly muddied because a lot of people are talking about rate differentials possibly being the main driver. Other people pointing to the question of, well, is the Fed truly independent? Something that you picked up.
Yeah, I would question the Fed's independence now and especially next year. I mean, what could happen, I think, is still in question.
What could happen is coming up next. We're going to be speaking with Deborah Cunningham of Federated Global Investment, Terry Haynes of Pangea Policy, and Savvy Sith of Raymond James as we dig deeper into the airline sector as we do all travel. This is Bloomberg Surveillance.
Next year, you have the hallmarks of a potentially pretty exciting year.
Balanced portfolios make a lot of sense heading into 2026.
Setting this up for a year where you're going to see a lot of churning, but have moderate returns.
We see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for.
Respect the trend, but don't ignore the risks as we go into 2026.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks marching toward new records, but taking a little bit off this morning as traders bet on stimulus and growth. Precious metals in focus with prices of gold and silver dipping a bit after a parabolic rally. Copper, meanwhile, surging on that real world demand. And President Trump closing out the year trying to tie up what has been an elusive peace deal between Ukraine and Russia. Matt Miller in the hot seat today. So glad to have you as we play tag here on Surveillance. John is out on paternity leave. Anne-Marie is off on vacation. Matt Miller, I am so pleased to spend the next couple of hours with you. I'm just wondering, given this rally is 1% away from all-time highs, what will it take to get it over the edge?
Yeah, well, I think we typically have Santa Claus rally in the last 5 days of December, first 2 in January, that averages a gain of 1.5%. Right now, we're only up 0.3% in the first 2 days of that. So we could still easily get there. And it looks like the market wants to, despite the fact that futures are off a little bit today.
It seems like the bet is on a broadening out, and you are seeing a little bit more of that this morning with the idea of losses in S&P futures and NASDAQ futures, but not necessarily in Russell 2000 futures. And this idea, you need to see that. There has been a shift in the conversation around AI, and I think it's worth mentioning that Grok NVIDIA deal that we saw last week with a question of what this signifies going forward, that NVIDIA is trying to consolidate its market share to get a non-exclusive licensing deal with a company where they're going to hire most of the people and possibly get a more efficient chip to put out there on the docket. It just highlights how things are shifting in terms of narrative.
Well, only a few months ago, industry experts would have told you nobody's even close to catching up with NVIDIA in terms of the technology. And then we got the Google TPU story, which I think changed that calculus a little bit. But look, the M&A is part of the animal spirits. The IPOs we've seen, part of the animal spirits that have essentially eliminated bears from this market. In terms of equities, everyone is a bull.
Yeah, right now, everyone's a bull heading into next year, which raises the question, how much more bullish can people get? And what do they need to see to possibly shift that view? Precious metals highlighting this concern about some sort of debasement trade or haven trade, or maybe it's just the real economy. And what we're seeing there, you are seeing copper prices retreat after being up some 6% in pre-market trading, now up 0.2%, just as people look to some of the stockpiling going on and losing those gains as we speak. Silver, meanwhile, down almost 6% after a rip-roaring record run. And what we have seen in the bond space, and this is interesting, so much depends on next year what happens with the Federal Reserve. The 2-year yield started this year at 4.23%. Currently, it is 3.47%. The 10-year is down from 4.55%, currently 4.11%. The best rally right going back to 2017. The 30-year yield started this year almost in the same place that it is now, around 4.8%. Matt, it just highlights how you can move the front end, but the long end rests on something completely different.
Yeah, absolutely. And I tend to broaden out my look at rates to at least November when we had the election, right, and to September when the Fed started cutting. And if you look at it over that time frame, you've seen an even bigger rise in 10-year yields. So I know that this administration wants to get the 10-year yield down. They want to get mortgage rates down. They want to lower interest rates for companies that have driven a lot bankrupt, but they haven't been successful thus far.
Meanwhile, right now we are looking at a pretty quiet week as we head toward that New Year's celebration on Thursday. Thursday will be a closed day. I'm sure everybody is going to be traveling and enjoying their families. We are going to be getting, though, tomorrow some meeting minutes from the Federal Reserve. We're also going to be getting jobless claims later on this week on Wednesday. A real question here about any read or tell from some of the information that we're getting, given the fact fact that people say the GDP print from last week or the jobs report that we did get from the previous couple of months have been so messy that you have to wait until early in January to get a cleaner read. Coming up this hour, Debbie Cunningham of Federated Hermes as Wall Street pushes for year-end rally. Terry Haynes of Pangea Policy as Nancy Pelosi predicts big Democratic wins in 2026. And Savvy Sith of Raymond James as holiday flight cancellations deliver a costly blow to airlines. We begin this hour with stocks holding near record highs as we start the final trading week of 2025. The future of the Federal Reserve very much in focus. Bank of America CEO Brian Moynihan saying an independent Fed is critical for the health of the markets.
They're a lender of last resort. They're there to stabilize markets and price. But other than that, you shouldn't know they exist, quite frankly.
So you don't worry about all this, hand-wringing of political interference with the Fed once that new position is.
The market will punish people if we don't have an independent Fed, and everybody knows that.
Debbie Cunningham of Federated Hermes writing, while the Trump administration attacks in the committee have intensified worry in the financial markets, we believe the Fed will prevail. This does seem to be the preeminent belief right now in markets. Debbie joins us now for more. Debbie, why do you think that the idea of Fed independence is kind of behind us and that people have sort of closed that story out in 2025 and look to a sort of more normal Fed in 2026?
Well, I think what we saw in 2025 was a surprised and then ultimately a divided Fed. We still don't know the full ending to the Lisa Cook story. We do know the ending to what the Supreme Court has thought about as Fed independence and a different type of body compared to some of the other ones. We saw President Trump go from, supporting Chair Powell to trying to fire Chair Powell to being told he can't fire Chair Powell to submitting to trying to find other replacements for him, interviewing replacement candidates for him for his expiration of his chair term in 2026. So I just feel like what we've seen so far has been a bit of a upheaval and turmoil within the Fed, that now that the independence has been, solidified, I think that will not be the case going into 2026. However, what I do think will be the case is that we see less voting that is all in alignment. I think we will see more dissents. We've already started to see them in the last three meetings. And I think that will probably continue. And, what we've seen historically as hawks, centrists, and doves will become even a little bit more pronounced in their voting.
So do you think, Debbie, that people are overpricing the chance of rate cuts next year?
I think they are, at least from what the Fed is telling us with their, their dot plot, their series of economic projections. They are looking for one. Our official call right now, as we transport into 2026, is for two. One in the first half, one in the second half. But I think ultimately, although the pace of lowering rates has modified from where it was when we started 2025, the ultimate terminal rate, Lisa, seems to be the same. I mean, it's not going below 3%. And that's where I think the bond market is settling in. That's why you see, the 10-year rallying at various points. That's why you see a range trade that is really more indicative of actual technicals and market conditions, as we head into year-end, supply and demand, repo market, issues all seem to have more of a influence on rates on a day-to-day basis for this, last trading week of the year. But ultimately, when you look at the terminal rate for the Fed, over time, it's still at 3%. It's just 3% a year earlier.
I wonder how you view liquidity right now, given your position and given that we're now have eclipsed $8 trillion in money markets. It seems like there's a lot of cash sloshing around the system. And we have pretty decent growth, right? Even though it's hard to look at these economic data points, 3.8% GDP, maybe only 2.6% inflation. What's your view on sort of the macro picture?
I think the macro picture at this point is that the worst is behind us. We really, when we went into 2025, were toying with the potential for some sort of a, substantial growth slowdown into a potential recession. That's behind us now, though, at this point. We think the worst quarter, obviously was the first quarter of 2025, and the consumer continues to be employed, so the consumer continues to spend. The consumer is the one driving the economy in this recovery that we have been experiencing. So I think slow growth will be the case. I know not a lot of people like that from an equity market standpoint. It doesn't get the same, sort of splashy results that a faster growth economy does. But I believe that when you look at liquidity markets, when you look at broader term fixed income, slow growth is not a bad place to be, and we've seen that certainly in the gathering of assets in the liquidity market, as you said, recently passing the $8 trillion mark.
Debbie Cunningham of Federated Hermes, thank you so much for being with us, and have a wonderful New Year's celebration as we assess what's going on next year. It is sort of this contradiction, Matt, that we're talking about the potential for slow growth, and everyone's talking about how consumer sentiment is down. And then you saw the GDP print from last week come out, which was the fastest pace in 2 years. And it sort of raises this issue of, are we seeing an economy entirely powered on data centers while human beings kind of wonder what their existence is and wonder what the path is going forward and lose confidence in their futures?
I mean, I find the term K-shaped kind of annoying, but it seems to be prevalent across a range of different industries and paradigms. I mean, certainly in M&A you see it. Certainly in terms of profit growth you see it. Certainly in terms of the consumer you see it. So I just don't understand how 3.75% is restrictive. I mean, are we really looking at a rate that's 75 basis points too high and still growing at a 4% clip?
Okay, so this is the debate, right? For mom and pop stores, not so much. You talk about M&A. Where is the M&A happening? Yes, it's happening across the board. It's happening out of necessity, right? Because companies want to get bigger, banks in particular, also industrials. But you're also seeing the ongoing tech M&A because companies can, right? We talk about NVIDIA and Grok and the $20 billion valuation. They're just sort of minting money. But we also have another deal that could potentially be announced this morning. We're hearing that SoftBank could be announcing Digital Bridge. This question of that race really driving a lot of this activity. Yep. And without that, what happens, right? How much is left? And is it restricted for who?
Right. Without that, you only have the lower half of the K, right? And I guess that's the problem. 17 companies filed for bankruptcy through November. And obviously that's worse than we want to see it. And that's all due to interest rates and inflation. But inflation, I think, is something that you shouldn't forget, right? Because the last print looked soft, but companies still have to pass through more of this tariff costs.
I'm very much with you, and we'll be watching that coming up. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Policymakers for the Bank of Japan are signaling more interest rate hikes are ahead. A summary of the bank's December meeting shows board members raised concern over the benchmark rate, calling it the lowest level globally. Currently, the BOJ's key interest rate sits at a 30-year high. Meanwhile, Ukrainian President Volodymyr Zelensky says he asked President Trump for U.S. security guarantees lasting as long as 50 years. Zelensky spoke to reporters after the two leaders met yesterday in Florida. Current proposals outline a 15-year security term with the possibility for extension. President Donald Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal. Meanwhile, silver pulling back from all-time highs as traders take profits from this year's record-breaking rally. A weaker dollar and rising geopolitical tensions boosting precious metals during the end-of-year rally. Silver is on track for its best annual performance since 1951. That's your Bloomberg Brief, Lisa.
Thank you so much, Yahaira. Up next, winning the House.
So if the Democrats win the House back...
No. When? When the Democrats win the House back, then we will. Right now, the Republicans in the Congress have abolished the Congress. That ends as soon as we have the gavel.
Terry Haynes of Pangea Policy joins us next as we preview 2026 in Washington, D.C. From New York, this is Bloomberg Surveillance. Good morning. to get that Christmas and New Year's and holiday spirit into the markets right now. The Santa rally kind of fading just a touch, down about 0.2% on S&P futures. You see a bigger move on the NASDAQ, although Russell 2000 about flat in early market trading. Meanwhile, just a touch of dollar strength after a pretty weak month. We are seeing 117.59 down by about 0.1%. The euro versus the dollar cross a stronger dollar. Meanwhile, 10-year yields down about 2 basis points to 4.11. They have declined from some 4.55% at the beginning of this year. And copper coming off some of the earlier highs. We saw that up now 6% in pre-market trading. Now we're only up 0.3%. A real question of Dr. Copper. Is there a tell here? Who is stockpiling copper? Is it all of us as we build out data centers? Under surveillance this morning, a focus in Washington, D.C., winning the House.
So if the Democrats win the House back.
Yeah. No. When? When the Democrats win the House back, then we will. Right now, the Republicans in the Congress have abolished the Congress. They just do what the president insists that they do. That will be over. That ends as soon as we have the gavel.
Here's the latest. Former Speaker of the House, Nancy Pelosi, predicting congressional success for Democrats in next year's midterm elections. A recent Gallup poll finding Americans' approval of the current Congress is at just 17%. Bloomberg's Tyler Kendall joins us now for more. Tyler, as we set up into next year, the midterm elections seem to already send a message to Washington, D.C. How have you seen the messaging shift from both sides ahead of the midterm elections?
Yeah. Hey, Lisa, good morning. Well, that polling that you just showed is pretty brutal, but it does highlight the fact that this Congress has only passed fewer than 40 bills so far this year, which hovers near record lows. So you've really seen Democrats on one side try to highlight what they say should be other policies put forward, but that their hands are tied because they don't control both chambers of Congress and the White House. And the White House try to tout what they've already put into effect, right? We heard President Trump tell Politico on Friday that the midterms are going to be all about pricing, in his words. As we've spoken about multiple times on this program, the administration has tried to shift the messaging when it comes to the issue of affordability. And you were just discussing that GDP number from last week. President Trump coming out and touting that growth while we've seen consumers really remain downbeat. That means that we're going to see the potential for a few different policies going forward here, right? Republicans want to tout what they've already done, including many of them saying that we're going to get large refunds come tax season. Many of them also floating that we could see another reconciliation package next year. But there are also going to be those big headwinds. And that's what Democrats have been highlighting, including that we could be staring at another government shutdown come January 30th. And there still hasn't been any movement when it comes to a potential health care deal. Lisa, I'll give you the upshot here, which is that Democrats only need to net 3 seats next year in order to flip that chamber. That is how slim the margins are. We are talking about the House, but also worth mentioning in the Senate. The math's a little bit more tricky, but Republicans have seen some senators in key seats say that they're not going to run for re-election, like Tom Tillis in North Carolina and Joni Ernst in Iowa. Those were some seats that Republicans were banking on.
Tyler Kendall, thank you so much for that. Right now, Terry Haynes of Pangea Policy joins us for more. Terry, it does seem like 2025 was the year of Trump. President Trump dominated a lot of the news. We did not see a lot of congressional action. How different will 2026 be?
Well, I think people in markets feel that they're pretty well worn out from 2025 and the kind of Washington action they saw across the board. I told markets that I thought 2026 was going to look like a frenzy because you'd see Trump and Republicans doubling down on what they did and do the maximum amount of possible to make sure that they put the best case before the public, that they ought to continue with a Republican trifecta in Washington.
Hey, I thought it was interesting, Terry, that Trump and the party kind of campaigned on an anti-neocon, like we're going to focus on domestic issues and get out of foreign policy disasters. And now they focused almost solely on foreign policy and are bombing different countries. And it looks like now maybe even a land strike on Venezuela. Does that continue into 2026?
Well, I think they'd dispute the premise. Certainly, the big beautiful bill is about domestic, and to the extent it's about international, it's about making sure that that what you get in in American industry is reshoring and a much better and bigger defense industrial base. But I do think you see continuing that pretty muscular foreign policy because that's part and parcel of what the competition with China is all about.
So do we get in? I mean, it looks like we may agree to a 30 to 50 year commitment in Ukraine. At least those are the reports from Zelensky this morning. And do we get in a land war in Venezuela, or do we attempt regime change again in South America?
Well, I think what you're seeing on both the United States and China's part is grasping for, pushing against kind of hemispherical dominance around. Certainly a lot of what China does in the South China Sea and beyond is about hemispherical dominance. Pushing on Russia and Europe on trade is about hemispherical dominance. China being the biggest trade partner of South America is about hemispherical dominance, and it's a big reason why Trump and the Congress both are focusing on pushing back against that, whether you're talking about what happened in Argentina, what is happening in Venezuela, what happened in Colombia, and so on.
You heard Nancy Pelosi talking about how Democrats are going to take control of Congress come 2027, certainly the 2026 midterm elections. There is this question about what the Democratic agenda really looks like. And there's been a battle for what priorities the Democrats really want to put forward. How different are they from what President Trump is doing?
Well, they're different in a lot of ways. I think Mrs. Pelosi, of course, is in her exit interviews phase, and you're a leader of a party. You're always closing, right? You always be closing, and But I would say to you a couple of things, Lisa. One is that it's way premature to suggest that Democrats are going to take anything over. Simple math is when you've got at least 10% of the seats up for grabs through retirements and whatnot, and you need such tiny margins to hold. Right now, almost a year out, anything could happen, and that certainly wasn't the plan in 2016 that Republicans were going to hold both houses, and yet they did. That said, I think that Democrats, frankly, want status quo more. On margin, what Democrats want is going to be less desirable by markets because it's just going to pile on more debt and deficit. That is what the progressives in the party want that have the energy and the money in the party. What Republicans are trying to do, not cheerleading for him, but I'm just saying, is trying to figure out ways to lessen debt and deficit to some effect, and show markets that, frankly. And Bessent has said that this is a 3 or 4 year process, but he's hoping that they can get there by the end of it.
So, Terry, you don't think that they're going to sign off on $3,000 or $2,000 checks come early next year and expand the deficit?
Oh, I think there will certainly be some deficit expanding actions taken. It'd be naive for anybody to think that politics is about some ideology, and fundamentally these days, I think it is not about ideologies. Certainly, if you accept the premise that Trump bestrides Washington, then you're seeing a fairly non-ideological president. But I think they'll cut some checks? Yeah, I think they probably will. Do I also think that they have it in their ability through a couple of different times in a couple of different ways through the winter and spring to do something about Obamacare that lowers the debt deficit? Yeah, I do that too.
Terry Haynes of Pangea Policy, thank you so much for being with us, and have a wonderful New Year celebration. Coming up, more from our conversation with legendary investor and co-founder of Oak Tree Capital Markets, Howard Marks, plus Guy Johnson with your morning movers. SoftBank in advanced talks to acquire Digital Bridge Group. Those shares up more than 30%. From New York, this is Bloomberg Surveillance. Good morning. Bit of a a soggy start the last trading week of 2025. We are seeing futures lower on both the S&P and the NASDAQ, about 0.2% loss on futures in the S&P. NASDAQ down 0.4%. Russell kind of catching up to that, or catching down, I should say, down about 0.1%. Still, we are up 18% on the S&P so far this year. Matt, what are we? 1% away from that 7,000 mark?
Yeah, on the cash trade, I think we closed at 69.29 or 69.32, around there. So about 70 points away from 7,000, which isn't meaningful in any other sense than it's a big round number. So if we hit that by the end of the year, I think markets would be pretty excited.
Yeah, they're hoping for that Santa rally to get to that big round number. Meanwhile, the big round number in 2s, 10s, and 30s is that yields have actually gone down considerably this year, at least.
Reporting from the magazine that helps global leaders stay ahead.
We've got insight on the people, the companies, and trends that are shaping today's complex economy.
That's right, Tim. We're all over global business, finance, tech news, all as it is happening in real time, and we've got complete coverage of the U.S. market close. Gotta say, basically, if it impacts financial markets, if it impacts companies, if it's impacting trends and narratives that are out there, we are on it.
We also have a lot of fun doing it. Bloomberg Business Week also brings you the analysis behind the headlines through conversations with our expert guests.
And we are doing this all live each weekday, and then we bring you the best analysis in our daily podcast.
Search for Bloomberg Business Week on YouTube, Apple, Spotify, or anywhere else you listen.
Check it out on your way home from work to catch up on the conversations that you missed during the business day.
And on the weekend, check it out for a complete wrap-up of your business week.
That's the Bloomberg Business Week Daily Podcast. I'm Carol Masser.
And I'm Tim Stanivek. Subscribe today wherever you get your podcasts.
News when you want it with Bloomberg News Now. I'm Karen Moscow, and we have breaking economic news crossing the Bloomberg. Applications for U.S. unemployment benefits fell last week to one of the lowest levels this year, accentuating volatility in the data during the holiday season. Initial claims decreased by 16,000 to 199,000 in the week ending December 27th. Continuing claims, a proxy for the number of people receiving benefits, decreased to 1.87 million in the previous week. And we got reaction with Claudia Sahm, chief economist at New Century Advisors.
We're not seeing signs of deterioration in the labor market. Like, the layoffs have not picked up in a way that was the downside risk that the Fed has been very acute to. And we haven't seen that. So we're not seeing the bad news story. Frankly, we still need to see some good news in the labor market. So the claims don't get at the piece that's really been sticky, and that's that the hiring rate has been quite low.
And that's Claudia Sahm of New Century Advisors. And futures, they trim their losses following that report. S&P, Dow, NASDAQ futures are all now down less than 0.1%. While they're ringing in the new year around the world, Auckland rang in 2026 with a downtown fireworks display launched from New Zealand's tallest structure, Sky Tower, making it the first major city to greet the new year. It was followed by Sydney, Australia. And that's how it sounded in Sydney just after midnight. Closer to home, Times Square will feature a patriotic crystal ball and a second confetti drop as part of the celebration in New York. Meanwhile, forecasters in Southern California now say there's a near 100% chance of rain during the upcoming Rose Parade. But Lisa Duderian of the Pasadena Police Department says that won't change their plans.
We're not going to let a little rain dampen our spirits. You know, people are out here visiting from many other states.
The 137th annual Rose Parade gets underway tomorrow morning in Pasadena ahead of the New Year's Day Rose Bowl game. China's People's Liberation Army said today that it successfully completed 2 days of military exercises in the waters off Taiwan. That concludes a set of high-powered maneuvers aimed at asserting its sovereignty over the island. The actions are adding to tensions in East Asia in the final days of the year. President Xi Jinping highlighted China's achievements in artificial intelligence as well as the chip industry in a triumphant New Year's Eve speech as he called for more confidence in the country's development path in the year ahead. The speech was Xi's most upbeat New Year's Eve address in recent years, and it came after his government overcame a multitude of challenges to underscore China's status as a rising global superpower. Zohran Mamdani will become mayor of New York City as the clock ticks over into 2026, but the celebrations are set to last through New Year's Day. The Democrats' team is planning 2 separate swearing-in ceremonies tomorrow. Wendy Schiller, political science professor at Brown University, was asked about what Mamdani's swearing-in means for the Democratic Party heading into next year's midterms.
It changes politics if the sort of Mamdani enthusiasm and the organizational capacity to get young people to get out the vote, to actually get out the vote and vote themselves, if the Democrats can harness that, they're going to do, really well across the board. I'm talking governor's races, I'm talking House, Senate. They're going to do really well in 2026, but that's a big ask. Not everybody is a Mamdani, so how do you motivate people across the country? Just saw that special election in Iowa. It's the 3rd seat the Democrats have picked up in Iowa. They have a relatively strong candidate running for governor on the Democratic side. So can the Democrats harness the energy to translate it into votes?
And that's Wendy Schiller at Brown University. Speaking of that holiday week special election in Iowa, Democrat Renee Hardman was elected to the Iowa State Senate, denying Republicans' bid to reclaim 2/3 control of the chamber. COVID-era subsidies that helped Americans pay for Obamacare health plans will expire today, and this results in more than 20 million Americans paying higher premiums next month. Democrats have tried to extend the support beyond today's deadline, but Republicans have balked, citing the cost of some $350 billion over the next decade. Terry Haynes, founder of Pangea Policy, says this will be a big issue in next year's midterms.
I think what you're likely to see is a situation where, as you point out, subsidies expire starting tomorrow, but you will see a lot of effort in the winter, maybe even into the spring, to the battle between trying to keep the subsidies in place versus replacing the subsidies with some sort of alternative tax-favored account, whether it be an HSA, whether it be a health freedom account, as the president has talked about.
And that's Terry Haynes of Pangea Policy. Let's turn to the markets now, where 2025 has been another profitable one for the bulls. Stocks are ending a 3rd year of double-digit gains. In fact, global stocks are poised for their biggest annual gain in 6 years, and this is despite a lackluster end to the year here in the U.S. And we get more with Bloomberg's Valerie Teitel.
We haven't really seen this crazy Santa rally that sometimes we see in the last few trading days of December. The VIX has fallen back, but look, there is going to be some pretty interesting trading days in January. We do have non-farm payrolls next Friday. The Tuesday after that is CPI. And given the fact that we had these Fed minutes that clearly showed that the December decision to cut rates was finely balanced. There was a statement in the minutes yesterday that essentially said those that did support lowering the policy rate essentially could have supported keeping rates unchanged. It was a finely balanced decision. So it all might be back down to the data and whether this labor market continues to soften.
And that's Bloomberg's Valerie Teitel. Gold and silver are falling on the last trading day of the year, though both remain on track for the biggest annual gain in 4 decades as a banner year for precious metals draws to a close. Again, futures are pretty much little change this morning, with S&P down, NASDAQ futures all down less than 0.1%. 10-year Treasury yield at 4.14%. Spot silver is down 5.25%, and COMEX gold is also lower, down 0.9%. That's news when you want it with Bloomberg News Now. I'm Karen Moscow, and this is Bloomberg.
Market is applying some discipline. I'm Barry
Ritholtz, inviting you to join me for the Masters in Business podcast. Every week, we bring you fascinating conversation.
People were not applying any prudence at all, like in 2006, for example. So if people are reacting harshly to aggressive, possibly risk indicating activities, yes, that's a healthy sign. And this market seems healthier than the 2000 market to me.
How concerned are you that we get a Federal Reserve that's more accommodative for a variety of reasons that leads to even more risk-taking? This idea that not only did the Fed cut rates, indicated more rate cuts, but also is adding to its balance sheet in a way that could potentially prop up demand.
Well, I was thinking about this when I was waiting to see you today. Most of the people listening to this program, including me and you, are interested in the free markets. And we think free markets should set the prices of things. And the Fed manipulations are a form of price controls. They control the price of money. And if the Fed puts money artificially cheap, then it induces behavior like risk-taking. It forces people into riskier activities because the returns on safe activities are so low. It tends to reinforce the view that there's a Fed put, that if there's a problem, the Fed will solve it, and that contributes to risky behavior. These are all bad things. And, I believe that the Fed should be passive most of the time and only come to the rescue if the market is, if the economy is seriously overheated and tending towards hyperinflation, or seriously underactive and not creating jobs. I don't think that's the case right now. I don't think there's and you can see in the divided open market committee that there's a difference of opinion. So I don't think that action on the part of the Fed is compelling right now. And, there are people who think that rates should be a lot lower than they are today. I just don't see the merit in that.
Right now, going forward, I remember back in 2015, 2016, 2017, when rates were incredibly low, you were saying people just need to lower their expectations for returns.
Right.
Because ultimately, you have to look at the risk-free rate, and you don't want to reach too much at a time where people are greedy.
Right.
Where are we right now in terms of what types of returns people ought to expect based on the current income rates?
Well, the lower base interest rates are, everything scales off that. So, the Fed funds rate at 3.5 is below history. These are not high rates. They're only high relative to the last 15 years. But this is a low rate. So everything scales off that. Most things will give moderate returns. In the debt area, I think prospective returns are moderate, okay. Not lush, but not inadequate. The trouble is that the S&P, based on its PE ratio relative to history, appears to be priced to provide a very low prospective return. Historically, if you bought at this PE ratio, your return over the next 10 years averaged in the very low single digits. So I think we're in a moderate return scenario. The problem is that how do you get a high return in a moderate return scenario? And most people's resort is to take a lot more risk. And that's something I don't like to do, other than when it's compelling.
You had a personal note, an addendum at the end, and we led off with that idea of what artificial intelligence and machine learning will do to the labor market. It's something clearly on the Fed's mind, clearly on investors' mind. You're talking about concerns that there is going to be cannibalization from human jobs. How do you see this playing out? How are you kind of grappling with this when you look at investments, when you look at fiscal deficit, when you look at the backdrop for the financial system?
Well, look, Lisa, here I'm not talking about investing or economics. I'm talking about society. And it's very worrying to me. And, I've gotten some very nice response from people I respect to the memo. And one of them said he thinks we've seen this in response to the Internet over the last 25 years. But it has not raised unemployment because the Internet eliminated white-collar jobs that were replaced by blue-collar jobs, like, people who pick stuff in warehouses and send it out in e-commerce. So the job count is not down, but job quality is down. And I think that this is very worrisome. And as I said in the addendum, when we lost jobs to automation and offshoring, I think that coincided with the opiate epidemic, and not only in amount, but also in location. And I think it's a natural consequence of people sitting around all day. And even if we can find a way to replace their income, I worry about purposelessness. And, we get so much from our jobs other than a paycheck. And you can't replace that stuff.
Wise words from Oaktree Capital Management co-chair Howard Marks. I could listen to him all day. Such deep thinking at a time when everybody is banking on the artificial intelligence trade and wondering what it's actually going to do going forward.
Yeah, I think first of all, I could listen to him all day as well. And he's an incredibly smart man who says some really prescient things. I think in terms of artificial intelligence, for me, when I try and link it back to the market, the most interesting thing will be how damaging it is to software companies. And, venture capital tends to invest very heavily in software companies because of the model. It's much easier for them to predict out revenue streams. But a lot of those companies will have lunch eaten by AI, because why would you buy a pre-programmed package when you can program it yourself?
Yeah. Meanwhile, up next, we're going to be talking about the resilient traveler.
Demand has been resilient. Right, every time there's cold water poured on the environment, it seems like travelers want to come back.
More from the conversation with American Airlines CEO Robert Isom coming up. This is Bloomberg. A bit of softness this morning that does deepen, particularly at the Russell 2000 ahead of the open. A little bit of a bid into treasuries. I guess people trying to reassess ahead of 2026. Under surveillance this morning, the resilient traveler. Airlines are in the midst of a record-breaking holiday season. Sat down with American Airlines CEO Robert Isom, and we asked him about consumer demand. Take a listen.
You'll see us open up more secondary cities in Europe. You'll just see us do more flying into the hubs of some of our partner carriers. And international will probably outgrow what we do from a domestic perspective, but the two are connected. And, I'm really pleased with our domestic operation. We're going to always have the best domestic network. And, you go back, a number of years and domestic, outperformed international. And we're going to be ready for domestic doing well and international doing well, premium doing well, and really pleased with where we're at.
You've been working on upgrading the entire fleet, and that's something that's been really important for you, especially as you get some of these premium offerings in place. How much have some of the slowdowns, supply chain issues at Boeing and Airbus hampered that ability to really retrofit some of the fleet?
Well, where we stand today, we have the youngest fleet in the industry. We made a tremendous investment from about 2014 to about 2020. And we brought on well over $30 billion of new aircraft. So we have the youngest fleet in the business right now. But on top of new deliveries that we're taking, we don't have any retirements planned. So we're reconfiguring our 777-300s and our 777-200s. We're putting flagship suites on those. Even domestically, we're doing work on our 320s and 319s. But we still depend on new deliveries. And from that perspective, we have a lot of dependence on Airbus to deliver the 321 XLRs, Boeing to continue to deliver the MAX 8s, and hopefully be ready to deliver the MAX 10s that we have on order in 2028. Right now, my only push to the OEMs is deliver on time, deliver a quality product, stick to it. Before you ramp up, let's make sure we can do what you're on the books to deliver now.
Just taking a step back, in the airline industry more broadly, there's been this huge focus on the supreme product, the luxury product. And I wonder what you see in terms of bookings next year, whether it really is the premium product that's continuing to lead and the robustness that you see there while other things fall off. Is it bifurcated in terms of the bookings and the demand, or do you see a wholesale sort of rejuvenation in the interest in travel and ability to spend and pay the prices that actually are there?
Well, I'll just start with this. Demand has been resilient. right? Every time there's cold water poured on the environment, it seems like, travelers want to come back, as evidenced by, bookings for the holiday season and as we take a look into the first quarter of next year. I have confidence, though, that, overall people want to travel. And in people wanting to travel, I also think that, whether you're more economy focused and budget minded or your premium services, everybody wants more. Everybody wants better control. Everybody wants more comfort. So I don't think that there is going to be any going back in terms of offering product at any level of the spectrum of offerings. But for us, as we go forward, you'll see us with our lie flat seat offering. That's going to grow by 50% over the next few years. Premium seating, 20% over the next few years. Whether you're a business traveler who've always wanted, more of that, comfort and ease of touch, or you're a leisure traveler, there's much more of a demand to really have a better experience.
That was American Airlines CEO Robert Isom earlier this month. And joining us over the weekend has been a number of people who could not get where they wanted to do. Airlines ran into some challenges over the weekend as winter weather led to cancellation of more than 1,500 flights. Savi Sith of Raymond James was delayed. She is now on the phone. She did write, though, earlier, we estimated each canceled flight typically costs airlines $40,000 to $65,000 in lost revenue and incremental costs. Savi, who was on one of those canceled flights, joins us now by phone. Savi, is this typical of the winter season? Is this something that is surmountable given the difficulties that airlines have had so far this year?
Hey, good morning, Lisa. Yes, doing some deep research here in Detroit, but this is typical. We always kind of plan for winter disruptions. The nice thing about winter, at least, is that you see it coming and you can plan a little bit ahead. But there's always disruptions. I think the good news is if you look at how the cancellations are going, most airlines are recovering fairly well. It doesn't help travelers that are stranded or get their travels delayed, but airlines are recovering fairly well, and that's good news. And you're not seeing any meltdown so far.
So how bad is it this year compared to last year and the year before? And how do you factor that into your earnings estimates?
Yeah, so this year it's interesting. There are some airlines like JetBlue that are seeing kind of fairly elevated levels of cancellations and higher than last year. Delta more recently with this weekend weather hit in the Northeast and the Midwest is starting to see a little bit of pickup, and so slightly up year over year. But there's interesting ones like American that's actually seeing fewer cancellations this year than last year. So it really does vary across airlines. And for the most part, I think investors will look past some of these kind of weather-related events and will be focused on just how demand is holding up as we look into 1Q in 2026.
Are there airlines, Savi, that deal with it better than others? Are there airlines that make the consumer experience better than others, or are they all awful?
What I would say is this year we've seen everybody handle it fairly well. There are some airlines like Delta or Allegiant where, they do kind of compensate passengers better. But again, I think for passengers, it's less about compensation and more about how quickly they're able to recover. And unfortunately, during the holiday season, planes are packed. It's really hard to reaccommodate passengers very quickly. But again, going back to the fact that the recovery from these cancellations seem to be fairly quick, that's a good sign for travelers, and we're seeing it across the board for most of the U.S. airlines. So it's a good sign overall.
Savi Sith, we wish you luck getting to where you need to go. Savi Sith of Raymond James, thank you so much. It is usually a pretty miserable experience, certainly if you ever get canceled. Have you ever gotten canceled?
Yeah, but travel in general. I mean, if you're flying in luggage class, it's horrible, no matter which airline you're on.
Well, if you want to make it more fun, add some young children. That's what I've heard. Yes. I think that always makes it a lot more fun. Coming up next hour, we've got Jay Pulaski of TTPW Advisory, Dana Telsey of Telsey Advisory Group, and Veronica Clark of Citigroup as we do look ahead to Fed meeting minutes as well as jobless claims. From New York, this is Bloomberg Surveillance. Good morning.
next year you have the hallmarks of a potentially pretty exciting year.
Balanced portfolios make a lot of sense heading into 2026.
Setting this up for a year where you're going to see a lot of churning, but have moderate returns.
We see a huge amount of appreciation across the AI names. There's a question of which ones and how long can that run for.
Respect the trend, but don't ignore the risks as we go into 2026.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Good morning. Welcome back to Bloomberg Surveillance. Stocks marching toward new records, but stalling out just a bit. Although traders are betting on stimulus and growth in 2026, prices of gold and silver dipping after parabolic rallies. Copper, meanwhile, surging on real-world demand and a focus on the consumer during the shopping and traveling season, with economists looking to January for a cleaner read on economic growth. Matt Miller in the hot seat alongside me. And Matt, it does seem like people are looking to get a cleaner read in January. Nonetheless, we do get some signs today from the meeting minutes coming out tomorrow, as well as jobless claims on Wednesday.
Yeah, I mean, we'll get a little bit now, and jobless claims, I'm going to say they'll be between 210 and 230,000. But no, we've had such messy data, right? The inflation data I find difficult to believe, although maybe I'm wrong. The growth data also was incredibly strong, and but very backward looking. So we need more.
And it seems like right now a lot of people are counting on the Fed, as well as potentially the one big beautiful bill and the stimulus checks that people get in the form of tax breaks come early next year, to really fuel this rally and needing it to broaden out. Because right now what we have seen so far in 2025 is something of a repeat from what we've seen over the past couple of years, which is the dominance of tech names. Starting to shift, though, the narrative just slightly around the edges.
Yeah, you're starting to see a slowdown in, although still incredible growth, Mag 7 earnings, and a little bit of catch-up, hopefully, for the S&P 493.
Yeah, at the same time, you're wondering how much this is a debasement trade, how much this is just the real world, how much the precious metals are giving a sign, or whether this is simply just an aspect of this particular rally and is one of the new hotspots. Right now, you're seeing copper join that rally, up almost 2% in pre-market trading. It had been up almost 6%. It just raises this question, especially as you see stocks off by about 0.25%. You see a bid into bonds. Is this a haven trade? Is this a talk about some sort of reacceleration of industrials? I mean, a lot of question marks around this one.
Yeah, there are, and it's also going to be very light trading. I mean, you and I are at work, but many people are not this week.
No way.
And then you tend to see some swings or moves that don't necessarily make a lot of sense. I have faith that Santa will come.
Oh, is that right? You're still waiting for Santa?
Yes.
Okay.
I mean,
2026?
We've had a couple of good days last week, and we could have some good days this week. I think because there are so many bulls in this market, we've got to be up by January 3rd.
You heard it here first from Matt Miller, who's still waiting for Santa Claus. Coming up this hour, we've got Jay Pulaski of TPW Advisory, with stocks trading near all-time highs. Danny Telsey of Telsey Advisory Group breaking down the retail sector, and Veronica Clark of Citigroup expecting unemployment to tick up in December, and we get those numbers in January. We begin with this hour with stocks edging lower, with precious metals turning rather volatile. As Matt was saying, not a lot of people out there, so maybe that's part of the issue. Jay Pulaski of TPW Advisory writing, we think next year might be the year where the downside of a smaller U.S. trade deficit manifests in a weaker U.S. dollar. A weak dollar should support commodities. Jay joins us now. Jay, thank you so much for being with us. Happy holidays. Let's start with that. I think it's a really important point, this idea that what we're seeing in commodities has to do more maybe with the dollar than it does with some sort of broad-based industrial demand. Can you explain?
Thanks, Lisa, and great to be with you and Matt. And I wasn't planning on working until I got the invite to come on and be with you folks this morning. So I agree with you, Matt. But to your point, Lisa, I think people have kind of abandoned the idea that the tariffs would have a big impact on markets. And so I think it could be a surprise when we think of risks for next year, because we are pretty constructive. When we think of risks, we worry about higher inflation driven by the fact that we have to restock now fully tariffed goods. And then the idea that we have a smaller U.S. trade deficit, which leads to less money being available to come back into the U.S. from foreigners and buy U.S. treasuries, which could suggests that maybe we have further backup in long rates. And the combination of those two things, I think, is what could challenge equities at some point in U.S. equities in particular, at some point in 2026, namely rates going to a level on the long end that worry growth investors and put a cap on the upside of U.S. equities.
Why haven't we seen this so far, Jay? I mean, this is something that people have been talking about all year, that what we've seen in the metals space really is a debasement trade of the U.S. dollar, and yet we've seen the best returns for U.S. Treasuries going back to 2017. Can you square that circle?
Yeah, I mean, Treasuries, okay, they've had the best year since 2017, but they're up about 6%. So we don't really pay much attention to that. We believe that commodities have a real valid reason for their performance over the past year, and we think that performance is going to continue. And that is the fact, very simply, that digital eats the physical, right? So we all talk about AI. Without physical, without silicon, without copper, without water, without aluminum, you don't have any AI. So we have been and remain bullish on the miners. We've had a position in copper miners all year. We hold that position. We think it's going to continue to do well. And we're also very constructive about energy, particularly oil, which is a segment of the market that people don't like. So we like things that people are already invested in, as well as things that people have yet to cotton on to.
Hey, Jay, how do commodities play into equity rally expectations? I mean, if we have a continued rise in the BCOM and if oil actually gets a bid, how does that work into, the bullish forecast for equities next year?
Yeah, well, Matt, the thing that really counts for equities is earnings, right? And so for all the talk about uncertain data and questionable data, market doesn't care about that. The market cares about earnings, and earnings have been good, and earnings are forecast to continue to be good. Look, we are running the U.S. economy hot. We are stimulating in China to defeat deflation. We are stimulating in Europe to build up defenses. And so there's a lot of fiscal spending going on. We're still in a global rate cutting environment. These are the things that support commodities, and they also support emerging markets. We think 2025 is going to go into the record books as year one of the first year of a significant shift in global equity leadership away from the U.S. to the rest of the world. EM equities outperformed the S&P. They doubled the S&P. They're up 32% year to date. And for the first time in my memory, really going back to the beginning of the EM age, EM have better fundamentals, better macro fundamentals than DM. They have better growth, lower inflation, lower debt levels. And so we think, and by the way, expected to have better earnings growth than the U.S., both in 2026 and in 2027. So we think we are at the early stages of a significant multi-year period of EM and non-U.S. equity outperformance. We pair that with the commodity side. We're deeply underweight fixed income, and that's really been the setup for us for about 18 months. It's worked out well, and we think it's going to continue to work out well. We are at the beginning of big moves in EM equity and commodities. So you like EM. What about EU? Because it's been shocking to see the gains, even in local currency, right? The DAX up 22, 23%. The IBEX in Madrid up like 50%. And if you're a dollar investor, it's been even better. Does that continue? Because I don't really see the drivers there. Well, we've talked about European banks on this show for many, many times. Banks, Lisa yes. knows for sure. And EUFN is up 60% year to date, massively outperforming U.S. banks. And guess what? The top 7 European banks traded a 60% discount by market cap to the top 7 U.S. banks. Again, just an illustration of how much room we have to go. The U.S. outperformed for 15 years. And so there's just massive gaps in terms of valuation, in terms of relative upside. And for the first time, Europe is actually doing things, because we're making them in the U.S. under this administration, doing things to control their own fate. And you talk about how the European markets have done. Here's a really interesting stat. For a euro-based investor, The S&P is up less than 3% this year. Okay. And this is why we think that the flow into U.S. assets is going to start to reverse. People talk about U.S. exceptionalism. We think it's coming to an end. As I said, EM has better fundamentals. And so there's an opportunity, we think, in Europe and in Japan. But our preference is where we're most heavily overweighted is in emerging markets, both in China, very bullish China. And again, Lisa knows we've been bullish all year, massively outperformed the S&P. And we're very bullish Latin America, and in particular, Brazil. We think Brazil is setting up to have a major rate cutting cycle, and we like Latin America quite a bit.
Yeah, Jay, I was going to ask you about China, since I know you have been bullish all year and you have done well with that particular trade. How much is this a tactical trade, and how much is this a structural trade where you think that China is essentially going to win the AI war?
Yes, all of the above, Lisa. We think there's really three reasons to be constructive on China. The first is that China's fighting to defeat deflation. And as it succeeds, and we think it will, that's going to be very constructive for corporate earnings growth. The second is that we think there's a rapprochement going on between the U.S. and China under this administration. We wrote our whole monthly about it up on Substack. Trump embraces the tripolar world. And so that rapprochement, when Trump visits China in the spring, we think will include a signal for U.S. investors to buy Chinese equities. And for the most part, U.S. investors have not, particularly institutional, have not been active in China equities since the first Trump term. And then the third and most important is what you brought up about AI. We think very simply that China's lead in electricity and generating electric power and its open source AI is a combination that's going to be more successful globally than the U.S. combination of fossil fuels and closed source AI. We really think it's the quantity of electrons are more important than the quality of semiconductor chips. And this is, again, why we think Chinese tech is so compelling. It trades at about a 50% discount to the U.S. It's completely owning the China tech stack. China has made the decision, in large part because the U.S. has forced it to make the decision, that it's going to develop its own tech stack. It's well on its way to doing so. Yeah. And the open source model allows China to embed AI into the physical. So it's called embodied AI. It's the digital AI plus the physical robotics, and it's leading to autonomy and the focus on autonomous vehicles and autonomous systems. And that's where we think the real story is going to be in 2026 and 2027. And China is way ahead of the U.S. on this front.
Jay Pulaski, thank you so much for being with us and for taking a break of your break to join us. Jay Pulaski of TPW Advisory. We appreciate you joining us. Right now, let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Yahaira Anand. Yahaira.
Hi, Lisa. Israeli Prime Minister Benjamin Netanyahu meeting with U.S. President Donald Trump at Mar-a-Lago today to discuss issues in the Middle East, including Gaza and Iran. The meeting comes as tensions between the two leaders have increased, with Trump having previously warned Israel against taking actions that could undermine his peace efforts, and Netanyahu facing political pressure at home to take a tough stance on Gaza and Hamas. Meanwhile, Chip Wilson, the founder of Lululemon, is launching a proxy fight to remake the company's board. The Wall Street Journal reporting Wilson has nominated 3 director candidates. Wilson reportedly does not believe Lululemon shareholders will trust any CEO picked by the current board and is aiming to change the board before executive decisions are made. And a winter storm is sweeping across the U.S. with a mixture of snow, ice rain, and strong winds. The National Weather Service warning of whiteout conditions and even possible blizzard conditions in the upper Midwest. The storm is expected to produce freezing rain in New England, thunderstorms across the eastern U.S. and south, and widespread strong winds over the next 48 hours. Stay home if you can. That's your Bloomberg Brief. Lisa?
Sounds like a lot of fun. Thank you so much, Yahira. Up next, the morning calls, plus Dana Telsey of Telsey Advisory Group with what to watch for in the retail sector next year. This is Bloomberg Surveillance.
It really is a show me story in 2026 as to whether or not the equal weight S&P 500 can deliver on what are some pretty high expectations for earnings growth next year. A lot is riding on this idea of EPS delivering. And of course, that will be a show me story as we move through the year to see if there is upside to those numbers or if yet again we'll be in an environment where Mag 7 gets revised higher and equal weight gets revised lower.
That was Cameron Dawson of New Edge Wealth as everyone looks to that broadening out trade right now in markets on the margins. I guess that the Russell 2000 is performing less badly, but not really. It still has clawed down to meet up with the S&P lower by about 0.25%, dragged down as the session grows older. The NASDAQ lower by almost 0.5% in early market trading. Time now for the morning calls. First up, Stifel reiterating its buy on NVIDIA, believing its deal with Grok can extend AI infrastructure leadership. Next up, JP Morgan lowering its price target on KB Home to $50, expecting a weak fiscal return next year. Those shares lower by about 0.1%. And finally, Truist lowering its target on Vail Resorts to $234, highlighting a lack of snowfall at its Colorado and Utah resorts. Those shares up by about 0.1%. The snow hit the East Coast this year, not the West Coast for everybody who traveled out there for wonderful moguls and such. Let's stick with the consumer as focus shifts toward the new year. Dana Telsey of Telsey Advisory Group writing, heading into 2026, we expect events, higher tax refunds, and more accommodative interest rates to drive a continued recovery in discretionary spending, especially among younger consumers. Dana joins us now in person. Thank you so much for being here.
Thank you for having me.
It's wonderful to get your insights as we all look at our gifts from the holidays, decide which ones we need to return. What's your read on how well this season really did perform for retailers broadly across the sphere?
I think holiday season was solid. I think those increases, 3.9, 4.2%, very much in line with expectations. These 10 days after Christmas are very important too, whether for returns, for gift card redemptions, all very important to see what it looks like. But the product newness drove demand, and with the K-shaped economy that we have, you're definitely seeing at the higher end and the lower end looking for value. And that's where you saw some of the traffic, whether it's the Walmarts, whether it's the TJXs. They were there. The last 10 days before Christmas, as always, is where you got the real bump up in terms of top line.
I'm fascinated by the bifurcation between Walmart and Target because I had seen them previously in kind of the same box, but Walmart has done so well this year and Target has disappointed. Why?
I think overall what you've seen from Walmart and Target store standards have fallen. You haven't seen the same innovation and product newness. You haven't seen the same forward momentum of movement, particularly with technology, where Walmart is anticipating what the customer needs. And they really have modernized their whole store format. The Walmart of today is not the Walmart of 5 or even 10 years ago.
If we see a K-shaped economy, do we get Dollar Tree, these Family Dollar kind of discount stores doing well? Because if I look at the stock performance, I don't see Dollar Tree taking off.
I think overall you will see those dollar stores perform. Keep in mind that in 2025, the focus on tariffs, who imports goods from China, was impactful certainly to the dollar stores, and now lapping tariffs should be a benefit to them over time. Who you saw as share gainers, it was all the off-pricers. I mean, whether it was Burlington, Ross Stores, or TJ Maxx, with the diversification of the assortment that they have, they captured customers.
What's fascinating to me is you're talking about how this was a solid holiday season, and yet we're talking about a bankruptcy potentially at the end of this month of one of the biggest retailers, of Saks Fifth Avenue, which faces more than $100 billion of a debt payment. A lot of people are wondering whether that will actually happen. Can you square this story? The idea that we're talking about robust sales, a steady consumer, albeit picky or choosy or whatever you want to say, at the same time that we could see a bankruptcy of one of the biggest retailers out there?
Well, when you think of who's gaining share from that, you look at the new brands that both Bloomingdale's and Nordstrom are putting on their shelves, stocking in their stores. They're gaining share. Just across the street on 59th Street, Bloomingdale's just opened a new extension to their 4th floor with newer brands, whether it's Victoria Beckham, whether it's Valentino, Totem. They have a whole new assortment of goods out there that, frankly, perhaps if not for this change, you would not see those brands in Bloomingdale's. And you're seeing it in Bloomingdale's and in Nordstrom.
How much is this a pattern that you expect to be repeated? That we're going to see wholesale bankruptcies of some retailers that are not keeping up with the new product, while others, I'm thinking of Walmart or I'm thinking of Bloomingdale's, continue to gain share. It's sort of the big get bigger, can invest in technology, and you see wholesale bankruptcies on the other side.
Financial leverage is very important in order to keep the operations of a retailer running smoothly. You get into trouble with financial leverage, that's an issue. It always takes a lot to kill a retailer. They don't just die overnight. Take a look, for example, at Blockbuster from many years ago. And certainly we'll have to see what happens with that debt payment of Saks that's coming due very shortly. But certainly when one is weak, others can gain strength. And that's what you're seeing in Bloomingdale's and Nordstrom.
We talk about Bloomingdale's. Obviously, it's a great store. It's an iconic department store across the street here. But it's owned by Macy's. Mm-hmm. And that stock is down 30% this year. Mm-hmm. What's Macy's doing wrong that its Bloomingdale's is doing right?
I think overall, the bold new chapter strategy that the CEO of Macy's, Tony Spring, has put in place, they're making advancements, and you're seeing some change in Macy's also. You look this year at Macy's and what they've done, whether it's backstage with the off-price in their assortment, whether it's what they're doing with luxury, whether it's what they're doing with their own brands, and frankly, the store experience. The investments that they've made into the top 125, 150 stores is outperforming the core. And I think you're going to continue to see the assessment of the footprint of Macy's continue to be architected towards their best performing stores over time.
So you like Macy's? I mean, is this a buying opportunity then, this dip?
I think Macy's is an opportunity. I think when you think about next year and you frankly think about the enhancements that they've made to assortment, both in Macy's and Bloomingdale's, it's not expensive for where it is. And you look at the landscape of department stores that are public companies, it's Macy's, Kohl's, and Dillard's. Macy's has an opportunity on valuation to move higher.
Dana, do you think that early next year we're going to see pretty big price increases across the board for retail goods?
You're going to see more price increases coming, but keep in mind this innovation and newness that we have, you don't have a comparative. So we'll have to see what those prices look like. Consumers are cautious and discerning, but they'll buy what they don't have.
Dana Telsey, wonderful to see you. Thank you so much for being with us today. Happy New Year. Dana Telsey of Telsey Advisory Group. And just want to bring this to you. Evidently, Digital Bridge Group shares have been halted due to news pending. And Matt, this comes with the reports that potentially SoftBank is in discussions to buy this company.
Yeah, that's right. Bloomberg News reporting, according to people familiar, that we could get an announcement as soon as this morning. A more than $7 billion purchase from SoftBank. Of course, that's almost exactly what Masayoshi Son got when he sold his NVIDIA stake. So he said he cried tears at that loss, but now I guess he'll find some joy in buying Digital Bridge, which, interestingly enough, this used to be Colony Capital, right? This was Tom Barrick's shop, taken over by Mark Ganzi after Tom bought Mark's business.
More on that coming up. Tears of sadness turning into tears of joy, as Matt poetically put it. Coming up, legendary investor and Berkshire Hathaway CEO Warren Buffett is retiring at the end of the year. We'll take a look back at how he changed investing forever. From New York, this is Bloomberg. Well, a soggy day. I know that Matt is hoping for Santa to come back and steal the day. Right now, not happening. What we are seeing is a little bit of softness, down 0.3% now on S&P futures, grinding lower as the session grows older and bringing along the Russell 2000 as well as the NASDAQ. Although the day is young and there aren't that many people at work, as Matt Miller has mentioned also several times. Euro gaining just a touch, or losing just a touch versus the dollar. The dollar gaining a little bit, 117.63. A bit into bonds, although less than earlier, down 1 basis point for 1.2 for 12% when you round up. And copper now up more than 2% after a rip-roaring rally. Focus very much on deals this morning. 1 hour away from the cash open, Guy Johnson has some really interesting morning movers. Guy, over to you.
Really interesting. Father Christmas definitely coming, Lisa, for Digital Bridge Group's shareholders. Looks like the stock is now halted. Looks like we are going to get some news this morning. This was on a report that we heard earlier about the fact that there was advanced talks between SoftBank and Digital Bridge, which is a private equity company based out of New York, based out of Boca, based out of LA. It does data centers. As Matt was saying a little bit earlier on, remember that SoftBank sold out of NVIDIA to fund these kinds of acquisitions. We're now starting to see evidence of that. And the stock is up really strongly. Halted, as I say. We'll wait for that news maybe to come out a little bit later on in the morning. But the stock's certainly popping on the back of that. For one group of shareholders, Santa Claus is still very much in action. Let's talk about some of the other metals. You were mentioning copper just a moment ago, Lisa. Let's talk about silver. We've talked about some of the silver stocks. Look, I think you're going to see some volatility around some of these names. This is Majestic, First Majestic Silver. You're getting this in other stocks as well this morning. You're getting in some of the gold names too. The stock is down by 4.3. What you've had is a big move up in silver. We're now down, let's call it circa 5% on silver this morning. It looks like the correlation between obviously what is happening in the physical market and what is happening in terms of the movers in some of these stocks is pretty well aligned. And you're getting a big drop this morning in some of these silver stocks, some of the gold names, some of these stories represented around the world. And as it is the season for stretchy pants, I thought we'd finish with Lululemon. Chip Wilson, the founder of Lululemon, launching a proxy fight. He wants to get a few seats on the board. He's looking for 3, I think. This is a Wall Street Journal story that's been reported in the last few minutes. The stock's not moving much on the back of it. We're down by around 0.2%. But after Christmas, Lululemon feels like an appropriate stock, maybe, that we should be looking at. Lisa, back to you.
Guy, thank you so much, although some would argue that stretchy pants are always in fashion, that maybe they should be used for other purposes as well. Meanwhile, I did want to mention this because as Guy was talking, we did get some breaking news that Digital Group will be acquired by SoftBank for $4 billion. This is a 15% premium from where it closed on December 26th. Digital Bridge will continue to be separately managed and will operate as a separately managed company. They are going to be bought for $16 per share in cash. This according to a statement, and we will wait for those shares to start trading once again, but largely expected, Matt. As we were reporting, Bloomberg reported, speaking to people familiar with the matter, this was the plan, possibly with that cash that Masayoshi Son got from selling his NVIDIA shares.
Yeah, that's right. He got, I just went back and looked, $5.83 billion for selling his shares in NVIDIA. He said that he actually cried when he made that sale. And now he's going to use almost all of that money for Digital Bridge. Although it's interesting, Digital Bridge shares in the pre-market were up at 1.54%. So this 15% premium is going to be a disappointment to some of the speculators that were active in the pre-market this morning.
Well, we will check back when the shares are resumed trading once more. In the meantime, we wanted to take a look back at one of the most legendary investors. Berkshire Hathaway CEO Warren Buffett is retiring at the end of this year. Here's how the Oracle of Omaha changed investing forever and what's next for the company he built.
If investors had a Hall of Fame, Warren Buffett would occupy his own wing.
People from all over the planet look up to him, read his biography, hop on a plane to go see him talk.
He took a failing textile mill and turned it into a $1 trillion conglomerate. It has insurance companies, Dairy Queen, railroads, and energy businesses.
For decades, Buffett's investment savvy has led Berkshire Hathaway to beat benchmarks.
One of the biggest asset managers today, which is Vanguard, the entire philosophy is no one's really going to be able to beat the market, so you might as well not even try. Well, okay, no one besides Warren Buffett.
If you look at the total returns, Berkshire blows the S&P 500 away.
The legendary investor Warren Buffett.
So when the 95-year-old announced he would retire at the end of 2025,
Greg should become the chief executive officer of the company.
It marked the end of an era at Berkshire Hathaway and left everyone with one massive question. Warren Buffett is one of the richest people on Earth. But his lifestyle doesn't exactly scream it.
He lives in Omaha. He lives in the same house he's lived for many, many years.
Holiday sausage muffin with...
He goes to McDonald's in Omaha. A lot of people around the city know him.
He's paid just $100K and has been paid that amount for years. That's very refreshing when you think about the landscape today.
So what's the backstory? Well, Buffett's childhood fascination with money led him to Columbia Business School, where he studied under a renowned educator.
Benjamin Graham was a financial analyst considered to be the father of value investing.
Value investing is really this idea that you're not just betting on some fluke in the market. You're really looking at what you think it's worth versus what the value that the market is providing. Ideally, you want to buy a company that you think is undervalued and that it's going to rise in many years. But that requires a lot of due diligence. That requires you to make sure you actually understand how the business works.
I'm not buying them because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now.
Investment after investment, that strategy came to define Berkshire Hathaway. But let's see it in action by focusing on just one.
American Express is an investment that he's had for decades, and when he bought it, the stock price was a bit down because of a scandal at the time, but he saw the value of Americans that kept swiping the Amex all over the place.
That was back in the 1960s. But look at this. Berkshire's current Amex holding was largely assembled here in the 1990s for about $1.3 billion. Since then, Buffett's largely left that core stake intact. But Amex's market value has soared in the years since, making his 22% holding worth tens of billions of dollars.
He was interested because the company has a good moat. By moat, he means some competitive advantage against other companies in the business.
For Amex, that moat is a mix of its premium brand, affluent cardholders, and a network built around their spending power.
Another kind of edge you can have over your competitors is regulation.
Think about the energy business. A lot of those have advantages that a competitor couldn't come in and easily take the market share. That's really helped his business sustain itself. He's built up companies that are not so easy to replicate.
But perhaps the most underappreciated force behind Berkshire's rise is its insurance business.
They're not always the companies that are going to draw the hype from stockholders, but it's actually been a force that's built up Berkshire a lot.
The insurance business provides us with float, and float is money that we hold that doesn't belong to us.
The way it works is it has a very large insurance arm that has a lot of money from policyholders. They have to invest it to reap some benefits and make sure that they can pay claims afterwards. Berkshire Hathaway has been ramping that up to the max, buying a lot of insurance companies and using that money, the float, to invest afterwards.
This is actually one of the hottest plays in the investment world right now, with a lot of private equity and alternative asset managers either buying or having relationships with insurers.
While Buffett has been the face of Berkshire Hathaway, he long had a sidekick. Both conveniently available as lovingly hand-rendered plushies.
Charlie Munger passed away in 2023, but the dynamic he had with Buffett for many years was one of the main draws of Berkshire. They were a unique pair. If you saw them sitting together at the Berkshire annual meeting, they would banter.
I predict Charlie's going to talk about Costco. Go ahead, Charlie.
Well, Costco, of course, is a...
Munger was fundamental to Buffett's investing thesis. At the start of his career, Buffett was very into this idea of cigar butt investing, in which you would take a company, you'd take one last puff, and you'd get what you could out of it before it sort of faltered. And Charlie was one who really reshaped his thinking into thinking about companies that had a longer term advantage.
He went from buying companies that were, not very famous, like Berkshire Hathaway, a textile mill that was struggling, to taking stakes into Coca-Cola or Bank of America.
Not that this approach is always a sure thing.
One is IBM, when he bought a stake in the early 2010. He said afterwards that it was a big mistake. He didn't see how IBM was about to lose the turn of the industry towards cloud computing.
He also orchestrated the merger of Kraft and Heinz about 10 years ago.
It just hasn't gone to plan. Part of that is down to changing consumer tastes, consumers wanting healthier things. Part of that is down to inflation. And Buffett commented recently that while he didn't think the merger in hindsight was a great idea, he doesn't think that undoing it is going to fix the company's problems.
And lately, Buffett has struggled finding companies he wants to invest in, leaving Berkshire with a record amount of cash.
It is so much easier to make very successful bets when you're managing 100 million, 200 million. He's now got a cash pile that's more than $300 billion.
And finding a place to put that capital to work is getting really difficult. He doesn't like to have money that is sitting around and not earning more money.
Higher interest rates these past few years have turned that cash pile into a nice income generator.
But it is going to get harder and harder to deploy that level of capital the bigger it gets.
So this is the Berkshire Hathaway Greg Abel is inheriting as the company's new CEO. Although sadly, we don't have a plushie of him.
He led Berkshire's energy business for so many years. But it is tricky. Warren Buffett has not only been a very good investor, but he's also pretty charismatic. That's part of the reason that so many investors have always made that trek to Omaha despite the cost, despite the distance.
Abel will also be taking charge at a time when Buffett's hallmark strategy is being tested.
It is tough to be a value investor when what's really lifting the stock market is high-growth companies. The tech company's valuation might be really high compared to sort of what the underlying assets are. While Buffett has bet on technology in recent years, his misses on those opportunities will always sort of linger.
The change in leadership also risks reviving a long-standing debate.
A conglomerate is not a thing that has stuck around. We've seen many conglomerates, such as GE, fall apart in recent years and sort of be split up.
Buffett's presence at Berkshire won't be disappearing overnight.
He'll remain as chairman, and I think his influence will still be felt by the company. He's a major shareholder of the firm, and while he's slowly divesting that stake and giving it to his children's foundations, I think his legacy will long be felt.
But Abel will be taking over many of his duties, including the writing of Berkshire's annual letter to shareholders.
This is a big change because Buffett fans have been poring over that letter over the years because it's full of witticisms, investment advice, pearls of wisdom. There's also the fact that he's not going to be taking Q&A at the annual meeting next May in Omaha.
Morning. Welcome to Berkshire Hathaway.
He was talking for 4 to 5 hours every year and taking questions from people that follow him all over the planet. That is going to be a big change because Buffett's personality is unmatched in the investment world.
Shares of Berkshire Hathaway are up nearly 10% as Warren Buffett wraps up his final year as CEO of the company. Let's get you an update on stories elsewhere this morning. Here is your Bloomberg Brief with Yahira Anand. She'll be there in just 1 second as we parse through the breaking news of what just happened with Digital Bridge. Let's head over to Yahira right now.
Hi, Lisa. We start with Ukrainian President Volodymyr Zelensky saying he asked President Trump for U.S. security guarantees lasting as long as 50 years. Zelensky spoke to reporters after the two leaders met in Florida yesterday. Current proposals outline a 15-year security term with the possibility for extension. President Donald Trump says Ukraine and Russia are, quote, closer than ever before to a peace deal. Meanwhile, 2 helicopters crashed mid-air in New Jersey over the weekend. 1 person was killed and another was critically injured, according to authorities. The FAA saying the helicopters crashed moments after taking off from the Hamilton Municipal Airport. The FAA and NTSB are investigating the collision. And in sports, the New England Patriots have clinched the AFC East after a 5-touchdown performance from Drake May, edging out the Buffalo Bills, who lost to the Eagles. Elsewhere, the 49ers beat the Bears in a thrilling matchup among the NFC's top teams, with the number 1 seed still up for grabs. And the Pittsburgh Steelers and Baltimore Ravens will face off in a winner-take-all game next week for the division title after Pittsburgh lost to Cleveland 13-6. That's your Bloomberg Brief. Lisa.
Thank you so much, Yahira. Up next, setting you up for the day ahead. Plus, Veronica Clark of Citigroup expecting the unemployment rate to tick up in December. From New York, this is Bloomberg Surveillance.
In my mind, there's too much fascination with the Fed. We're a country that's driven by the private sector. The idea that we are like hanging on the thread by the Fed moving rates 25 basis points, it seems to me we've gotten out of whack. They're a lender of last resort. They're there to stabilize markets and price. But other than that, you shouldn't know they exist, quite frankly.
So you don't worry about all this, hand-wringing of political interference with the Fed once that new position is.
The market will punish people if we don't have an independent Fed, and everybody knows that.
Is Bank of America CEO Brian Moynihan over the weekend. Right now, it seems like the market is just softening, looking for that Santa Claus rally. Heading into year-end, just about 1% away from that 7,000 mark. What you are seeing softness in S&P futures. You are seeing a bit of a continued sell-off in small caps. Russell 2000 down 0.4% after being flat just a couple hours ago. NASDAQ down 0.7%. In the bond space, 2s, 10s, and 30s. You are seeing a bid across the board, including in the 30-year space, which hasn't seen love this year, stayed around the same level going back to earlier. Right now, we're seeing 2-year yields at 3.47% rounded up. That is down from 4.23% at the start of this year. I do want to just mention DigitalBridge. SoftBank has agreed to acquire the firm for $4 billion. It is a 15% premium to the close on December 26th. Those shares had been up, as Matt was mentioning, more than 50%. Now they are up about 10%. They have resumed trading. We will get you an update on that in a bit. Counting down to the opening bell, here's your trading diary for the week ahead. At 1 p.m. Eastern, President Donald Trump meeting with Israeli Prime Minister Benjamin Netanyahu. Tuesday, ADP employment data, Fed meeting minutes. Maybe we'll get some read on the January meeting. And on Wednesday, we get jobless claims. Thursday, everyone is off. Turning to some of the data we'll get to kick off the new year. Veronica Clark of Citi writing, we continue to expect another slight increase in the unemployment rate to 4.7% in December. Veronica joins us now. Veronica, thank you so much for being here.
Thanks for having me.
Happy holidays.
Happy
I'm just
holidays.
wondering from your perspective how much the data that we got earlier this month was actually valid and that people are discounting it too much.
Yeah, I think there's a lot of that going on. And if we saw the unemployment rate next Friday, the first week back to work, if we saw that at something like 4.7, I think people will believe it a lot more because, there's a lot of issues with the November, October data. We don't know how much the government shutdown affected the measurement of those months. But December should be relatively clean. And if it stays pretty high, I think that's a more concerning sign for people.
How come this labor market is weak? I don't get it because you've got incredible earnings growth, right? So corporate America is doing very well, and there are no new people coming into this country, right? There's no immigration. The demographics trend, like everyone's old. There are no young people. Like it should be companies are fighting for employees.
Yeah. I mean, there's been this, issue of, is it labor supply? Is it labor demand? We've been dealing with this for a couple years now. Back in 2024, when we saw the unemployment rate increase, the excuse was also it's more immigration. I don't think we can use immigration to explain the bad different sides of immigration to explain bad data. But I think what's happened is that labor demand has just weakened more than labor supply. And that's why you've seen the unemployment rate rising. It's this low hiring, still low firing dynamic. But I would be worried that low hiring can only last for so long before maybe you do see some layoffs.
So is that because technology and AI have made the few employees that companies hold on to more productive?
I'm a little hesitant to conclude that that's what's happening now. That might be part of the story, absolutely. And we could see larger productivity gains from AI longer run. But this really started a couple years ago. This really started maybe summer of 2023 when we saw this pullback in hiring. And I do worry that it started in more rate-sensitive sectors like manufacturing, small businesses. The pullback has really been there. And so, it doesn't necessarily matter if equities are doing well and earnings are fine. Small businesses are going to be more rate-sensitive.
Aren't we bringing manufacturing back? I thought we were bringing manufacturing back, right?
We have been losing manufacturing jobs, I think, every month
So
this
no.
year. But
Yeah.
that predates this year also, and
Yeah.
it is a rate-sensitive sector.
Well, this sort of speaks to the question of, is the Fed restrictive? And this is the big debate. Restrictive for who? Because on one hand, you do see companies filing for bankruptcy at the fastest clip going back to 2020. On the flip side, you see AI companies screaming ahead, Digital Bridge being purchased for $4 billion at a 15% premium. So can you square that?
Yeah, I mean, there's this bifurcation across all parts of the economy. I think there's a lot, that has already been said about the K-shaped economy for consumers. Higher income consumers are spending, but we definitely see that in sectors also. And the smaller businesses who are more rate sensitive, I think rates are restrictive here.
So you expect a significant number of rate cuts. Let's just postulate that we do see an increase further in the unemployment rate to 4.7% as you expect. What does that mean for January 28th?
Yeah, I think they're going to be cutting.
Really?
Yeah, so we are penciling in another cut in January, another one in March. And it's just this kind of idea that you've clearly gotten more concerned on the labor market side of your mandate if the unemployment rate is something like 4.7 that we think we'll see in December. We will have hopefully more inflation data by March that we trust again, early 2026 data. If you're seeing inflation slowing and data that you believe again, and you're less concerned on the inflation side of the mandate, you're more concerned on employment, why wouldn't you be at the midpoint of neutral, which would be cuts in January and March to get you there?
The counter argument is if you get rate cuts, potentially 2 by the end of March, at the same time that you have the one big beautiful bill, the tax refunds, and potentially an additional $2,000 stimulus or whatever else might be coming down the pike, don't you risk reigniting inflation that never died?
Yeah, I'm not so concerned about that right now. The inflation driven by lower rates, more stimulative monetary policy, you would expect to see it first in a sector like housing, and you definitely don't see that yet. You don't see those signs yet. Home prices have been slowing. New rents have been slowing a lot. We already know that in the inflation data, there's this lag issue of shelter inflation. That's going to, I think, be slowing all of next year. All of the potential fiscal stimulus, maybe larger tax refunds, the business tax incentives that were part of the bill from the summer, those can help support growth. But I would worry that the main determinant of if people are spending or not is if they have a job and what their labor income is. And that we have seen slowing already. And you would think consumption would slow then too.
Veronica Clark, thank you so much for being
Thank you.
here and for holding down the fort for the economics team at Citigroup. Veronica Clark of Citigroup Global Markets. It is going to be interesting next year on January 8th, I believe, when we start to get the December data that people think is actually the clean data, how much it gut checks or confirms what we've already seen.
Yeah, I'm looking forward. I'm actually excited to get CPI because the last reading we got included some zeros from October. I'm not an economist, so I don't get why they did that. But it feels to me like we're still looking at inflation that's 50% above the Fed's 2% target. I haven't experienced the $2.82 gas prices that we keep hearing about.
Well, maybe you need to travel out west to Iowa or somewhere where there is a low gas price. What we are going to be speaking about tomorrow, we do get some ADP numbers as well as, of course, the meeting minutes from the last Fed meeting. We'll be speaking with Kayla Sater of State Street, Mark Cabana of Bank of America Securities, Dana Doria of Investnet, and Chris Maher of Ocean First Financial from New York. This was Bloomberg Surveillance. Good morning.
ओके गाइस क्रूड ऑयल में हाफ प्रॉफिट बुक कर लेना ट्रेल द एसएल रिमेनिंग क्वांटिटी का पीके सॉरी जी क्रूड ऑयल में क्या बताना इन्वेंट्री आ चुकी है इन्वेंट्री का कुछ खास इंपैक्ट होगा नहीं वैसे भी आज लो वॉल्यूम है सो एक्सपेक्ट नहीं है ज़्यादा कुछ खास इंपैक्ट होगा देखोगे तो 3 इन्वेंट्री आती है एक नहीं आती है सॉरी गैस की इन्वेंट्री भी है ध्यान रखना 10:30. क्रूड ऑयल इन्वेंट्रीज बेरिश फॉर क्रूड ऑयल प्राइस। क्रूड ऑयल की खुद की इन्वेंट्री पॉजिटिव आई है, मतलब क्रूड ऑयल की खुद की इन्वेंट्री की वजह से प्राइस को ऊपर जाना चाहिए, बट गैसोलीन की इन्वेंट्री बेरिश आई है प्राइस के लिए, गैसोलीन की इन्वेंट्री की वजह से प्राइस को डाउन जाना चाहिए। एंड EIA का जो वीकली डिस्लाइज स्टॉक का डेटा आता है दैट इज ऑल्सो बेरिश फॉर प्राइस, इसकी वजह से प्राइस को डाउन जाना चाहिए। तो तीन में से दो इन्वेंट्री बेरिश है, एक बुलिश है, तो ओवरऑल हम कहेंगे क्रूड ऑयल इन्वेंट्री इज बेरिश फॉर क्रूड ऑयल प्राइस। क्रूड ऑयल की जो इन्वेंट्री है दैट इज बेरिश, सिर्फ इसको मत देखना, दो इन्वेंट्री और होती है, तीनों को कंबाइन करके देखते हैं। बाकी नेचुरल गैस में फिर से बाई कर सकते हैं डाउन साइड एरिया से, ठीक है।
Move up to, $34, $35 a share. We're in an interesting situation here where it's hard to tell which of these bids is really the higher value one because, of course, they're going after different assets. Netflix wants just the studio and streaming assets. Paramount wants everything. So understandable in that uncertainty that Warner's leaning towards Netflix, the much larger company. What I think is interesting about this is not so much the takeover commentary, but really what it says about the reset that's happening in the TV space, distribution shifting, monetization. Under pressure. So all this consolidation is a symptom of that pressure, not the cause of it.
What is the strategic reason that Paramount hasn't raised its offer already? I mean, when I saw that Warner Brothers was expected to reject the bid, I immediately looked to NINSS, right? No duh, they're going to reject because they haven't offered any more money just because you say Ellison's good for it and the breakup fee is a little bit higher. That's not going to move the needle. Why don't they say, okay, it's $33 a share?
Well, I think there's plenty of time here. I looked at betting markets the other day. There's a decent shot, according to them, that this drags on into 2027. So I think there's 5 or 10 new developments that we're going to get over the coming days and months, and plenty of time to potentially raise the offer.
By the way, it's interesting you bring up betting markets, and more, that's an indicator that people care about. And I wonder if it's because, does David Zaslav put down a bet? Does Larry Ellison put down a bet? Do people in the know, you think, play in these betting markets?
Well, I don't know if people in the know are playing in the betting markets, but certainly...
The thing is, Luke, you know more than everybody else about this stuff, right? So when you're looking at the betting markets... Like, why do you care what these chumps are putting down on poly markets?
It's a question of how deep that market is. Like, how representative are those betting markets?
Yeah, well, look, there's lots of moving parts in this takeover battle, regulatory issues, political connections. So, again, I don't think the story's over there.
You think people in the Trump administration would be playing on poly markets?
Crazy to think so.
So, Luke, how about this?
I'm shocked to hear that there's gambling going on in this place.
Looking at this deal, it feels like it's a nice to have for Netflix. But it's kind of a must-have for Paramount, because if Paramount doesn't get this deal, I don't know what they do. So how do you think about that? I mean, if I'm Paramount, I feel like I really got to stretch to get this deal.
Part of the problem in the whole TV space is really the economics don't work anymore. So we're at something we call the pay TV singularity. Right now in 4Q25 is when fewer than half of the households in the U.S. have a pay TV subscription. That's down from nearly 90% in 2010. And the economics just don't work anymore. Consumers want video more than they ever have. They spend more on video than they ever have. They're just doing it in a different way. Yep. And a lot of the gains aren't going to the streaming platforms of a Paramount. They're going to a Netflix or an Amazon or an Apple.
Do consumers care about, I go to the movies all the time, but I'm old, right? And that's because I want to do something with my wife where I don't have to like talk to her. Do consumers care about going to the theater? Because if Netflix wins, the worry is that we're going to see the end of the big screen business.
I mean, theater box office receipts still haven't really recovered since COVID. We haven't seen a new high yet, even though every year we expect, everyone forecasts a new high. I think part of it is that people underestimate how engaged consumers are with streaming platforms. Every time we see a price increase or a password crackdown, everyone has a discussion about, is this too much? Is this where consumers say it's too expensive? But consumers aren't trying to save money by cutting their cable subscription. They're just moving that money over. And so for a Netflix, HBO, or another combination, you know, $30, $40, $50 streaming bundles, there's plenty of runway for price increases.
What's amazing here is the value being ascribed by various players in the marketplace for the cable networks business of Warner Brothers Discovery. Those businesses used to trade at 10 and 12 times EBITDA. They're being valued today around 3 to 4 times EBITDA.
3 to 4 times EBITDA. Is that the Netflix valuation or the Paramount valuation? Again, the problem is those are pretty far apart, aren't they?
Yeah, somewhere in between. Bloomberg Intelligence Geetha values them at about $4 per share. That's about 4.5, 5 times EBITDA. Less than half of what they were, 10 years ago.
And part of the problem is the TV ad business is just in permanent structural decline. So it's this $70 billion slowly melting iceberg of value that is not recovering as much as broadcasters want to brag about their streaming ad growth. It's just cannibalizing the linear dollars. It's not growing the pie.
By the way, can you weigh in on the Trade Desk issue? We were just talking with Isabel Lee about why is Trade Desk doing so badly? It's down 70% year to date. And to my mind, that's an incredibly valuable business model, right? You want to be able to aim your ads at the correct viewers.
Yeah, we just launched a programmatic ad forecast, and it is a growing space. The problem for the Trade Desk is their take rate is really high and there's new competition, so potentially some challenges there. Not to mention the open internet, like the TV marketplace, is struggling, at least compared to big search platforms and big social media platforms.
What's the AI impact on advertising, do you guys think, these days?
We think the AI impact is not much for search.
Okay.
We don't think it erodes the search business.
Well, because I could have made an argument that's the death knell of search, but it hasn't been the case.
It hasn't been the case, and half of search comes from small businesses. They're never going to move to a ChatGPT search for years. They're going to stick with Google. It's not the death knell for social. What we're worried about is the open internet, long tail of publishers, where we think this completely undermines their business, and what they should do is they should license their content as fast and as often as possible with these AI platforms and take that money and pivot to event businesses, to subscription businesses, and move away from advertising.
What about on the provider side? My buddy Mark Douglas runs a company called Mountain, right? They got together with Ryan Reynolds on the creative side, and now they have an AI program that allows small businesses to create their own advertisement and then aim it at the right people in their region.
Yes.
It seems like it should be a slam dunk.
Small business, CTV, B2B, CTV, these are a lot of spaces that didn't really exist a few years ago, and now because of some of those AI tools, the creative barrier has dropped much lower, and everybody wants targeted advertising. Everyone wants targeted on TV, and so those are definitely some growth areas. But overall, if you zoom out to the total TV landscape,
and increasing Russia's territorial control.
Zelensky's characterizing this 20-point peace plan as 90% ready. We know the Russians wanted to make changes. What's the remaining 10%?
Sure. Well, that's what everyone is trying to figure out in terms of certainly the issue of of territory is something that people are expecting to remain for a potential leaders level meeting between President Zelensky, Trump, and Putin, or certainly seeing President Trump personally re-engaged in a personal and presential sense of meeting with his counterparts. So this certainly is a big step to be seeing him having a leaders level meeting with President Zelensky, and then of course the next thing to look for is whether there's similar interaction with Russia.
Enter Benjamin Netanyahu, set to be on his way as well to sit down with President Trump on Monday. Eric, this brings us to phase 2. What will we learn next week?
Well, Joe, what we saw last week in a press conference from Secretary Rubio was that really some of the things about the Board of Peace need to be worked out before we would see phase 2, which would include of course, the establishment of a permanent governance structure for Gaza, as well as disarmament of Hamas. And Secretary Rubio saying that we need to see this Board of Peace selected and that kind of agreed before we would see, for instance, the announcement of countries that would be participating in the International Stability Force and those that would be getting involved here to help to reach an agreement with Hamas about how they would disarm. We've always known this would be one of the hardest points of the overall 20-point plan of Trump's peace plan for Gaza, and still waiting to see how the disarmament of Hamas is accomplished, because of course now that the hostages are gone, Hamas sees their armament and their weapons as perhaps the last piece of leverage that they have. And so if the plan both calls for Hamas to not be involved in government and governance of Gaza going forward, and yet they're also giving up their weapons, that certainly is seen as as perhaps the ultimate maximum ask of Hamas in this process in terms of getting them to peaceably give up those weapons, rocket launchers, things they've used against Israel in the past.
Eric, thank you so much. Bloomberg's Eric Martin with the best backdrop on TV today. We appreciate it. I want to add the voice of Jane Harman, the former Democratic Congresswoman, who, of course, was ranking member on the Intelligence Committee. Jane, Merry Christmas. It's great to have you. Glad you could join us today. I want to just step back to this looming meeting with President Zelensky. Are we going to see a breakthrough this week, or is Lucy about to pull out the football again?
Put me down as a pessimist, Joe, and a super pessimist about the meetings with Israel. I'm a pessimist because I don't see that Putin will be satisfied with this deal. I give Zelensky enormous credit for working on it and for, it seems to me, so far as I can tell, ridding his top levels of government of corruption. I mean, that was a big blow to him. And I give the Ukrainian people even more credit for putting up with 4 years of war. They are Ukraine's strongest weapon, the Ukrainian heart. But what does Putin get out of this? Maybe, something like North Korea, South Korea with some kind of a policed border. He doesn't get much new territory. He certainly doesn't get an open door to take over Europe, which is something he might be after. And I don't see it. Mitch McConnell said that Putin has been playing Trump since January. I agree with Mitch McConnell. But the other point here is that Europe has now promised some additional aid. Imagine this, the defense bill that Congress passed, Congress did something, contains hundreds of millions of dollars of aid for Ukraine. So if Trump lets that go forward, please lets that go forward, and doesn't do any kind of stuff to our intelligence capacity that really helps Ukraine keep its, at least keep parity with Russia, this can go on longer, and maybe Russia will be worn down more. Let me talk about the Middle East for a minute, because I don't see anything going on there. Bibi Netanyahu just announced new Israeli housing in the West Bank. Now, that's not Gaza, but it is enormously provocative. He has said he will not recognize two states. And I thought a cornerstone of increased involvement or ongoing involvement by the Arab neighborhood was a path to two states. So even if there is some kind of a police force type thing, as your commentator pointed out, Hamas is not gone. Hamas won't want to be gone. And I just don't see how that gets anywhere. There, I'm a really super pessimist. All
right. So we've got two pessimistic cards here. You said that Putin's been playing President Trump since January. Is Netanyahu also playing President Trump?
I think so, yes. I think that Trump is tougher with him than former President Biden was ever able to be. And Trump has still kept his strong support from many in the pro-Israel community. But I think that Netanyahu is a hard-line conservative, would understate it, a hard-line, maybe reactionary Israeli, and hasn't budged here. He did get the good news is, and Trump helped with this enormously, got the prisoners back and got sadly the bodies of the deceased back. That's great. But I don't see Hamas willingly move out, and I don't see major efforts to improve the quality of the Palestinian leadership, such as it is. So I don't see how you put money into developing, I guess, what Trump's son-in-law wants to be some new beachfront property if there is no stability. I just don't see that moving. And one more thing, Joe. Let's remember that also in the Middle East is ISIS. We bombed ISIS, we the U.S., in Syria recently. Yeah. We're bombing ISIS now in Nigeria. But ISIS is not just a training group on the ground. ISIS is now all over the internet, radicalizing people like those in Australia and maybe some in the United States and Europe in the near future. So it seems to me, if I were President Trump, he hasn't called me lately, but if he did, I would say, please focus on this, Mr. President. It is the most imminent threat to U.S. security.
Well, you brought this up to us. Maybe it was 2 weeks ago, Jane Harman. And sure enough, the headlines on Christmas, U.S. forces striking ISIS targets in northwestern Nigeria. The president wrote on Truth Social, and he had a lot to say on Christmas on social media. Merry Christmas to all, including the dead terrorists, of which there will be many more if their slaughter of Christians continues. There have been a lot of questions about whether this slaughter of Christians is in fact taking place in countries like Nigeria or even South Africa, which the president had first brought forth in a meeting in the Oval Office with the prime minister, the president of South Africa. We've not received details on this. The military conducted multiple strikes, according to the president, but we haven't heard anything else. Jane, what are we getting into in Nigeria?
Well, I don't think we know. The government has pushed back and said there is no slaughter of Christians. I'm sure some Christians are being killed. Similarly, in South Africa, which is not to praise those governments, but it is to say that this seems to be another campaign pledge, some kind of pro-Christian white supremacy agenda, although that would be tricky in Africa. Why don't we have a strategy for our foreign policy? Why don't we focus on the real threats, the imminent threats to the United States? We've degraded a lot of our intelligence community assets in the United States, and that worries me enormously. And recent articles just talked about how Russia has been able to degrade and invade the cyber protections in Europe. So all of that leads me to believe that people are going to be radicalized on the web. ISIS has a very sophisticated use now of technology, and this is where we need to go, and this is what we need to beef up. And so these random actions around the globe, take Venezuela, if I could just rant on that for a second, nobody is defending Maduro. But nobody was defending the bad guy next door in Honduras either. He was convicted in U.S. courts, and he has now been pardoned. And the new person that Trump supported has just been elected in Honduras. Are we now doing regime change in South America? Why?
Well, let me ask you. I've only got 1 minute left, Jane, and I'm loath to cut you off. If we're striking targets on the ground in Nigeria, will Venezuela be next?
Who knows? I mean, I don't know. Trump has said he might. The sad part, let me just, in my 12 seconds, where is Congress? Where is Congress? Congress just last week defeated 2 resolutions to assert itself on party line votes. Go figure. Why did Congress come back from its long closed for business vacation? Or that's not fair, but closed for business action. Why did it come back?
Longest shutdown in history. Well, they've taken a couple swings at the ball with War Powers Acts, and they haven't gone anywhere yet, Jane. I'm delighted to talk to you. Happy New Year. Let's get back together in 2026 and see where we are. I'm Joe Matthew in Washington. This is Balance of Power, Boxing Day edition. Stay with us on Bloomberg TV and radio. It's Balance of Power on Bloomberg TV and radio, Boxing Day edition, as we dig through receipts from the shopping mall and the websites, of course. And it does seem like we are, in fact, spending even more time at the shopping mall or in the store. Bricks and mortar doing pretty well, according to some of the numbers that we saw from Visa and MasterCard coming into the holiday. Visa had total U.S. retail spending up 4.2%, beginning of November to Christmas period, a little bit below the forecasts, but found physical outlets remain dominant, accounting for more than 73% of transactions compared to 27% online. Maybe it's all the procrastinators like me who are out there on Christmas Eve running through aisles to see what was left on shelves. This, of course, all plays into politics, with the President of the United States preparing Americans to do with less in a period of time where prices remain stubbornly high. He said just recently in his speech on affordability that you may not need 37 pencils or 50-something dolls this Christmas. We may need to go with less, even as in some cases Democrats speak to the issue of abundance. How this all comes together politically for the White House is something that we talk about with Laura Davison, Bloomberg's Washington Deputy Bureau Chief, who's propping up the operation today. It's great to see you, of course, knowing that these were actually pretty decent numbers coming out of the holiday, knowing that we haven't seen an explosion in inflation based on the tariff regime, just kind of sticky prices. How do we think about the economy going into the new year and what the president predicts will be a boom?
Well, this is certainly what, Trump is out there talking about, saying, look, there was all this doom and gloom that inflation would be running wild because of the tariffs, and that hasn't, at least in the data yet, really come to pass. But what we're hearing from importers, what we're hearing from companies is, one, because of all the uncertainty with the tariffs. They were on, they were off, maybe they'll be off again. We'll hear what the Supreme Court says. In addition to just that these things take time to kind of work their way through the system, that retailers were really hesitant to raise prices. But after, we get some sort of clarity about whether these tariffs are here to stay, retailers are suddenly going to have to start incorporating that into their supply chain, into their pricing mechanisms. And that could mean these are hitting right as people are starting to vote in the primaries and the general election next year for the midterms. What
are we thinking about this? Early January, the Supreme Court? Do we know? I mean, I know you're talking to our legal team on a regular basis, and they could frankly pop up at any moment. But is that the best bet right now? That we're a couple of weeks out from maybe the most important decision of this second term.
Couple of weeks, if not, days. Stuff probably isn't going to come over this holiday week into New Year's next year, but really beyond that, it's anyone's guess. And this is, the administration is also watching closely, because they've said, look, if the Supreme Court does strike these down, we're going to pop back up with some other legal framework, legal mechanism for imposing these. But it's going to be really chaotic there for a couple weeks, if not months, as the administration works this out, and it becomes, again, sort of a legal whack-a-mole game.
Right, and then a question of refunds and all the rest that might follow. Laura, thank you so much, which sets us up perfectly for a conversation with the boss at Macy's. Tony Spring, the CEO, sat down with Romaine Bostick in advance of the holiday to talk about a lot of the trends, including store closures, the omni-channel shopping experience, and the company's own efforts to improve itself in a difficult environment. Let's listen.
It's not about improving the customer experience. So we've had record customer service scores. That's our net promoter score. Would people recommend Macy's to a friend? And we're seeing scores we've never thought possible at the brand. And that was a real focus of mine. We've improved the quality of the assortments. I thought there was way too much redundancy, way too many of the same things. And I thought the breadth of what we offer as a department store needed to improve. We need to go good, better, best, contemporary to classic, in a range of brands, things as we've talked about that are convenient, that you've heard of, that you count on, Staples, Levi's, Nike. And then at the same time, we've got to be there introducing new things that you haven't heard of, that are becoming more popular, because people are looking for that combination in a destination. We also wanted to make sure that our team was working together. So I'm a big believer that you need strategy, you need culture, you need leadership, and you need execution. We're now at the point where those four elements are coming together, and we're delivering a better experience for the consumer. But you can't kind of have one without the other. A great culture without a great business without a great culture. The combination of elements is what I sought out to do when I kind of came into the role. And I do think that, patience and determination go together. You have to have the patience to kind of lay out what you want to accomplish. You have to accept the fact that some things just don't happen because you snap your fingers. And then you have to have the determination, the ambition to kind of go after what you think is the right thing to do for the business.
A big part of your strategy, this bold new chapter, is also to shrink the footprint of Macy's. At its peak, you guys had, 700 to 800 stores. You're less than, 400 now, around 400
Around
or so
400
now.
today.
And the plan is to go down to roughly about 350. You've done a
Correct.
big remodel of some of the existing stores already, 125. How much further does that go in 2026?
We'll add more stores in 26, and we'll close some more stores in 26. And I think, as you described, it is working on both sides of the equation. Closing stores is not alone a strategy. Reimagining stores without dealing with stores that are past their prime is not complete enough of a strategy. So we want to make sure that we're doing both things. And of course, it's supported by a healthier digital business, one that is both a place of transaction and a place of discovery. We want to build relationships with the consumer. That means we have to be able to provide a better experience where they live. We think of the digital business as a channel at times. And I'm like, no, the digital business is actually a geography. The people who shop digitally in New York shop in their stores in New York, and they want to see a great experience, digitally, physically, and in between.
A little peek behind the retail curtain with Tony Spring, the CEO at Macy's, in conversation with Romaine Bostick. We've been watching Wall Street today. Retail stocks have been a bit mixed up here with not exactly a blow-the-doors-out holiday shopping season, and of course a market that was already near all-time highs as we walked into today's session. We check in on the Friday trade, the Boxing Day market, with Vonnie Quinn, Bloomberg Markets reporter, who's with us in New York. Vonnie, what are you looking at?
Well, Joe, as you can imagine, trading awfully muted today. I mean, it's surprising that we're even looking at 50% of the 30-day average for trading, but very quiet. And you could have very idiosyncratic moves tied to certain stocks if there is some news. But as you said, we're not seeing too much moves. If you look at the S&P 500, we're down about 0.1%. The Nasdaq 100 down about 0.1%. So fractional moves. That said, the S&P 500 up 18% this year, and the Nasdaq 100 is up more than 22%. Most of that, or at least a lot of that, can be attributed to the Mag 7. As a group, they're up 27% year to date, and there are a few more trading days left in the year. Let's take a look at yields, because yields-wise, the 10-year has been in a range between maybe 4.10 and 4.20 all month. We did have a strong auction Wednesday, which shows there is appetite out there for US Treasuries, but obviously the biggest potential catalyst next week, probably the update on the ADP employment change, which comes on Tuesday. Also on Tuesday, though, we get the FOMC minutes, and while they may not be market moving, it will be interesting to see just what the dissent was like behind closed doors, because we have to wait until January 29th to get another Fed meeting. And we will have a fresh non-farm payrolls report before then. We'll get the December payrolls report January 9th. Let's take a look at metals, because they're just up and away. And you can blame everything and anything for this. Industrial uses for silver, platinum, palladium, stockpiling ahead of more tariffs potentially on aluminum. Gold could be a safe haven. But off the back of that, miners are doing pretty well. So Freeport-McMoran, one of the better performers today. And then currencies-wise, we're seeing some interesting movements too. The dollar is stronger today, up about 0.1%, weaker sterling and euro. But the real one to watch is the yen, because that is 0.5% stronger today. Those yen bears are really, really in the driving seat.
A market that's up about 18% this year, with the S&P 500 putting up a record close after record close, despite all the worries coming into 2025 about tariffs. And of course, I realize that could move a bit when we get into 2026. But this turned out to be a pretty decent year, AI trade aside.
Yeah, absolutely. Now, remember, those fragilities or those question marks are still hanging over the market. So Micron reported earlier this month and just put everybody back in a good mood about the AI trade. But if you remember, Oracle had reported a couple of weeks before that, and that was a big zigzag in terms of the trading. So it does feel like there are still big questions over whether valuations are very, very stretched here. We'll know coming into the new year just how much to expect more of that narrative. NVIDIA, though, higher today on a licensing deal with a chip startup, Grok, so the deals continue. And speaking of deals, ServiceNow up today as well. It made a big deal, a $12 billion deal, has investors excited about the amount of deals it's doing in terms of growth. And that Santa Claus rally has until January 5th, Joe, so we do have some time left.
I love it. Covering the waterfront with Vonnie Quinn. It's great to spend some time with you, Vonnie. Keep your shovel outside the back door. We've got winter storm warning. It looks like snow to begin around the New York area by 4 o'clock or so. We'll update the storm coming up next.
Thanks to AI, Samsung's photo editor is much more powerful.
Generative Edit lets user reimagine surroundings, lighting, texture, and even the perspective.
The best idea comes when we think from the user point of view, not from the engineers.
Our goal was to create a powerful AI tool that lets users express their creativity safely and effortlessly.
It's always exciting.
Renewable energy is the only path to a future prosperity. Renewable energy is creating foundation for a renewable civilization. We just cannot put our civilization under limited fossil fuel resources. Renewable energy is everywhere. It's almost zero cost. It is unlimited and renewable.
It's Balance of Power on Bloomberg TV and radio. Thanks for joining us as we keep a live view on Capitol Hill now, an empty building for the most part. But there is a big to-do list there waiting for lawmakers when they return next month. Of course, having left the matter of Obamacare subsidies unresolved, not to mention funding the government at least beyond the end of January. This is something that we're watching closely. Two parallel items here, funding the government and also, by the way, dealing with the Epstein files, because the health care subsidies may not be solved as we work our way through the balance of the year. There will be a vote that was brought by a discharge petition, but outside of that, it's unclear that there will be a path forward. Something that we want to spend some time with Bloomberg's Mike Dorning talking about from our Capital Influence team. Mike, it's great to have you. I hope you had a great holiday.
Great to be here.
As we get back to things in the new year, there a lot of questions about whether we will be heading for another government shutdown. Before we get that far, though, we do have the matter of Obamacare subsidies to be addressed, as well as the Epstein files. Chuck Schumer is talking about putting up legislation here that would force the disclosure of more files here. And Tom Massey and Ro Khanna in the House want to hold the Attorney General in inherent contempt. Will either of these efforts go anywhere?
Well, I think it'll depend on what the talking about Obamacare, what the Trump administration does on the Epstein files. You'll hear this banging on the administration on the Epstein files, but they're still in the process of releasing them. Yes, they've missed the deadline. Yes, that does break the law. But if the files do come out, or enough of them come out to take some of the steam out of this, then there won't be enough Republicans that are willing to defy the president. But it's kind of a dynamic situation there. And the way to bleed some of the pressure out is just to release enough files to peel off, the rank and file Republicans from this movement.
Yeah.
On the health care, they forced the vote. That was going to be an important political vote in the House. And you will probably see the Obamacare subsidy extension pass the House as a way for some of the Republicans who are at risk of losing their elections to sort of say, we want these subsidies extended. But then that goes into the Senate, and the leadership of the Republican Party in both the House and the Senate don't want these subsidies extended. So they'll work against it unless President Trump weighs in. He could obviously tip the balance if they're feeling enough pressure to extend these subsidies.
How closely are we connecting Obamacare subsidies and a potential government shutdown, or should we not be thinking about it like that? Nobody wants to relive this whole experience after the longest shutdown in history. And Chuck Schumer has indicated that he's looking to work with John Thune. Mike, there is the risk of sleepwalking into a shutdown. How should we be thinking about this?
You've absolutely got it. The party leadership on the Democratic side does not want another shutdown, or if possible, if they have to have one as short as possible. They made their point in the last shutdown, which broke a record, and they weren't able to get the Republicans to cave on the Obamacare subsidies there. There is a dynamic within the Democratic Party, though, that there are a lot of Democrats on the younger side, on the more progressive side, that don't feel like the leadership has pressed this point hard enough and would like to see them pressing other points harder. So even though the leadership is trying to stay out of another shutdown, you're right, there is a risk that we could sleepwalk into it as the Republicans kind of refuse to go along with Obamacare subsidy extensions and things like that.
Well, this could be a fun year, I'll tell you.
Yeah, I mean,
you think about what could be produced as opposed to
high, but
yeah, okay, that's good to hear until it is, right? Well, you think about what could be produced as opposed to what could be avoided here. Mike, will we get new crypto market framework legislation? Is there anything new that lawmakers can craft in 2026?
The crypto market legislation is definitely something that's quite likely. You've got you've got Democrats and Republicans who are committee leadership that are joined on that. So you've got a fair number of Democrats that are interested in doing something on that in the Senate. You've got a lot of money in the crypto industry. They have, I think, over $250 million already in their campaign war chest to influence the upcoming congressional elections. So there's a lot of reasons to do this, and it's more likely than not that they will succeed in some way. That said, there is some opposition, both from the banking industry, they want concessions, and also from more progressive, sort of consumer-oriented Democrats that want more protections for consumers and investors.
Got it. Mike, thank you. It's great to have you with us. We're going to have a lot to chew on in the new year with Mike Dorning from our Capital Influence team here in Washington. He's got his eyes on Capitol Hill for us every day. We've got our eyes on the weather as well right now, not here in D.C. We're actually going to dodge the bullet. But if you're in New York, New Jersey, or Connecticut, it's coming. A couple hours from now, as a matter of fact, with a winter storm warning in effect and snow that's supposed to begin right around 4 p.m. Eastern. It looks so calm right now on Bloomberg TV as we check out the Manhattan skyline. Josh Saul has this covered for us from the weather department here at Bloomberg and is with us now. Josh, it's good to see you. What kind of travel interruption should we be ready for? I'm seeing reports of 8 inches coming. Is that what you expect?
Could be up to 9 inches, which will be as much as we've seen in this area since 2022 when Central Park got 9 inches. When Central Park got about 7.5 inches. What makes it especially dangerous this year, obviously one of the busiest travel periods of the entire year. It's going to stay real cold overnight, which means that all that snow and ice is not going to melt. It's going to be there on the roads, making travel more difficult for drivers. And another issue that came up in our reporting is that everyone is flights have been so bad. A lot of people more people than before have chosen to drive this year for their holiday plans. AAA says about 110 Americans on the road around this period. So the roads are crowded, a lot of people driving instead of flying. So this intense amount of snow and ice potentially making post-Christmas travel really dangerous.
Man, yeah, 9 inches in New York. I mean, you're actually, that's a shovelable snow, as they say. Are the airports ready?
Yeah, get out the sleds if you have kids. The airports are ready, but already a lot of cancellations. We've got about 1,400 cancellations across the U.S. A good chunk of those are in New York City's big 3 airports, and we're seeing cancellations, of course, even before the bad weather starts. You have to think about travel and flights that are starting long ways away, 19 hours from Singapore. Those flights are canceled so that they're not landing or arriving in New York City in the middle of a snowstorm that would make navigation difficult.
Yeah, wow. Well, I guess we'll have the weekend to clean up, but a lot of folks, of course, with holiday travel are going to be dealing with some potential interruptions here. Josh, thank you. It's great to have you with us here on Balance of Power. Josh Saul at World Headquarters in New York. We'll try to get back to Josh in our second hour as we count down to the first flakes falling. It does remind us the season that we're in here and, of course, the importance of travel when it comes to the economy. We knew that there would be a lot of folks out and about this year, and with the benefit of lower oil and gas prices, potentially a bit of a stimulant for the economy. And it's where we turn with our political panel. Joining us right now, Bloomberg Politics contributor Rick Davis, fresh off the holiday, Republican strategist and partner at Stone Court Capital. Doug Fair is with us as well, former director, the Office of Public Affairs, Democratic strategist with us here, having come from the FTC. It's great to see you both. Rick, the economy is hard to ignore coming off a holiday like we're just seeing now. I'm picking through some of the numbers. It looks like retail sales were up anywhere from high 3 to low 4%. And prices were pretty, while stubborn, consistent through the holiday shopping season. What kind of a look is this going to be as we enter the new year and the administration predicting a boom in the economy in 2026?
Yeah, some of the data is really head snapping. I mean, when you look at consumer sentiment, even this month, you haven't seen much worse consumer sentiment in a decade. It's sometimes all-time lows in the last couple of months and consistently borne in. But then you see the record stock market, the red-hot GDP numbers, decent sales figures for the holiday, and I think it's going to be a roller coaster. Even the Fed seems somewhat, head scratching when it comes to how do you balance the sort of persistent inflation with a worsening job market. So I think this is going to be a very challenging year. I hope we set records on the economy. Nothing's better for the federal deficit than a big growth rate. I'm all for it, but let's not put the goose before the gander.
Well, fair enough, Rick. And, I guess we do have some reasons to be optimistic here, Doug. We didn't see the doom and gloom scenarios that so many economists predicted. And we've got a market here. I realize we're down a little bit today, but basically at an all-time high to end 2026. How do you rationalize those two?
Well, I think it's mostly being driven by circular AI investment. And when I think about what the president promised, he said he wanted to lower costs. He wanted to increase manufacturing jobs. We're down 49,000 jobs. Tariffs are really having a huge impact on consumers, especially those outside of, the top 5 or 1% of Americans. And really what's holding up the economy is this sort of unbridled AI investment that the president is stoking through his own policies. And obviously AI is great and an incredibly innovative tool, but one wonders how much that's hiding some softness in the economy.
Yeah, well, I'll tell you, circular investing, you're going to get some attention when you use that phrase here on Bloomberg. Doug, is this AI spend looking like something less than Wall Street is hoping it is to you? What does that mean for next year?
Well, I mean, I think these companies are sort of sending money back and forth and describing, future growth and revenues that is unclear where they're going to materialize from. I also think you've seen AI start to become more unpopular with voters, and not just with voters who might be driving trucks or doing jobs that are immediately threatened, but also white collar workers who are looking up and thinking my job may be threatened by artificial intelligence. At the same time, you've seen adoption of AI programs by businesses be pretty ineffective. According to a study that was issued by MIT, some 95% haven't increased productivity all that much. So I think we're making a huge bet, both the markets and the government, frankly, on the success of AI. And, the government's already taking steps to make sure that bet won't fail, or if it does, that there'll be a bailout. Given all the money that they're throwing at it and the regulatory support. So it's a little concerning that we're so overcommitted, or maybe not overcommitted, but so committed to this particular sector.
Rick, I've just got 30 seconds in this block. Will the Supreme Court ruling on tariffs be the most important thing for the markets next year?
I think it'll be really influential because obviously what happens if they rule against the president's use of executive powers to implement these tariffs, and then how do they back that out? There are hundreds of billions of dollars at stake of government spending that has to go back to consumers. So I do think that's one of the critical aspects of this. But as we've seen, the Supreme Court.
Rick and Doug will stay with us. We'll have a lot more of our panel straight ahead on Bloomberg. Watching Wall Street here on Balance of Power in what is the final trading session of the weekend. We've only got a handful more to get our way through the year here. We had a nice pop in the early going, but we've managed to give up most of our gains here with the broad market turning south. The S&P 500 and the NASDAQ down fractionally each, down about 7 points. Vonnie Quinn is watching the markets for us here from World Headquarters in New York. Vonnie, I guess we shouldn't read too much into this on such a light volume trading day, knowing that the markets went into Christmas at all-time highs.
Literally 1 and 2 trades have disappeared, Joe. We're at about 50% of trading volume for the last 30 days. That's actually even more than you might have expected on a day like today, particularly with a holiday on a Thursday. That said, we're trading close to records, and nobody is that disappointed, I think, because there were so many question marks over whether there was a bubble in AI, whether the circular financing would pose a problem, whether these SPVs that some of these companies are using to hold debt off balance sheets, whether that would become a problem. All those worries have been set aside. So the S&P 500, it might be down 0.1% right now, but we are trading at close to records, and we're up 18% on the year on that index. As for the NASDAQ 100, we're up more than 22% on that index, even if today it is flat. Plenty happening under the surface as well. Let's look at yields, because those are potentially a mover next year as well. Right now, we're range bound between 410 and 420 on the 10-year. We are waiting on fresh non-farm payrolls data, though. That comes January 9th. That's going to be the next big catalyst, although we do get an ADP employment change report next Tuesday. And we also get the Fed minutes next Tuesday, which will be interesting just in terms of personality, consensus, how consensus can be drawn, how many dissents and how strong the dissents were. We'll get more details into all of that. And of course, early in the new year, we'll get a name for the new Fed chair nominee, and that may have an impact on this market as well. But let's take a look at metals, because that's a fascinating story. Here we have gold, silver and platinum all at records. I mean, they've just been going up all year long. Silver has been going up almost twice as much as gold. It's up 150% year to date. Gold, for its part, up 70%. Now, you could credit escalating geopolitical tensions, but we have oil lower today. Surprise, surprise, down 1.9% on the potential for perhaps some kind of Ukraine détente. So back to those metals, you can basically credit everything from central bank buying for gold to industrial uses and stockpiling ahead of tariffs for some of the other metals, and just general speculation as well, according to a lot of traders. And then if we take a look at the dollar, we have seen dollar weakness. Today we're slightly stronger. Some sterling weakness giving up some of that strength we've seen over the last few days, euro as well, but particularly the yen. It's another 0.5% weaker today. We've had 2 rounds of verbal intervention on the yen, don't forget. So the Bank of Japan is going to be watching that very, very closely. The Bank of Japan having turned hawkish and just really might be in trouble into the new year if bears continue to keep hold over the yen.
Pretty amazing. You talk about the metals here, to see the gold and Bitcoin charts put over each other here. You've got gold up another 1.5% today. We're above $4,500 an ounce. And when you think what we saw with Bitcoin going into the president arriving at the White House, it's down about 530 right now, trading just above $87,000 for a token. It's just role reversal with these two, isn't it?
Exactly. And in fact, Bitcoin down on the year unusually, although we are at higher levels than we were before, as you say, the president went into office. I think for Bitcoin, some of the catalysts might come next year with maybe, more legislation around the Genius Act. Will stable coins get more regulated and so on? But also the fact that Bitcoin had been trading as a risk asset, but now it's sort of dropped off as a risk asset, whereas gold had always been trading as a safe haven. It is really quite amazing how the two have diverged, having really moved together for so long, as you say.
Isn't that the truth, Vonnie? Thank you so much. We'll get back with Vonnie Quinn a little bit later on here on Balance of Power as we watch Wall Street on a quiet day here, the day after Christmas, and only a few sessions left next week. So the numbers that Vonnie was talking about are going to likely be pretty close to where we end the year, with a NASDAQ up about 22%, and S&P 500 up about 18%. Little movement today as we watch here. We want to bring the panel back in following a pretty wild 24-hour period for Donald Trump on social media. He was very busy there at Mar-a-Lago with a number of posts. In fact, too many that I could even count. I mean, it was dozens. Rick Davis and Doug Fair are back with us. Doug, I don't know if you managed to read some of these, but they included several Christmas messages. And coming from Donald Trump, I guess they might not be that much of a surprise, but just sometimes you need to just kind of reset your clock here and remind yourself that this is the President of the United States. In this case, Merry Christmas to all, including the many sleazebags who loved Jeffrey Epstein. This is a long post. Gave him bundles of money, went to his island, attended his parties, and thought he was the greatest guy on earth, only to drop him like a dog when things got too hot, falsely claiming they had nothing to do with him, didn't know him, said he was a disgusting person, and then blame, of course, President Donald J. Trump, who actually was the only one who did drop Epstein. Doug, I read all the way to the bottom here, and it says, enjoy what may be your last Merry Christmas, President Donald J. Trump. What does that mean? Granted, the spirit of this message is sarcastic, but to predict your last Merry Christmas is pretty heavy coming from the commander-in-chief, isn't it? Is he talking to Democrats?
You know, I hesitate to want to get in the head of the president. I did, unfortunately, read a lot of his Truth Social posts over this Christmas period. You know, I thought we were saying Merry Christmas again. That was sort of one of his campaign promises. Now it's our last Merry Christmas. I don't know who he's threatening it with those messages. But what I will say, zooming out, is, you know, every accusation is a confession. And across the millions of documents that are going to be released by the Department of Justice and already have been, clearly the president had a very, very close personal relationship with Jeffrey Epstein that included sort of friendly poems that they traded back and forth and other sort of inside jokes. And so I'll be interested to see what we find out from these document releases. But certainly the president may be trying to soften the ground for some bad news that may come out of that demonstrates his relationship with Jeffrey Epstein in ways that are both politically kind of questionable and also morally ambiguous. So I'll be watching to see.
There's another Christmas message. This one came earlier in the day. Merry Christmas to all, including the radical left scum that is doing everything possible to destroy our country, but are failing badly. He says we no longer have open borders, men and women's sports, transgender for everyone, or weak law enforcement. What we do have is a record stock market and 401ks. Rick Davis is back with us. Rick, is this president moving the line, actually changing what's considered acceptable decorum for the commander-in-chief, or does all of this belong to Donald J. Trump and will eventually go away with Donald J. Trump?
Well, I don't think you can look at it in a vacuum. There's no question that his first term entered in a new era of dialogue for an American president. Kind of took the wheels off, and we saw some of that reoccur during the Biden administration, not to the extent or the degree of which it did, but you know, I think he's really accelerated it this second term, and I think a lot of these things we are seeing, especially during this holiday period, is a real shot to his base. You know, there's no question that he had a bad last quarter of 2025, and especially as it relates to Republicans who are peeling off of him because of his stewardship of the economy or entanglement into these foreign military adventures. And so my guess is everyone got together at Mar-a-Lago. You know, they brought in the Christmas cheer and reminded him that without his base, you know, he can't get anything done in Washington, and that he better get on it. So I see this nothing more than a sort of, you know, crass political effort to try and, you know, solidify his base. And hopefully that's all it is, because we'd hate to see this kind of conduct or rhetoric continue on, you know, year after year.
Yeah, pretty amazing. It was more than 100 posts on Truth Social, Doug, in the early hours of Christmas, targeting former presidents Joe Biden and Barack Obama, Marjorie Taylor Greene, Ilhan Omar, Senator Mark Kelly, Somalis in Minnesota, Michigan's Secretary of State, Democrats in California, and rhinos by name Tom Massey. We've only got a minute left. Doug, we talk about what might come after Donald Trump, and in fact, it seems to be J.D. Vance based on some of the endorsements that we've heard about recently. Does MAGA continue with this kind of language in another politician, or does this belong to Donald Trump?
You know, what President Trump's always been effective at doing is rhetorically keeping MAGA on sides. And you can see that excellent point that Rick made, that they are really leaning into throwing red meat to the base. But it's sort of like that old expression, who are you going to believe, me or your lying eyes, right? I mean, on foreign policy, we've bombed this year Iran, Iraq, Nigeria, Somalia, Syria, Yemen, the Caribbean, and the Pacific, right? Lethal strikes. And he wants a peace prize. On prices, he wants to. He says he wants to lower prices on day one, but prices are through the roof. So I think what we're seeing is a rhetorical attempt to keep him on side, and I don't think that Vance will be able to do that.
Doug Farrer and Rick Davis will be back in our second hour here on Balance of Power. Hope you are too. Stay with us on Bloomberg TV and radio.
This is Balance of Power, live from Washington, D.C.
Could there be a breakthrough on Ukraine? Welcome to the Friday edition of Balance of Power as President Zelensky prepares to travel to Florida to meet with President Trump at Mar-a-Lago before this weekend is out to talk peace, of course, with a 20-point peace plan on the table. We're going to get the latest on this in just a moment from Bloomberg's Laura Davison with insights from former ambassador to Ukraine, John Herbst. We'll check the markets a little bit later on with Vonnie Quinn as things turn south on us today. We'll have analysis from our political panel. Rick Davis and Doug Farrer are with us for the hour. As far as the markets go, we have given up an early lead. No major losses, but the S&P 500 is down about 5 points in the remaining hours of trading, tipping slightly lower. The Nasdaq is down 2, and the Dow Industrial Average is off about 92 points. Bitcoin slightly lower as well, down about $600, still above $87,000 a token, and gold is pushing ever higher, up $65 now. $45.45 an ounce, and a record-setting run for gold. We are seeing some bid under NVIDIA as well. It's up a little more than 1%, $2.50 on this new licensing deal with Grok, and we're mixed up in the retail space following news on holiday shopping. Visa says total U.S. retail sales up a little more than 4%. MasterCard in the high threes, 3.9%. And we'll have further details on how holiday spending panned out in the days ahead, of course, that could help to fulfill a little bit more of a Santa Claus rally before this year is over. We'll find out together. As we keep the beat on geopolitics and some important developments over the Christmas holiday that you might just now be hearing about, including U.S. strikes against Nigeria, striking ISIS targets in Nigeria. And now, of course, this potential meeting that sounds like, well, I should say potential breakthrough. It sounds like a real meeting. President Zelensky will be at Mar-a-Lago on Sunday to meet with President Trump. And we cover all of this with Laura Davison, Bloomberg Washington Deputy Bureau Chief, who's with us now in our Washington Bureau. Laura, let's start with Nigeria and what was behind this. The president, the administration has been talking about attacks against Christians in Nigeria. Is there any evidence that this has been an issue, and who did we target?
So the targets were these Islamic State sites in Nigeria, in the northern part of the country. Trump, for several weeks and really months now, has been talking about persecution of Christians, attacks on Christians in the country, and that Islamic State is particularly targeting them. The Nigerian government has pushed back strongly on the notion that Christians in particular are being persecuted, saying this is, that yes, terrorism is a problem, but that both Muslims and Christians are being affected here. And the Nigerian government actually worked in concert with the U.S. government in these strikes and are working for more strikes to come, as we heard from the Defense Secretary Pete Hegseth. Okay, so ISIS then remains a problem for Nigeria, but the attacks on Christians is where they draw the line. Is that fair to say? Yes, yeah. So they're united in sort of the actions, the military actions that are being taken, but the motivation behind them is where the U.S. and Nigerians are singing from different songbooks. Yeah, multiple strikes. The president said we don't have a readout on exactly what was targeted, how many aircraft were involved, et cetera, from the Pentagon? Correct. We have very few details on exactly what the sites are, that, who may have been killed, the number of sites, and, what weapons were used, et cetera. So that's all very cloudy. Really, all we have is essentially a tweet, a social media post from the president saying this happened. Really something. I don't know what we're going to hear about Ukraine this weekend, Laura, but it's pretty important. It looks like Volodymyr Zelensky will be in Florida to sit down with President Trump at Mar-a-Lago. Trump has said, unless there's an agreement at hand, unless there's a deal here, he has no reason to meet with Zelensky. Does that mean we're on the verge of a breakthrough? It would certainly suggest that there's some forward momentum. What we heard from even Zelensky, a couple days ago was that he was not optimistic for a deal. He said it didn't sound like the Russians wanted to negotiate, and that there had been all of these, these talks between U.S. officials and Ukrainian officials and U.S. officials and Russian officials, and just it seemed like we're at a stalemate. There was no progress being made. Something must have changed over the past couple days, and now Zelensky's headed to the U.S. So it's not clear from the Russian side that they are really, open to negotiating, open to this deal. they are still wanting some of these land territories that, that Ukraine still controls.
Amazing stuff, Laura. Thank you very much. Laura Davison will likely be editing stories about that visit come the end of the weekend, so it's something that we'll keep a close eye on. And we want to add the voice of John Herbst, the former U.S. ambassador to Ukraine and Uzbekistan, is with us right now on Bloomberg TV and radio. Mr. Ambassador, it's great to see you. Will President Zelensky be walking into the lion's den here in Mar-a-Lago, or a room where he could, in fact, strike a peace deal?
Joe, thanks for having me on. It does seem that there has been substantial progress in negotiations between the United States and Ukraine, which is not surprising because Zelensky has said yes to 5 or 6 Trump proposals for ending the fighting, whereas Putin has rejected every single one of those. What's not clear is what the Russians are up to.
Well, that's been a big question all along. And as Mitch McConnell has said not that long ago, Putin's been playing President Trump since January. Do you see that being the case, or could he, in fact, be about to turn position on this as well?
We've seen Trump in the nearly 11 months, actually it is over 11 months now since he's returned to the White House, take periods where he's been very tough on Zelensky, and then periods when he's been moderately tough, only moderately tough on Putin. And since he put the sanctions on Rosneft and Lukoil, which was sometime in middle of October, he began to put pressure on Zelensky, and that's continued. But Zelensky, while conceding some things, has also stood tough on others. And what seems to have happened in the last few days is Zelensky's agreement to perhaps hand over, not to the Russians, but to a demilitarized economic zone, areas in western Donbass which are strategically valuable, which the Russian army has been unable to take. But he's insisted, and this is new, and the U.S. seems to have agreed, that Russia must pull back equally from the areas that it controls in Donbass. And what Zelensky has insisted on, it seems that the U.S. has agreed, that there has to be serious military forces. So we're not talking about peacekeepers from the global south in that area to prevent future Russian aggression. And what Trump seems to have conceded on, too, which Zelensky has long sought, are clear guarantees, security guarantees from the United States ratified by the Senate. And now, according to what's in the media, which we can't be certain is accurate, but if it is accurate, it's interesting, the U.S. side has seemed to agree. So we've seen some serious movement by both Ukraine and the United States in the past week or so. Again, what we have not seen is any indication of Moscow's willingness to compromise.
What you mentioned what could happen in the Donbass, and I realize that could take on a couple of different forms. Is a demilitarized zone off the table at this point?
Well, it seems that the demilitarized zone is very much on the table. But the Russians had insisted, and still have not changed its position. Ukraine gives to them territory the Russian army has been unable to take, and the Russians do give nothing back in return in Donbass. What Zelensky has insisted, and apparently the United States has agreed, is if Ukrainian forces are moving back in western Donbass, the Russian forces have to move back at least a comparable amount, and as to keep that as a demilitarized territory. So that's a serious concession. And again, if the U.S. has agreed there have to be troops, serious troops, in that area, in that demilitarized zone, international troops, to prevent further Russian aggression, that would seem to be another element of compromise from Team Trump.
All right, so you sit down at Mar-a-Lago and talk peace. Does that mean that Vladimir Putin also needs to sit down with President Trump? Will they get back to this idea of meeting in Hungary?
Well, I don't know where they'll meet, but I assume if Zelensky and Trump are satisfied after their meeting, then there'll be some form of reach out to the Kremlin. Now, according to the media, Kirill Dmitriev, who's the Putin envoy, was in Florida this past week. And so he apparently has reported back on roughly the terms that have been reached between the U.S. and Ukraine. And the Russian reaction has been interesting. They haven't rejected it. They've praised Trump's efforts to achieve peace. And they said they're willing to continue to negotiate. But things Putin said as recently as a week ago would not allow the sorts of ideas that Zelensky and Trump seem to be agreeing on to be accepted by the Kremlin. But again, we'll see. Putin has been meticulous about trying to avoid annoying Trump, albeit without conceding one little bit. At some point, he may not be able to do the two things together.
To what extent is President Zelensky trying to head off the constant communication between Steve Witkoff and Moscow, whether he's talking to Putin or his lieutenants? Is that why he needs to get to Florida right now?
Well, I think that the plan that was given to Zelensky by the Secretary of the Army Driscoll in the middle of November was far too favorable to the aggressor, to Putin, and reflecting, I think, Kremlin influence on parts of the Trump team. But that was corrected, within a few days when Rubio met with the Ukrainians in Geneva. Rubio and Witkoff met with the Ukrainians in Geneva. And since then, we've seen a back and forth of ideas. And we've seen Ukraine being willing to compromise, but not to make fatal mistakes, like simply giving Ukraine highly strategic land in Western Donbass without security guarantees, without any requirements from the Kremlin to actually make peace. And again, the deal that has been emerging, again, we only have some of the details, we don't have enough, suggests that the United States has taken account of this. And this reflects, again, Ukraine's ability, Zelensky's ability to advocate for their positions and Team Trump's willingness to listen to them. And that's a good thing.
Really fascinating. What does China make of all of this? What is President Xi watching in Ukraine?
Well, Xi is watching intently American policy in this war. He doesn't want Russia to lose. And by lose, I mean Russia not being able to take effective political control of Ukraine, which is why Xi has provided significant support to Putin, albeit trying to avoid American red lines, like by sending weapon systems to Russia. But he wants he wants to see America allow Putin to win in Ukraine, because that would be a sign of great weakness, which Xi would, you might say, interpret as meaning he has a free hand to go after Taiwan.
We are spending some time with former ambassador to Ukraine and Uzbekistan, John Herbst, ahead of this meeting at Mar-a-Lago on Sunday between President Zelensky and Donald Trump. Trump said he would end this war on his first day, Ambassador. Is there a chance he ends it in his first year?
No. The only way this will end is if Putin understands the United States is determined, that Trump is determined to achieve his stated goal of a durable peace. Not a peace which enables Putin to come back from war of Ukraine in 6 months or 12 months or 36 months. But the only way to do that is to make it extremely painful for Putin to continue. Because for Putin to have effective political control of Ukraine, he has to take a great deal more of Ukrainian territory, including Kyiv and Dnipro and Odessa, which means a lot more fighting. The only way that Putin understands he cannot achieve those objectives is if Trump puts serious pressure on him in three forms. One, greater sanctions, more of what Trump did in October, meaning the sanctions on Lukoil and Rosneft, two major Russian oil firms. Two, major weapons supplies to Ukraine. Under Trump's view, it doesn't have to be paid for by the American taxpayer, but the Ukrainians and the Europeans will pay for it. Three, the United States should work with our European allies at making sure the $300 billion, roughly, of frozen Russian state assets in the international financial system go to Ukraine. One of the bad proposals that was presented to Zelensky in the middle of November, reflecting undue Russian influence, was that Ukraine would get $100 billion of those assets, and the U.S. and Russia would get the majority of those assets. That was not a good look. That suggested to Putin that the Trump team was not going to be tough.
With the potential of much more fighting ahead, former Ambassador John Herbst, we thank you for the insights, and I hope you had a great holiday. Happy New Year. Thanks for joining us on Bloomberg. I'm Joe Matthew in Washington. We'll assemble our panel a bit later on this hour. Much more to follow on Bloomberg TV and radio. Thanks for joining us on Balance of Power. I'm Joe Matthew in Washington. This day after Christmas on Bloomberg TV and radio, we're watching stocks lose a bit of ground And bit being the key word there, the S&P 500, which finished Christmas Eve at an all-time closing high, is down just about 5 points right now. The NASDAQ is losing 3. We'll check in with Bloomberg's Vonnie Quinn for a bit more here on the Friday trade and holiday light volume as we consider the recent conversation that Bloomberg Wall Street Week David Weston had with the boss at Bank of America, CEO Brian Moynihan. Let's listen.
The AI investment's been building during the year and is probably a bigger contributor next year and the years beyond. And so if you look at the data center build out, which is one of the ways it evidences itself, that's a big deal. If you look at client spending, like us spending on AI, that's higher than it was last year. But frankly, overall spending levels are shifting towards that, not necessarily growing at a mid-single digit rate type of number. So I think that's part why the reason we feel constructive for next year. We think AI spending continues. We think there's benefits to the American taxpayer from tax rebates, lower taxes due to the tax bill going through and being effective for next year. And we think the expensing and other bonuses for businesses are good. So all that leads to our confidence that we go from basically a 2% type of growth level this year, plus or minus up to 2.4%, which is all due to that. And AI is kicking in more and more. And so it's not all attributable to AI, but that's having a marginal impact that's pretty strong.
So much of the American economy is supported by the consumer. And you at Bank of America have a really powerful viewpoint into the American consumer. How's the American consumer doing? Because it has been very strong. There have been some people saying it's starting to slow down.
You have to step back. We look at American consumers, 70 million consumers, putting $4.5 trillion plus into the American economy every year. And we've tracked the way that goes in the American economy for many years. And so in the third quarter, it was up about 5% over last year. As we look at the fourth quarter here so far in October, November, I'd say it in a 4.5%, which is very consistent with a very solid growing economy. In the end of the day, it's going to work against wage growth. And we see in the underlying consumers we have wage growth, i.e. their paychecks are going up. And so the labor market's flattened out a little bit in terms of job growth and things like that. It's normalizing in terms of unemployment, but you still see underlying wage growth. So the American consumer spending at 4% more November this year versus November last year is a very solid backdrop. The credit quality of the American consumer is strong. And then you hear a lot about this discussion about different rates of growth among different income terciles or thirds. So if we look at the bottom third, middle third, and top third of American income people in the Bank of America customer base, we do see differences, i.e. the higher income and middle income are growing faster. But even the lower income third is still growing, and that's all good. And that means, why is that true? Companies are employing people, they're paying people. Now the labor market's got a little soft, and as we look forward at 4.5, 4.6 unemployment, that is gotten worse, so to speak, than it was at the beginning of the year. But frankly, this goes back to the normalization question. If you look at the 10-year average unemployment, the 20-year, the 30-year, 40-year, it's 5% and 6%, as you go back through time. And so a 4.5 to 4.6 unemployment rate is a very strong relative unemployment rate. It's just a lot of the years it's been below 4.5% has actually been in the last 10 years. So people are very used to numbers now, which were part of the tightness in labor in the 2017, 18, 19 era. Then you had the pandemic and it retightened. And so it's normalizing, but we feel good about all that. And the consumer's in pretty good shape, spending more money, employed and earning more money, but differences between different types of consumers, and then being wise in how they spend. If they, they trade down, and all the things you're hearing the retailers talk about are true, but the aggregate amount of moving in the economy is still growing.
So you mentioned flattening out in the employment growth. There are always risks to the upside and the downside in any of the numbers that we project. How concerned are you about the downside? Because certainly the Fed is very focused on a softening labor market and whether that may be a problem for us. So
if you look at the predictions for our team and the other economists for unemployment, we're kind of peaking out at this level now in the mid to 4.5, 4.6 range, and then it sort of flattens out. But the Fed has to be wary because they have a mandate to maintain full employment, and we're at full employment now. And they have a mandate to maintain price stability and inflation fighting. And those two mandates can work together sometimes and against each other sometimes. And right now we're in an unusual case where the labor market has softened, and yet the inflation, because the massive buildup inflation after COVID and stuff is now still working its way down. Our team predicts that the inflation rate will get to the Fed's target, through the end of 27, but it's continuing to work in the right direction, which gives the Fed, in our view, latitude to keep cutting rates next year, especially in the first half. That will then provide a stimulus in the second half of the year. Those rate cuts do benefit the consumer somewhat, but in fact benefit small businesses, because in mid-sized business, they borrow on lines of credit, which are floating rate indices, and as rates come down, they get instantaneous benefit. And if you hear our small and medium-sized businesses are pretty optimistic about next year, telling us they expect to grow, they expect to hire more people, and those small businesses are the backbone of the U.S. economy. We're the largest small business lender in the U.S. economy, so we see them being very active.
This year has been good for the markets. It's also been good for Bank of America. What do you need in 26 to continue the growth?
Look, we just need our team that's done a great job for us over the last several decades to keep doing it. And what they need to do is go out and get one more client and do one more thing with every client we have. And they know that across all of business, whether it's our markets teams, whether it's our global corporate investment bank teams, our consumer teams, our wealth management teams, all of them need to go out and just drive more business. And that organic growth engine, which you described in our investor day a while back, that is intact. It's been growing with the market. And now, because of some dynamics in the repricing of the balance sheet, we'll get more earnings lift out of it, like we did in the third quarter. But that organic growth engine, more customers and more with each customer, has been driving a Bank of America, and our team just needs to do more of that, and they know that.
Bank of America CEO Brian Moynihan in conversation with Bloomberg's David Weston. Bank of America shares are slightly lower, along with most banks today, down about 20 cents right now, about 1/3%. But indeed, David's right. It has been a good year. B of A stock up about 26% so far in 2025. Most banks are lower. Citigroup, money centers are all down. Citigroup's down a little more than 1%. JP Morgan down about 0.6%. We're seeing BlackRock, Goldman Sachs trade lower as well, with a little bit of a give back today in the markets after closing at an all-time closing high on the S&P 500 on Christmas Eve. Bloomberg's Vonnie Quinn is watching Wall Street for us today in holiday light trading in this Friday session, is with us now for a bit of an update here. We did give up some early gains. Vonnie, what seems to be on traders' minds?
Sure, yes. Several stocks reversing gains now, Joe. I mean, it is coming into the afternoon hours, and incredibly, it is a full trading day. So stocks will trade until 4 p.m. That was not the case on Wednesday. They only traded till 1. So potentially this is a little bit of profit taking before the weekend. It's going to be very light trading next week as well. Today we saw about 50% of the 30-day moving average traded. That said, we haven't given up too many gains. We're still very close to records on that S&P 500. It's down just fractionally, less than 0.2%. The Nasdaq 100 is down just a few points, not even 0.1%. The Russell 2000 is doing the worst. It's down 0.7%, and that's true of the year as well. It's gained about 14% versus a gain for the S&P of 18 plus and a gain for the Nasdaq 100 of 22 plus, and that's mainly thanks to the Mag 7, which as a group are up 27% year over year. Let's take a look at yields, because potentially that's the story for next year as the Fed potentially goes on pause. Now, 2 cuts are priced in for next year, but there's just an 18% chance priced in for January of a cut in January. So traders very definitely think that the Fed is on pause. We'll get more jobs data January 9th. We'll get the Fed meeting minutes next week from the last Fed meeting. And we'll, of course, get a new nominee name in January as well if the president does follow through on his promise to tell us early in the new year. So as you can see, the 10-year has been range bound between 410 and 420. It looks to be staying that way for now. Metals have been rallying substantially. Let's get to some movers, because we did see some movers today, including Nvidia, which did a deal with Grok, which is attempting to compete with Nvidia in developing an AI chip. So Nvidia is higher on that. Target reversing gains that have been higher. It's now lower. The FT reporting an activist stake. Tom's Capital is taking a stake in Target, and we have to mention Warner Brothers Discovery, because if another story is going to bleed into next year, it is certainly this one. The battle between David Ellison and, of course, Netflix continues, and David Zaslav may even get more money for his shareholders on this one.
Wow, Vonnie, thank you so much. And a rare move higher for Target. Interesting, all in the wake of the Christmas shopping period. Vonnie Quinn, thank you so much. I'm Joe Matthew in Washington, where we're going to dodge the snowstorm, but that will not be the same for New York City, with snow set to begin falling just a couple of hours from now. We'll check the forecast coming up on what could be a dicey holiday travel weekend. All ahead on Bloomberg. It's Balance of Power on Bloomberg TV and radio. I'm Joe Matthew in Washington with our eyes on the tri-state region. Indeed, a winter storm warning in effect here for New York, New Jersey, and Connecticut, with a pretty real snowstorm on the way. Just about, 3 hours or so from now. There's a live view, if you're with us on Bloomberg TV, of the New York skyline. Snow should be falling by about 4 p.m. Eastern time, just in time for a very important travel weekend. And we're joined for more by Bloomberg's Josh Saul, who's tracking the storm for us here. Josh, there's really nothing more beautiful than a fluffy snowstorm in the city of New York. But if you're trying to get anywhere, this could be dicey.
That's right. Fun to watch from the fire, but not great to be out driving. It's an added danger is it's going to stay cold this weekend, which means the roads are going to stay icy and difficult and dangerous to drive on kind of right through the weekend.
Wow. The accumulations are pretty real. This is a storm warning, not a storm watch. You're looking at between 6 to 9. What's the city going to get? What's LaGuardia going to get?
Could be up to 9 inches in these areas. Yeah, it should be the most we had since 2022. And that means a lot of, you mentioned LaGuardia, it means a lot of flight cancellations. Flights starting all around the world that are supposed to get here right when the storm is kind of at its thickest. A lot of those flights are being canceled.
So if you're getting on a plane, hoping to see the ball drop in New York this week, are the airports taking precautions? What are we hearing from the local authorities?
If your flight's cleared to come in, then it should be just as safe as normal. But definitely a lot of flights canceled, a lot of flights delayed. And an interesting issue that came up in our reporting is that flights have been so bad this past year or so, a lot of people have opted to drive instead, which means that the roads are even more crowded and more people are depending on their cars to get around, which is dangerous given how rough the roads are right now.
Yeah, that's scary. Always feels a little weird when they pull the plane over to do the de-icing thing. I suspect we're going to see a lot of that this weekend with the temps that you mentioned. Josh, thank you. I don't know if you're spending the night inside World Headquarters, but I wish you luck, because that snow, as we mentioned, is set to begin just a couple of hours from now. As we look back on the year and look ahead to the new year, we wanted to spend some time with Eric Larson, Bloomberg's legal reporter, who we have spent so much time with, talking about the Supreme Court over the past year. And we're still waiting for the big one, of course, the Supreme Court's ruling on President Trump's tariff regime. And Eric is with us now from World Headquarters in New York. It's great to see you. Eric, we understand this could be days or weeks away, right? This is an imminent ruling.
Yeah, that's correct. I think some people were even expecting we might get it get the decision before the holidays. But no, we are expecting it in the next weeks, potentially very soon. No word on exactly when that will be, though, of course.
Yes. So obviously when it does, first of all, it'll be seismic in the political world. But also when it comes to markets, this could come down a couple of different ways, right, Eric? There are big questions about whether there will be refunds that are mandated as part of this ruling, whether a one-off or something that could take years to repay. How could this take shape?
Yeah, you're right. That's going to be the big question. If, in fact, the tariffs are ruled illegal, I think that all of these companies that have been paying these billions of dollars in tariffs so far are going to demand them back. Some of them have already gone to court to set the stage for that, should it happen. Mm-hmm. And folks who have been watching this closely will recall that when there were the oral arguments at the Supreme Court not so long ago, they signaled that this conservative-leaning court could be leaning toward overturning the tariffs. Of course, they didn't say outright what they were thinking, but this is just based on the questions from the judges. So I think people are preparing for that eventuality. Of course, President Trump has also signaled there are other options to try to get other types of tariffs in there through other legal maneuvers, which also could end up being challenged in court. But folks are definitely preparing for the eventuality that they are overturned and they'll demand this money back.
Well, I'm glad you mentioned that, because the White House has made it clear that if the court strikes down the tariff regime on the IEEPA justification, that there will be another and maybe other after that, but that would be preceded by an investigation or review, right? So this could take months before they come back to the plate.
Exactly. These other ways to put tariffs in place involve, as you said, investigations. And some of them have limits to how long they can last and how high they can be. So that's it's not quite as easy as using IEEPA the way Trump has done. No president before him had used that law in that way. And the way that he did use it, as we know, allowed him to put whatever amount of tariffs he wants on any country he wants for as long as he wants. So that's the emergency power that these lawsuits are seeking to claw back, to say that that's not how the law was intended. All the other ways are just going to be more difficult for the president to put these tariffs back in place.
I'm sure there's nothing else on the docket that rises to this level, Eric, but correct me if I'm wrong. Is there anything else that we should be looking at in terms of the court's term next year?
Yeah, there are some big ones. We still have a decision on birthright citizenship that President Trump is trying to roll that back. Several courts ruled that effort, that executive order limiting birthright citizenship was illegal. We heard arguments at the Supreme Court already. It's another one where there were signals that they might overturn Trump's executive order, but we don't know for sure. That's a huge one. It involves citizenship for potentially thousands of people, babies. We also have some big decisions on state laws banning transgender athletes at schools, campaign finance, and also voting rights, and whether or not efforts to make minority districts, voting districts, are illegal. So there are some other big ones out there.
Yeah, it's going to be a huge year, with questions as well about the legality over the administration's approach to Venezuela. Eric, I don't want to conflate different beats here, because it does seem that if there will be any justification or challenge, this would be in Congress, not in the courts. Is that right?
That's my understanding. I certainly haven't heard of or seen any specific legal challenges around that yet, but it's also early days to see what happens there.
God knows, and Eric Larson has learned. You never know what you're going to be reporting the next day. It's great to see you, Eric. Happy New Year. Thank you for your great coverage in 2025, as always. I'm Joe Matthew in Washington, where we were graced by the Kennedy Center honors just a couple of nights ago. Did you see that? The 23rd, they played it back on CBS. First time ever Donald Trump was the host. They called it the Kennedy Center honors, not the Trump Kennedy Center honors, knowing that the name is being changed by the administration. Here in town for the awards, along with some testimony on Capitol Hill about royalties for musicians on the radio, Kiss frontman Gene Simmons. We spent some time here in our studios at Bloomberg. Listen.
Nothing's changed. Okay. The artists are not getting paid. That, I mean, especially our children and our children's children are going to be the next generation superstars after they climb their way to the top and fight for it. What do they have forward to look? What do they have, looking forward? They're going to get 0 pennies when their songs are played on AM and FM radio, and that's insane.
Do you have the president's support on this? Did you talk to him about it?
I spent some time with the president alone in the Oval Office, and we talked about family. And I've known the president, proud to say, before he became a politician. But what else we talked about is a private issue.
Okay, so that wasn't about legislation, I guess.
I didn't say that, but you're leading the witness, Your Honor.
Oh, not to, well, I wouldn't think that would be private.
Well, these are semantics, but I'm not anti-semantic.
I hope that you're not, because we wouldn't be able to do this right now.
It was a little clickbait there. What I talked, I specifically said what I spoke with the president about is not for anybody else's consumption.
Okay.
Well, there is such a thing as privacy.
I completely understand. I only ask you because so many lawmakers come on the air and say, if we get a directive from the president, we can make this work. What did you hear in the committee from members? Did you get a sense that there are votes on this?
I've heard a lot of support. Yeah. I met privately with Senator Marsha Blackman and Mr. Schiff. Both sides of the aisle seem, let's just say, as soon as Congress gets their act together, the president will sign this. I am convinced of it, my personal opinion.
Well, our audience should know, and you're talking to the business community right now, that you are no stranger
News when you want it with Bloomberg News Now. I'm Amy Morris. We are approaching a subdued close to the year. Stocks and bonds are slipping along with gold and silver on this last day of 2025. We do check markets for you all day long here at Bloomberg. The S&P 500 down 0.3%. NASDAQ and the Dow both down 0.3%. The 10-year Treasury yield at 4.13%. The 2-year yield at 3.46%. Silver now down almost 6%, and spot gold down about 0.5%. The bond market closes at 2 o'clock this afternoon Eastern Time. The S&P 500 index is poised to end the year up more than 17%. Tech stocks, especially those that are tied to artificial intelligence, dominated the market in 2025. On the flip side, economic uncertainty from President Trump's tariffs weighed on consumer companies, while healthcare stocks struggled with uncertainty surrounding the administration's policies and pressure on drug prices. Now, the big winners for this year are Palantir and Warner Brothers Discovery. Losers for 2025 include retail, consumer staples, and managed care. Weekly jobless claims fell by 16,000, below all estimates for the week of Christmas. Chief economist Claudia Sahm at New Century Advisors tells Bloomberg TV, we are not seeing signs of deterioration in the labor market.
The layoffs have not picked up in a way that was the downside risk that the Fed has been very acute to, and we haven't seen that. So we're not seeing the bad news story. Frankly, we still need to see some good news.
The figures have been volatile recently, but that's typical around holidays. Continuing claims, a proxy for the number of people receiving benefits, decreased to 1.87 million in the previous week. The enhanced premium tax credits for the Affordable Care Act will expire at midnight tonight. Those credits help lower health insurance costs for millions of Americans, but this lapse could mean significantly higher costs for about 22 million enrollees. Bloomberg's Tyler Kendall tells Bloomberg TV that one option, the so-called clean 3-year extension, will get a vote when lawmakers return after the new year, but it's not likely to pass.
The thing is, that doesn't have those structural changes that are needed, and that's why we're watching really closely this effort that's brewing in the other chamber, in the Senate, that would combine structural changes like an income cap and anti-fraud protections with perhaps a shorter-term extension, 1 or 2 years, to essentially allow lawmakers to kick the can down the road, extend these tax credits, and then come up with a broader health care plan.
Bloomberg's Tyler Kendall says affordability and health care have become front and center for Republicans as we approach the midterms in 2026. Now, everything Congress does in 26 will impact the re-election campaigns for its members, and Republicans will have a problem getting support beyond their hardcore voters. Brown University Alfred Taubman Center for American Politics and Policy Director Wendy Schiller.
Independent voters who have backed to Trump in 24, by all accounts in polling, have soured on the president and soured on the GOP. I think health care is really important. Premiums rising for a big bulk of that group of voters, they're not going to become happier with the Republicans.
Professor Wendy Schiller on Bloomberg TV. The world is ringing in the new year. The party started in Auckland, New Zealand, and now it's 2026 in Taiwan.
Oh!
And at this hour, Hanoi and Bangkok are welcoming 2026. New Delhi is next as New Year's celebrations make their way around the globe. Zohran Mamdani takes office as New York City's mayor at midnight. Mamdani inherits a role described as the second hardest job in America, with responsibilities including overseeing a municipal workforce and 72 city agencies. Mamdani will be sworn into office at the Old City Hall subway station by New York Attorney General Letitia James. China's People's Liberation Army says it successfully completed 2 days of military exercises in the waters off Taiwan aimed at asserting its sovereignty over the island. The exercises were received critically, Japan and the Philippines expressing concerns that they escalate tension in the Taiwan Strait and undermine stability in that region. That's news when you want it with Bloomberg News Now. I'm Amy Morris. This is Bloomberg.